Kumar, thank you so much for joining us. So you're a professor at Caltech and you're senior director of AI research at NVIDIA.
Which actually makes you the perfect person to answer a question that we've had, which is really broadly, how is AI changing, or has it been changing the scientific process over the last couple of years? Let's begin with that.
Yeah, this is such an exciting time. Thank you for having me on this show. And, the world has seen ChatGPT and the power of AI when it comes to language models. But to me, that's just the beginning, because beyond language, we can think of all kinds of scientific processes. And by understanding that through AI, we can do everything better, faster, cheaper, more accurate, and really be able to come up with new inventions and discoveries.
Let's dig into that. What does an AI-enabled lab look like?
Yeah, to me, like AI will completely transform the scientific workflow the way we know it. Ever since the 17th century or even earlier, the way we came up with new inventions or discoveries was somebody has some intuitions, right? They went to the lab, they tinkered, they're like, oh no, this doesn't work. And okay, this works, let's move ahead.
Trial and error.
Right? Exactly. And now think about AI being able to do that in the virtual domain, like being able to accurately simulate many of the processes or learn from data, right? The observations directly. And with that, be able to come up with better design, better discoveries than what would have taken really long in the real world.
What's changing the most right now? When you look at the landscape, is there any particular field that you see evolving much more quickly than any other field?
I mean, one thing that we're working on heavily is the Earth-2 project at NVIDIA, where our goal is to build very accurate digital twins of this planet. Be able to predict not only short-term weather, but also long-term climate change eventually.
The digital twin of the Earth, what is being twinned?
Yeah, all the processes on this planet. Think of like the atmospheric processes of convection currents, storms, right? Even really like fine-scale features of cloud turbulence. What's responsible for hurricanes, for instance? How would this hurricane paths change, and can we come up with the right risk assessment? Because these are chaotic systems. These hurricanes can go in so many different ways. Can we really hone in on what is the risk to different human populations based on what we see today? So these cheaper and faster weather forecasts with AI will also enable us to create better probabilistic assessment of extreme weather events.
Let's talk about some of the other fields that AI is making transformations in the scientific process. For example, genomics or even drug discovery. What's going on there?
Oh, it's such an exciting time there because, the same kind of generative AI that we see for language, you can replace the letters of the English alphabet instead with nucleotides. ATGC, if you recall what makes up our DNA, right? And with that letters, you can now ask the language of the genome and have a model learn that.
So if there are tasks that artificial intelligence can make more efficient or even replace humans in a lab, what's kind of the vibe in the scientific community? Is there as much fear as there is in other industries that AI could take their jobs?
I mean, I don't think it'll happen anytime soon, and maybe never, because humans are such creative beings, right? We're always thinking of the, next unknown question, right? There's so many deep mysteries of the universe. There's so much we still need to understand. And AI is a tool. This will enable lab scientists to rule out a lot in simulation before they can go and do their experiments. So they only need to do a few. But then I feel like there'll be always things that'll be still unknown and to be conquered.
There's a lot of, I don't want to use an unpleasant word, but there are a lot of people who don't believe in things like climate change. And there are a lot of skeptics who believe that science is out to get them, or that, we're all just sitting here lying. Is there work being done that you think could actually win over some of these skeptics? Is there a way to demonstrably show them?
Yeah, I do think all the work we are doing will help towards this, because this is not some model that's in some supercomputing facility, right? Not available to the public. I mean, you can download this and go try some of this yourself. Just like a video game, you can play the game of climate change one day, right?
Quantum physics.
So everything becomes accessible. At least my hope is, chunk of the community that is curious will have resources online that is much more open, so they feel like they can participate in that.
If you think about the scientific journey that humanity's been on over the last 300 years, it's been quite good. Just take us 10 years from now. Like, how different will things be?
I think the whole process of scientific research and development will be accelerated many, many times, right? Even orders of magnitude in some areas. And that'll just mean that we can quickly rule out things that don't work and hone in on things that work. Certainly, drugs designed by AI, they're already coming into trials, and that'll just increase fully. Personalized medicine for cancer and all of these, where we really haven't been able to understand, right, for various different targets, how to quickly design drugs. This can make it much faster and also cheaper, because right now so many of these treatments are too expensive to be done at scale. So it'll make this democratized and cheaper. And yeah, I think this will hit every area. I don't think any area is immune to this.
I think it will be interesting, won't it? 10 years time, if it takes the average drug 10 years to come to market, and if AI systems right now are coming up with some of the potential candidates for a future successful drug, then in 10 years' time, are we going to see a waterfall of new drugs?
I mean, it may not be a huge number, right? Because you can't test all of them. It'll be more targeted. It will be personalized. It will
actually work.
Exactly, effective.
Thanks so much for joining us.
Thank you.
Thank you,
It's been
Maud.
fascinating.
Yeah.
Thank you for taking the time.
Over the past decade, China has gone from a Silicon Valley copycat to a top contender in technology on the world stage.
Its ascent is peaking at a time when geopolitical tensions with the US and Europe are intensifying, and the rise of artificial intelligence has sparked a new arms race.
The US is rushing to curb China's influence in AI while balancing the need to regulate the powerful technology within its own borders.
How America manages these competing priorities will have implications for where the balance of power in tech will shift to next.
On this episode of AI IRL, we'll explore how China's playbook went from imitation to innovation and discuss what's at stake in the competition between these two superpowers.
Mustafa Suleiman, thanks so much for coming in. Now, you are the co-founder and CEO of Inflection AI and a venture partner at Greylock. Some people will know you as one of the co-founders of DeepMind, now owned by Google. Tell us, what made you want to start fresh with Inflection?
Well, now is really the moment. I mean, it was very clear to me during 2020, 2021 at Google when I was working on Lambda, the conversational AI that now powers Bard, that these large language models were truly going to be the future. And I wanted to start a company to build personal AIs, an intelligence that is completely aligned to your interests on your team and really functions as a personal assistant or a chief of staff, one that knows you intimately and over time can actually help you with practical tasks like scheduling, prioritizing, planning, and those kinds of things.
And that's what you're working with Pi.
Exactly, yeah. Pi stands for personal intelligence, and we see it as your personal assistant, essentially.
How do you feel about the concentration of power in technology right now among the big companies coming out with their own AI models? Microsoft, Google, Meta.
Well, I mean, I think you're right to point out that the big companies have the resources and the people and the compute infrastructure to be able to adapt and compete faster than ever, right? And that is a very impressive, reality of how technology works these days. It requires a huge amount of compute. And at my own company, Inflection, we've managed to raise a lot of money and build one of the largest supercomputers in the world. But on the flip side, the other trend that's taking place is that the open source movement is now almost at cutting edge. I mean, it's probably about 12 months behind the very largest models built at the big tech companies. And so that's kind of a contradictory trend. Like the big companies are getting bigger and better faster, but also everybody is now going to be able to get access to these same capabilities in open source.
Let's fast forward a little bit into the present day where the world order has changed since you first entered the tech industry. How did China go from being a copycat culture to a contender when it comes to digital innovation and specifically AI?
Yeah, I mean, China is more than a contender. I think in many respects, it's one of the leading players now. I mean, they've always been incredibly creative. And I think that we may have sort of overstated the extent to which they were simply copying, what we were doing. And I think it's important to remain humble about the fact that, these ideas are going to be widely available to millions and millions of people. And, in many respects, all of our cultures are, equally creative, and they've been able to take, tools and ideas that are available both in open source, in the academic literature, and move them forward, innovate at the cutting edge. They've produced a lot of very good papers, contributions to the academic conferences that have been peer reviewed. So, I just think overall it's better to take an approach of humility, acknowledging that, they're also going to be a really significant player in this field over the next few decades.
How would you rank the United States in terms of technological prowess in that world order?
Well, I mean, there's no question that we, in the US and in the West more generally, are currently in the lead. I mean, we have the very best, most innovative technology companies and technology hubs. There's, without doubt, Silicon Valley is leading the pack. And I think we'll continue to. I think we worry too much that we're going to sort of be dislodged from our podium position.
For how long do you think?
Well, I think the question is, what does it look like to be dislodged? And is that really the right framing in the first place? Like, what is the difference between first and third? And, people talk about there being a race for AI, and it's very unclear what that looks like to come second or third in that race. I think it's sort of the wrong metaphor.
We're talking about superpowers, Clash of the Titans sort of stuff. It reminds me of back when the previous US administration banned companies from doing a lot of business with Huawei, and Huawei ended up basically having to get a lot better very quickly at making its own chip designs and all that kind of stuff. And it feels like it backfired a little bit.
Yeah, you've also advocated for the US restricting sales of some NVIDIA chips, which are crucial in training AI systems, to buyers who don't agree or who refuse to use them ethically and safely. So what do you think is the best way the US can actually flex its power? Is it through the technological innovation or by stifling effectively some of its adversaries through regulation?
The first thing I should say about that is I don't think now is the time to do that. I mean, I think in theory, when the time comes, if the time comes for us to adopt a kind of global anti-proliferation strategy, we're worried about technologies being so powerful that we have to stop their spread. If that moment arises, and I think we're quite a long way from experiencing that, then technically that would be an appropriate containment strategy. Because much as this technology is manifested in software, it lives on the internet, it still sits on chips, you know, whether you're training a model or serving a model. So in order to ask a model a query, you have to have access to one of those NVIDIA GPUs. And, you know, for what it's worth, there are really only like one major company in the world that produces those high-end GPUs, NVIDIA, and they manufacture the vast majority of their chips at TSMC in Taiwan that use one single company, ASML, a Dutch company that manufactures the core chip that produces the chips, and they sit in the Netherlands. So it's actually a very narrow supply chain. And so I think the point I was sort of trying to make is that if you wanted to adopt a containment strategy, there is a supply chain where you can impose chokeholds on it.
And in 10 years from now, which country do you think will be leading the world in AI? Is it going to be the US? Will it be China? Will it be Europe?
It's going to be the US, I'm pretty sure of that. I mean, the fundamentals in the US innovation ecosystem are unquestionably the best in the world. I mean,
what could flip that balance of power?
Well, I mean, I think it's hard to say. I mean, I really do think that the US is in the strongest possible position. At the end of the day, you know, it's talent that drives, you know, this innovation. And talent still concentrates around a small number of physical places. Despite everything that we've experienced in the pandemic and people wanting to work remotely, you know, it's still really important to be physically proximate to other people who, you know, are working with you in the office. I mean, you know, I think that trend isn't going to change. I do think China is going to catch up. I think they're going to develop their own AI chips, their own fabrication facilities. But that is going to take 5 years or so. The export controls that the US has implemented, you know, are real, and they really will prevent China from getting access to the next frontier of models, so the GPT-5 onwards. Right now, I don't really see how China could train those kinds of models.
Is there any downside, any unintended consequences that could come from this containment strategy the US is employing?
Yes, I think it is a very aggressive strategy. The counterattacks have already started, right? The China restricted gallium, which is a raw material used in chip manufacturing. And I expect them to have their own reactions in time. You know, we're very dependent on their supply chain. And so the idea that we could completely decouple, I think, is misguided.
I'm going to just put you on the spot really briefly and wonder, like, can you tell, because we're all friends here.
Sure, go for it.
Like, do you have a major regret about your work in AI? And do you also have a major single goal?
Yeah, my major single goal is to show that it is possible to create safe and ethical artificial intelligences which are accountable to humans. There is a possible trajectory where, you know, some groups may recklessly experiment with algorithms that can self-improve. And if in 10 to 15 or 20 years time, those kinds of AIs are set loose on the open web in, you know, a reckless way, then I can imagine that possibly causing serious harm. And so for as long as I can remember, almost 15 years that I've been involved in AI, I've been trying to raise awareness and concern about the possible ways in which it can go wrong. And part of doing that is to show a bunch of practical ways that it can go right, both with writing my book and laying out a series of containment strategies and things that we have to do in politics to improve our governance and regulation, but also in actually building and making Pi, which I think is hopefully going to continue to remain a very safe and controllable personal AI that can work for you.
Mustafa, thanks so much for coming in. Been a pleasure.
Thanks very much for having me. It's been great.
Helen Toner, thank you so much for joining us. You're a director at Georgetown Center for Security and Emerging Technology, and you're also an OpenAI board member. Dan Wang, thank you so much for joining us. You're a visiting scholar at the Tsai China Center at Yale Law School, and you've been studying technology and China for many years now.
And we've just heard from Mustafa Suleyman, and he thinks that China's emerged as one of the biggest contenders in AI. So Helen, I'm just curious to start with, do you think we're overestimating China's capabilities?
It's certainly true that they're a big player. And it's also true that we shouldn't underestimate them and that we have a bit of a history of underestimating China's ability to innovate. I mean, I think 10, 15 years ago, the story, at least in Washington, D.C., where I'm based, was, yeah, China can't innovate. If they're producing things that look like new technology, it's because they've stolen them. I think that's clearly no longer true. At the same time, I think it's also very possible to overestimate them. And sometimes I think I see that as well. So are they a serious competitor? Yes. Are they eating our lunch? No.
So that copycat culture, it's fair to say that most people are thinking, we're past that stage. Dan, what do you think of that?
Well, I think it's certainly the case that China focuses on different things. So President Xi Jinping is, I think, a little bit less enamored with the internet platforms, with a lot of the cryptocurrencies, with a lot of the AI businesses that Silicon Valley specializes. He's also a little bit less enamored of Wall Street and financialization and hedge funds. And if I had to think about what Xi's broad views are, it would be much closer to being something like capitalism with German characteristics, which is much more about building cars, building hydraulic pumps, building heavy machinery, the heavier the better, about all sorts of these major industrial projects. And I think China is very much a leader in things that include electric vehicle batteries now, solar photovoltaics. It is making a lot of electronics products, and it is innovating on a huge sort of a lot of the automotive supply chain. But I think they have a little bit less of a focus on AI, and therefore there is not so much political direction anymore to really push forward these consumer applications.
I think it's fair, though, that some of those areas, the US is also innovating very, very strongly. So are there any areas where China is innovating significantly better than the US?
Well, I would say something like electric vehicle batteries, where China has something like the 70% of all global expansion, all global capacity of electric vehicle batteries is now mostly in China. When it comes to the clean technology supply chain, again, these very industrial projects, these pieces of heavy machinery, that is a little bit more the focus. I think the US is really strong in things that include semiconductors, artificial intelligence, biotechnology. These are things, the smaller things where China is not so good, but there are big areas in which China is way outbuilding the US.
I mean, the semiconductors is getting significantly better in China. I mean, partly maybe as a result of the Huawei issue. Helen, what's your view on the semiconductor side of this?
So China's definitely been investing for decades in trying to have their own independent semiconductor supply chain, and they've been making some progress. The thing to know about semiconductors is there's a huge range of sophistication, from the really basic semiconductors, computer chips that go in basic devices, your smart fridge, your car, up to the kind of more advanced chips that might go in a brand new iPhone, up to very advanced chips that go in kind of the data centers, gigantic warehouses full of computing, which is what you're training advanced AI systems on. So China has made a lot of progress on the more basic end of the semiconductor sort of scale, and is still really struggling to hit the most advanced end. And that's where, it's not even, you can't even say the US is, alone able to create those advanced semiconductors, but what you have is an incredibly advanced global supply chain.
Many describe artificial intelligence and its development across these two superpowers as an arms race. Is that framework misguided, do you think?
I think it's a bit misguided. I think you really want to look at what kind of AI are we talking about, and in what way might it be a race. I think the place where it's clearest that it makes sense to think in a competitive framework is in kind of military domains. So, it's just true that the US military really wants to make sure that it is keeping pace with, and ideally a little ahead of, the Chinese, or a lot ahead of the Chinese military in terms of what technology they have.
Dan, Washington has taken some steps to curtail some of China's ability to get their hands on the cutting edge chips that really power these AI platforms. What's your take on that? Is that an effective strategy, or will China just find a way to build their own?
I think that China is going to try to figure out a lot of the way to build their own. A lot of the chip makers now have been under very significant stress from US sanctions dating back to about a year ago now, released by the Biden administration, that is really stopping their ability to access not just the high-end chips, but also the semiconductor production equipment as well.
And I think in general, it's really difficult to distinguish between what kinds of technologies should the US really not want China to be able to develop, and where is it fine. So, you mentioned, clean technologies before, where China, if you're looking at, manufacturing solar panels, as you mentioned, EV batteries, a lot of other areas, China is doing amazingly at that. And what you're starting to hear in some, US policymaking circles is that maybe that's a bad thing, that China is making a lot of kind of clean technology stuff. And I find that a little sort of tricky to reckon with, is at what point do we want to really shut them out or prevent them from being, able to manufacture anything if it's something good, useful that we can use. Of course, if it's technologies that we think have really significant military value, I understand, but then it starts, the lines between those categories start to get very, very blurred.
It seems like these tensions are just ratcheting it up even higher as time goes on. With each administration, they're intensifying. So to your point, if we do need these other technologies, solar technology for this transition into a greener future, what kind of happens next? How much do we place on kind of the AI arms race that could then potentially work against us in climate change? Is that a concern, or is that too far in the future still?
Well, a few months ago, Beijing did announce some export controls on certain solar technologies involved in making production wafers.
So it's already happening.
It is already happening, that there are some threats out there that, relatively speaking, Beijing has been pretty restrained against retaliating against American companies of the likes of Intel, of the likes of Tesla so far, but these things could escalate more.
how does the relationship between, the ruling party in China play out against the kind of the development of companies?
I think the Chinese system is definitely more top-down when it comes to AI development. You see less kind of individual tech companies like OpenAI or Google taking the lead, and more these kind of multi-institution partnerships, or maybe you have a university and a tech company and a government, department all collaborating on big AI projects. That's much more common in China. At the same time, China is a huge country, so there's a limit to how much the government can achieve from the top. So a lot of what you see is sort of Beijing providing direction, providing ideas, providing sort of signaling of this is what we in the central government would be excited about.
Dan, how would you compare how the Chinese government is handling AI with its people versus how they handled social media?
Well, I think President Xi Jinping doesn't necessarily view AI right now, a lot of these ChatGPT-like applications, as some of the most economically productive things that are coming into our society. So I think that President Xi looks much more at AI like he would at Facebook or Twitter, now known as X or whatever it is. These are platforms like TikTok that, if you're asking me, is something like TikTok or Facebook really increasing my personal productivity? Well, I would say actually it is really horribly detracting from my productivity. And so I think that a lot of these AI platforms right now create speech issues. When an ordinary Chinese person sitting in Beijing or Shanghai asks AI, well, what happened in 1989? Well, what do you think of socialism? What do you think of President Xi's performance? These AI tools are having a lot of challenges actually answering socialist correct values that are in line with the government's ideas. And so these are major speech platforms, first and foremost, and perhaps not really the economically miraculous thing that raises our productivity growth at the very moment. Now, it might happen later on. Right now, I think the party views it as somewhere between economically not that useful and potentially very socially destabilizing.
So from a consumer standpoint, AI is almost, it can potentially create more problems for the Chinese Communist Party. But then if you look at it from like a surveillance standpoint or military type of AI applications, that's kind of in a different camp. Is that right?
Yeah, that's right. And I think they're definitely, one area where China is, I would say, leading in AI is on surveillance. They really have leaned hard into facial recognition, voice recognition, even gait recognition. So how you walk in a crowd, can they pick you out by that? I think in the West, there's been some development of these technologies, but with a lot of criticism from civil society, a lot of hesitation, sort of, I would say, like very yellow light. And in China, it's been blaring green light.
On the topic of WeChat, when we spoke ahead of this, I think we touched on the fact that there are some generalized misunderstandings about China's approach to social media and data and AI. AI relying on huge amounts of data, and the perception is that because of things like WeChat and similar things in China, that there's this huge pool of data that the population in China is just very happy giving over and is used to giving over, and therefore is just sitting around waiting to be exploited by AI. And I remember that you made a pretty significant point. It's like, that's probably not really the case. And people think that's the case, but it isn't. So I wonder if you could touch on that.
Yeah, I think people have this perception that because the Chinese government is very controlling and has a lot of access to what's going on in Chinese citizens' private lives, that means that there's these beautifully curated, extremely complete, large databases of information that can be used to train AI systems or to do other things. But for anyone who's ever worked with data, you know that cleaning data, structuring data, making sure that the right information is flowing in the right places is incredibly challenging. So it's both true that the Chinese government can get very detailed information on the private lives of its citizens if it chooses to, and also true that it's incredibly messy the way that works, and incredibly difficult for any given actor to get access to something. So, for instance, a company trying to train some AI model using data is actually subject to a pretty significant data governance setup in China, data governance regulations that make it really challenging to use customers' data for things it wasn't already designed for, or that you didn't already get consent for.
Which we learned from Cambridge Analytica scandal just as one case, and there are many others. That is not the case in the US. It's not the case in Europe. There's a lot going on. The EU's AI Act is pretty widely praised by some people, not everybody, but it's quite broad and far-reaching. But that's not the case in China. in terms of what you're saying?
So China's setup is now more similar to the GDPR that exists in Europe. So around kind of protecting consumer data and giving people the right to, opt in to different uses. Of course, in China, there's always the exception, unless the security services, think that you might be a dissident, and then they're going to get whatever they want on you. But in terms of kind of companies, they're certainly relatively restricted in what they can do.
Switching gears a little bit, Dan, I'm curious about how China's sluggish economic growth recently weighs into the government's calculus and how they're thinking about AI's potential to spark social unrest.
I think that the Communist Party is very much involved in trying to think about, how to control possible social unrest. I was in Shanghai in November 2022 when there were protests in the streets denouncing zero COVID, denouncing the Communist Party by name, that these were things that were erupting. And so I very much sign on to Helen's description of AI, that China is leading in the AI of censorship. It is leading in the AI of facial recognition. That right now it looks very much like the US is a place where ordinary consumers can tinker with and play around on a lot of these AI tools, whereas in China is mostly reserving these very powerful tools for its own use, potentially to control society. That right now China is in a moment of economic weakness. This might deteriorate further, this might get a little bit better, but there is always this presence hovering over there that the state security might ramp up its technology, really to make sure that there are no socially destabilizing incidents.
Well, Helen, Dan, thank you so much for being here. It's been great to learn from the both of you.
Thanks so much.
Thank you very much.
Good morning. This is Horizon's Middle East and Africa. We have a lot of stories to get through today, starting with the geopolitics in the region, the escalation there, and then the lack of the escalation in the region. We also, of course, have the SpaceX earnings that came out yesterday. We'll discuss them in details. And then the Strait of Hormuz, everything that's happening there, and the deal to get the Strait of Hormuz running. But before we get into all of that, let's take a quick look look at where markets are sitting this morning. We've got S&P futures rising 0.3% this morning. Asia catching up with them, 2.3% higher. But let's talk a little bit about the performance of the S&P. It was about 1.9% higher yesterday. We saw the Nasdaq gain a little bit, but also we saw a little bit of moderation in the movement there. MSCI Asia Pacific, as I mentioned, catching up, but specific names in the United States. SpaceX, its inaugural report yesterday. A lot of details to get through today. CapEx was a big discussion for SpaceX and the earnings, but we've got Bloomberg Intelligence that was saying about the SpaceX backlog. The number there was $47 billion. But BI tells us that Anthropic and Google tie-ups will bring at least or about $6 billion to SpaceX in upcoming quarters consecutively. So that's a number to keep an eye on. We were looking at the intricacies of that performance. Nonetheless, the shares did drop in the after-hour trading, about 9% lower in after-hours. So we'll see how SpaceX fares later today. But let's also talk about Asian equities that are gaining slightly, well, a lot this morning after some moderation in the movement since the start of the week. The Kospi is gaining, so that is the underlying movement there. We're also keeping an eye, of course, on the yen's performance. Australian shares hit a record high, so that's a new one for us looking at this morning. But then Brent Crude, President Trump speaking at an LA tarmac just moments ago, saying that a deal with Iran could be near over the next 48 hours, something to watch out for. He also said, let's wait and see, or let's see what happens there. But we're also reporting on multiple discussions that are happening between Iran and Oman, for example, on opening up the Strait of Hormuz, some movement in the Strait of Hormuz to be seen over the next few days or so. Axios reporting that that deal could be imminent. So we'll watch out throughout the course of the day for that. And then the yield on the 10-year Treasury notes declining 1 basis point this morning. It's holding up gains so far over the past few days. It's been holding up gains from the previous sessions. This is as traders are curbing expectations for an interest rate hike. We're also keeping an eye on gold, still over $4,000 an ounce, a commodity to keep an eye on in the geopolitical sphere that we're seeing. But for a deeper dive into what is happening in Asia this morning, we've got Winnie Su in Hong Kong standing for us. Winnie, what do you have for us this morning?
Yeah, good morning, Abir. Well, we are seeing Asian stocks staging a very nice rebound today with the gauge up more than 2% after 2 days of sell-offs and also tracking those gains overnight in the U.S. Of course, we do have a very supportive macro backdrop with oil prices easing, but also when you look at the factors that have really been driving the sell-off recently, including those higher bond yields and also the uncertainty around the AI spending, those have started to turn around as well. And that's why we are seeing the tech-heavy gauges in South Korea and Taiwan both rising more than 3%. As you just mentioned, Australia's benchmark hit that intraday record high as well. But flip the board, we take a look at that key sector to watch today. It is, in fact, the optical transceiver sector in Asia, because we've learned that the U.S. is reportedly drafting a ban on these Chinese data center components to protect its data center infrastructure. And you can see that the Chinese names, including the likes of Zhongji Inolite and Eoptolink, both falling more than 5%, while its competitors, the likes of Fujikura and also Sumitomo Electric, are also rising on the back of this. Now, we've learned that these Chinese manufacturers are, in fact, taking up about half of the market share globally. And that is why, for now, strategists are telling us that this is most likely going to be just a negotiation tactic between the U.S. and China because of the big reliance of the U.S. on these Chinese suppliers. Back to you, Abir.
All right, Winnie, with all those market details, as usual, she'll be back with us in about 30 minutes. Now, returning to the regional story, oil prices slide below $80 a barrel on optimism. A deal between the U.S. and Iran can be reached that would reopen the Strait of Hormuz and free up supply that is trapped in the Persian Gulf. Qatar said an interim proposal had been drafted, and both Washington and Tehran signaled progress in talks to reopen the waterway. President Trump speaking just minutes ago saying Iran would be very smart to make a deal. And for more on this developing story, we're now joined by Megan Sutcliffe, Principal Analyst for the Middle East and Africa at SEBI. Megan, a pleasure to speak to you always. Let's start with the latest from the region. We were just listening to President Trump at the top of the show, or before the top of the show, speaking at the tarmac saying that a deal could happen in 48 hours. But this is specific to the Strait of Hormuz. This is not the MOU that we were talking about a month or so ago. So the question is really simple. Where do we go from here?
That is certainly the question that everyone is asking at the moment, given the renewed optimism that we're seeing from numerous US officials regarding the progress of negotiations with Iran and, of course, broader dynamics between the US, Iran, Oman, regional parties, and the Strait of Hormuz. In the next few days, what we're likely going to see is a continuation of the contact that has been occurring in the past week between Iran and Oman to negotiate some kind of settlement to reopen and coordinate the movement of vessels through the Strait of Hormuz. And if those terms are acceptable to the United States, further statements from individuals like President Trump and the US Secretary of the Treasury, Scott Bessent, indicating that the US is willing to support such an agreement.
Megan, I know this is a difficult one to gauge, really, because we've been here multiple times before over the past 6 months or so. But given where things are now and what has been reported, do you think that we're going to see a genuine de-escalation starting with this Hormuz deal, or is this just a tactical pause to get things moving again, do you think?
Well, at present, things do remain relatively unclear. And you're absolutely correct that this is certainly not the first time that we have been in this situation. The pattern of the US threatening to engage in major airstrikes targeting Iran and then claiming there has been a major breakthrough in negotiations is something we have seen numerous times in the course of this conflict. So I wouldn't necessarily say that this is a guarantee of imminent progress or a breakthrough. However, the combination of optimistic statements from the United States regarding dynamics in the region, the progress in the bilateral file between Iran and Oman, and broader market confidence in exactly what this deal could mean for reopening this waterway are cause for cautious optimism. And I would say that we are closer to producing an agreement than we have been over the past few weeks, even if that agreement is not necessarily guaranteed.
Megan, we've also reported, Bloomberg has reported that Iran behind closed doors is softening to the idea of having nations, European nations, help in demining the Strait of Hormuz, despite some disagreements in the echelons of power there. Do you think that overall the stance of Iran is softening at the time being? Do they have the incentive to pull back a little bit given where the United States is at the moment?
I would say that currently Iran's position is relatively consistent in that it is unwilling to negotiate on certain principles that it has asserted both domestically and internationally. When it comes to the Strait of Hormuz, Iran has been very clear that it views its control of the waterway and its ability to collect various fees from vessels attempting to move through the waterway as a non-negotiable. However, subject to that principle being accepted by international parties, it is willing to negotiate on what exactly that agreement would look like, and of course any potential preludes to that agreement taking place, such as the deployment of European naval assets to engage in demining activities. So I wouldn't necessarily say that this move or report coming out of Bloomberg today is indicative of a broader softening of Iranian positions, but it does show that the Iranian authorities are still willing to engage with various international parties and display a degree of pragmatism, even if that doesn't necessarily translate into major concessions on key issues such as the provision of service fees and, of course, the threat of attacks targeting vessels moving through the waterway without Iranian permission.
Okay, and speaking of that, speaking of waterways getting attacked, we're also seeing the parallel aggression that is happening between the Yemen Houthis and Saudi Arabia. We also reported that there is some effort to return to diplomacy there. Is that something else that worries you, the Red Sea? Because the Strait of Hormuz has been in this shape arguably over the past 6 months, but we're seeing this renewed or this fresh risk at the Red Sea that Saudi Arabia had resorted to. Is that something that you're thinking could have bigger consequences that we're not aware of at the time being?
Absolutely. This is a major concern for the region and particularly for Saudi Arabia. Of course, the implementation of the Houthi blockade on Saudi ports on the 20th of July is a major source of concern for Riyadh because that effectively cuts off the lifeline that Saudi Arabia has relied on throughout the course of this conflict, that being its export facilities on the Red Sea. That has been the way that Saudi Arabia has been able to maintain its export of key commodities such as oil, as well as engage in other broader import-export activity, both for its domestic needs and on the behalf of other states within the Middle East. And so the fact that we have seen increased pressure from the Houthis on this economic lifeline is a major source of concern. But there is increasing evidence to indicate that with Omani mediation, there has been at least some progress in re-establishing contact between Riyadh and Sana'a. In the next few weeks, it is likely that we're going to see that contact continuing and an effort by the Yemen-based Houthis to maximize pressure on Saudi Arabia to fully implement the 2022 UN roadmap towards a political settlement in Yemen. That'll be a very challenging process, but one, if it's seen in conjunction with the reopening of the Strait of Hormuz, that would moderate pressure on Riyadh and therefore moderate pressure on international markets.
All right, Megan, we're going to have to leave it there. It does look like the next 48 hours will be monumental, according to President Trump just now. Megan Sutcliffe, Principal Analyst for the Middle East and Africa at SEBI. Now, coming up, we'll talk about SpaceX. Its AI spending throws cold water on its debut earnings after its blockbuster IPO. We'll bring you the details on that story next. This is Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Bringing you the latest business news wherever and whenever it happens. I'm Scarlett Fu, reporting from America's biggest military shipyard. This is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Welcome back to Horizons Middle East and Africa. SpaceX falls in after-hours trading after it disclosed higher than expected spending on its AI business, dampening the company's first quarterly report that broadly surpassed Wall Street forecasts. CEO Elon Musk told analysts that he expects the cadence of AI development to improve dramatically and that SpaceX would reach $100 billion in annual run rate revenue by the year's end. So to discuss all of this and wider market moves, we're now going to get more from Bloomberg's Anthony Stevens. Anthony, good to have you with us. Tell us more on those earnings from SpaceX and why has the AI spending made investors quite jittery?
Yeah, let's put that move in context. In the after hours, it's down around 7%, but the stock was up 9% into earnings. So let's call it net flat. And that's interesting because the implied volatility on the stock going into earnings was around 14%. So this stock was expected to be volatile after earnings. And that's because analysts don't really know what to expect from this company in the first place. So price targets are quite widely dispersed on this stock. Now, looking into the earnings, there's the good and the bad. The good is that they're getting a lot more money out of AI a lot sooner than people thought. So compute bookings are quite strong. The AI business is doing quite well, and the Starlink business is doing quite well, as almost everybody expected. On the negative side, AI capex is about 20% higher than people expected. And recently, the pattern in the US market has been to sell too high capex because people have some doubt around whether they're going to get this capex back. But the picture into wider markets has been very positive. They were very vocal. SpaceX was very vocal about locking down some of NVIDIA's production, and that reads very well into Korea, Taiwan, and Japan, which are trading very strongly in Asia today.
And Anthony, just sticking with the tech earnings, AMD is also down in the after hours. I'm taking a look at the performance there, about 9% lower. Why is that?
One aspect is that AMD has already been very successful in the stock market for quite some time now. It's been riding this CPU boom as people look to move away from training AI models into the inference and the use cases of AI models where you need a lot more CPUs. So AMD is up around 140% year to date, and it's retracing some of these gains because it has failed to clear the highest estimates. So third quarter guidance is relatively muted from a very high base. Even in the AMD result, though, there is very strong guidance into the rest of the tech ecosystem, with the company talking about 40% growth annually for quite some time and a total compute market of around $2 trillion. So Intel was up 12% into that earnings. It'll be very interesting to see how Intel trades tonight alongside AMD. But in Taiwan, for example, computations-related stocks are up very strongly, around 5 to 7%.
And in Asia, tech stocks are ramping up. Why is that happening?
Yeah, aside from this strong guidance, you continue to have the big Korean players innovate. So Samsung has released details of its next generation of memory. That follows Hynix's announcement on next generation memory in the NAND space yesterday. So from a technology perspective, it's quite strong. Then also the US has let kind of Chinese AI models off the hook a little bit by enabling and kind of not barring open weight models. So that's got tech in China quite strong. And lastly, the results season in Japan on the tech side has been tremendous. Ibiden is up double figures today after beating on earnings. That's raising the entire AI kind of picks and shovels trade in Japan. It's up around 3 to 5% as a group. And the Nikkei is up 3.
All right. Bloomberg's Anthony Stevens keeping on top of all these big market moves. Now, some of the other stories that we're following this morning. AI models from Anthropic and OpenAI have carried out unsanctioned actions, including hacking a website and attempting to inject harmful code into software during the safety testing of these apps. According to the UK's AI Security Institute, during an evaluation, Mythos 5 and GPT 5.6 Sol models engaged in what is called sustained potentially harmful activity against people and organizations. OpenAI and Anthropic are now working with the institute to investigate the incidents. Reuters is reporting that the US FCC is drafting a ban on imports of some Chinese data center components. The proposed ban aims to prevent Chinese firms from installing malware or stealing from data centers critical to the AI boom. The news comes as the US steps up its efforts to restrict the flow of critical tech components from China, citing risks to national security. Coming up, as South Africa looks to expand its energy infrastructure, we'll bring you some of our interview with the country's electricity and energy minister. That is coming up next. This is Bloomberg.
Bringing you the most important news and financial information whenever and wherever it happens. I'm Michael McKee on the Mexican border, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Welcome back to Horizons Middle East and Africa. South Africa's Energy and Electricity Minister says the country has received firm commitments from Chinese companies to expand its power infrastructure. The pledges include the realization of more than 100 gigawatts of new power capacity over the next decade. Bloomberg's Jennifer Zapasadra spoke with the minister about the investment plans. Take a listen.
You know that South Africa is the most industrialized economy on the continent. We serve as a battery for the region. By that I mean we supply all our neighbors with electricity. We account for about 75% of the total installed capacity in the SADC region, just over 50% of installed capacity in Sub-Sahara. So what some of these actors, especially on the transmission side, we're looking to work with them to build what we call the regional interconnectors to allow us to have sufficient capacity, more than we do now, to transport the electrons, or if you like, the electricity into neighboring countries, because we are seeing more and more investments in the neighboring countries on mining and beneficiation. Just our region alone, the South African Development region there, we account for 30% of the known critical minerals, which are going to undergird the transformation and the decarbonization agenda. So really the opportunities are on the continent, in the region, and they will require electricity to be realized.
What does that mean, Minister, for capital allocation? Is the focus going to be then on transmission in South Africa, or are the discussions a bit more broad throughout the week?
Well, the discussions are broad, but I think the basis of how we broaden that discussion is just an appreciation that you need a point of landing, and that point of landing is South Africa, and you use South Africa as a springboard into the African market. So what do? We catalyze that investment to allow for early decision making in relation to capital allocation. We need to give investors assurance of a pipeline. There has to be see-through of that pipeline. They must have confidence that the state will deliver against that pipeline. So we're using the South Africa as that lending platform. And once they have this confidence, and those who are already present, the confidence it gets to be elevated, then they can think of moving into the continent, and as they do that, they are going to increase capacity utilization in South Africa and be able to provide solutions for the region. But what is important is that we have to start somewhere, and there's an appreciation that South Africa provides an excellent opportunity for those who've got ambitions of supporting the electricity development, evolution, and the reform agenda on the continent. South Africa is a place to start. So we're aggregating all of these actors, and from there they can spread into the continent.
That was the South African Minister of Electricity and Energy speaking to Bloomberg's Jennifer Zapasaja yesterday. Now, for a look at some of the other stories that we're following, the Pretoria High Court says the suspension of Patrick Dlamini as Chief Executive Officer of South Africa's Public Investment Corp was unlawful and invalid. The court has ordered that he be reinstated to the position. Dlamini was suspended over governance concerns. And last month, South Africa appointed a new chairman at the state-owned fund manager in an effort to restore confidence in the institution. Nigeria has approved a $4.5 billion oil-backed financing deal to bolster its foreign exchange reserves and fund key infrastructure projects. Under the arrangement, Africa's top crude producer will receive the money from a refinanced pre-export crude facility that has secured by 78,000 barrels of daily oil output by the Nigerian National Petroleum Company. And now, coming up, we will talk more about the Strait of Hormuz and what's happening there. This is Bloomberg.
Historically, bubbles were characterized by a notion of if you build it, they will come. In the late 90s, when we were building out data networking equipment, people were putting huge amounts of fiber in the ground on the assumption that it would come. And economists like to go back for reasons that are unclear to me to the railroads. They were also, if you build it, they will come. What is unusual about AI right now is the builders are so far behind the demand, it's absurd. We have a backlog of more than $25 billion of demand. That there are none of us, not AMD, not NVIDIA, that can keep up with the demand that your employees are driving. That's, in a lot of ways, the opposite of a bubble. We are chasing. Our customers and their customers are moving at the speed of software, and we're moving at the speed of real estate, data centers. Right. And so we are behind.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
Good Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Deal hopes rise. Oil prices fall for a third day as progress builds towards reopening the Strait of Hormuz. Qatar says an interim proposal has been drafted with both sides signaling progress in talks. Clearing the strait, Bloomberg has learned that Iran is considering allowing European nations to remove mines from Hormuz. And AI spending hits, SpaceX shares fall despite a revenue beat as investors focus on soaring AI investment and weaker cash flow. It's just gone 8:30 a.m. across the Emirates. I'm Abir Abu Omar in Dubai. Let's take a quick look at where markets are sitting at half past the hour. We're still taking a look at U.S. futures, 0.3 higher. Asian equities taking their cues from Wall Street today, 2.1% higher. Brent crude about 8% lower, and then the yield on the 10-year notes in the United States exactly 1 basis point lower this morning. Keeping a persistent performance over the course of the week. But let's take a look at some of the individual names. We're focusing in, of course, on SpaceX. Its inaugural report yesterday that disappointed markets, it looks like. In the after-hour trading, the stock did fall 9%, and it hasn't been able to maintain its performance since the IPO over the summer. It's well below that IPO price, taking about $1 trillion from its market value, and also the status of Elon Musk as the world's first trillionaire. And so our Bloomberg intelligence colleagues have pointed out an interesting fact about the report, and that is the backlog number at about $47 billion. Again, BI says that Anthropic and Google tie-ups with SpaceX will generate or will give it about $6 billion at least, or about that number in the coming couple of quarters in the year. So something to keep an eye out on, aside from the basic numbers that we've taken a look at yesterday in the report, aside from that capex number that we've been talking about. But then Asian equities, again, as I mentioned, doing very well today. The Kospi is gaining, the constituents there are gaining. We're taking a look at the yen, the intervention that we've spoken about at the top of the week. The yen is holding steady, but the performance has stalled a little bit since the interventions that we've reported. And then the Australian equity benchmark, Australian shares have hit an all-time high. So that is a size and scope that we're taking a look at. We'll talk more, of course, about Brent crude prices, what is happening there, what is happening in Hormuz, and what is happening in the efforts to reopen the Strait of Hormuz. But some breaking news just now. India's central bank holding its repo rate. So the RBI says that 6 out of 6 MPC members voted for the rate decision that was widely expected. India's central bank leaves the key rate at 5.25%. The estimate was 5.25%. Now, for a look at what is happening in Asian markets, we've got Winnie Su for us again in Hong Kong. Winnie, what do you have for us?
Yeah, morning, Abir. As you just mentioned, a very nice rebound in Asian stocks today as we see the gauge up more than 2% after 2 days of sell-offs. And of course, it is tracking those gains from the U.S. overnight, but also the more supportive backdrop, especially with oil prices easing amid that optimism of potentially a deal to come when it comes to the Middle East tensions. And here you can see that the tech-heavy gauges in Korea and also in Taiwan are up about more than 2.7%. And when it comes to the Japanese yen, well, it is still front and center. But today we're seeing just a bit of a strengthening, but still very close to that 157 or 158 level against the dollar. We did hear from Scott Bessent again that the U.S. will take whatever to support Japan. But the key focus is to support a quote-unquote stable yen. And that is exactly what you are seeing right now, that the yen is really stabilizing here around those levels. So we will see how sustainable that yen rally really is. Now, before we take a closer look at where the Korean market actually is, because interestingly, want to point to you that after this recent correction in the Kospi, right at one point, from the peak to the trough, we were down about 40%. And with that volatility also coming down as we're seeing these leverage bets being washed out from the market. So now potentially we are seeing a bit more of a supportive environment for the Korean market, given less volatility. And that's potentially why we're also seeing foreign investors stepping into buying these Korean stocks today. Back to you, Abir.
All right, Bloomberg's Winnie Su in Hong Kong with her usual market updates. Now back to the regional story. Iran is considering allowing European nations to clear mines in the Strait of Hormuz to restore safe shipping and advance peace talks with the United States. While Tehran has publicly maintained that foreign nations cannot demine the crucial waterway, private meetings in recent weeks indicate that that stance has softened. For more analysis, we're now joined by our oil and shipping reporter, Wei-Loon Soon. Wei-Loon, good morning. The significance of this move and the apparent acceptance of Iran for European nations to come through, just how important is that?
Right up here. So this move is a small step in the right direction. But as with what we have seen for so many months so far about the battle over the control of Strait of Hormuz, that it hinges on a lot of things. So one would be that Tehran and maybe the military forces in Iran would have to come to an agreement that this is the right next step. And then you would have to think about how many European naval forces would actually want to deploy within the Strait of Hormuz. They need some guarantees from Iran that the demining operation can proceed safely. And then we still have the US weighing in. We don't know how acceptable, how open they are to this plan. So there are many different factors to this, but we do all agree that demining within the strait is very crucial for shipping to regain confidence in sailing through the choke point.
And so, Wei-Loon, on the physical movement, are we seeing any movement in the traffic through the Strait of Hormuz? Are we seeing any attacks happening there?
That's a great question. So if you look at ship tracking data, if you look at platforms that rely on open transponder signals, there doesn't seem to be a lot of ships going through the strait as we speak. So this is quite different from what we have reported on and heard of about ships going through the Strait of Hormuz in the dark. And we do know that some of those have received US support in terms of maybe getting coordinates to sail through the Strait of Hormuz on the Oman coastline. And then you also have some form of air support from the US military. So all in all, we do hear of, for example, crude carriers going out. There was just one yesterday carrying Iraqi crude. Just today, we saw another one from the United Arab Emirates. So even though on screens, on computer screens, we don't see ships going through, but in the dark, they have been sailing. And this really relies on a tactic they have built up over the few months of the war, where ships will go through Hormuz, shuttling in the dark with the transponders off.
All right, Bloomberg's Wei-Loon Soon keeping on top of that movement in the Strait of Hormuz. Now continuing with the same story, pretty much. Saudi Aramco's second quarter profits surged 33% as it benefited from a conflict-driven surge in crude prices. Benchmark Brent crude averaged almost $97 a barrel during the quarter as the closure of Hormuz caused the biggest oil supply disruption in history. For more on this story, we're bringing in Stuart Livingstone-Wallace, Bloomberg's executive editor for the Middle East, North Africa, and Russia. So the report came out yesterday, the earnings came out yesterday. What are the intricacies we were looking at, and how affected are they by the disruptions in the Strait of Hormuz and other waterways?
Yes, I think in terms of the key takeaways, we put it into two categories. So one for shareholders in Aramco. I mean, they're still making an extraordinary amount of profit, which is self-evident from the numbers you read out, but also quite surprising given the environment they've been operating in the last several months. So, that is quite extraordinary. And I think that speaks to their ability to use alternative export paths, particularly through the Red Sea. Secondly, in terms of the dividend, that remains unchanged, again, key for investors, but also really key for the Saudi economy more broadly because it is so reliant on that payment. And from that, the Sovereign Wealth Fund, the PIF, because that in turn speaks, I think, a lot to things like spending on infrastructure, job creation, all the things they're trying to transform, all the ways they're trying to transform their economy. So, yes, Aramco is important, but it has this much wider ripple effect across the Saudi economy and across all sorts of industries.
And so just a little bit more macro on the same topic, on oil flows in Saudi Arabia. We've been seeing a little bit of a pickup in aggression in the Red Sea, which Saudi Arabia has been using as a lifeline, you can correct me if that's not the right word, a lifeline throughout the course of this war. That risk for the Red Sea, Bab el-Mandeb, to be hit, is that something you think that the Saudis are looking at when it comes to those very vital oil flows into the kingdom?
Yeah, I mean, it's definitely an additional headache, for sure. And we know that there have been attacks on shipping in the Red Sea. I mean, as recently as yesterday, we had an Indian-flagged ship that actually was sunk. Thankfully the crew was rescued and so on and so forth. But I think that speaks to that added danger. Now, what does that mean for Saudi Arabia? Yes, it's an additional problem. They do still have an alternative, which is to go north up through Suez. But of course, that adds, something like 25 to 30 days shipping time to Asia. That's going to constrain the fleet. That's going to slow down everything, raise costs. So, it's not to be welcomed, but it's not quite game over, of course. And we still see ships going through the Bab el-Mandeb. So again, rather like Hormuz, it definitely makes life more difficult, but it doesn't bring everything to a stop.
But we've also reported that there seems to be a little bit of an effort to go back to diplomacy, even between Saudi Arabia and the Yemen-based Houthis. We've reported on the breakthrough with President Trump and Iran, but that is a parallel effort that is happening. What do we know about that?
So, I mean, I think it reflects largely the Gulf's position across the board. So you've seen this with Iran, right, where they're clearly pushing the diplomatic track as the preferred route. And that's just purely pragmatic. Number one, no one benefits from wide-scale, long-lasting warfare. It's hugely expensive, generally doesn't get anywhere. Diplomacy is always the better track. So I think that, like we've seen with Iran, they're going to be pushing that with Yemen as well, particularly the Houthis. And we'll see how that goes.
Yeah, and as President Trump was speaking moments ago, he said the next 48 hours we'll see. Stuart, thank you as always. Stuart Livingstone-Wallace, Bloomberg's executive editor for the Middle East, North Africa, and Russia. Sticking with oil giant BP is putting another key asset up for sale and will meet its debt target sooner than planned. This is all part of its efforts by Chief Executive Meg O'Neill to streamline the business and rebuild investor confidence.
There are significant areas for improvement. The balance sheet is first and foremost an area of challenge. We're carrying financial liabilities when compared to the size of the corporation that are just too high. So we've got to strengthen the balance sheet. We've got work to do on the portfolio. We're in too many assets, many of which are not generating the sorts of cash flow or return that we need for them to be part of the long term of the group. So we've got work to do on the portfolio. We need to sharpen our capital discipline and make sure every dollar that we're spending is making an impact on the bottom line.
Still ahead, our next guest says markets may be too focused on AI volatility and not enough on the bigger move in long-dated U.S. yields. More with AG Capital Market strategist Casey Sprake on what rising long-end yields will mean for global markets next. This is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate.
More than what you need to know, it's what you need to think about.
Welcome back to Horizons Middle East and Africa. Brent crude is holding below $80 a barrel on hopes for progress towards a Hormuz deal, while Treasury yields remain lower as easing oil prices reduce pressure on the Federal Reserve. Joining us now to discuss these market moves is AG Capital's market strategist, Casey Sprague. Casey, very good to have you on with us this morning. Let me start with something that you've put out that kind of encompasses all these market moves. You say that markets could be underestimating what is happening to the long end of the U.S. yield curve. Why is that?
Good morning, and 100%. It really feels like at this point the market is being sort of punch drunk around anything AI CapEx spend. I mean, if we look at the SpaceX results, the headline number there is the $10.1 billion that they spent just on CapEx. I think it was around $7.7 billion of that has gone just to AI spending. And that, of course, has ramifications. I think we've been really focused on what that would mean from a sort of equity level and how that's sort of pricing in the broader equity market. But at the end of the day, these the top 5 firms are having to withdraw that funding internally and look at actually raising issuance to fund this massive CapEx spending. And that, of course, is having ramifications across the broader fixed income market, particularly along the US 10-year yield, or 30-year yield, sorry. So we see a scenario where the US Fed actually held rates, but on that same day, or I think it was the 29th of July, the US city popped up by 11 basis points. I think it actually finished the day at around 5.28%, which is the highest level since 2007. And it seems like the market at the moment is crowding in one window and ignoring the massive ramifications that's going to have across the broader bond universe.
Yeah, but just Casey, sticking with the Fed, with now an expectation of a more benign Fed path going forward. Now, of course, this could all change, especially with us not really knowing much from Kevin Warsh. Do you think the biggest surprise for markets going forward or over the next few months is going to be a more hawkish Fed, or is it going to be a slowdown on the economy, or is it going to be sticky inflation changing course?
I feel like at this point it's very much a wait-and-see scenario within the Fed. I think they'd love nothing more than to have the opportunity to be able to cut rates, but the unfortunate reality is they're going to have to start taking a more hawkish stance. Inflation is just not at the levels that is sustainable within the US economy and, of course, the global sphere. There's so much geopolitical uncertainty at the moment. Every day there's a new headline coming out from the war in Iran, etc., and where the oil price direction, I think, right now it's become almost the most difficult scenario in terms of gauging where your rates are going ahead. And of course, we mentioned these other moments around sort of the AI spending, and that itself is having its own movements on the yield curve, in the sense that that's actually restraining financing rates more so than what even a decision coming out the Fed would be. The bond yield curve is actually doing the work for the Fed in that sense.
So, Casey, speaking of oil, what do you do with it now? Do you just look past those everyday headlines?
I think at the moment, particularly within emerging markets like here in South Africa, central banks are being forced to. It's incredibly hard to take any level of direction in that sense. There are, of course, lots of localized issues. If you look at South Africa, we're very much concerned around what El Nino is going to do to our food inflationary outlook. And of course, we remain a net importer of oil. So, it's difficult. You have to take a look at past the headline numbers. But at the same time, we've had a couple of months of these sustainably high oil prices, and that is filtering through the broad inflation basket and those second order effects. So central banks are becoming increasingly forced to weigh up, much more restrictive stance on what sort of local economies can stomach at the moment.
Okay, and you also mentioned AI volatility, and we've obviously been seeing everything that's happening when it comes to this earnings season, whether in the US or in Asian markets. Do you think that the market is starting to become a little bit more comfortable with those macro risks, including the Fed, including CapEx, including the massive spending in those major AI companies? Or is earnings growth underwhelming those wider concerns that we're seeing?
I think the earnings growth is for sure underwhelming at this point. We're starting to see the nervousness in markets now around this, where the sort of blown out CapEx spending is moving, and what it's now having actually the effect in the sort of in bond yields. I mean, a great case study of this has been the blowout that we saw from the Situational Awareness Fund. I think it's probably going to become a case study for universities sort of going ahead. So markets are becoming increasingly nervous and are having to start sort of baking that into the outlooks going ahead. Just at the level cost of refinancing that debt and the way that moves through transmission channels in terms of thinking your currency moves, your local sort of bond yields, and again, just at the cost of debt, it's restraining economies far more than what a decision that's coming out of a central bank is.
All right, Casey, we will have to leave it there today, but thank you, as always, for your time. AG Capital's market strategist, Casey Sprake, joining us there. Coming up, we will have an interview with Sasol's CEO as the South African petrochemical company charts oil market swings amid tensions in the Middle East. That is coming up next. This is Bloomberg.
The global economic playbook is being rewritten and the levers of power are moving in real time.
To see where the world is headed, you have to look where the action is.
I'm Haslinda Amin in Singapore.
I'm Menika Doshi in Mumbai.
Welcome to Emerging the New Economy podcast.
Each month, we dive deep into how the world's most exciting rising economies are shaping the global future.
Join the conversation. Subscribe to Emerging on your favorite podcast platform today.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Mumbai. This is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Welcome back to Horizons Middle East and Africa. South African chemicals company Sasol says it is positioning itself to be, quote, resilient against volatile Brent prices amid continued disruption to supply chains in the Middle East. CEO Simon Baloyi spoke to Bloomberg's Jennifer Zabasaja. Take a listen.
The Sasol hedging strategy, talking back on it, is primarily aimed at making sure that we protect the covenants on our balance sheet. It's not necessarily for income protection. So the hedge cover ratio aligns with where we see our debt evolving to. As we look forward into the next 6 months, we do look at all the analyst predictions of what we think the oil price is going to be, and the ranges that we see, we will continue to make sure we do what we have to do internally to make sure that we are resilient at those oil prices.
What does that look like then, the resilience aspect of it?
For us, during Capital Markets Day, we spoke about making sure that we position Sasol to be resilient at $50 a barrel or lower. But for now, I mean, last year when we released our results, we were just below 60, and we'll release our results on the 1st of September, and we'll give an indication to the market where Sasol is.
So you can't see a ceiling. You can't say a ceiling at this point for the price. We're looking at just below $85 right now.
Yeah, exactly. I mean, we don't know where it's going to go. It depends on the geopolitics. I mean, if the issue is resolved, I mean, because some of the inventories has to be refilled. So I mean, all the guys that have a crystal ball and they predict the oil price, they're saying it will be between 70 and 80. But like I said, for us, we look at what we need to do internally and position the group for resilience.
If in fact Sasol is, you said, positioned for the demand story here in South Africa, of course, and the demand is there. How do you think about the emissions picture, right, as the second biggest emitter in South Africa? Is that still a priority for the group? Where does that factor in, especially if we do continue to see this prolonged conflict in the Middle East and the impact that could have?
Yeah, I mean, how we think about emissions from a Sasol perspective, we look at our scope 1, 2, and 3. And I think if you look at PS and people like us, and you look at scope 1, 2, and 3, you'll see that we're not the second biggest emitter or the largest one. I think our advantage is that we've got the largest petrochemical complex built in one place. And I think sometimes that story gets lost where people just focus on the emission.
That was Sasol CEO Simon Baloyi speaking to our own Jennifer Zapasaja. Now, before we head to the end of our show today, a quick look at equity benchmarks. U.S. futures tilting higher, 0.3 higher. NASDAQ 100 futures 0.1 higher, moderating from yesterday's 3% gain. We're also keeping an eye on oil prices that are moderating again because of that breakthrough in the Middle East. 48 hours is what President Trump had said. That is it for Horizons Middle East and Africa today. Stay with us for Daybreak Europe. This is Bloomberg.
Do you mind being called an ideological lunatic or a bunch of left-wing nut jobs?
You know, I've been called worse things than that.
Oh! You'd think she owned the place.
23andMe, I think, is so incredibly valuable. We're coming back.
It had that kind of detective story feel to it. You know, when you're hot on the trail of something, you know that it's very exciting.
What magazines were you reading as a kid?
I don't think I was reading magazines until I was in them.
You are on the cover of all of these.
Oh, and there's many, many more, but we just don't have time.
Why should people trust you?
I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands.
The shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it paradise ahead or Gattaca?
Maybe somewhere in the middle.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizon's Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bringing you up to the minute geopolitical news whenever and wherever it happens. I'm Anne-Marie Hodern in Beijing, China, and this is Bloomberg.
Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. Global stocks climb to a record as traders renew bets on the AI trade. But SpaceX fails to take off with investors. Its debut earnings sending shares lower. Oil slides south as President Trump says talks with Iran are moving along nicely. Axios reporting the US is hoping to announce a deal as soon as today. Plus, slim pickings for Novo Nordisk as the drug giant's new weight loss pill fails to top expectations. It's a busy day for European earnings today, and we'll be speaking to top executives from Siemens Energy and the chipmaker Infineon. Well, a very good morning. Welcome to Tuesday. Here is the picture in markets. Asian stocks snapping a two-day rally. So the MSCI Asia Pacific Index up more than 2% as things stand. Best level since mid-July. Traders, as I say, getting back into bets on AI. So it's the chip stocks doing the legwork this morning. Both Samsung and SK Hynix on the Kospi up more than 2%. In fact, SK Hynix up nearly 5% as things stand. And futures pointing higher on both sides of the Atlantic as well. The S&P already having closed high, at a record high, I should say. But caution lingering after those losses for SpaceX and AMD after their earnings after market. We'll talk about all that in just a moment, but flip the board to the cross-asset picture because we need to weave in the geopolitics here. Part of what's boosting sentiment for equities is we have oil prices lower. Brent at $78 a barrel, down 0.7%. This on that Axios report that the US, Iran and Oman are closing in on an agreement to reopen the Strait of Hormuz, aiming for an announcement today. That fueling a little rally in treasuries, the 10-year yield here at 460, so just down a basis point for the yield, and the dollar, the haven of choice, of course, during this conflict, as you would expect, is just down a little touch as well. That's what's happening in markets. Plenty of earnings to bring you this morning, so let's get started. We begin with breaking earnings out of Amsterdam from Heineken, which you might expect would come with a little World Cup boost. But the expectation was for softer beer volumes in the US and market share pressure in Mexico and Brazil. What you are seeing is that second quarter Africa and Middle East beer volumes missed estimates. Second quarter adjusted net revenue coming in at 8.13 billion euros. The estimate was for 8.07 billion euros, so a bit of a beat there. But they still see their full year adjusted operating profit between a range of 2 and 6%. So maintaining the guidance, the shares up 11%. So far this year. Now, let's also turn to earnings from Siemens Energy, also for the quarter. So we have third quarter energy orders coming in at 17.93 billion euros, beating the estimate of 16.72. They're targeting the top end of the outlook range. These are record orders for Siemens, it has to be said. And the expectation indeed had been for strong gas orders because you've had continued robust demand for from data center customers. So what else have we got through these numbers? They still see full year composite sales between 14% and 16%. Third quarter revenue is coming in at 11.45 billion euros, so an ever so slight beat there on the estimate. So we will be talking to the CEO, Christian Bruch. That conversation just after 6:30 a.m. London time on this programme on Daybreak Europe. So we'll get into some of the questions in terms of the outlook ahead. Citi analysts noting that there really is a bit of a lack of clear catalysts and that could cloud visibility. But let's turn to some of the earnings that we've already had out overnight. SpaceX stock falling in extended trading after it disclosed higher than expected spending on its AI business, dampening a debut quarterly report that broadly surpassed Wall Street forecasts. CEO Elon Musk outlined plans to significantly accelerate AI development.
We expect the cadence of AI development to improve dramatically. And then with Grok 5, which should be out before the end of this year, we will be incorporating the entire corpus of SpaceX data, basically all the data that SpaceX has ever produced, which is a tremendous amount over the course of a quarter century, will be incorporated into Grok training.
Well, let's get some more analysis with our Bloomberg senior strategist, Neil Campling, who I believe had a comment from Elon Musk on your analysis last night, Neil. So what were you saying about these results? Because investors don't seem to have been as impressed as perhaps Elon might have liked.
Yeah, I think the setup into the print, Lizzie, was there were big expectations in terms of the inaugural quarter. The problem is, just putting it simply, for every $1 of revenue the entire company makes, they're burning $2 of cash. So the big ambitions are coming at significant cost. They did $7.8 billion of revenue, but they burnt more than $16 billion of cash because of the capex. The capex ambitions are high. They're going higher still. And Elon's ambition now is to do $1 trillion of revenue by 2030. Well, how do they get there? So it's a big question because they only posted $12.5 billion of sales in the whole of the first half of the year. So the stock had recovered somewhat into the print, big ambitions. Some of the hedge funds have been short into the print, and so there's volatility around that, and that's going to continue, I think.
And then we also had AMD shares falling as well, down 9% roughly in late trading off the back of their results. But again, beats just not good enough for the market.
Yeah, I think, again, it comes back to expectations. Better travel and arrive in terms of the stock performance. But also, AMD had actually been the 6th biggest single stock contribution to the S&P 500 returns year to date into the print. So it had moved a lot. The stock is often a double-digit mover on numbers, which it could well happen again today. But the buy-side expectations were above where the street were and above what the company delivered. So again, it's a case of good numbers, but not good enough to satisfy some of the loftier expectations.
OK, well, it's interesting that you've seen the S&P finally breaking out of its range yesterday. You got some punishment for the mega cap names off the back of their results immediately when they came out, like Alphabet. But maybe this market's getting a bit more forgiving of all that capex.
We'll see.
We'll see, she says, holding her breath. Neil, thank you for the analysis. That's Bloomberg's Neil Campling. Well, looking more broadly at these markets, we've had stocks in Asia climbing to their highest since mid-July as investors return to that AI trade. Let's go to Winnie Xu in Hong Kong for an update on what's happening where she is. Winnie, what are you watching?
Yeah, good morning, Lizzie. Well, we're seeing a very nice rebound in Asian stocks today with the gauge up more than 2% after 2 days of sell-off. And of course, that is coming after these gains that we saw overnight in the U.S., as well as that more supportive backdrop where we see the oil prices easing amid the optimism for a deal in the Middle East. Now, when it comes to stock moves, we are seeing these tech-heavy gauges in South Korea and Taiwan leading gains, but cross-asset wise, the yen is still front and center, right? We are seeing stabilizing around those levels, around a 158 level against the dollar. Now, we've heard from Scott Besson that the U.S. will do whatever that it takes to support Japan, but it really is to support, quote unquote, a stable yen. And exactly what we are seeing, a bit of a stabilization there. So we'll see how sustainable that yen rally could be. Flip the board, we take a look at that key sector to watch today in Asia, which is the optical transceiver sector. We've learned that the U.S. is reportedly considering a ban on these imports of Chinese data center components to protect its data center build out. And that is why we're seeing some declines when it comes to the Chinese manufacturers, Zhongjing Innolight and also Eoptolink falling about 5%. And the competitors, in fact, in Japan are rising. Now, the Chinese makers are, in fact, taking up about half of that global market share. And that's exactly why we're hearing from strategists that for now, it's most likely a negotiation negotiation tactic from the U.S., especially ahead of that meeting with China's Xi, and that it is unlikely to move the markets too much further because of the heavy reliance of the U.S. on these Chinese makers. But flip the board, we take a very quick look at where the Korean market is trading, because interestingly, we are seeing after that sharp correction in the Korean market, we did see about 40% of a drawdown from peak to trough. The volatility has also fallen quite a bit given that washout of these leverage bets. So with some stability coming in, we're seeing a bit more supportive backdrop for the Korean market, and perhaps why we're seeing foreign investors stepping into buying Korean stocks today. Back to you, Lizzie.
Winnie, thank you very much. That's Bloomberg's Winnie Hsu. Well, turning to the geopolitics now, and President Trump says that the Strait of Hormuz will open very soon. His comments coming after Axios reported that the US, Iran and Oman are closing in on an interim agreement to reopen that shipping lane.
The strait's going to be open very soon, or they're going to get hit very hard, and then the strait's going to be open.
Let's get more now with Horizon's Middle East and Africa anchor Abir Abu Omar. Abir, this is a difficult needle to thread. How does it look like they've done it when Iran didn't want to cede control of the strait and, President Trump wants trade flowing?
Good morning, Lizzie. Yes, so many layers of complexities, really. It's a breakthrough in the region, at least. That is what we know. So many reportings happening all across, really, suggesting that this deal that you were just referring to could be as imminent as later today, and it will mainly encompass the Strait of Hormuz. So let me run you through some of the lines that you mentioned around Axios and what they say could be part of the deal. So first of all, inbound vessels would use a northern lane near Iran, and then outbound vessels would use the Omani waters or the borders next to Oman, the southern part of the Strait of Hormuz, to exit, of course, with the help of Iran. Axios also reporting that no tolls or fees would be charged over the next 60 days, and that Iran and Oman would also work to clear mines from a shipping lane for two-way traffic. Those are the intricate details that we are aware of from Axios. Now, separately, Lizzie, we've also reported that behind closed doors, Iran has softened its stance when it comes to the prospects of getting European nations to help it demine the Strait of Hormuz. So that's a stark difference from what we heard about a month ago, a response of Iranian officials to European officials, including President Macron, saying that Iran will not agree to any other country but itself to overlook the demining of the Strait of Hormuz. Now, President Trump, about an hour or so ago on an LA tarmac, speaking to reporters, saying that we could see a development over the next 48 hours with Iran. He's also saying that the deal around the Strait of Hormuz will help reopen it, something that we've heard from other U.S. officials, including Marco Rubio and including Scott Bessent, saying that this deal that we're talking about with the mediation of Qatar, Lizzie, that's a very important note as well, is mainly around the Strait of Hormuz. So one asks themselves, what about the other concessions? What about the nuclear component? Because it does look like everything we're talking about for the time being is around the reopening of the Strait of Hormuz, getting the movement back to the waterway, and getting those energy prices more moderated. And so this is what we're waiting to see. Again, imminent as today is the line that we've been hearing from media reports, multiple ones, President Trump, some of the U.S. officials, and some of our own sources as well, suggesting that we could see some kind of breakthrough from the Qatari side mediating later today at some point.
Yeah, because arguably if you don't fix the nuclear file, you're just back to square one. Abir, thank you very much for that analysis. That's Bloomberg's Abir Abu Omar as we look at all that progress weighing on the oil price. So Brent now down 0.5% at $78 a barrel. Well, let's take a look at some of the risk events on the agenda for today. We have at 10 a.m. London time, Eurozone PPI. That's expected to drop year on year from 5.9% to 4.6% in June. Then at 1:15 p.m. London time, it's the US ADP jobs data. Of course, we already got the JOLTS numbers, job openings edging down in June, so hiring picking up slightly and layoffs remaining limited. And then at 3 p.m., it's more US data. US ISM services now expected to have strengthened ever so slightly, but still to its highest level since February, despite all that uncertainty, the elevated prices, and the help is coming partly from the World Cup boost and, of course, that 250th anniversary of US independence. So plenty to watch out for on the docket for today. But still ahead on Daybreak Europe, German chipmaker Infineon reports, and we're going to hear from the CFO Sven Schneider just after 6:30 a.m. London time. But first, Scott Bessent hints at further yen support, and we'll dig into the outlook for the currency. That's next. This is Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Welcome back to Bloomberg Daybreak Europe, 6:17 a.m. here in London. Well, Treasury Secretary Scott Bessent has reiterated US support for efforts to stabilise yen weakness. Speaking to CNBC, Bessent said that the level of the yen risked triggering broader depreciation of Asian currencies and that the government will do whatever it takes to support Japan in a way that helps the US economy. Let's get some analysis now with Ven Ram, cross-asset strategist at Bloomberg MLive, who I really think should have a column called Ven on the Yen. Morning, Ven. So I just wonder if this is Bessent trying to make yen weakness everybody else's problem, because he doesn't want to spend even more helping Japan when doing that is actually really just about vested interests in Washington to stop Japan having to sell off treasuries to support the currency. Am I right?
You're absolutely spot on, Lizzie. I don't think anyone could have said it better. I think that, it's a bit of fear-mongering on the part of Bessent to suggest that the wider Asian currencies could weaken on the back of the yen. What has been happening in Asia is completely different. The yen has weakened, of course, on the back of oil prices spiraling, and other currencies that are more sensitive to oil imports have also weakened. So it's a bit of a stretch to say that because the yen is weakened, other currencies are weakened as well. And as you said, look, the Treasury doesn't want to be spending a whole lot defending the yen. The reserves of US are pretty anemic, and they can't afford to draw it down defending a foreign currency, and which is why he said yesterday that he wants to be invoking the FEMA Act so that the Fed bankrolls what's going on with the yen. All in all, it's a pretty frustrating thing from the point of view of Treasury Secretary Scott Bessent, because from his point of view, he wants a stronger yen. At the same time, he doesn't want a too much weaker dollar as well. And at the same time, he doesn't want to be drawing down on the FX reserves as well. So he wants to circle a lot of squares. It's not happening.
Okay, Ven, thank you very much. You can come again. Bloomberg M Live strategist Ven Ram on the yen. Thank you very much. And coming up on Daybreak Europe, we'll turn to tech. AI models from Anthropic and OpenAI caught carrying out potentially harmful activity. We'll get you the full story next. This is Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Welcome back to Bloomberg Daybreak Europe. To one of our top interviews now. South Africa's Energy and Electricity Minister says that the country has received firm commitments from Chinese companies to expand its power infrastructure. The pledges include the realisation of more than 100 gigawatts of new power capacity over the next decade. And we spoke to the minister about those investment plans.
You know that South Africa is the most industrialized economy on the continent. We serve as a battery for the region. By that I mean we supply all our neighbors with electricity. We account for about 75% of the total installed capacity in the SADC region, just over 50% of installed capacity in Sub-Sahara. So what some of these actors, especially on the transmission side, we're looking to work with them to build what we call the regional interconnectors to allow us to have sufficient capacity, more than we do now, to transport the electrons, or if you like, the electricity into neighboring countries, because we are seeing more and more investments in the neighboring countries on mining and beneficiation. Just our region alone, the South African development region there, we account for 30% of the known critical minerals, which are going to undergird the transformation and the decarbonization agenda. So really the opportunities are on the continent, in the region, and they will require electricity to be realized.
What does that mean, Minister, for capital allocation? Is the focus going to be then on transmission in South Africa, or are the discussions a bit more broad throughout the week?
Well, the discussions are broad, but I think the basis of how we broaden that discussion is just an appreciation that you need a point of landing, and that point of landing is South Africa, and you use South Africa as a springboard into the African market. So what do? We catalyze that investment to allow for early decision making in relation to capital allocation. We need to give investors assurance of a pipeline. There has to be see-through of that pipeline. They must have confidence that the state will deliver against that pipeline. So we're using the South Africa as that lending platform. And once they have this confidence, and those who are already present, the confidence it gets to be elevated, then they can think of moving into the continent. And as they do that, they are going to increase capacity utilization in South Africa and be able to provide solutions for the region. But what is important is that we have to start somewhere. And there's an appreciation that South Africa provides an excellent opportunity for those who've got ambitions of supporting the electricity development, evolution, and the reform agenda on the continent. South Africa is a place to start. So we're aggregating all of these actors, and from there they can spread into the continent.
South Africa's Minister of Electricity and Energy speaking there to Bloomberg's Jennifer Zabasajja. Now to some other top stories we're following for you around the world this morning. Artificial intelligence models developed by OpenAI and Anthropic carried out potentially harmful activity during safety testing, including trying to inject harmful code into software. The UK's AI Security Institute said that it was the first time it had seen risks around autonomy and deception manifesting so clearly in the real world. Elsewhere, Bloomberg has learned that former senior officials from European nations and Russia met last month to explore potential conditions for peace talks to end the war in Ukraine. The meeting is said to have taken place in Vienna and included former officials from the UK, France and Germany, as well as an unidentified former Kremlin official. Coming up, we'll bring you earning interviews out of Germany. That's next. This is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Bloomberg This Weekend.
With investors, its debut earnings sending shares lower. Elsewhere, oil slides south as President Trump says that talks with Iran are moving along nicely. Axios reporting the US is hoping to announce a deal as soon as today. Plus, slim pickings for Novo Nordisk as the drug giant's new weight loss pill fails to top expectations. Meanwhile, Siemens Energy reports record orders. The CEO joining us shortly, and we'll be hearing also from the chip maker Infineon. Well, a very good morning if you're just joining us. 6:28 a.m. here in London. This is the picture in markets. Green across the screen for the equities picture today. Asian stocks snapping a two-day rally, trading at their highest level since mid-July. Traders piling back into bets on AI here. So if we look at some of the big names in Korea, Samsung up 2.7%, SK Hynix up 5.2%, that pushing the Kospi up 4.3%. And you're seeing this mood carrying across on both sides of the Atlantic as well. We had the S&P already closing at a record high yesterday, and we have futures higher in Europe too by 0.4%. Now flip cross asset, and you can see partly why as well. It's the geopolitics. As we were saying, this Axios report that the US, Iran and Oman are closing in on an agreement to reopen the Strait of Hormuz, getting oil flowing again, hopefully. So Brent down 0.5% at $79 a barrel on the nose as things stand. That fueling a little rally in treasuries. We're down a basis point at 4.6% on the 10-year. And the dollar, given it's been the haven of choice through this conflict, is down a touch there on the Bloomberg Dollar Spot Index. Now, let us turn to earnings here in Europe once again. And Siemens Energy saying that strong demand for gas turbines and grid equipment should push the profit margin in the current fiscal year to the upper end of its guidance. Let's speak to the CEO, Christian Bruch, who joins us now. Christian, always a pleasure to have you on the programme. Thanks so much for making time for us on a busy morning for you. You already raised your outlook in April. What's giving you confidence now as you look ahead to the rest of the year?
Yeah, good morning, and thanks for having me. Always a pleasure to be with you. First of all, I mean, we are obviously excited about a growing market and the market demand. But what gives us a confidence is the capability of the team at Siemens Energy to convert the backlog, what we have, also into revenue and profits. And this is what you have seen this quarter really coming in. You have seen the revenue increase, the profit increase. And this is on the back of really factory expansions, really landing, execution teams doing their jobs. And that has been a fantastic achievement and gives us also the confidence going forward.
But look, investors have started questioning whether the industry is overbuilding AI infrastructure, models becoming more efficient and that having a knock-on effect. Are you seeing any signs that customers are getting a bit more cautious?
Look, I think we're all excited about AI, but also keep in mind that if I look on the gas turbine business, which is obviously in the center of the attention, only 20% of the quarter this year orders have been related to AI. So it's by no means that you would say it's just AI. AI is an important player, and it will remain an important segment of the gas turbine market. But there is obviously a lot of other projects globally, not only in the US, also in other parts of the world, and it's not all about AI. So I'm not seeing that concern. I do see, obviously, that at the end, everything has to be built. But what I also see is a long-term growth trend in electricity. And this gives me also, for the next years to come, comfort. And at the same time, we have to recognize you cannot overnight build energy infrastructure. It will take time to execute. But we see a market demand which is intact at this point in time. The projects which we have started and which we have taken in, we don't see cancellations. So I think we are maneuvering well through this corridor.
OK, well, we'll see how the market reacts to your numbers at the open, of course. But if you look at GE Vernova as well, their recent results showed really how hard it is to meet the bar of investment expectations in this market around AI infrastructure. I appreciate you saying it's not all about AI anymore. But would you say that the expectations of the market at the moment have become unrealistically high?
Well, obviously, as a management, we are trying to focus on all this excited noise on the signal, really, on the overall market trends. And I'm trying to focus really on building this long-term, successful, growing, profitable company. And while I understand that everybody looks on this quarter and how much more gigawatts have been built on AI, for us it's important that we build a company which over the next years to come can generate really backlog into very profitable bottom line. And this I'm very confident about. And then the market has to decide on how it looks on it in terms of profitability growth. But I think we have to avoid that we always look on just one quarter. It's about execution. It's about turning projects into reality. That is what we are in the business. And we are sometimes a little bit too short-sighted in terms of just looking on this quarter intake. It's really the business we are in is long-term energy infrastructure. And also this is the way on how I look on the company and our results.
Well, as we look to the long term then, going back to GE Vernova, they've also announced significant expansion in terms of gas turbine capacity. How are you thinking about your own capacity plans, and how do you balance meeting strong demand with oversupply, avoiding oversupply later on down the track?
Yeah, absolutely. I mean, we have laid out our capacity expansion plans already, let's say, back on our last Capital Market Day last year. And obviously, this is what we are executing at the moment. And we are very consistently landing this. We are expanding gas turbine capacity, as we said, obviously, in the last Capital Market Day on the mid-sized gas turbines, which are already now coming into the market, and on the large gas turbine, which are coming in particular next year. But this is according to our plans. What we're trying to do is really getting the productivity up as much as possible on our existing sites, to do it obviously very capital careful, I would call it, and really making sure that we can supply the market while we are very sensitive to looking on making sure that there is not the oversupply which would harm us then going forward in the next decade. So I think we have a good balance there, but literally we're executing what we said.
And Christian, can you give us any more details on the future of your transformation of industry unit? Are you already in talks with potential buyers or partners? Are you perhaps considering a listing?
Let me put it into perspective, right? Because we run two business areas, or let's say two businesses, one focused really on electricity, the other one focused on industry, which is transformation of industry. And obviously both these areas are developing really nicely, profitable, growing. What we have to answer ourselves in the long run is how do we ensure that both of these businesses really have the funds to develop and continue to grow. That is an internal discussion. That is not an external discussion at the moment. And I think that is a strategy discussion which every management needs to have. Where is this business in 5 to 10 years? This is what we're trying to answer, not more than this. So I would say, let's say, don't overrate it, be careful. But it's obviously something which we need to do as a management, luckily on the back of very successful businesses.
And just finally, Christian, what are the clearest milestones that investors should be watching to gain confidence that the Gamesa turnaround is becoming sustainable?
Yeah, first of all, we have our when we have our Q4 call in November, we will also give a midterm outlook on the different businesses, not only wind, but also the other ones. That's an important milestone. And what we see, obviously, first of all, I'm super proud on this turnaround in wind, what the team has achieved. But what we need to watch now is the order intake, particularly in the offshore wind area. We see obviously delays in the project. This is an important element. I do believe wind will be an essential part of electricity generation. But we'll have to see on how fast are these markets actually developing. And that is something which we will, over the next quarters, carefully observing and also discuss in the different calls. But this is what we are looking at. But November is a good date to tune in and how we look on the midterm picture.
OK, Christian, thank you so much for making time for us this morning. That's the Siemens Energy CEO, Christian Bruch. Thank you. Well, let's stay with earnings and turn now to Infineon out of Germany as well, the chip maker. We are looking for any increasing guidance in data center revenue, related revenue, because we've already seen robust reports, of course, from Texas Instruments and ST Micro. In fact, what they say is that they forecast revenue in the current quarter and it beats analyst expectations here. They're profiting from rising demand for those data center chips and price increases as well. Well, we can get some context on these earnings with the CFO, Sven Schneider. He's been speaking with Bloomberg's Anna Edwards.
On the back of a record quarter Q3 in terms of revenue, we are expecting a steep, much stronger than seasonal final quarter. We expect a growth of 13% quarter over quarter, 19% year over year to 4.7 billion. And we expect as a follow-up of that, of course, a very strong follow through in the margin trend. So 400 basis points up to 23%. And that then, as you said, brings us to a full year guidance, which is, especially in terms of the revenue, probably slightly ahead of expectations. So I would summarize it as we are exiting the year on a very, very strong path, and it's a broader based recovery which stands behind the numbers. So it's AI driven, clearly, as the number one growth driver, but there is more than that. For example, also a very strong momentum in the automotive industry.
Yes, and I'll come to that in just a moment, Sven. Can I ask you about the power chips segment? How important is the power chip segment to you in your growth story? You describe it this morning as the most important growth driver. So how big can that become?
Yeah, and indeed, I think our CEO said it a couple of months ago, I think very well. It is the biggest growth driver in the history of Infineon. The magnitude of the business, to put into perspective, is give or take 10% of our group revenues this year in AI data center, so more than 1.6 billion, doubling from last year. On top of that, there is 500 million of non-AI related data center business. So it's more than 2 if you add it together. And we expect a very steep growth. For us, it's powering AI from grid to core, including the power infrastructure. And we have already given a guidance, which is pretty rare, for the next year, which stands at 2.5 billion plus as AI data center revenues. So this is a very strong growth driver. And I do not want to give now out a new number for 27. We will do that in the full year guidance in November. But I can tell you today the plus behind the 2.5 will be material. So it is continuing to be a very, very strong growth driver. And it's not only growth driver, it's also the profitability driver. This business sits in our PS division, Power Systems division, and there is an increase quarter over quarter of give or take 400 to 500 basis points, most of that related to AI.
Okay, and you mentioned the autos sector, Sven, and the positivity there. Are you really seeing a pickup in the auto space? Is this a sector at an inflection point? What does your business tell us about the auto sector?
Yeah, Anna, that's an important question. So automotive for us is give or take close to 50% of our revenue. So it's very important. And we get very often the question, how can you grow if the number of cars being produced globally is flattish or is even going down? And again, this year we grow in automotive. Why is that possible? There are 2 or 3 important drivers. The first important driver is, even if you have whatever 91 million cars globally, the content per car goes up and up. First driver was electrification. Now it's this trend to software-defined vehicles, where we did an important acquisition last year, where we bought the Ethernet solutions of Marvell to have an even better offering. And that drives the content growth, number one. Number 2 is, there was a very, very low inventory level at the tier 1s and automotive customers. We have raised that a couple of times in a friendly way, but just to make our customers aware that there may be times of allocation, again, given that the AI customer demand on power products is so strong. And we see now a kind of replenishment of the orders on top. And there are also some business areas where we see nice market share gains, for example, the microcontrollers. So all that leads up to a good growth story in automotive, even in that overall more challenging environment.
That was the Infineon CFO, Sven Schneider. And of course, just before that, we were speaking to Christian Bruch, the CEO of Siemens Energy. It looks from TradeGate like its shares will be gaining at the start of the European cash trade. But coming up, the S&P closing at a record high as investors return to the AI trade. And we'll have more on the market's outlook more broadly with Saxo's Charu Chanana coming up next. This is Bloomberg.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is, nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. You don't start on the third floor or the lobby. You actually have to start in the basement.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Welcome back to Bloomberg Daybreak Europe, 6:46 a.m. here in London. Well, the S&P 500 closed at a record high yesterday, driven by a rally in semiconductor stocks and optimism for a deal to reopen the Strait of Hormuz. Let's bring in Charu Chanana, Chief Investment Strategist at Saxo, for more on all of this. Charu, great to see you this morning. Good morning. Let's just start with the S&P then, because we'd seen a bit of punishment for the hyperscalers off the back of their earnings earlier in the season, mainly because they were spending so much on capex. Do you think that investors have turned a corner now? Do you think they'll be more forgiving going forward?
Hi, Lizzie. First of all, thank you for having me back. But great question to start the day with, especially coming on the back of last week, where we saw those massive sell-offs, both because of AI capex concerns, but also because of macro concerns around where oil prices, where bond yields were going. But, you know, going into this week, of course, that story seems to be turning around a little bit. I mean, we do see at least the macro conditions easing, especially as we look out to that US-Iran deal happening potentially this week. And that's obviously, you know, responding very well in oil prices and also in the bond yield space. But when we talk about the fundamentals of the AI story, the shift there is still very, very small. I mean, AI capex concerns continue to be questioned, but this week what we've seen is some of the proof of monetization, at least in the software space. So from the likes of, say, Palantir, which was up 30% yesterday, because of really the bump higher in that AI-related revenue. So there's some areas in AI which are showing some clearer signs of monetization, and that continues to justify that AI capex spend, which will probably be more normalized now compared to previously when it kept bumping higher. But even that spend continues to justify that shift a little bit from that chips theme and semiconductors theme, which were the direct beneficiaries of higher capex, to now a more measured capex increase, which does mean that the adoption leaders and the AI monetization leaders will get some focus. So I do not expect that straight line higher in AI stocks as we've seen in the last few years, a much more volatile market. But it's still a very structurally strong trend, and there will be pockets of gains that we will continue to see here.
But how are you thinking about the threat from Chinese competition to the US hyperscalers? Is it a deadly foe or a helpful pacer?
I mean, exactly one of the other factors that led to that massive sell-off in the US tech space last week was that CXMT, the Chinese memory player IPO as well. So that is, again, one factor that continues to make this whole AI space a lot more two-way rather than one-way now. I think this competition from China is real in terms of the amount of state capital that is backing these players and the even though I would say that the technology that these Chinese players are coming up with is not on par with the US players. So even if you just see CXMT, for example, I mean, they might be very good in the traditional memory space, but when it comes to HBM and NAND, the HBM particularly, I mean, we've again seen Samsung today come up with next-gen memory. I think that's not some areas that China can catch up with. But because the focus has shifted from high capex and high efficiency towards high efficiency, I think these cheaper Chinese models are certainly raising that bar for adoption in wherever these can be used. And that is certainly pressuring the US space, which is still far more expensive.
Well, you mentioned some of the Korean names. When you have a day when the Kospi tanks, not today, but it has happened rather a lot recently, do you buy those dips?
Again, I think for Kospi, there is obviously a case to be made given that the crowded positioning has cleared to some extent and that massive leverage that was at play has obviously, been pushed out a little bit. But again, having said that, Kospi is a very pure play memory story, again, just led by two companies. And if I talk about the memory segment in itself, I do think that there is a risk of a cyclical peak here, especially because supply is catching up in a big way. And if these US hyperscalers start to get worried about capex, bumping higher and they start to be a little bit more measured, then that again is a signal of cyclical peak in the memory cycle, which continues to point to me that same momentum that we saw in the Kospi earlier in the year could not come back. I think the outlook from here would be more sideways to a little bit higher, but not that massive upswing that we've had earlier.
Charu, finally, let me just get your take on yen intervention supporting the Japanese currency. Is it all a waste of money and Scott Bessent's breath if the Bank of Japan doesn't step in and play its role with hikes? And what's the best way, if you're an investor watching all of this play out, to get involved? Is it actually via FX or is it rather via JGBs?
So, I mean, we've seen with that coordinated intervention that we've had last week and the moves in the yen from there on, I mean, the yen is still stronger, but we have erased some of those moves that continue to point towards the fact that while these interventions can buy some time, they cannot reverse the fundamentals, the pressure that yen is facing. And that does come, as you say, from the lens of BOJ rate hikes, which continue to be very slow. But at the same time, I think the fiscal story is also playing an equally important part with, high debt levels and continued rise in fiscal spending. I think that is a concern that is starting to play a bigger role in where yen is where it is. And to be able to, for traders particularly, I think, the coordinated intervention was a strong message. It certainly remains very hard to be a yen bear at that point, especially above 160 levels. But unless you see more commitment on the fundamental side, both from BOJ and the Japanese government, I think that, the weakness in the yen would potentially continue here.
OK, Charu, great to see you as always. Thank you very much. That's Charu Chanana, Chief Investment Strategist at Saxo. Well, turning back to earnings now, even more of them. Novo Nordisk has raised its full-year outlook for the second time this year, citing strong demand for its obesity and diabetes drugs. The drug maker now expects sales and profit to fall by no more than 6% this year, improving a previous forecast for declines of as much as 12%. But US-listed shares of the company fell after sales of the new Wegovy weight loss pill failed to beat some of the highest estimates. And we're going to be speaking to the Novo Nordisk Nordisk CEO, speaking to Francine Lacqua on The Pulse just after 9:15 a.m. London time. Well, we have plenty more coming up on Daybreak Europe, so don't go anywhere. This is Morning. This is Bloomberg. Good morning from London.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Well, in our last few minutes here, a few terminal charts to finish our day. We heard Charu Chanana there with all that positivity, global equities at record highs. Let's turn over and see why, because earnings are a huge part of this story. You can see here in Europe the rally reflecting earnings growth. The scorecard this season, one of the strongest in years. And flip the board one more time, because you can see analysts are turning even more optimistic on all of this. It's a broad range of sectors that they're looking at as well. You can get these charts on the terminal. CHRT TV Go is where to find them. And coming up next on the opening trade, we've got earnings interviews with the retailer Ahold Delhaize and the generic drug maker Sandoz. That's with Anna Edwards in the next couple of hours on Bloomberg TV. Stay tuned for the opening trade. This is Bloomberg.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacqua, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacqua. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacqua. Listen and watch on Bloomberg Television or wherever you get your podcasts.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Mumbai. This is Bloomberg.
Good morning, everybody. It is Wednesday, August the 5th, and here is what is on our agenda this morning. Tech headwinds from SpaceX CapEx and the AMD outlook, but US futures are pointing higher. Novo Nordisk's obesity pill, they don't live up to the Wall Street hype, and Brent's below $80 as markets focus on reasons for hope around the Strait of Hormuz.
Well, Anna, it's a good vibe in the equities and futures picture this morning. Eurostoxx 50 futures up 0.5%, following the gains that we've already seen in the Asian session and are expecting to see on the Wall Street session. Partly it comes down to the geopolitics and oil lower off the back of the expectation that we're going to get a deal in the Middle East to reopen the Strait of Hormuz. So Brent now at $78 a barrel, down 0.8%. And of course, because the haven of choice through this conflict has been the dollar, as you would expect, the Bloomberg Dollar Spot Index a touch weaker as things stand. The countdown to the opening trade starts right now.
Welcome to the opening trade, everybody. So just gone 7 o'clock here in London this Wednesday morning. And Lizzie, you're right to emphasise the positives before we get stuck into the latest news on tech.
Always.
Yeah, because we did see the S&P, the Dow, the DAX, the S&P, the Stock 600, all at records during Tuesday's session. So there's the positive. We'll come back to oil and what that's doing, because that was one of the key drivers. But in terms of the tech narrative, I suppose looking forward, Nasdaq futures are pointing higher, which is notable. But we do have to just highlight a couple of negatives, and they come from SpaceX and they come from AMD. Starting with SpaceX then, not the underlying numbers, the revenue better than estimate, the loss not as bad as it could have been or had been anticipated, but the CapEx number more than had been expected. And in the AI part of the business, the CapEx number is 15 times bigger than it was year on year. And so despite Elon Musk and all of his optimism, there are still lots of questions to ask about where this trend goes and whether there's just a lot of CapEx very quickly for a business that yesterday we were hearing from analysts has a bit of an identity crisis.
Yeah, shares down about 7% in post-market trading. We could see even more downward pressure on the stock when you have this flood of $100 billion worth of stock on sale later on this week. But as you say, it's like beats just aren't good enough, and it's a similar story for AMD. So they came out with third quarter revenue that beat the average estimate, not every estimate, but it was enough to disappoint. So essentially AMD, the message from investors is you've got to show more rapid growth if you want to justify this valuation.
Yeah, and the sales number, that guidance, that part of the guidance just seemed to underwhelm a little bit. It's interesting, though, we talk about this underwhelming, and it did, after hours down 9%, but it was up by 7% in session. So, we have to put that in that right perspective, even within just that 24-hour period. PCs, of course, still AMD's largest market by volume, and we know that memory chips have meant that we haven't seen quite so much volume in that area. I'll add into the tech narrative what we've heard from Infineon. is the guidance was kind of in line. Is that going to be enough in this market to impress? They are talking about power chips, and there is a hint at more positive guidance to come on the power chips side of things. And in the auto sector, they're talking about that picking up noticeably. So that's certainly a real positive. So that's the technology sector. Should we move on to pharmaceuticals?
Yeah, because we also had earnings late yesterday from Novo Nordisk, raising forecasts for the second time this year because of rosy outlooks for their obesity and diabetes drugs. But shares, again, falling, seemingly because the Wegovy pill just didn't live up to this hype that we've heard about it. Obviously, that pill getting so much attention when it was announced, but not having the hero effect that analysts had expected to see. So ADR's down as much as 7.2%. Again, we have to mind that stock in the European Open, but it's clearly a battle in big pharma over specifically obesity drugs.
Yes, and if it drops a few percent, that could be something that weighs on the market in Copenhagen, so we'll keep an eye on that. But yeah, analysts talking about gross margin, that missing a little bit. Jeffrey's describing these numbers as messy, which isn't going to impress. And yes, a slight miss on the oral Wegovy. And of course, it's the contrast with others in the sector. So Pfizer actually within session, so this is yesterday's story, but just for contrast, they beat and the guidance was raised. And this is all due actually to older medicines, which still have a concern around patent cliffs out to 2030. So still lots of questions about the pipeline, but still the numbers were good. On a European note, just adding in that Fresenius Medical has increased their guidance today. So for a variety of reasons, we'll keep an eye on what's going on with the pharmaceutical sector.
Yeah, because we're also looking ahead to Eli Lilly results, some looking out for a stock split. So typically that would let a company carve up shares into multiple slices so they can bring down prices without impacting the fundamentals or the valuation. At the moment, I found this stat that it's only one of 15 companies on the S&P with a share price above $1,000. So that's potentially a reason for them to do that. And, of course, we're going to look ahead to earnings from Sandoz out of Switzerland at 8:30 London time, and we'll be speaking to the CEO. We'll also hear from the Novo CEO, Mike Doustar, joining Francine Lacroix on the pulse just after 9:15 a.m. London time.
Yes, exactly. A hot office media call, which he's giving right now, and just giving updates. 1.5 million people on Wegovy pills worldwide. So that is an update on the usage. Let's talk about one of the things that underscored the optimism for risk assets in markets yesterday and looks to still be underpinning risk sentiment this morning. And that is the fact that the oil price is weaker. We are down below, well, we're now down below $79 a barrel at $78.95 on the Brent price. This is the third day in a row that we've seen this drop. And there's just a host of positive factors. We can ask lots of questions about whether this is just today's news and tomorrow things will look very different. Things can always take a more negative turn. But you've got Qatar talking about how they've prepared an agreement, an accord, and that actually that is being well received by the US and Iran. You've got Axios talking about how a deal with Iran, Oman and the US is due today. You've got Iran talking about allowing the Europeans to clear mines. The list goes on. There just do seem to be a number of more positive takes on what will develop in the Middle East.
Yeah, because President Trump had been talking this up for days, but what's important is that you're getting encouragement, it seems, from the Gulf side here. As you say, Qatar saying that proposal's drafted, and under this proposal, you'd have inbound vessels using a northern lane near Iran and outbound traffic travelling through the Omani waters in coordination with Iran. So interesting to see how they're going to work this out, because, of course, we knew that Iran didn't really want to cede control of the strait, but it's desperately what Donald Trump needs before the midterms to get the trade back flowing.
Yeah, absolutely. And thinking about those regional tensions, we've been focused on the Red Sea as well. Interesting, our reporting suggesting that the Saudis are talking via Omani mediators, talking to the Yemeni Houthis. So we'll certainly keep an eye on that relationship. And also watching oil prices. There's some suggestion that US inventories at Cushing could have actually staged their biggest increase since March last week, which would be really quite significant ahead of the midterms. I mean, it's just 1 week of data, but in the current context, anything like that suggests that, we're not quite so close to the bottom of the barrel would be something of a positive. So those are the top stories we're focused on this morning. Let's tell you about the guest conversations we're going to have during this morning's programme. We'll be speaking to Jolanda Poets-Bale, who is the Ahold Delhaize CFO. So really interesting conversation around food prices. of course, with El Nino in the wings, that's part of the narrative as we go into the rest of the year. Richard Sainer from Sandoz will be with us. The numbers out, as Lizzie says. We'll speak to the CEO later in the programme. Mike Bell, RBC Blue Bay Head of Market Strategy. Not too positive on European stocks, but we've touched some new highs. So what does he make of that? Emily Ashford, Standard Chartered Head of Energy Research, will be with us to talk about the Strait of Hormuz, but also talk about low river levels in parts of Europe.
Well, let's take a look at what else we're watching throughout the day as well. At 10 a.m. London time, we get Euro area PPI. 1:15 p.m. London time, it's US ADP employment data. Of course, we got the JOLTS numbers already yesterday. And then later in the day, we'll get some Fed speak from Lisa Cook, Mary Daly and Jeff Schmidt as well. On the earnings front, numbers continue from the US. Disney, Eli Lilly, Uber and SanDisk all reporting aftermarket stateside. But Uber in focus, Anna. Really interesting. The robo-taxi ambition really is going to come under scrutiny, and we've seen the shares sliding recently.
Yeah, absolutely. The stock has been underperforming the market. Did they get any kind of boost from the World Cup? I mean, that might also be a positive narrative. But yes, the big negative is the fact that they had a partnership with Waymo, but that collapsed, that fell apart. And so what does that mean for their autonomy ambitions? Such an important part of this industry, but also the food delivery side of things also important. And they've recently bid for Delivery Hero over in Germany. So we will watch that with interest. Coming up on the programme, President Trump says talks with Iran are going well as hopes rise that an interim deal to reopen the Strait of Hormuz can be achieved. We will go live to the region for the latest. Plus, sales at Chanel surged thanks to new creations from the designer Mathieu Blasi. We will discuss what it could signal for the wider luxury sector. Up next, we'll be joined by the CFO of Ahold Delhaize. Yolanda Pootsbale will be with us shortly. If you want to get involved in any of these conversations, IB plus BBTV Go is the function to use on the Bloomberg terminal to get in touch with us here at Bloomberg TV. This is Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
Bringing you up to the minute geopolitical news whenever and wherever it happens. I'm Anne-Marie Hodern in Beijing, China, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
The global economic playbook is being rewritten and the levers of power are moving in real time.
To see where the world is headed, you have to look where the action is.
I'm Haslinda Amin in Singapore.
I'm Menika Doshi in Mumbai.
Welcome to Emerging the New Economy podcast.
Each month, we dive deep into how the world's most exciting rising economies are shaping the global future.
Join the conversation. Subscribe to Emerging on your favorite podcast platform today.
Earnings season is here.
There are earnings galore.
Some areas have done well. Equity trading has been an area of resilience.
Bloomberg is first to break the numbers.
Diving through the details of these earnings.
That is the weakest growth in more than 3 years.
With the smartest insights.
Are we seeing dislocations that point to something a little bit more severe?
If you look at where global growth expectations are, compare them to the start of the year, they're actually pretty similar.
But there is this uncertainty, and we haven't seen it in the results.
Continuing coverage on Bloomberg.
"46 minutes away from the opening trade. This is the futures picture. Euro Stoxx 50 futures up 0.4%, but it's green across the screen, across the continent. The laggard set to be the FTSE 100, but that's because of the reason that's boosting sentiment elsewhere, or at least one of those reasons. We've got lower oil prices this morning off the back of the latest developments in the Middle East. Expectations, hopes of a deal, and that the Strait of Hormuz could get back to traffic flowing. So Brent is down 0.5% at $78 a barrel, just shy of $79 a barrel, but because of the energy exposure here in London, perhaps that's what holds back the FTSE, but boosts the rest of the continent. Anna,
let's talk about the retailing space, the grocery space here in Europe and beyond. Ahold Delhaize has released numbers this morning. Things looking pretty good in Europe, but sales have increased less than expected in the United States as the owner of Stop & Shop faced pressure to compete with rivals on price. The Dutch retailer reporting for the second quarter this morning. Joining us now is Jolanda Poetsbijl, who is the Chief Financial Officer at Ahold Delhaize. And Jolanda, it's a pleasure to have you on the programme. Thank you so much for coming to talk to us. So broadly, you've reiterated your outlook this morning, but the margins in Europe look a little ahead of expectation, but in the United States, a little below expectation. So paint a picture of how business looks to you right now.
And thank you, Anna, and thank you for having us in your program. If I look at our quarterly results for Q2, I'm quite happy with them because we're resilient in what we would call dynamic markets. And if I look at our sales numbers, we trend at 1.9% for the group, affected by a few elements such as the Inflation Reduction Act, ag deflation, and SNAP eligibility reductions. If I compensate for that and look at that number with positive volumes attached to it and growing market shares, we look at a resilient performance in tough markets, as I would say. Referring to the margin, as you asked for, margin remains strong, 3.9% for the group. And you need to bear in mind that with this margin, we are heavily investing in our prices, as we announced in 2024. We laid out a $1 billion price investment program in the US alone. And that, of course, is reflected in both top line and in our margin profile. But the guidance is reiterated, as you stated, and we do see very positive impacts of those price investments. Let me call out Stop & Shop here. We're investing in prices in that supermarket chain. Our net promoter score is now at 79, which is an all-time high, and we gained 70 basis points of market share. So what we're doing in our strategy, staying close to our customers, investing in prices, is paying off, and we look forward to continuing that trend in the second half of the year.
Okay. So you described the results then, Jolanda, as resilient, and you've given us that data there on Stop & Shop. Do you think the US, is it becoming much more competitive? You've talked about investing in prices. We heard from the Kroger CEO, Albertsons, talking about difficulties in parts of their business. Is it more competitive in the US? Do you have to invest more, therefore, in prices? What can you do?
Well, it's not that we have all the wisdom in the world, as we would say in Dutch, but 2 years ago, we already predicted for ourselves that we needed to invest in prices. So the 1 billion in the US that we announced in 2024, we're on the trajectory to deploying that program. And as I stated, if I look at our market share development in most of our markets, both in the US and in Europe, by the way, we're gaining share. So the current conclusion is that we're on the right track. But we are flexible. If we see opportunities to invest more to drive growth even more, or if the market warrants us to invest more, we will certainly do so. But we are focusing both on online and offline growth, and also our online growth in the US is growing with double-digit numbers. So for the moment, we're okay, and we continue on the trajectory that we started 2 years ago.
Well, Jolanda, does that mean that maybe you'd look at acquisition opportunities in the US?
We're always on the watch out for that, because it is important to drive our scale, both organic and inorganic. So yes, we're always analyzing the opportunities, but we're a prudent company. So we really have strict rules. There need to be a clear business case to drive those acquisitions. And as you've seen, we've invested in Profi in Europe as an acquisition, and the Del Food stores in Belgium. And we're also always mindful in the US. But if the opportunity doesn't match our criteria, we just stick to our organic growth, and we're happy with that trajectory at this point in time.
And has that Profi acquisition met your expectations so far?
Yes, they do, both in Profi in Romania, where we had a Profi attached to our Mega Image already, a local brand existing for a long time, and we now have a number 2 position in the country. We are expanding our position, opening up hundreds of stores in the coming years, and we are realizing the synergies that you need to gain from a combination like that as we speak, and that is also supporting that margin in Europe somewhat. The Del Food acquisition only recently was closed, so at the beginning of the year. We acquired a lot of new square meters in Belgium to deploy our customer value proposition on. So too early to tell on that, but we're very happy with those 2 acquisitions.
You're happy with those acquisitions, and you've talked about being disciplined if you were to do any M&A from here. And I wonder how that rubs up against your policies, Jolanda, about returning money to shareholders. You've done, I think, for 11 years a share buyback that has been around €1 billion. Would you consider changing that at all for the right M&A opportunity, or are you extremely committed to continuing that 11-year path?
The word extremely is extreme, but we have committed to close to the 4-year program that we announced around Growing Together. We have also included 1 billion a year of share buybacks for that 4-year period, which ends at 2028. And there's, of course, always the disclaimer, if a huge acquisition opportunity would come up, that we would reconsider. But for the moment that we're in, we are committed. And it's an important part of our investor promise, of course. Both high single-digit growth over the 4-year periods and the share buyback is our promise to the markets.
And Jolanda, can I ask you a little more about pricing? And maybe this is a question, well, it may be in the US, maybe in Europe, wherever you think it's relevant. At the moment in Europe, of course, we have a lot of dry weather. We have drought conditions in parts of Europe, river levels very low, some farmers struggling as a result. Then looking ahead to the end of this year into next, there's a lot of focus on El Nino and what that might bring in terms of conditions for farming. What does all of that add up to around food prices and food availability?
Well, we never project inflation going forward, because we rely on the institutions that are more equipped to do so. But we do see that weather has more and more impact, of course, on food pricing. So what we try to do is absorb as much as those food price increases as we can. We are laser focused on our own cost, the cost that we can influence. For example, in that Growing Together period of 4 years that I refer to, we have a 5 billion cost reduction program in place, and we've over-delivered last year, and also this year we're well positioned to reach our target. So we do everything we can to absorb those costs, but just food pricing has become more volatile, also driven by weather volatility.
So more volatile, but will you expect to see some sort of step change in pricing as a result of these developments?
Well, we have seen quite some inflation already in the last 2 years, right? So no step changes foreseen in the near future. But like I said, very difficult to predict. If you, for example, in the US, look at beef prices, they're very elevated. And it will take quite a bit to get those beef prices down. So it's something that we have to deal with in our supply chain, but not something that I would dare to predict for the coming years. What we do is we try to get into long-term contracts with our suppliers, support our suppliers where we can, and help our customers also in many ways, also with the price investments that I alluded to keep prices as affordable as possible.
Yolanda, thank you very much. Thanks for joining us. Yolanda Boots-Bale, who's the Ahold Delhaize CFO.
Well, here's what else you need to know this morning. Artificial intelligence models developed by OpenAI and Anthropic carried out potentially harmful activity during safety testing, including trying to inject harmful code into software. The UK's AI Security Institute said that it was the first time it had seen risks around autonomy and deception manifesting so clearly in the real world. Both companies are now working with the institute to investigate the incidents. Elsewhere, Bloomberg has learned that former senior officials from European nations and Russia met last month to explore potential conditions for peace talks to end the war in Ukraine. The meeting is said to have taken place in Vienna and included former officials from the UK, France and Germany, as well as an unidentified former Kremlin official. And Bloomberg has learned that Chanel's sales rose strongly in the first half, outperforming rivals, including LVMH, helped by strong demand for Matthew Blasi's new collections. We're told comparable revenue at the private company climbed about 16%, with similar growth at the company's fashion division. The collections went on sale in March and have proved popular despite a challenging consumer and geopolitical backdrop. Well, Anna, I have to say, I've been doing some on-the-ground reporting.
That's very good of you.
I mean, it was a difficult assignment, but I bought these Chanel shoes, and the queue was round the corner on Bond Street when I went there, and Lily Allen was there shopping with her entourage. But it's real, the hype around this designer. Yeah. And, you know, it's managing to make the Chanel beat its competition in this market when you've got so many new creative directors out at the moment.
It is amazing the lengths you will go to bring these stories to life, Lizzie. We thank you for your sacrifice. Really interesting that also that so they're not only selling well on Bond Street, it seems, but if you look at the geographical breakdown, doing well in the US and also doing well in China. And so if that's kind of the holy grail of fashion, if you're managing to serve both of those two markets. And just as we saw from Richemont, even if it might not be as core to their business, but the jewellery side of things at Chanel doing well, it seems like that kind of news backdrop, doesn't it, where people are looking at jewellery and watches for the things they want to wear, but also for the places they want to put their money and the places that might store some value. So that's part of the narrative. Should we talk about some of the other earnings that we've had out this morning? And Novo Nordisk springs to mind. We'll be watching the start of trade. Will this be one that's negative this morning? Because it does seem as if those Wegovy pills have disappointed a little bit. We've been monitoring lines coming through from the CEO this morning. He's on that media call speaking to investors, or speaking to journalists, really. He says that they found the sweet spot on the Wegovy pill pricing. So maybe that suggests that there's better times to come. They're going to launch that pill in Germany next. So those are just some of the lines coming through about Wegovy and the pill form of that particular GLP-1.
Yeah, the CEO is saying that they need some bolt-on acquisitions. 1.5 million people on the Wegovy pill worldwide at the moment. So that's the latest from the CEO, but we will hear further from him with the conversation with Francine later on in programming.
Yeah, absolutely. So Francine will be speaking to him. We'll see if it weighs on the stock. We'll see if it weighs on the overall market over in Copenhagen. I mean, not quite the heavyweight that it once was, perhaps, but still has the power to move things.
And, of course, economically, such a huge contributor to that Danish economy. But coming up on the programme, Swiss pharmaceutical Sandoz is out with earnings as well this morning. So busy in the pharma space in the last and future few hours. We'll be speaking to the CEO, Richard Sainer, to discuss the pharma industry landscape. And that conversation is coming up next. This is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Guerrero.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
What's the skill set that you would advise every aspiring CFO to develop?
Psychology.
I think analytical skills are important. Obviously, you need to like the numbers. If you don't like numbers, then don't go into finance. It's sort of like a recipe for disaster if you don't like numbers.
Not only for the CFO, but also the company's management. That's a communication and the collaboration.
I spend a lot of time figuring out how to take the complex and make it simple, and then finding a way to be able to communicate that both internally and externally.
I think it's relationships, whether it's working with investors, bankers, with the senior management team, with the board. Having your head down is one thing as a finance person, but keeping your ears open is super important as well. And I think that all of that is what kind of builds out being a successful CFO.
Watch Chief Future Officer only on Bloomberg.
You know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Welcome back. This is the opening trade, 30 minutes from the start of cash trading here in Europe. So let's put up the futures picture and see where we are this morning. We've had quite a bit of earnings news out this morning here in Europe, so we have that to factor in. We are expected to go a little bit higher, up by 0.3% on, in fact, all of the markets on that screen there. And that's not too dissimilar from what we are seeing in the US markets as well. E-minis up around 0.4%. NASDAQ futures, Lizzie, up by 0.25%. And that's despite the SpaceX CapEx and the AMD sales outlook, which many have been saying, raised flags around or are worrying for those in the AI investment thesis. So we'll see what that does to the NASDAQ.
Yeah, and possibly it's because the geopolitics is outweighing those tech concerns. If we take a look at the bond space this morning, you've got yields lower across the European curve, across the continent, following the moves that we'd already seen on Treasury yields. So the 10-year Treasury yield down a basis point, the German 10-year down 2 basis points, 3.09 on lower oil prices. So Brent is around $79 a barrel as things stand on these hopes of a deal in the Middle East to reopen the Strait of Hormuz. Now, let's turn back to the earnings picture. Sandoz reporting second quarter net sales that met average estimates. The Swiss drug company saying that sales were driven by what it called an outstanding biosimilar performance. Well, I'm pleased to welcome now the Sandoz CEO, Richard Saynor. He joins us now. Richard, good morning to you. So, outstanding is the performance this quarter. Tell us more. What's your message to shareholders this quarter?
Well, first of all, good morning. Outstanding to me, US biosimilar grew 47%. I think that's a real standout. Overall, globally, we grew at 22% in the second quarter. And now over 33% of our revenues in the first half of the year came from biosimilars. You've got to remember, 3 years ago when I did the first capital markets, we had an ambition that by 2030, at least 30% of our revenue would come from biosimilars. Clearly, we're well ahead of that. So really, really encouraged by our ability to bring and then take leadership positions with the biosimilars that we come to the market. So very, very proud, really, really pleased.
Great. Well, how are you thinking about the markets you operate in today then? Which markets, which regions are providing the biggest growth opportunities? Where do you see the biggest challenges?
I think we're in such an exciting time. We've described this as our golden decade. As you look forward over the next 10 years, there's something like $650 billion of product due to come off patent. And I think as the world's largest generics and biosimilars company, we're extremely well positioned to capture a significant share of that. Already today, we announced the expansion of our biosimilar pipeline from 32 now to 36 assets. We've obviously now got our approval for our first semaglutide in Brazil. There's a lot of opportunities really in many markets and in many products. So there's not one thing that really needs to happen, it's many. And then we expect that momentum really then to continue from this year into 27 and 28. And then we'll give a much stronger outlook then in terms of what that looks like later in the year when we have our Capital Markets Day.
Richard, good morning. Just sticking on the biosimilars theme then, I think, are they around a third of your revenue now? So how do you think over at Sandoz, how do you think about capital allocation? Yeah, how do you think about capital allocation between biosimilars and generics then, if that's where we are at this point?
Yeah, it's not an either or. I think, we talk a lot about biosimilars because clearly, it's a very strong growth driver. But also 70% of our revenue still come from generics. Generics throw off a lot of cash. They give us scale. And there's a lot of opportunities. And also, you're then getting into these exciting spaces like GLP-1s, which technically I would class as a small molecule, but there's a little bit of a hybrid. So there's a number of those things. So really, we think about the opportunities and then split the capital between all of those, because it's important that we continue to serve and bring patients small molecule access generics as well as biologics. If you're an oncologist, you don't get up on a Monday morning and say, well, am I going to treat my patient with a biologic or a small molecule? You treat a patient. And that's really how we see our customers as well, that we want to bring a broad portfolio of products, small molecule, large molecule, and peptides to the market.
OK. And Richard, of course, the subject of tariffs has been very topical within this sector for a little while now, in particular under the current US president. How are you preparing for the possibility of higher tariffs for your products into the United States?
Look, I think it's important to take a step back. I was actually in Washington the week that the tariff announcements came out. I would say we're having very, very constructive dialogues with very senior members of the administration. And I think we need to find ways to work together to deliver the same thing. We all want the same thing. We want high quality, affordable medicines supplied to US patients from European and US platforms. And I think we're extremely well positioned. So, I see this as an opportunity to have a dialogue and then see how we can better align around this. Currently, today, for example, the US military has been buying its antibiotics from China. Clearly, that's not something that's sustainable. But the only remaining penicillin facility left in the Western world is in Austria. So again, we're having very good constructive conversations about what that could look like. How do we work together to deliver better security of supply and partner to achieve those things? So I'm extremely optimistic that we're having the right conversations.
What about Brussels policy, Richard? Because the EU's made improving resilience of critical medicines really a priority. Have you seen any concrete commitments or incentives that would make meaningful differences for your business?
Look, I think, again, what I'm encouraged by, first of all, is the access. I think I've seen pretty much most heads of government, ministers of health, economics ministers across Europe. So I think the access that we have at company is unparalleled. Everybody to a man has agreed that, look, sovereignty, and particularly of things like antibiotics, is critical. And then now, on the back of things like the Critical Medicines Act, the ask is very simple. We're looking really for effectively another euro or another cent on every pack of antibiotics that we sell across Europe. Today, in most markets, we sell a pack of antibiotics more cheaply than a packet of chewing gum, or in Switzerland, a packet of Ricola. So really, the ask is very simple. How do we put basically a euro per pack on everything we sell? So it's a very, very modest request. Now, part of the Critical Medicines Act requires that each member state procures at least 30% of all of their medicines from vertically integrated suppliers. So now each state, we're having the conversation, what does that mean? How do we shape tenders? How do we have the right conversations with governments? So I'm encouraged that those conversations are happening, but clearly I'd like to see more action, more momentum around that. But certainly we're seeing opportunities emerge, so I'm encouraged.
Yeah, Richard, I mean, we've talked then about the US, the pressure there around tariffs, and Lizzie was asking you about European policy. Amidst all of that, how do you decide where to expand manufacturing, Richard? I mean, Europe would like you to manufacture in Europe and the United States would like you to manufacture in the United States. So how do you navigate those tricky waters?
But first of all, we navigate on the basis of the business opportunity. At our heart, we're a European company. We're listed in Switzerland. Europe is our largest region, and that's our main manufacturing footprint. We have about 15 manufacturing sites globally. We've just opened state-of-the-art biologics development facility in Slovenia, and later this year we will bring on stream state-of-the-art manufacturing capabilities also in Slovenia. So again, we've made a lot of capital investment there, and I'm open to looking at markets, whether it's in Europe or the US. Again, we need to see a way that is sustainable, that we can get a return. And I think we've come an incredibly long way in the last 3 years since we became an independent company.
And talking of tricky waters, Richard, have the recent geopolitical tensions in the Middle East changed the outlook for you, changed your sourcing strategy, changed your expectations for API pricing?
And look, I think we said earlier on at the last earnings call, we do see some inflationary pressures, particularly on APIs. Most APIs are oil-based in terms of how they're manufactured, and clearly shipping costs, whether it's aviation or sea shipping costs, have gone through. I think there's a broad reality that some of those costs will naturally get passed on to payers. But again, you've got to remember that we supply in Europe 80-90% of all the medicines dispensed for about 10% of the cost. So this is a very modest impact, but certainly we're having the conversations about how we do that. In terms of procurement, yes, we're constantly looking at whether we source from different locations, but there's a hard truth, because Europe particularly has focused on price. Most drug substance, the API as we call it in the industry, active drug pharmaceutical ingredient, comes from Asia, predominantly China and India. So when you look for alternative sources, frequently there are very few choices. Now, as a company, we're investing heavily, particularly in biologics, and these are the larger, more complex drugs used in things like cancer, that those will be vertically integrated within Europe. And as I said earlier, things like anti-infectives, we're the only remaining company left in the Western world manufacturing penicillins.
And how do you think, Richard, with all of that said, how do you think about the return of cash to shareholders, the sort of distribution strategy? And if you have to step up manufacturing in the United States, does that change the distribution strategy? How do you think about that?
Not at all. We have a very clear allocation strategy in terms of our cash. I think you're seeing, again, the strong momentum, strong cash generation flowing through you, and you see that on the results that we produced. And we see a strong opportunity. That we have a very strong balance sheet. We have a very modest amount of debt. We have a huge opportunity to allow us to grow and invest. And we've been very clear about the discipline around that action. So I think we're extremely well positioned. And we're unique in many ways. I don't really see many other companies, if any, having the strength and the position that we have and the leadership. As I said earlier, now we've massively expanded our biologics pipeline. When I started in this role 7 years ago, I think we had 7 biologics in our pipeline. Today, we now have 36 and growing. So I'm very excited about the momentum we're creating, but I think we're more than capable of funding it, delivering a strong return back to our shareholders.
Richard, thanks so much. Thanks for joining us. Richard Zainor, the CEO of Sandoz.
Well, energy leaders are warning about the impact of the continued closure, as we were just discussing, of the Strait of Hormuz. Take a listen.
Unfortunately, we're still not getting enough product through the Strait of Hormuz. Even at the highest ends, they're saying that we're getting only about 7 million barrels of oil through the Strait of Hormuz at this point. Because of new pipeline capacity, you only need to get that level up to about 11 million barrels a day through the Strait, because of a lot of that product now flowing through pipelines.
Mike Summers there, President and CEO of the American Petroleum Institute, speaking to Bloomberg. And we'll have more on the energy story and the state of the Iran talks later on in the programme. Stay with us. This is Bloomberg.
very famous dogs. You have they look like balloon kind of figures to some extent. How do you make those?
In the case of the balloon dog, I blew up a balloon dog. So I had this balloon, which is kind of like a latex type of piece, molded it, cast it, and then blew that up in scale and put it into a clay, and eventually had that transformed into stainless steel.
So when you have a balloon dog, let's say, a regular size one or then a big one, did people say, Jeff, you're crazy? Were you shocked that people were willing to pay very high prices for this?
When I was making my first balloon dog, one of the purchasers was Eli Bro. And originally I thought I could make a balloon dog for around $300,000 that I could manufacture. It's a large piece, over 10 feet long, or 12 feet long, 10 feet high. But it turned out that the fabricator came back to me and said, you know, Jeff, I can't do it for $300,000. It's going to be $650,000. But eventually, then they raised the price again, and they finally brought it up to 1.6 million. And I told Eli that this is the reality of it. I showed him everything, and he ended up paying for the production costs.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asia markets.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
We expect the cadence of AI development to improve dramatically. And then with Grok 5, which should be out before the end of this year, we will be incorporating the entire corpus of SpaceX data, basically all the data that SpaceX has ever produced, which is a tremendous amount over the course of a quarter century, will be incorporated into Grok training.
Elon Musk, the CEO of SpaceX, of course, speaking on the company's first post-IPO earnings call. And this was while SpaceX shares fell in after-hours trading after it reported higher than expected AI spending, dampening its debut earnings report that broadly surpassed Wall Street forecasts. Let's get some analysis now with Bloomberg senior strategist Neil Campling. I know, Neil, that Elon Musk personally commented on your analysis last night. I think you were basically saying that investor expectations were too high, and he was agreeing. Why weren't investors impressed with these results?
To put it really simply, rockets burn fuel. SpaceX burns cash. I mean, for every $1 of revenue, not even profit, they're burning $2 of cash. And that's the key problem, I think, for the company that is acting very much like a startup company, but it's now in public eyes because it's been listed. As you mentioned, on the broad metrics in terms of the quarter's results, they actually beat expectations on all three divisions. The problem is that the investments require significant amounts of cash. And that's a problem, I think, because they have grand ambitions. They claim that the target is to get to $1 trillion of revenue by 2030. That's going to require a lot of money to even come close to those ambitions.
I mean, Elon Musk was really positive, wasn't he? So there we are.
For a change.
That's a surprise, yes, obviously, to everybody. Talking about the cadence of AI developments, guiding revenues higher, as you say, pointing to that. Also very positive on Starship, the big rockets, the reusable rockets and what they could do there. What about AMD then? Because there we got the sales outlook underwhelming a little bit. Was that to do with AI? Was it to do with PCs, which is still such a big part of their business? What was the driver?
I think the only issue really is particularly the buy-side expectations were above where the company were forecasting to. So there's a bit of travel and arriving in the stock, for one thing, I think. And then also, if you look at performance year to date, it is the sixth biggest single stock contributor to the S&P returns this year. So it's done very well. And so the core business is doing okay. But it's just in terms of those expectations being reset.
Yeah, stock's up more than 140%, I think, yesterday, which is quite incredible. What about Infineon here in Europe then, Neil? We had these numbers out. I spoke to the CFO a little bit earlier on. I mean, he sounded pretty positive, but some of the numbers look quite close to market expectations. I'm not sure if that's good enough right now.
That's a great way of summing it in terms of good, solid results, guidance solid, but the street's already there. So, again, Infineon, relative to the AI winners in Europe, has performed strongly this year. So it just maybe takes a reset until it potentially can go again in terms of outperformance. But in terms of underlying metrics for AI, for data centres, for the core business, they are solid. But it's going into a fiscal fourth quarter where perhaps we need to wait for later in the year to get a bigger read on what's going on in the underlying markets.
Yeah, there was a sort of hint at a possible upgrade to guidance coming in the future down the track, but we'll play more of that interview a little bit later on in the programme. Neil, thank you very much. Thanks for joining us. Neil Campling with all things tech. Let's turn to today's markets in 3 minutes on the opening trade with Markets Live Executive Editor Mark Cudmore. Mark, we've been busy worrying negatively about what's happening with the AI trade just in the last couple of minutes. But actually, let's put all that to one side because, you know, stocks at records, the S&P, the Dow, the DAX, the Stock 600, all at records in the past 24 hours. Is it all about the weaker oil price? Is that all it takes?
I think about 50% of the euphoria in markets this week is probably around optimism about US-Iran. And there definitely is euphoria. As you say, stocks are at records. You know, almost every asset's doing well. Bonds are rallying, which is playing into the stock story. So I'd say about 50% is US-Iran, even though we've been here before. And it's precisely because we've got deja vu about the situation of a promise of a deal that's holding some investors back, which means we still probably have even more upside if there is finally a deal which seems viable and sustainable and is actually validated on both sides. What's the other 50%? I think the other 50% really is largely just kind of technical relief that the rout in Korean stocks is over, that the situational awareness fund is kind of resolved, and then we've rolled into a new month and we can kind of put July behind us. So I think 50% is that and 50% US-Iran optimism.
So then, Mark, has the S&P turned a corner now? It's out of the narrow range it was stuck in for several months.
I mean, look, S&P 500 never went far from its record highs, even in July turmoil, which was very much sector specific. S&P 500 has been doing fine all year. I mean, I think we remain in the inflationary stage of the AI capex bubble, and we remain in an overall very bullish environment for stocks. We've got massive fiscal injections from around the world, both from the private sector and the public sector. We're having monetary policy being held inordinately low. We keep on getting promises of relief in US-Iran, which is the one big risk out there. Earnings are incredibly strong. So the macro environment is still very, very positive. As we've discussed since about May, I think we're in this more volatile stage of the AI kind of bubble. And therefore, but that still means higher prices. So, you know, look, S&P 500, yeah, it hasn't gone much further, but it's not far off record highs, which is, you know, is extraordinary gains the last couple of years.
Mark, are we still adjusting to what we heard last week from the Fed, do you think? Do you think it's still working through markets, the lack of guidance that we're getting? And what is that doing, do you think, to risk assets as well as to the long end of the yield curve?
I'm not sure we're still kind of working through it, but I think that the message from that meeting is going to remain very relevant. And, you know, for the long term, one is we're going to have more volatility around data points, which is one aspect. And because we got some big data points to come this week, with jobs in particular, that's going to be interesting. And I think the second one is that because of that kind of slight surprise in how dovish war sounded in the conference relative to expectations, I think that the next data points in particular will either kind of validate that view or make it seem more like a policy mistake if the data is strong.
Mark, thanks very much. That's our Bloomberg Markets Live Executive Editor, Mark Cudmore. And remember, you can get up-to-date analysis from Mark and the team by going to MLIV Go on your terminal. Now, let's turn to the stocks to watch this morning. Chloe Melly has them for us. And Chloe, it looks like Novo indicated lower on TradeGate.
Yes, absolutely. Good morning, Lizzie. We could see Novo take a bit of a hit this morning because the sales of its weight loss pill did not manage to beat expectations. The expectations from investors were really, really high. There were high hopes that this pill would outperform, but there might be a bit of a disappointment there that could weigh on the shares. There's a lot of swing factors to consider as well when it comes to the outlook. As Bloomberg Intelligence puts it, if we flip the board, we've got this question of the Medicare coverage, the rollout of that Wegovy pill outside of the US, and then also the success potentially of Eli Lilly's rival weight loss pill. So there's a lot of factors to consider there for Novo, and we could see a bit of weakness at the open. Moving on to Heineken, which came out with a pretty solid print this morning. Its performance in Asia and Africa managed to offset the persistent weakness that we are seeing in the American and European markets, which is something that Heineken has been dealing with for quite a few quarters now. We could see this pretty solid earnings actually give a bit of a boost to the incoming CEO who's joining in October. We have seen Heineken underperform AB InBev, one of its biggest rivals in Europe, by quite a large margin. But we could see these earnings this morning to really boost those shares. So we'll be watching out for that as well. And finally, Siemens Energy is going to be in focus after targeting the top end of its guidance range, thanks to very strong demand for grid equipment and gas turbines. Of course, a big AI beneficiary. It's really benefited from that. We are seeing the shares up 25% year to date, and we could see an even bigger boost on the back of that print this morning.
Chloe, thanks very much. Chloe Melly with the latest on those stocks that could be on the move. And Lizzie, you were speaking to Siemens Energy a little bit earlier on.
Yeah, and he was saying it's not all about AI, which is really interesting because you've got this question about whether the hyperscalers are putting too much into infrastructure when efficiency could be coming down the line. And he says, electrification demand goes beyond AI.
Yeah, there's something of that dynamic at Infineon as well, talking about autos and electrification of the European economy as well. So lots to think about there as we get towards the start of the European trading day. Coming up, we'll bring you the opening trade, then futures are pointing higher for Europe. This is Bloomberg.
The latest business news wherever and whenever it happens. I'm Scarlett Fu, reporting from America's biggest military shipyard. This is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia trade.
This is Wall Street Week.
Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Bringing you the most important news and financial information whenever and wherever it happens. I'm Michael McKee on the Mexican border, and this is Bloomberg.
Wednesday morning, just minutes away from the start of the European equity trading day. Good morning, everybody. Welcome back to the programme. And this is the handover from the US yesterday. So even if nothing had happened since, looks as if since European markets closed, where the yellow line is, the US markets drifted a little higher. And so that sets us up for something a little positive into the European session today. And in fact, in the last 24 hours, we've been up at record highs on the S&P, the Stock 600, the DAX, plenty of other markets besides. Part of that's an oil story, much weaker oil prices. Risk sentiment is positive. But there's also the AI dynamics as well. And I think it is interesting. If you look at the futures picture here in Europe, that's selling a positive story. We've got earnings in there, certainly, across European stocks. But also we've had, Lizzie, these earnings reports out of SpaceX and AMD. And despite the negativity around those individual stocks, that's not knocking US futures into negative territory. And I do think that is interesting in terms of the breadth arguments around US stocks. What are you watching on the stocks to watch?
Well, on that point, Nasdaq futures are up 0.3%, but loads of earnings to bring you as well this morning. Spoilt for choice when it comes to the stocks to watch. I've picked out Novo because analysts are saying that their guidance hike is underwhelming. Jefferies saying the results are messy, even though they're noting there's an underlying beat. Then we've got Infineon on the list. They're forecasting revenue in the current quarter that beat analysts' estimates. And then we've got Glencore, profit jumping on a trading boom, record copper, but our analysts saying that the cost hikes blunt the results. They're focused on 2% EBITDA cuts, and notably the CEO saying that Glencore's taken a provision on its exposure to iron ore trader Radiant World, but that exposure not material to the company. So let's see how investors weigh up all of these numbers, Anna.
And that's an interesting big heavyweight, of course, in the London market. On Infineon, yes, some of the quarterly guidance not bad, but I wonder if overall the guidance is going to be enough to drive the stock higher today. I spoke to the CFO. He was very positive on a number of fronts, but we'll see what that means in the short term for stock market performance. Let's open up these markets then and see where we are. The FTSE 100 out of the gates and up by 0.2%, waiting for the other earnings reports to filter through these markets, waiting to see what that does. Over in Germany, we've had some of the industrial businesses reporting, so we'll watch Siemens Energy over there, Infineon in the technology space. We've also had numbers out of the luxury sector, not the listed luxury sector necessarily, but I wonder if that has an impact on what we're seeing on the CAC 40, where we have a lot of listed luxury names, of course. We'll also, as you said, Lizzie, watch Novo Nordisk and what that does to the Danish market. Is that going to be something that knocks the Danish market a little in comparison to others this morning? So the AEX is up by 0.5%, which suggests that perhaps technology is doing pretty well. The DAX is not yet open. The FTSE 100 up by 0.4%. So what are you seeing then, Lizzie, in sectors?
Well, tech is the fourth best performing sector this morning, up 0.8%, but it's behind basic resources, retail and industrial goods and services as things stand. You've got just over half of sectors in positive territory this morning. Bottom of the basket, real estate, banks, telecoms, media down there as well. But just coming back to some of those individual names off the back of earnings that we've been flagging, Glencore up 4.5% at the moment on this profit jump, on that trading boom and record copper. Novo, as we had suggested it would be, down 1.6%. So not impressed. Investors not impressed by that guidance hike. And then we've got Next up 4.8%. They've lifted their outlook here in London. The UK hot summer boosting clothing sales for that company. Heineken was another one as well. Those shares up 1.8%. And of course, we were speaking to Ahold earlier. I'm looking out for those numbers. They're flat to the upside. So really not much movement there. Sandoz, another one though, in the drug space, up 6% this morning off the back of their numbers. We spoke to them too.
Yeah, we did. We spoke to Richard Sainer, didn't we, the Sandoz CEO. I mean, Novo Nordisk down by 1%. I wonder if that's pretty good, actually, given what happened to the ADRs. Over in the US, they were down by much more than that, so maybe that's considered to be quite an achievement for the Novo Nordisk share price this morning. Let's take a step back and think about where we are on these markets then. Get some analysis with Mike Bell, Head of Market Strategy at RBC Blue Bay. Really nice to have you with us, Mike. Thank you for joining us. Reading through your notes ahead of our conversation, you do seem quite down on Europe, Mike, so I thought we might talk about that. And what is your view on Europe? We've heard from some other places that the earnings season's not been too bad and that's impressed. So what have you not been impressed by?
I think if I look at the short term, you've got the fact that the German and French economies are shedding jobs. So that's the kind of main concern that I have in the near term, is that the two largest economies in the region are struggling. And really, if you look at the headline data, it's being flattered by Spain. So Spain's doing OK, and Germany and France are struggling. Then if you think longer term, what are the problems facing Europe? I think there's two main problems. One is the rise of Chinese cars and just competing more and more with what Europe produces. And I think Europe is just really struggling to compete with China. If you look at the market share gain in Chinese cars in the UK, for example, it's gone from sort of next to nothing to almost 20% of new car sales. So that's, I think it's hard to overstate how much of a problem that is for Germany. And then the other thing is the demographics. So if you look at European banks, they've done pretty well. And the market, I think, short term thinks, well, higher interest rates is positive for banks, which of course is true in the very near term. But if I look out over the next 5 to 10 years, the working age populations in places like Germany, Italy and Spain are going to outright shrink pretty meaningfully. So I just ask, who are they going to be lending to?
OK, so that's lots of reasons to be a bit negative, which is not quite where I meant to start the conversation, but found myself doing that anyway. So what do you prefer then, Mike, if that's not what you're looking for right now?
Well, I think, actually, when I look around the world, I think that if you want to take risk, things like high-yield debt, things like emerging market debt, probably going to give you similar returns to what you get on equities over the next 12 months, but with less downside. I just think, for that to go badly wrong, you need those companies to default on you. And I think the risk of that is relatively low. Spreads could widen, but I think they'd go down less than equities in a risk-off scenario. Whereas, as I say, some of those structural headwinds that you've got, I think, affect equities potentially sooner. So I think within a risk bucket, high yield and emerging market debt with a preference to, say, European equities, but also relative to, I think, US tech stocks, which to me, there looks like there's a risk that we may be in a kind of AI bubble.
Well, going back to the negativity on Europe, you're also cautious on the pound. You talk about the risks there. I mean, are you not underestimating the fundamental strength of the UK economy, which is what so many people in the seat that you're sat in keep telling us about? Inflation only 2.6%, so many people say.
So I think the UK economy is fundamentally quite weak. If you look at the private sector labour market, pretty much all of the major private sectors are seeing a decline in employment. It's being led by retail and hospitality, and of course part of that has been because of higher taxes, particularly national insurance going up. But the problem is we're now into this negative feedback loop where retail and hospitality are shedding jobs pretty much month on month. And they are big employers. And so that then feeds through into weaker demand because you lose your jobs and then you're obviously not going to spend as much. And what concerns me is that the Bank of England have kind of got themselves into a place where they're just, it seems like almost okay with the fact that the labour market is deteriorating in the private sector, and it's being somewhat masked by the fact that education employment is picking up, that you're seeing, the public sector adding some jobs. But the private sector looks pretty weak.
OK, and then when it comes to the bond picture in the UK and the fiscal picture, how worried are you, dare I ask, about the budget on October the 28th? If John Healey, for example, leaves a razor-thin margin or less than Rachel Reeves was leaving, where does that leave gilts?
I think gilts are really tricky at the moment because you've got this fundamentally weak macro backdrop where, as I say, the labour market is deteriorating. You've obviously got falling oil prices, and the UK tends to be a relatively high beta market to that. So that would kind of argue in favour of being long gilts. And then you've got, as you say, the fiscal risk that, let's face it, I don't think this government changed tack to just continue with everything how it was. I think they're going to want to do more spending. And then the question is, well, is that fully offset by tax rises, in which case that could actually be quite growth negative in some places, particularly if you think about what it could do to house prices in some parts of the country when you combine it with where mortgage rates are. Or if it isn't fully offset by tax increases, then I think the bond market could worry about what that means for, a net fiscal easing and the sustainability on the debt trajectory. So at the moment, we prefer having positions on in UK front end, but we are considering whether the kind of 10-year part of the curve might start to look attractive on that weaker growth backdrop.
Can I ask you, Mike, about whether we are, what you're expecting from oil prices and how much of that, of our high hopes around oil prices dropping are supporting other assets? Because we have oil prices just ticking up a little bit in the last few minutes. We've had some news lines coming out of the Houthis in Yemen saying that they will target Saudi ships north of the Red see, this is just the latest news line, sort of changes the dynamics a little bit because we'd had lots of positive news lines suggesting that maybe some progress could be made. That was certainly the case yesterday. Anyway, with an oil price just south of $80, do you think we have the right expectations in markets about how big a deal that is?
It's so hard to say, right? We've been kind of going to and fro on whether we're going to get a proper deal, whether oil flow is going to resume. It does look like some progress is being made, but let's face it, it's being made by essentially allowing the Iranians to potentially charge on Hormuz. I mean, the fundamental fact remains that ultimately the US doesn't seem willing to escalate because, I think quite sensibly, they realize that if they do escalate, the Iranians can strike energy assets in the region. And so their allies in the region are saying, well, hold on a second. If you do this, they're going to take out various energy assets. So, yes, it's kind of pretty fragile deal where Iran seemed to have quite a lot of the power. And so the risk there is that Iran potentially come back to the table and say, well, actually, we want more, knowing that they've got this leverage. So we'll see.
So do you think, assuming we stay around 80, is that your base case assumption, or do you need to make a base case assumption? It seems very volatile prospect at the moment.
I think it's just so hard to say, but it does obviously matter if you're trying to take a view on what's going to happen to duration. Yeah, it's hard.
Let's turn to the Fed. We've got the payrolls numbers coming on Friday. How much volatility could we see around that report when, we've had the style of communications that we have from Kevin Walsh and a lack of forward guidance, actually?
Yeah, I think it's an important point. I actually think that this kind of stepping away from as regular and meaningful communication as we've had in the past is highly likely to inject further volatility into bond markets. Markets have kind of got used to, over the last however many years, having that guidance. And taking it away, it seems obvious it's going to lead to more volatility. I think about the labour market itself. It's actually so in Europe and the UK, the labour market's weak. The US is the one major developed market where the labour market seems to be holding up all right. And particularly that's coming through in kind of a pickup in temp services. Interestingly, some of the sectors where you would expect AI to be leading to job losses, things like legal services, for example, are actually doing okay still. But I watch that sector level detail very carefully because obviously the medium term risk is if we start to see AI lead to net job losses, but we're not seeing it yet.
Yeah, it was interesting. Scott Besant talking about it as a detox yesterday, wasn't he? The fact that we've got a change in the type of forward guidance we're getting from the Fed. He called that a detox for markets.
OK, well, that's one way to put it. Mike, thanks for coming in to see us. Mike Bell, Head of Market Strategy at RBC Blue Bay. Always good to see you. Well, let's look at the Core 6 this morning. Novo, top of mind, of course. And we are looking at Novo shares down 3.9% as things stand. As Anna says, maybe that's not as bad as it could have been when you look at the ADRs overnight. Off the back of the earnings, of course, the guidance hike underwhelming according to some analysts. LVMH, though, down 1.4% as well. The rest in the green. And Rheinmetall up 1.3%. In fact, industrial goods and services, one of the best performing sectors on the Eurostoxx 600 this morning. Let's look at some of the individual movers at the moment. Chloe Melly has a check on what's happening. Fresenius is one of them.
Yes, good morning, Lizzie. Fresenius, a healthcare group out of Germany that makes medical devices and operates hospitals. This morning, it boosted its guidance, and this comes just after the company has really streamlined what was a massive portfolio before. And so it seems that this sort of leaner business is in great shape. And so we are seeing the shares up quite strongly this morning. We're up about 6%. Moving on to another German company that's doing very well this morning, and that is Siemens Energy. We're up almost 4% after saying that it expects to hit the top end of its guidance. Of course, it's been a big beneficiary of the AI boom through its gas turbines that are used in data centers, but also a beneficiary of this broader electrification efforts, energy transition happening in Europe. And this is the grid equipment that it provides is really participating in this particular electrification effort. So up there as well. Moving on to another positive mover, we've got Next here in the UK, lifting its guidance once again, having really benefited from the very warm weather that we've had here in the UK. This is the third time time that Next has hiked his guidance this year. Has been really one of the resilient names in that UK retail sector, and so we're up almost 7% on the back of that this morning. We are also up for another London company, Glencore, which has beat estimates very strongly this morning, has benefited from this commodities trading boom, this surge in copper prices, and is also returning $3.5 billion to shareholders this year. And so that is really driving that stock this morning, up about 4%. And finally, let's end with a negative mover. We've got Infineon out of Germany down this morning. We had a strong forecast, strong results, but unfortunately, when it comes to those chip makers, those AI-related names, often expectations are really, really high. And so sometimes a good performance is just not quite enough. And we're down about 4.5% on the back of those earnings for Infineon.
Yeah, we'll get more from our CFO conversation with the Infineon CFO, that is, a little bit later in the programme. Chloe, thank you very much. Chloe Melly with those movers. Coming up, Chanel sales said to rise by double digits, beating luxury rival LVMH. We'll discuss what it could mean for the luxury sector next. This is Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the centre of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
The global economic playbook is being rewritten, and the levers of power are moving in real time.
To see where the world is headed, you have to look where the action is.
I'm Haslinda Amin in Singapore.
I'm Menika Doshi in Mumbai.
Welcome to Emerging the New Economy podcast.
Each month, we dive deep into how the world's most exciting rising economies are shaping the global future.
Join the conversation. Subscribe to Emerging on your favorite podcast platform today.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Welcome back to the opening trade. We're 17 minutes into today's session. This is the picture in markets. The STOXX 600 up 0.4%. The DAX outperforming, up 0.7%. The CAC 40 up 0.1%, and the FTSE 100 up 0.3%. So positivity across the screen as we're seeing around the world. US futures also pointing higher. But just in terms of the macro picture here in Europe, we've also had some data out on the Spanish PMI front. Spain's July services PMI beating expectations. 58.3 is the reading for July, and the forecast was 54.8. So still in growth territory. The composite number 56.5, gain here as well, beating the forecast of 53.5, and euro dollar up a touch off the back of these numbers. So we're trading at 115, up 7 basis points. Not a huge move, really.
Yeah, I mean, that's interesting, isn't it? A slightly mixed picture against expectations. Let's think about expectations and move on to what's happening in the pharmaceutical sector. This is the picture on the Novo Nordisk share price this morning, down by 3.6%. This after the Danish drug manufacturer raised its forecast for the second time this year. But sales of its new Wegovy weight loss pill failed to top analysts' expectations. So let's get to Sam Fazeli, Bloomberg Intelligence Global Industries Director of Research, and deep knowledge on the pharma sector. Sam, thank you for joining us. So, a victim of high expectations then, Novo Nordisk here. What do we make of the latest numbers around the Wegovy pill?
Yeah, so, look, this is supposed to be the pill, the product that's going to give them growth in the next few, above the numbers that people had been expecting. But let's just pull back a little bit. This is a new CEO, newish, came in, cost cuts, slashed the forecasts, kitchen sink it, if you like. And then so now people go, okay, well, that's been kitchen sink, so I'm expecting guidance to be big. Not just 100 bips. That's where I think the problem is, why the share price is down. Because, I mean, it was on a basis of a quarter in terms of beats. You look at our MODL, lots of greens, right? Meaningful beats. So the share price is reacting to the fact that it's not enough, as you rightly said, Anna. We need more. And if you look at the revenue growth over the next, from 25 to 30, 14%, that's comparing 2030 to 2025. That's not a lot for this massive obesity market, is it?
So obviously you want more revenue, but what more do you want from the leadership? Because we've been hearing already on the media calls, Novo has no plans for major cost cuts. They're going to launch Wegovy in Germany, though.
Yeah, I mean, Germany is one of the major countries in Europe, normally for drug sales, except they've been making lots of noise about not wanting to pay anymore, wanting to cut costs, etc. So the issue that Novo has is that it needs pipeline. You need to look at the story, that 15% growth, 14% growth from here to 2030. What else is going to keep giving you an extra leg, an extra boost to that growth profile? Where are the pipeline drugs? And we've had some setbacks there. The one that was supposed to be the next big thing in the obesity side, metabolic side, was CagriSema. Didn't do so well in a head-to-head trial versus Mounjaro.
And thinking about pipeline takes me on to Pfizer, because we got the numbers out from Pfizer yesterday in session, wasn't it? So we saw the market's response. So there seemed to be quite a lot to like here, even though the market is still worried about the pipeline at Pfizer.
Yeah, because they have 2 big patent expiries coming up. And the only way to deal with patent expiries, if you don't have pipeline to drive through that, which AbbVie, if you remember a while ago, AbbVie had a big drug, $20 billion drug almost going off patent. They managed to grow through it, and people believed it. And that's why the share price is where it is today relative to when it was there. Pfizer, people don't believe yet. The faith isn't there yet that this pipeline is going to help them. So what are they doing? Cost cuts. They announced another extra level of $2.5 billion of cost cuts over the next 4 years.
And you're looking ahead to the Eli Lilly results. They've got their own weight loss pill. Is it Foundeo?
Foundeo, yeah.
Right. So what are you expecting from them?
Well, everyone's looking at that particular drug. So the story of Lilly has been, you need to drive that for US growth. And they've also been seeing ex-US growth from Mounjaro, which is the rest of the world, Europe, etc. So that's the one that's under focus here. Wegovy pill did okay this quarter. So that's those two are the kind of head-to-head comparators. And Foundeo has got a lot going for it, but it may be a second-half story, not a 2Q story, in that they have 2 or 3 catalysts for it to really drive growth, if it's going to happen.
Okay. Sam, thanks very much. Bloomberg Intelligence Global Industries Director of Research, Sam Fazeli. The CEO of Novo Nordisk, Mike Doustdar, is going to be speaking with Bloomberg just after 9:15 a.m. London time. So the results are out, the ADRs reacted, the stocks reacted, the media call is done, but still questions for the CEO, no doubt, and that will be on the pulse.
Well, Turning to some other numbers, some other results now. Bloomberg has learned that Chanel's sales rose strongly in the first half of the year, outperforming rivals including LVMH, helped by strong demand for Matthew Blasi's new collections. And we're told that comparable revenue at the private company climbed about 16%, with similar growth at the company's fashion division as well. Let's get to Angelina Rascouet, our Bloomberg luxury reporter in Paris, who's been diving through those numbers for us. It's rare, isn't it, that we should get these numbers at this time of year from Chanel, Angelina. So what is it that's driving sales growth for Chanel?
Yes, indeed. Hi, Lizzie. Normally, Chanel reports annual results once a year, typically in May for the previous year. But we managed to guess those numbers for the first half performance. And as you said, Chanel outperformed its peers, including LVMH. The fashion and the fashion unit, which is Chanel's biggest, it generates about 60% of revenue, rose about 16%, and that was helped, as you say, by the new collections from Mathieu Blasi. So this designer was appointed over a year ago, but his first collection started being commercialized in March this year, and they found they have proven to be very popular in an otherwise relatively morose market. But it's not just the fashion unit, because if you look at watches and fine jewelry unit, that division soared 35%. It was helped by jewelry lines like Coco Crush, and even the watch segment, which had been struggling for a while across all the major groups, rose in the first half. So that was very positive. And all the regions grew, but obviously it was led by the US, jumping more than 25%. But even China and the Middle East in the first half rose. The outlook for the rest of the year, according to what we hear, is that the second half will probably not be as strong as the first half, because the comparison basis will become tougher. So overall, the full year growth will not be probably as high as the first half growth. But overall, a pretty impressive set of results.
Yeah, so Angelina, so growth in different geographies, part of the story here. What about the read across into others in the sector? Is there any? We've heard from others in the sector already, haven't we, Angelina, about how they've been doing. There have been some bright spots around jewellery, but other areas have struggled.
Yes, indeed, Anna. I mean, there was a note from Kepler this morning citing our scoop and basically mentioning that overall it's positive for the sector. However, it increases competition in a market that's become all about grabbing market share from other brands. So as you said, I mean, there were some groups that did really, really well, such as Richemont, the owner of Cartier and Van Cleef. Richemont posted a double-digit growth in the last quarter. LVMH and the crucial division of LVMH, which includes Christian Dior Couture, and also has a new designer. So they were appointed about the same time, Jonathan Anderson at Dior, and their collections were released sort of at the same time. So that division grew in the second quarter, but it grew only by 1%, and Dior is said to have, done slightly better than the unit. But it's a very different picture when it comes to growth, if you compare. And even Hermès, which is considered one of the top and most exclusive, the leather goods unit at Hermès in the last quarter grew by about 10%. But overall, the growth was about 6.7% in the quarter. So Chanel really doing better than its rivals, especially in what we call the soft luxury category. So that's fashion, accessories, etc.
Angelina, thank you very much. Angelina Rascouet for us in Paris. We certainly see some of those luxury names under pressure in Paris this morning, which is interesting. Coming up, as hopes of a return to shipping in Hormuz gain traction, we'll talk about energy markets. This is Bloomberg.
Western countries, all of them are cutting funding to Africa. And some of these programs were supported by funding coming from Western countries, like for human resources, for testing, for transportation of samples. And suddenly, African countries have to think how to fund money and to cover this gap. But it takes some time. And I think the combination of all of these factors are fueling this mistrust that we see at community level. We value the support we got and we are still getting from the US. And we think that if we continue to work together, and there is no reason for the US not to work with Africa CDC, Africa CDC is the leader in terms of public health in Africa.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
This is the opening trade, 30 minutes into today's session this Wednesday then, and it's a positive session. We've got European earnings to layer on top of all of the other dynamics in markets. We've seen quite a substantial drop in oil prices over the last 24 hours or so. That was certainly supporting risk appetite yesterday in session, pushing some of the global indexes to new record highs. We continue to see some of that this morning with earnings stories being layered on top. And despite maybe a bit of disappointment around, well, AMD's revenue outlook within the tech space, that was one of the more negative dynamics, Lizzie, around the tech story. But broadly speaking, we are positive, even if the CAC 40's under a little bit of pressure at the luxury end, actually, is underperforming just a little this morning.
Well, under the hood, Anna, there's not much volume to speak of today, as you might expect on an August Wednesday. But if you look at the balance of Euro Stock 600 members to the upside, it is firmly to the upside, 418 as things stand, reflecting that positive mood in equities, not just in Europe, but around the world as well. You mentioned that there are a lot of earnings stories we need to bring you this morning, so let's take a look at the leaders at the moment. We were speaking earlier to some of the Sandoz leadership, and we are up 7.7% at the moment on this company. Their results for the second quarter really in focus, the net sales meeting estimates. Glencore's profit also jumping because they've had a trading boom, record copper, so those shares up 3.8%, and next sales numbers coming out as well this morning. They've lifted their outlook, boosted by the hot summer, so that really helping clothing as well, up 6% as things stand in London. Now let's also look at the laggard, shall we? Novo has been one we've talked about a lot already today, down 3.8%. The part of this is that's been disappointing has been the Wegovy pill sales, so those shares down 3.8% as things stand. Infineon revenue beating forecasts, powering AI chip demand, powering all of that, but still the shares down 4.1%. It's hard to impress investors in this market. HSBC also down 3%. It's had multiple downgrades after that strong share price rally that we saw as well. Anna, what else do we need to know this morning?
Let's focus in on the tech sector first of all then, Lizzie. SpaceX shares fell in after-hours trading after the company disclosed higher than expected spending on its artificial intelligence business, dampening the company's first quarterly report that broadly surpassed Wall Street forecasts. The CEO, Elon Musk, told analysts that he expects the cadence of AI development to improve dramatically and that SpaceX would reach $100 billion in annual run rate revenue by the year's end. Artificial intelligence models developed by OpenAI and Anthropic carried out potentially harmful activity during safety testing, including trying to inject harmful code into software. The UK's AI Security Institute said it was the first time it had seen risks around autonomy and deception manifest so clearly in the real world. Both companies are now working with the Institute to investigate those incidents. Bloomberg has learned that former senior officials from European nations and Russia met last month to explore potential conditions for peace talks to end the war in Ukraine. The meeting is said to have taken place in Vienna and included former officials from the UK, France and Germany, as well as unidentified former Kremlin officials. Lizzie.
Well, the US and Iran are closing in on an interim agreement to reopen the Strait of Hormuz. The President, Donald Trump, says that Iran talks are going well and that the waterway will open very soon.
I think it'd be very smart to make a deal. We'll see what happens. They had a very good day. The negotiations were good.
Let's get the very latest now. We can go to Bloomberg's Abir Abu Omar in Dubai. Abir, how is it looking like they're going to thread this needle then? Because we know that President Trump wants the Strait of Hormuz reopened, but Iran didn't want to cede control of it. So what's the answer that seems to have been worked out here?
That's a good question, Lizzie. Good morning. So what we know is that a deal to reopen the Strait of Hormuz is imminent. President Trump there on the tarmac in LA in the early hours of our morning speaking, saying that a deal could happen in the next 48 hours. He did say that we'll see what happens. But when you ask what exactly will happen to the Strait of Hormuz, now we know that there's a lot of optimism from the U.S. side. We've heard from Marco Rubio, we've heard from Scott Bessent saying that a deal could be imminent about the reopening of the Strait of Hormuz. Now, the mechanisms of that are happening in a separate negotiation that is between Oman and Iran, and the mechanisms there reported by Axios earlier this morning. And let me run you through some of the lines that we heard there. One, what we know is that inbound vessels would use a northern lane near Iran borders, and then outbound traffic would travel through Omani waters in coordination with Iran. Axios also saying that no tolls or fees would be charged during a 60-day agreement. But Lizzie, this is all to say that this deal that everyone has been talking about over the past couple of days is really specific to the Strait of Hormuz. This is not relevant to the MOU that was signed in Switzerland back in June. All we're concerned about, or all the two sides are concerned about for the time being, is getting a trickle of movement through the Strait of Hormuz that's pretty much been paralyzed over the past couple of weeks or so since those escalations in the Middle East returned. But what we know so far from the U.S. side is that a deal could happen as soon as later today.
So that's the positive side of things. And it's that kind of narrative, Abir, that's been weighing on oil prices and bringing them back down to below, well, we were down below $79 a barrel. But then just in the last half hour or so, we've had some new threats from the Houthis over around the Red Sea, which has put some upward pressure on oil prices. What are the details there?
Yeah, so this is the Houthis spokesperson coming out moments ago, as you have mentioned, saying that ships in the northern part of the Red Sea that are Saudi flagged will be attacked. And so you're seeing the risk emerging in another waterway that's been seeing those escalations again over the past 3 or so weeks, Anna. And this is a parallel fight, right? This is the fight between Saudi Arabia and the Iran-backed Houthis in Yemen that is putting the Red Sea, that is putting Bab el-Mandab, another key waterway, another key path that Saudi Arabia has been using over the course of this war, at risk. Now, we did report yesterday, Anna, that Saudi Arabia is seeking a path to diplomacy, or a return to diplomacy. Bloomberg reported, citing sources, that Saudi Arabia is asking Oman is mediating between Saudi and Houthis, apparently, to get them to return to a state of talks to de-escalate the situation that has emerged in the Red Sea. But as you mentioned, and as we just saw moments ago, the Houthis not biting and attacking or threatening to attack ships in the other pathway of the Red Sea. So while we're seeing positive news in the Strait of Hormuz, or possible positive news coming out later today in the Strait of Hormuz, we're seeing another vital waterway that is prone to the risk of getting attacked by the Houthis, backed by Iran, of course. And you're seeing oil again above $80 on the barrel when it was below that in the early hours of our morning, at least.
Okay, Abir, a developing story. Thank you so much for the latest. Abir Abu Omar there. Well, let's get more on how this translates to the energy price picture then. We're joined by Emily Ashford, Head of Energy Strategy at Standard Chartered Bank. Emily, good to have you on the programme. Thanks for making time. I wonder how much the Iran war premium embedded in Brent would unwind further if we get, hopefully, a credible deal here, and how much lower Brent realistically could go if the Strait of Hormuz reopens. Good morning.
Good morning. Yeah, we seem to have had diplomacy gaining momentum over the past 24 hours or so, with this raft of positive headlines suggesting that we have some tentative steps towards de-escalation, at least while further negotiations on some of the more complex issues take place. But as your colleague said, the key factor is obviously the opening of the Strait of Hormuz for transit once more, and that still appears to be highly contentious with no resolution at all, and the security situation remains fragile. Iran seems willing to open if it can collect transit fees and if it has guarantees against future attacks, sees an end of the US naval blockade and relief from sanctions, whilst the US and the Gulf states are demanding that the strait is open first, alongside guarantees for the safety of shipping and regional security. And so it's not quite clear yet if there's going to be an accord. So at the moment, the path of least resistance, at least since the start of August, has been down. We've seen sideways trading, but punctuated by sharp corrections on these headlines, even if the true status on the negotiations remains muddy. But I think there is still some hope that even though the long-term diplomatic resolution, including those complex topics such as Iran's nuclear program, still remains distant, near-term moves may in fact encourage some of the flow of products and some of the transit through the key maritime choke points. That will be safe even if we only temporarily see maybe a standing down of some of Iran's regional proxies. And the comments from the Houthis today certainly goes against that narrative. But I think the market's hoping that we see maybe just a short-term pressure release valve. But in my view, in the longer term, the pace of normalization is still going to take a long time, and some optimism, like we saw following the first MOU, could be a little bit premature.
Well, part of that, of course, is going to come down to demining the Strait of Hormuz. We've had diplomats telling Bloomberg that Iran might be willing to have European nations help with those efforts. Do you believe that when, previously Iran has been so against foreign nations getting involved with demining?
Yeah, it's not yet clear who would be tackling the mine clearance. It seems like a one small point. I've always said that it's not necessarily a determining whether the strait is open or closed, but it's a determination by a shipper or by an insurance company as if it's safe to transit. So if there is a level of mine clearance required for the Strait of Hormuz to move forward with these negotiations, then yeah, that certainly has to be one of the key topics that gets tackled.
Emily, good morning. I want to ask about a different subject and to take our conversation a little wider, because clearly we're going through a heat wave here in Europe. It's really dry, and lots of people talking about El Nino and what that will mean later in the year and into next. And I wonder, focusing on the Panama Canal, talk us through what it means for your world, for the energy world, if we do see difficulties with the Panama Canal, reduced passage through that body of water.
Yeah, it's just one more pressure point on some of the key maritime choke points in the world, which shows that it's not only politics that can affect this, but it's also weather. And transit through the Panama Canal has been reduced because of the draft conditions there. Panama, not quite as critical in terms of the near-term energy market, but I said just adds another level of pressure that to a market that's already struggling with reduced crude oil supply, disruptions to shipping routes, and increasingly complex supply chains.
And what is it that worries you most in Europe then, Emily? We're looking at the Rhine, the Danube, and water levels are reduced there. We're looking at nuclear power facilities, particularly in Eastern Europe, in some cases having to be stood down as a result of a lack of water for cooling.
Yeah, extraordinary heat and drought conditions across Europe. Weather has always mattered to the energy complex. It influences fuel demand, but increasingly, extreme heat and drought affect refiners' ability to produce fuels efficiently. So we have simultaneous raising of demand and constraint in supply. Each individual effect is relatively small, but when you combine them, that amplifies pressure. And we've particularly seen that on middle distillate cracks and boosting of refinery margins over the summer months. The ICE gas oil Brent crack, that reflects European diesel, pushed over $75 at the end of July, a near 20-year high. And there is still further upside possible there if conditions worsen. And Europe is a particularly interesting case for this because most European refineries were designed decades ago for significantly cooler climates. And the limiting factor isn't the distillate column itself, but it's the cooling systems. As we see ambient temperatures increasing, air coolers become less effective. Cooling water sources, like you mentioned, such as the rivers, they warm, so they remove less heat. And there's an increasing risk of refiners breaching water discharge temperature limits. And we have operational safety limits, which can reduce runs, taking processing units offline. Water level, as I mentioned, is particularly key. The Danube has fallen to record low levels. The Rhine isn't far behind. As you mentioned, in Hungary, we've had cuts to nuclear power generation. And in Romania, just this week, we saw these astonishing images of authorities blasting a rock outcrop and building a temporary dam to divert some more of that Danube water to the nuclear complex. Low water levels also affect inland logistics. They cause navigational constraints. Barges are forced to carry smaller loads. Cost rise. Deliveries of crude become less efficient. So then physical distribution is constrained, even if we still see refinery productions intact. So for this summer, weather is compounding an already extremely challenging market for refined products.
And potentially adding to the stagflation risk on the economic front as well. Emily, really great to get your insights this morning. Thanks so much for joining us. That's Emily Ashford, Head of Energy Research at Standard Chartered Bank.
Coming up on the programme, highlights from my conversation with the Infineon CFO Sven Schneider as the German chip maker profits from rising demand for its data-centre chips. A recovery in autos also being talked about, but where's the guidance uplift? We'll get to that conversation next. This is Bloomberg.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders.
Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation. As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlett Fu, who's taking a closer look at drone companies. With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space. Excellent reporting.
I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Mumbai. This is Bloomberg.
Welcome back to the opening trade. 48 minutes into today's session, and it is green across the screen for European stocks. The Stoxx 600 up 0.25%, despite the fact that in the past hour we have seen Brent going positive. So we're up 1% nearly for oil at $80.11 the barrel. We're factoring in the latest lines around the Houthis, but it seems like the geopolitical development of maybe a deal when it comes to the Iran war is overshadowing that and boosting sentiment. But it's not all about the geopolitics, Anna, this morning. It's also about the earnings story.
It is also about the earnings story. Interesting that US futures are just coming off a little bit earlier highs. But let's go to the earnings story here in Europe. We saw an upgrade to guidance from Infineon for the full year, but that really just took the company's expectations to where the market already was. So I wondered whether this was going to be enough to impress investors this morning. Earlier, I asked Infineon's CFO, Sven Schneider, how he expected investors to react to the guidance.
On the back of a record quarter Q3 in terms of revenue, we're expecting a steep, much stronger than seasonal final quarter. We expect a growth of 13% quarter over quarter, 19% year over year to 4.7 billion. And we expect as a follow-up of that, of course, a very strong follow through in the margin trend. So 400 basis points up to 23%. And that then, as you said, brings us to a full year guidance, which is, especially in terms of the revenue, probably slightly ahead of expectations. So I would summarize it as we are exiting the year on a very, very strong path, and it's a broader based recovery which stands behind the numbers. So it's AI driven, clearly, as the number one growth driver, but there is more than that. For example, also a very strong momentum in the automotive industry.
Yes, and I'll come to that in just a moment, Sven. Can I ask you about the power chips segment? How important is the power chip segment to you in your growth story? You describe it this morning as the most important growth driver. So how big can that become?
Yeah, and indeed, I think our CEO said it a couple of months ago, I think very well. It is the biggest growth driver in the history of Infineon. The magnitude of the business, to put into perspective, is give or take 10% of our group revenues this year in AI data center, so more than 1.6 billion, doubling from last year. On top of that, there is 500 million of non-AI related data center business. So it's more than 2 if you add it together. And we expect a very steep growth. For us, it's powering AI from grid to core, including the power infrastructure. And we have already given a guidance, which is pretty rare, for the next year, which stands at 2.5 billion plus as AI data center revenues. So this is a very strong growth driver. And I do not want to give now out a new number for 27. We will do that in the full year guidance in November, but I can tell you today the plus behind the 2.5 will be material. So it is continuing to be a very, very strong growth driver. And it's not only growth driver, it's also the profitability driver. This business sits in our PS division, Power Systems division, and there is an increase quarter over quarter of give or take 400 to 500 basis points, most of that related to AI.
Okay, and you mentioned the autos sector, Sven, and the positivity there. Are you really seeing a pickup in the auto space? Is this a sector at an inflection point? What does your business tell us about the auto sector?
Yeah, Anna, that's an important question. So automotive for us is give or take close to 50% our revenue. So it's very important. And we get very often the question, how can you grow if the number of cars being produced globally is flattish or is even going down? And again, this year we grow in automotive. Why is that possible? There are 2 or 3 important drivers. The first important driver is even if you have whatever 91 million cars globally, the content per car goes up and up. First driver was electrification. Now it's this trend to software-defined vehicles, where we did an important acquisition last year, where we bought the Ethernet solutions of Marvell to have an even better offering, and that drives the content growth. Number one. Number two is there was a very, very low inventory level at the tier ones and automotive customers. We have raised that a couple of times in a friendly way, but just to make our customers aware that there may be times of allocation, again, given that the AI customer demand on power products is so strong. And we see now a kind of replenishment of the orders on top. And there are also some business areas where we see nice market share gains, for example, the microcontrollers. So all that leads up to a good growth story in automotive, even in that overall more challenging environment.
That was the Infineon CFO, Sven Schneider, speaking to me earlier. I thought there was a hidden upgrade to guidance in there, but the market not seeming to listen, in the share price. Then, Lizzie, down by just over 4%.
So let's take a look at the broader market, shall we? We can bring in Skylar Montgomery-Koning from the Bloomberg Markets Live team. And Skylar, I'm looking at NASDAQ futures pairing some of their earlier gains, flirting with going negative as things stand. But we're still very much green for European equities, and it was green in the Asian session. How much does the geopolitics matter for equities compared to earnings when, the question is, do we get a deal within this 48-hour window that Trump has set out?
Yeah, I mean, absolutely watching for whether or not we get a deal, and that can be a positive catalyst for equities. But I also think there's a higher bar for energy prices and commodities more broadly to matter, and that's because we've had earnings season. It's a very positive fundamental backdrop in that it was very strong for both the U.S. and Europe. We've gotten the bulk of it so far. You've had sales rise, growth rise, positive surprises. And the worry, particularly for Europe heading into the season, was commodities would be a drag on those margins. And so the fact that it hasn't means that you need, significantly higher commodity prices or higher yields to really be worried about. What I'll also say is we've had a positioning washout in July. The last week in July, Citadel reports that retail selling was the most retail selling since 2022. So that's a big positioning washout, and that can be rebuilt, particularly when AI has gotten more oomph behind it because fundamentals are positive too.
And what are we watching on the yield story around treasuries in particular? In the wake of all that we've heard about what the Treasury is doing with Japan, what are you anticipating on treasuries?
Yeah, I mean, it helps a little bit that you have lower oil prices, but I think the story is really to do with the Fed and the fact that you have this idea of a higher neutral rate in the U.S., a higher term premium is needed globally, and so the bias still very much is for higher yields. And I think it's a really important part of the yen story that we know those two are linked now, because the idea is if we get higher yields and a weaker yen at the same time, you could see the U.S. come in a more convincing way to support the yen, because what they've done so far hasn't convinced the market, because it's not that they want dollar yen to be lower, it's that they want yields to be lower. And so if you see that situation get worse from a yield perspective, you could see them come in on dollars, and that would be very different from a market perspective in terms of support for the yen.
Okay, Skylar, thank you very much. Thanks for the thoughts this morning. Skylar Montgomery-Coney from our Markets Live team. Lizzie, we have European equity markets then pricing in quite a lot of optimism, it would seem, but US futures, as you were saying earlier, just taking a bit of a leg down. We'll watch NASDAQ futures in particular as we head to the pulse. This is Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Bringing you up to the minute geopolitical news whenever and wherever it happens. I'm Anne-Marie Hodern in Beijing, China, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
The U.S. and Iran close in on a deal focused on the Strait of Hormuz, with an announcement expected soon. Global stocks climb to a record as traders renew bets on the AI trade. SpaceX fails to take off after its earnings debut. Plus, Novo Nordisk's popular Wegovy weight loss pill disappoints investors with sales that failed to live up to its hype. Now, we'll be joined by the Novo chief executive shortly. First thing is first, let's check on the markets. This is a picture across the board. Global stocks are climbing to a record. There is more and more hope that this U.S.-Iran deal to open the Strait of Hormuz will be lasting. First of all, we need an announcement, but investors seem to be also renewing bets on the artificial intelligence trade, driving gains in chip makers, the dollar weakening against most of its group of 10 peers, gold, silver, platinum all rising. And then I'm also looking at euro dollar at 115.39. Let's also take a look at the European markets map. The picture across the board again, we're just seeing a little bit of optimism today, and that's not only AI, but it is what we're seeing in the Middle East. For a conversation, we'll focus not only on SpaceX's shares falling after it's disclosed higher than expected spending on its artificial intelligence business. AMD also falling after the semiconductor firm's second quarter revenue and third quarter sales forecast underwhelmed investors. expecting a stronger performance given rising demand. So you can see SpaceX and AMD pre-market down between 6.8 and 6.9%. For the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Global stocks at a new record with AI and renewed hopes of a Middle East deal lifting optimism. We'll discuss all of that and more in just a second, but let's start with SpaceX, which is under pressure this morning after it disclosed higher than expected spending on its AI business. That's, of course, dampened a debut quarterly report that broadly surpassed Wall Street forecasts. Now, the chief executive, Elon Musk, also outlined plans to significantly accelerate AI development.
We expect the cadence of AI development to improve dramatically. And then with Grok 5, which should be out before the end of this year, we will be incorporating the entire corpus of SpaceX data, basically all the data that SpaceX has ever produced, which is a tremendous amount over the course of a quarter century, will be incorporated into Grok training.
Well, let's get more with Beata Manthi, head of European equity strategy at Citi, and Neil Camping, our senior strategist. So thank you both for joining us. Neil, let's just start off with the fact that SpaceX was better than expected, but it's very clear investors are freaking out because of this AI spending, and it was the same about Meta.
Yes, and to put it simply, rockets burn fuel, SpaceX burns cash. Not even on profits, but on revenues. For every $1 of revenue it generates, it's burning $2 of cash. And this is the problem. To meet the ambitions that it has in the hopes of getting to $1 trillion of revenue by 2030, as Musk mentioned last night, is going to require significant investment. And that, at the end of the day, the company's also spending far less than the hyperscalers on trying to create a hyperscale footprint. That's a problem. I think investors see straight through that issue on the cash flow line.
I mean, you know, we've been trying to get through earnings for tech in general. We'll talk about tech, and then I want to see the broader, markets data. But, Neil, AMD is also pre-market kind of getting slammed. And, is there something that we should worry about AI, or is it just the concerns about valuations and too much spending that is coming home to roost?
The questions on the spending will resurface the questions on those returns. But AMD, it's also a question of expectations and a bit of travel and arrive in the stocks. They've just printed a 50% year-on-year revenue growth number, which is a very high number. The problem is expectations were higher. So the guidance is actually a little underwhelming compared to where the street were at. And also AMD is the 6th biggest points contributor to the S&P gains this year. So that puts in context, I think, where the stock has been and where it's got to into the print.
Beata, what's your take on earnings so far?
So it's been a pretty decent reporting season, right? In Europe, it's been an average reporting season. In the US, already one of the better ones, but that's, of course, skewed by a few companies beating the expectations hugely. But what is interesting is really Europe, because this is the poster child of the broadening, if it indeed is happening. So the average reporting season, 57% of companies beating expectations, dollar amount beat 3%, nothing spectacular. However, when you look at composition of the growth we are reporting on, so 15% up earnings growth this quarter year on year, pretty good. It was 11% expected a few months ago, but the composition is entirely coming from positive from all of the sectors. It is the first time that is happening since 2022. So that's a good thing.
But why is that? Because, again, there are questions about the fact that Europe could be left behind when it comes to AI adoption on a number of things. So is it cost cutting when you look at earnings overall? And if it's across industries, what are we seeing? Because it's not the strength of the economy. It can't be.
Absolutely. So it's the economy is improving, right? City economic surprise indices are really shooting up. That's a good lead on what's to happen. So that also tells you that, well, the economies, maybe they haven't overcut the forecasts if the risks through the Middle East persisted. But if they stop, you have upside surprises there. That's good for earnings, right? So one is domestic story. Let's not forget we have this big fiscal stimulus happening in Europe. Investors have forgotten about that, but it's happening. A bit of that is coming from the currency as well. The biggest share is coming through tech, still through commodities, and financials, industrials are contributing a lot. But the fact that there is almost no sector contributing negatively, that tells you the broadening is happening and hopefully better times ahead.
And Beata, this is not productivity gains through AI yet, right? We haven't really seen, we're just at the beginning.
You don't really see it in the numbers yet, but if you listen to what the companies, European companies have been saying through this reporting season, there are more meaningful, tangible facts that they are reporting that these gains are happening across. Not on the aggregate number, you won't see it, but you have bits and bobs happening. And also, when you look at the performance of the adoption, so we have a basket of adopters in Europe, it started to meaningfully outperform as well. So there is a bit more to that.
And Neil, going back, I mean, one of the things that were shocking in the last couple of weeks actually is these security breaches. OpenAI and Anthropic AI agents, now we understand, have been implicated in new security breaches. So what more do we know about that?
Yeah, this is coming around from the detailed testing that's going on in these environments, and these tools are so sophisticated that they are also able to capture where there are problems in the coding that haven't been detected for many years. So what's great about the models is capturing these shortfalls and these flaws. What's bad about the models, of course, is if they get into the hands of the bad actors. So we're still learning about some of these models, and so just like with your iPhones, when you get these security patches that come through in updates, we'll be getting updates on these as well. So we're still waiting to see more detail, but it's both a risk certainly, but also, and that's actually good for some of the software companies that are providing the fixes into these models.
Okay, thank you both. Neil Campling there, and Beata, of course, stays with us. We'll talk a little bit more about the earnings season. But now to the Middle East, and the U.S. and Iran are closing in on an interim agreement to reopen the Strait of Hormuz. Now, President Trump says Iran talks are going well, and the waterway will open very soon.
I think it'd be very smart to make a deal. We'll see what happens. They had a very good day. The negotiations were good.
Well, for more, let's bring in Abir Abu Omar in Dubai. Abir, so what do we know about this possible Hormuz deal?
Good morning, Francine. Well, we know exactly that. We know that the deal is about the Strait of Hormuz. Now, just bear in mind that this is not the same deal that was signed in Switzerland, that MOU with 14 concessions that was supposed to get the talks between the United States and Iran starting. This is a deal primarily to get the Strait of Hormuz reopened. Axios earlier in the morning reporting a few things about the mechanisms of this deal, Francine, saying that inbound vessels would use a northern lane near Iran, and then outbound vessels would use a part of the strait that is in the southern part of it, or closest to Oman. It would be for 60 days. No tolls or fees would be charged, and then it would open up the trickle of movement in the Strait of Hormuz. As you have mentioned, President Trump saying that it could be imminent. Other U.S. officials telling us that it could be signed as soon as today. Now, just something to bear in mind that one of the key mediators in all of this, Qatar, saying that nothing has been finalized. It was working on a draft language to present to both Iran and the United States. Both, as of now, according to our understanding, are reviewing it. But it is exactly that. It is the Strait of Hormuz that is front and focus right now for both sides of the table that are keeping the blockade on the Strait of Hormuz. Francine, the U.S. maintains the naval blockade. Iran maintains the threat of attacking ships that are going through the waterway without seeking permission or sticking to routes that it hadn't laid out for them. So we wait and see if, in fact, the deal is as imminent as today, as President Trump had alluded to earlier.
So, Abir, what would a Hormuz deal today actually mean for the fighting and for the Iran nuclear program?
Yeah, that's a good question, and it's pretty premature to tell what it means for the fighting now. Remember, the Switzerland deal, the MOU that was signed in June, it lasted for about a month before the fighting commenced or recommenced in the region. So what we understand from this deal is that it's not meant to tackle those wider concessions or those wider agreements that President Trump and Iran had come to in June. What it's meant to tackle is primarily the Strait of Hormuz and just getting those energy flows back to the table. And then something else that that we're also seeing, Francine, is that Brent crude had dipped below the $80 on the barrel as of early hours of our morning. But the escalations that are happening in the Red Sea have pointed to an uptick in oil prices just about an hour ago. And so that is something else that Saudi Arabia, which has resorted to the Red Sea over the past month or so, or over the course of the war, will have to pay attention to. And so that is something else we're keeping an eye on. But when it comes to the wider fighting in the region and the parallel aggressions that have been happening between Saudi Arabia and the Houthis and the militia in the southern part of Iraq and Saudi Arabia, those are things that we'll probably not see addressed for the time being. Everyone's concern for the time being is just getting that movement that has been paralyzed over the past 3 weeks or so, just getting it restarted again in the very vital waterway.
Abir, thanks so much. Abir Abu Omar there with the very latest on the Middle East. Now, still with us, Beata Manthi from Citi. Beata, I mean, again, the market is moving on hope of a kind of deal. Unclear whether we get it. It's 2 steps forward, sometimes 1 step backwards. Does it actually help with inflation in Europe?
That's a good question. Absolutely, it should, right? So one of the big risks that is still hanging over the markets is the hawkishness of the central banks. So that's definitely a risk, and the deal really takes the risk of the ECB hiking going forward. It takes it away, which should be constructive for equities, and especially European equities or broader cyclical equities.
Beata, overall, I mean, given the earnings season that we just talked about, what do European companies need now? I mean, what do you need actually to be overweight in some of them compared to other parts of the world?
So we are quite encouraged by this broadening. We are encouraged by what the analysts are doing with their earnings revisions. So European earnings revisions, I was actually quite surprised, I have to say. They are almost at all-time highs now, coming from broad set 80% of sectors being upgraded, and they've been upgrading even in pre-reporting season that tends to be a very negative, has a negative seasonality. So all of these tell me that from the fundamentals perspective, the setup is there for Europe to outperform, right? From the macroeconomic perspective, you have the setup. I've mentioned Citi Economic Surprise Indices. They are improving if the Middle East risks are contained. And the hawkishness, as you just asked me, if inflation is contained, that's also a positive. So the setup is there. Yeah. So all we need is geopolitics. Geopolitics is that we've hedged these hopes. Everything I'm describing from macro and fundamentals perspective, I feel like I'm having a deja vu from almost every year that we are going in the right direction, and then something happens, and it gets put on hold. But this is happening. Europe, of course, it's going to be a very crucial year going forward for Europe, because we are negotiating the next 7-year budget on the European Union level. So that's going to be a very important thing to watch, because there'll be changes there in how money is invested, right?
And what could go wrong? I mean, again, you have quite a lot of politics, right? You have France going to elections, probably elections in Italy. In the UK, we have a new prime minister, unclear what he'll do, for example, with bank taxes. So there's a lot of unknowns. I don't know whether it's more domestic issues that you worry about this year compared to also, these geopolitical shocks that could really come from anywhere.
So that's a good one. Perhaps at the start of the year, we were more worried about the external shocks. Now, of course, it's a balance between the two, because external shocks are still there. But as you say, next year is like a huge year for elections in Europe. So we start with France probably in May. So it's going to be something to watch out for sure. And there could be disappointments, but our view is that Europe is on the right path, and it is more united and realizes what needs to be done to boost growth and prosperity going forward.
So I know earnings were good across the board. Is there an industry that looks really set to benefit from the big trends and divergences that we'll see in the next couple of quarters?
So Europe is an interesting index because it doesn't have that much direct exposure to AI. So tech is only 10%, right? But if the broadening happens, so it's a mixture of Europe getting its act together, the infrastructure spend continuing, while at the same time global build-out of AI, where European companies feed into, continues as well. Then for us it's basic resources, industrials, and second order effect positive, it's banks. It's pretty cyclical.
It is quite cyclical,
Yeah.
especially, I mean, when you look at commodities and some of, how do you expect that? I mean, a lot of the demand has to come from China. And actually, I don't know how much of a reading we need, a clear reading on China to see the strength of European companies that we keep on saying, well, they don't need to choose between the US and China, but actually at some point they need to grow towards one or the other more.
Of course. So Europe, again, 50% of revenues in Europe come domestically, and there are, for me, fewer question marks on the direction it's going, because the money is flowing there, right? The fiscal is there. But we've been quite bearish on the impact of Chinese. So whether it's European exports to China, we've had a negative factor on our allocation model on that. So, for example, we are still underweight autos. We've been for a very long time, and we are still underweight luxury consumer products, which perhaps there are some signs that they are turning, right? But overall, that's been a very negative factor, and a lot of bad news has been already priced into the exporters, and especially exporters into China.
Beata, thank you so much. Beata Manthi, they're head of the MEA equity strategy at Citi, stays with us. Coming up, we'll also speak to the Novo Nordisk chief executive after the pharmaceuticals giant actually reported results. That's coming up next, and this is Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the centre of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is The Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend. This is Bloomberg Television. Earnings season is here.
There are earnings galore.
Some areas have done well. Equity trading has been an area of resilience.
Bloomberg is first to break the numbers.
Diving through the details of these earnings.
That is the weakest growth in more than 3 years.
With the smartest insights.
Are we seeing dislocations that point to something a little bit more severe?
If you look at where global growth expectations are, compare them to the start of the year, they're actually pretty similar.
But there is this uncertainty, and we haven't seen it in the results.
Continuing coverage on Bloomberg.
Welcome Welcome back, everyone. We're having a great conversation on some of the earnings reports. We talked about oil, and of course, we talked about tech in general with Beata Manthe, who was also saying she was a little bit surprised by the strength, actually, not only of the European economy, some of the indicators, but also some of the earnings that we saw. So we're back with Beata Manthe, head of EMEA equity strategy at Citi. Beata, when you look at the future for Europe, actually, and a lot of these companies, where does healthcare sit in all of this?
So healthcare is a very idiosyncratic sector where, of course, what happens with the drugs and innovation influences it a lot. But what we've noticed, so this is one of our preferred defensive hedges. So we do see, even though we are very pro-cyclical, we do see that in this point of the cycle, volatility will persist. And healthcare has its place as this defensive hedge, and also it's an anti-AI hedge. Yes, AI adoption will happen there through time, but it's been a very uncorrelated trade. This is why recently it's been doing very well and serving as this hedge.
When you look overall at portfolio construction, I mean, do you have to hedge almost naturally with industries more than in the past, given a lot of the sector overweight of AI in general?
So we have been for most of this year, I have to say, but recently we've taken a bit, so healthcare is the last hedge that we have there. You need to have something because AI volatility is going to be there. The biggest question is what are you going to do with tech? So we think you stay invested, but it is ever evolving thing. So you need to be, it's really stock pickers market when it comes to AI. It's not going away, but you need to diversify. And Europe, actually, because it doesn't have as much tech, comes out as one of the biggest winners in terms of investors choosing the regions for diversification.
Beata, thank you so much for joining us. Beata Manthe, their head of EMEA equity strategy at Citi. Now, Novo Nordisk has raised its forecast for the second time this year on a rosy outlook for its obesity and diabetes drugs. But sales of its new Wegovy weight loss pill have failed to top analyst expectations. Well, we're now joined by Mike Doustar, the chief executive of Novo Nordisk. Mike Doustar, thank you so much for joining us. I know you extended some of the discounts for some of the lower doses of the Wegovy pill and pen. Would you be open to discounting more? Does this, have you extended and will extend the discount?
Thanks very much for having me. I think that the pill launch has shown itself to be much better than we had expected it, and I would say pretty much most analysts had expected it, because we had set the price at the right level. We are matching, I would say, a phenomenal volume uptake at a decent price where we can turn this into good profitability, and I'm very excited about that. So at this point, I would say we are not right now discussing further discounts. You have to remember that today in US, from every 10 patients that are needing a GLP-1 pill and seeking one, 9 is coming for Novo Nordisk and 1 is going to our competitor. So we're in a good spot.
So you don't, I mean, there's worries or concerns or I guess question marks, whatever you want to say, from analysts about your long-term competitiveness. And you say these are wrong. This is what you're telling me, that actually this is just the start and you'll go after market share from Lilly.
I think we've done well, and the analysts are expecting even more when you do that. But I would say that this is we had a situation where we came to the pill. We had the best pill launch in the history of medicine, and that was, of course, welcomed. But a lot of analysts were skeptical. What will happen when our competitor will launch their product? I can tell you that it took us 12, weeks to get to 1 million prescriptions. This final million prescriptions, now adding to 5 million that we have, took us only 4 weeks, in spite the fact that our competitor not only is in the market, but is trying very hard to, of course, capture their own fair share of prescriptions. As I mentioned, we have right now close to 90% market share in the pill segments. So we are incredibly proud and happy of this. Our job, of course, to continue what we are doing and go forward. But the pill is doing the job for us to a large extent as well. It's the most efficacious pill with 17% weight loss, a very good tolerability profile, and it's easy to take. We don't have to worry about all the other medications you're on when you take our pill. So it seems like that the physicians and the patients have made their choice, and I'm very happy about that.
You've also said that Novo may look into more consumer-focused products, and potentially, I guess, in aesthetics or longevity. What does that look like? Is there a plan for this to, increase? Is it direct-to-consumer products? What's your thinking on all of this?
The way I look at it is that we need to follow the science. One of the things that we have come to learn and the world has come to see is that many of these incretins, GLP-1 as an example, they do multiple benefits rather than just weight reduction. We understand this science better than anyone else because we got into this business a number of decades ago. So we need to take that scientific knowledge that we have and match it with the purpose and the passion we have for the patients and the consumers and try and find the best match possible. When we do, not only it could be a good business, it's also irresponsible not to address an unmet need. So that's what I have said, that I will not rule out us getting into other areas that the science is taking us to.
It's been reported that AstraZeneca is exploring acquiring Bristol Myers Squibb. Do you think the age of the mega deals in pharma is back?
I cannot judge on my peers and what their rationale is. What I can tell you is that when we look at business development, I do not think about the number or the magnitude of the deals to start with. I look at scientific and strategic gaps that we may have and how we can fulfill those. What we have concluded so far is that on one hand, Novo Nordisk has a phenomenal pipeline and a lot of R&D knowledge. But we also have concluded that we don't have a monopoly on the best ideas. So we are right now looking at bolt-on acquisitions to try and complement our own assets and see basically how we can serve the world in a better way.
Where do you see a potentially transformational deal for Novo?
At this point, I don't see that actually because we don't have a transformational gap that I'm trying to fulfill. I actually think we're in a very good spot as we are now. We're basically looking into a number of assets that can complement what we already have, and that's what we are doing. Looking into bolt-on acquisitions is right now where my focus is. But I've also said that I am not a person who starts with a no. So if one day the answer should be a transformational deal, then one day we'll look into that. But that day is not today.
When you look at that day is not today, that's very clear. If you look at the different parts of the businesses, is there one specifically that you want to boost?
I would say when I look at our obesity pipeline, we really have a phenomenal pipeline. We are addressing most of the patient needs right now in either late-stage assets or some of the early-stage assets that right now I'm not able to share with you. I feel comfortable, albeit we are continuing to bolt around that. On the diabetes front, we are a little bit more challenged, and our, of course, intention is to really stabilize and strengthen our diabetes business that we are still a leader of, and then move into some of the adjacencies that our patients are asking us to do. So that's a little bit in a nutshell our strategy right now.
I know you've had another clinical trial setback last week with the failure of the heart trial for Zeus. I mean, analysts worry that your pipeline is just not strong enough once Ozempic and Wegovy go full generic. What's your response to that?
I would say that one single asset does not define our strategy. We've been very vocal that we would continue our strategy and expand our assets into cardiovascular area. We have early assets. We have some also still late-stage assets that we are, of course, looking into, as well as, of course, it's an area where we will be more active looking into business development and see how, again, we can look outside of our own shops. But CV is an associated area to obesity and diabetes, and it's an area that's very strategic for us to strengthen and develop further on, despite the setback with Zeus trial.
Mike, just a final question going back to the pill. Do you expect profitability on the pill to improve in the course of the year?
As people, of course, are titrating into the higher dosage of the pill, there is no secret that the price of the higher dosage are higher. So that, of course, improves the profitability even for the single patient that's on the pill, today. As we are, of course, also going forward, we continue to create efficiencies in our manufacturing sites and in our cost structure. That is also improving it. In general, I would say the profitability of the pill is decent and will continue to get better. If that was not the case, we would not be launching the product in more and more markets. We have just announced, of course, that we will continue post UK and UAE our launch into Germany and more to come. So that is, of course, on the back of, seeing the top and the bottom line of the pill, performance.
Mike Doustar, thank you so much for your time and conversation today. That was the Novo Nordisk Chief Executive joining us on the back of results. Now, disruptions on one of Europe's most important trade arteries are poised to intensify after the Rhine fell to the lowest on record ahead of the peak summer dry season. If levels get enough to halt traffic, then it could cut off a critical oil waterway. Well, the Rhine stretches from the Swiss Alps to the North Sea, linking Switzerland, Germany, France, and the Netherlands. Well, let's discuss all of this and the potential impact with Javier Blas, a Bloomberg opinion columnist. Javier, I'm disappointed you don't have a map with you, but away from that, we've already lost 3 major waterways because of geopolitics. If you cut off the Rhine, how much of a disaster is that?
It's pretty bad. We saw in 2018, that is the last time that we were as low as we are right now. Actually, we are lower now. That could have an impact even to be noticed on the German GDP. Wow. Economists estimate that in 2018, the German GDP growth was shaped by about 0.4%. We have production halts in chemical plants across the Rhine, steel, refineries, coal-fired power stations. So the impact can be quite notable. The industry learned the lesson in 2018. It's better prepared today. They have bypass alternatives, although a critical bypass that has been used in the past is the Rhine Bank railway is under renovation, so that's not usable. But so I think that perhaps it's not going to be as bad as 2018 as long as it rains very soon.
Okay, but what if it doesn't rain very soon?
Well, it doesn't rain soon, and sadly the forecast is not for much rain for the next 10 days at least. We are going to start seeing companies like BASF, a big chemical company, announcing that they need to cut production. Already in the last earnings conference call, the chief executive suggested that some force majeure means that effectively cancellation of contracts may be needed in the short term if the rains don't come.
Javier, are there any measures being put in place now to ship more quickly?
One of the measures is that the industry post-2018 decided to, in the Rhine, let's just kind of zoom back a bit. In the Rhine, what we use are barges, and those barges need a certain amount of water. The industry designed a new kind of barge that is designed to navigate with very low water levels, as low as today. Those are still continuing going through the river, but they need to carry a lot less cargo than before. In normal circumstances, they can carry 5,000 tons. Right now, they're only carrying 800. That's having an impact. Everyone is using these new barges, but they have a limit, and we are reaching those limits. If those limits are reached, what we are going to see is that we're going to see a move to use more railway and using more trucks. But bear in mind, for every barge that we cannot sail through the Rhine, we need 100 trucks.
Wow, that's really quite impressive. And the scale of it is actually hugely and really immense. Javier, talk to me about inventories because of what's happening in the oil markets and the Middle East. Like, we're closer to a deal. We've said that before. It hasn't really happened, so who knows what happens geopolitically. But how long does it take for some of these inventories to be replenished once the Strait of Hormuz fully reopens?
Well, it will take a number of weeks and months in some cases to rebuild all the inventories. We may be rebuilding inventories all through 2027. But if the Strait of Hormuz reopens and the oil flows. We have seen in the past, when the Memorandum of Understanding was reached about a month and a half ago, that a lot of oil will come into the market. The market probably will move into a surplus, and that will over time rebuild inventories naturally. So prices don't need to stay high until the inventories are replenished. The prices could trend lower. And to be honest, if you look where the market is today, Brent around $80 a barrel, WTI around $75 a barrel, that's about, we'll say, on the high end of what I will call a normal price. The global economy has had that in the past with no problem whatsoever.
But Javier, this for me is most surprising, right? We went into the war with a lot of, the famous analysts saying, like, this is going to be a crunch. We have to stop flying maybe in August because of concerns of jet fuel as well. Like, is it because the economy has absorbed it much better, or how do you, like, prices have been high but not through the roof like certain people expected?
I think that there have been several elements. One is that we still look at oil shocks through the lens of 1973-74, and the global economy has changed a lot since then. But on this particular one, we used the strategic petroleum reserves very early on the crisis. In previous crises of supply, we have waited months. You look at 1990, 1991, we took 6 months to release the SPR after Saddam Hussein invaded Kuwait. Here we took action within 10 days of the war starting. That was very important. The other two important measures is that there were some bypass capacity around the Strait of Hormuz via pipeline that was used. A lot of oil was leaking through the Strait of Hormuz, going dark in tankers. And the most important factor, I think, is that China surprised us, taking a huge step back from the market. China used to buy, before the war, around 11 to 12 million barrels a day of crude on the seaborne oil market by tanker. It bought in June only 5.5 million barrels a day, a 50% reduction. And that China taking a step back has had a huge impact onto the market. We know what China did. It's still a bit unclear how they are doing it, whether it's a combination of their own reserves, that the economy is more flexible, perhaps their economic growth is lower than we thought, and therefore the oil demand is not growing as much. There are a number of elements we don't really, or at least I don't really understand how China did what they have done, but what is clear is that they took a massive step back from the market.
And when you look at, so let's say we don't have a deal between the U.S. and Iran, what happens to these? How many more inventories do we have? How much more?
We have some inventories to go for long. I mean, it depends on how much of the bypass are in use, how much leakage still occurs, and crucially, how much oil China needs to buy in the next few months. I do think that China can continue buying what they were buying in July, and they are buying so far in August, which is significantly less than they were doing pre-war, probably 30-35% less. Not as a deep contraction as it was in June, but still a significant one. I think that they can do that for perhaps until the end of the year. If that's the case, we have inventories to go until the end of the year. But every day that the Strait of Hormuz remains closed, we are draining a bit the inventories, and at some point that needs to stop.
I mean, do you think this war will change how we think of energy security in Europe?
Oh, yeah. I think that it will change how we think of energy security across the world. I think that it's going to be a push to rely more on your own energy. For some countries, there's going to be a push for more renewables, because that's what they can do at home, buy solar panels, install it, and run it. For some countries, it's going to be producing more oil in their own territories, so drill more. And for some, it's going to be relying more on coal. But there have also been a huge, significant, to me, trade and diplomatic awakening in this crisis. If you look at the relationship between some G7 members and the United States, Japan bought a third of his oil in June from the United States. From the United States. If you have asked me that question 20 years ago and say Japan will buy a third of his oil from the US, it will have things like science fiction. Europe is buying 60-65% of his LNG from the United States. And also, so the US is crucial energy supplier for allies in Europe and in Asia. And that also at a time when Europe is concerned about the dominance of China in supply chains, as we have been discussing, if we are not at the $200 oil, it's in part because what China has done. So at a time where Europe is trying to reduce reliance on China, we are realizing that actually de facto we are even more reliant for our economic well-being on what China is doing.
So interesting. Javier, as always, thank you so much for joining us. That's Javier Blas from Bloomberg Opinion. I read all of Javier's columns, and also he has a great book. A couple of years, actually, now, but I still think it's very, very relevant, The World for Sale. Bloomberg has learned that Chanel's sales rose strongly in the first half of the year, outperforming rivals, including LVMH, helped by strong demand for Mathieu Blazy's new collections. Now, we're told comparable revenue at the private company climbed about 16%, with similar growth at the company's fashion division. Well, let's get more from our Bloomberg luxury reporter, Angelina Rasquet, who's in Paris for us. So, Angelina, first of all, what's driving sales growth?
Hi there, Francine. I mean, as you said, the results for Chanel in the first half were very strong. Overall comparable revenue rose 16%, and that was actually the same at the fashion division. The fashion division is the biggest unit of Chanel. It generates about 60% of sales. And basically, Chanel enjoyed the benefits of the new creations by the new designer Mathieu Blazy. He was appointed in December 2024. He made his first collections. He unveiled his first collections last year, and they were commercialized from March this year. And actually, they've proven to be very popular with customers in an otherwise relatively morose market. So what's interesting is that Chanel saw really strong growth in all divisions. So it was the case for fashion, but it was soft leather goods, but it was also the case for watches and fine jewelry. That division grew by more than 30%, and helped by lines like Coco Crush, but also the watch segment grew, which is a segment that has been struggling in the past couple of quarters. And otherwise, beauty and perfume was also growing. And when it comes to geographical breakdown, all the regions grew, including China, including the Middle East, but it was led by the US, up more than 25%.
I mean, in terms of the sectors, or actually the items that are driving the most, how are shoes doing?
Shoes are doing fine. As we saw, there's this list that's made by a company called List, which tracks all the hot products online. And in the first quarter, Chanel was the hottest brand, and they cited in particular pumps that came out that cost 1,300 euros. But actually, if you look at Chanel, I mean, the bags are doing relatively well. Chanel was one of the brands that really increased massively prices in the post-pandemic. And recently, with the new collections, they introduced new bags that are in the price range that are considered to be slightly more affordable. So that's, let's say, below 10,000 euros a bag. But if you also look, I mean, the fine jewelry division did really well, and that's because customers are really keen to purchase products that they think are going to keep their value in the long term, and that's something we also saw at Richemont. Richemont, the owner of Cartier and Van Cleef, in the last quarter, overall sales rose more than by about 20%, and that's definitely something that we're seeing. It's the strength of what we call the hard luxury segment, basically jewelry and gold pieces that are seeing that are very popular with consumers.
Angelina, thank you so much for joining us. Angelina Rasquet there on the very latest from the luxury sector and Chanel in particular. Now, coming up, OpenAI and Anthropic safety tests finds models carrying out more so-called unsanctioned actions. We'll have the details next, and this is Bloomberg.
to Bloomberg This Weekend. I'm David Gurr.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
It's Jobs Day, and Bloomberg has the report under surveillance.
The labour market backdrop still pretty decent.
When you take a look at wages, when you take a look at the JOLTS data today and the quits rate, that's going to matter.
This Friday, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
The labour market seems okay.
We don't see any wage pressures in the economy.
We're all building up to one thing.
The July Jobs Report, Friday on Bloomberg.
Well, Infineon has forecast quarterly revenue that beat analyst estimates. The German chip maker benefiting from rising data center chip demand and price increases. Well, Bloomberg's Anna Edwards asked the chief financial officer, Sven Schneider, how investors will react to that guidance.
On the back of a record quarter Q3 in terms of revenue, we're expecting a steep, much stronger than seasonal final quarter. We expect a growth of 13% quarter over quarter, 19% year over year to 4.7 billion. And we expect as a follow-up of that, of course, a very strong follow through in the margin trend. So 400 basis points up to 23%. And that then, as you said, brings us to a full year guidance, which is, especially in terms of the revenue, probably slightly ahead of expectations. So I would summarize it as we are exiting the year on a very, very strong path, and it's a broader based recovery which stands behind the numbers. So it's AI driven, clearly, as the number one growth driver, but there is more than that. For example, also a very strong momentum in the automotive industry.
Yes, and I'll come to that in just a moment, Sven. Can I ask you about the power chips segment? How important is the power chip segment to you and your growth story? You describe it this morning as the most important growth driver. So how big can that become?
Yeah, and indeed, I think our CEO said it a couple of months ago, I think very well. It is the biggest growth driver in the history of Infineon. The magnitude of the business, to put into perspective, is give or take 10% of our group revenues this year in AI data center, so more than 1.6 billion, doubling from last year. On top of that, there is 500 million of non-AI related data center business. So it's more than 2 if you add it together. And we expect a very steep growth. For us, it's powering AI from grid to core, including the power infrastructure. And we have already given a guidance, which is pretty rare, for the next year, which stands at 2.5 billion plus as AI data center revenues.
Well, that was the Infineon CFO, Sven Schneider. Now, artificial intelligence models developed by OpenAI and Anthropic carried out potentially harmful activity during safety testing, including trying to inject harmful code into software. Now, the UK's AI Security Institute said it was the first time it had seen risks around autonomy and deception manifest so clearly in the real world. So let's get more from Parmi Olsen from Bloomberg Opinion. Parmi, thank you so much for joining us. Parmi's my go-to person every time I have a question on AI. Can you actually break down for me, like the potential security risks posed by these AI agents?
Yeah. So first of all, I think it's important to remember this was conducted during a testing phase. So it wasn't as though these chatbots or any of the chatbots regular people use are going to break out of their systems and wreak havoc on the internet. But as you were saying in your summary there, when they were tested by the UK's AI Security Institute, which is a government-run agency, these systems, which are the newest systems from Anthropic and OpenAI, it was mostly Anthropic's model that did this, showed signs of trying to deceive people in order to get information or put through malicious code. And the deception part was the most interesting part because they weren't designed to do that. They needed to get an objective, and in order to do it, the models tried to trick a human reviewer on another website or another company to approve this malicious code, and the human actually noticed that there was something dodgy going on and said no. Now, in terms of should we be worried, I think we can be concerned, but we don't have to be massively alarmed just yet. As I say, this happened during testing, so the safeguards that are normally put into these models to stop them hacking had been deliberately removed. So it's a little bit like when car manufacturers test the cars with crash test dummies. They are going to take out the safety brakes, so the car, will crash into a wall, and this is the same kind of thing, just to kind of see what could potentially happen. The other thing is that actually, if you talk to people in cybersecurity, some people are not too worried about AI behind the scenes. They don't want to say that publicly because that's not great for their business. But AI's models, when they hack, they're not stealthy. They're actually quite noisy, and they're very easy to detect, which is why when OpenAI's models hacked Hugging Face a few weeks ago, that was found out within 2 days. There were something like 17,000 different actions that took place in terms of traffic on the network. These instances were also immediately found out. So it's a little bit like in hacking, and in real life hacking with humans, you're going to try to be like the burglar that goes around the back and tries to find that window that you can sort of unlock. But in this case, the AI it's like going through the front door in broad daylight and banging it down. So that is the one reassuring thing that we can think about right now, is that they're very easy to detect. And also, again, this was taking place in testing conditions. Yeah. So I think it's important to put pressure on these companies to ensure that these systems are really well contained, particularly when they're testing them. But right now, I don't think we need to worry about, if you're a company or a consumer, that they're going to kind of do anything harmful to you. But,
I mean, can they be contained even if they're bad actors using them? So either state-sponsored hacking or bad people?
Well, if it's a bad actor who wants to use a model for hacking, they can't. If it's Mythos or a proprietary model from OpenAI or Anthropic, because they've got really strong safeguards. In fact, when Hugging Face was hacked by OpenAI, they couldn't even use a high-quality model from OpenAI or Anthropic because it was stopping them. It thought they were trying to hack somebody to defend themselves. So if people are going to use these systems for hacking, they might use an open source tool. But even then, I've been talking to people in cybersecurity who say that cyber criminals, ransomware criminals, and gangs, they don't like necessarily using these tools because they hallucinate. They're not necessarily trustworthy. All the kinds of issues that we have in offices and in certain professions, seeing a lot of parallel concerns in the world of the dark web and cyber criminals.
And, I mean, there are also various iterations, right, of these models. So will they change? Do they patch up? Do they fix themselves as we get along?
So I think as these models become more capable, the companies that make them are putting in very, very strict rules to stop them from being used for hacking. I think the bigger concern might be around open source models, which don't necessarily have those kinds of safeguards in place and can be more easily manipulated. But you do need, if you're a cyber criminal and you want to use an open source model, that's going to be costly for you. You need to get all the kind of potential compute that you need. You need to get very talented engineers who know how to use these systems. And sometimes that trade-off just isn't worth it.
Parmi, I mean, moving to big tech earnings, what have we learned so far?
So we had earnings from most big tech players now over the last week or two, with Google kind of kicking things off a couple weeks ago. And I think one of the big takeaways is these companies are still spending huge amounts on AI. Like it or not, investors are kind of being dragged kicking and screaming into this new world. The four biggest AI spenders are Meta, Alphabet, Amazon, and Microsoft, and they're spending something like $740 billion. They're putting that towards AI capex just this year. That's up 80% from last year, so it's not slowing down.
The numbers are so big.
I know, it's insane. It's like, what is money? So I think right now investors are just, you know, they're. In terms of, you looked at the shares, of course, Microsoft was up as soon as they announced their earnings. Meta was down something like 10%.
Meta, is it because should they go after AI? This is not the first time, or do they just stick to their knitting?
I think Mark Zuckerberg sees that he has to bring his company to a new chapter in order to keep growing, to maintain dominance. And he tried doing that with the metaverse, and it just didn't work out. Now he is pinning his hopes on artificial intelligence, and in my view, it actually looks more plausible than anything he ever laid out for the metaverse. Now, notwithstanding the fact his shares fell at the earnings, I mean, that's because Microsoft can show an immediate profit for their spend. Meta, it's all sort of hopes and plans.
Parmi, thank you so much, as always. So interesting. Parmi Olsen from Bloomberg Opinion. Up next, Bloomberg Brief. And this is Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizon's Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Do you mind being called an ideological lunatic or a bunch of left-wing nut jobs?
You know, I've been called worse things than that.
You'd think she owned the place.
23andMe, I think, is so incredibly valuable. We're coming back.
It had that kind of detective story feel to it. You know, when you're hot on the trail of something, you know that it's very exciting. What magazines were you reading as a kid?
I don't think I was reading magazines until I was in them.
You are on the cover of all of these.
Oh, and there's many, many more, but we just don't have time.
Why should people trust you?
I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands.
The shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it paradise ahead or Gattaca? Maybe somewhere in the middle.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
It's 5 a.m. in New York City, 10 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. The S&P hits a record for the first time since June 2nd on US-Iran deal hopes and AI bets. That optimism tempered this morning as Houthi militants issue a fresh threat against Middle East shipping. And sky-high AI spending plans pressure SpaceX shares after its debut earnings report. Optimism and outperformance across Asia. Let's get the latest from Alice French in Tokyo. Alice.
Good morning. Yes, definitely a revival in risk appetite today here in Asia, particularly in the AI space, partly driven, as you say, by hopes that Trump may be nearing a deal for the Strait of Hormuz. In the AI space as well, we've had some strong earnings in Japan. Chip package substrate maker Ibiden having its biggest gain since 1990 after some very strong earnings and an upgrade from Morgan Stanley, the best performer on the MXAP there. Of course, still a lot of focus on the yen. Now, even after some more supportive comments from Besson overnight, we can see the rally is somewhat stalling after that intervention that we saw last week, creeping back towards the 158 level. There is some speculation on the ground here that authorities may come back in and intervene to try and push it up to that key 155 level. So still some uncertainty there.
Alice, thank you so much. That's Alice French in Tokyo. Now let's get to London for a look at Europe. Here's Justina Lee. Justina.
Good morning, Vonnie. Now, it was a slightly better day earlier, but we're seeing here that actually the Stocks Europe 600 is rapidly pairing some of those gains with kind of oil backup after the militant group Houthi issued their warning. But still kind of doing solidly today are a lot of those miners, with Glencore reporting a surge in profits. A lot of the metals they trade, such as copper, have had a stellar quarter. And now also still reflecting maybe that decline in oil is kind of long and bond yields all across Europe. The German 30-year yield down 2 basis points. Now, we flipped the board here. We've been talking a lot about how, even European stocks have hit a record. Earnings have been doing well. And here we're seeing, an index of data surprises out of the Eurozone. And you can see it's also back up kind of around the highest since before this conflict began.
Justina, thank you so much. That's Justina Lee in London. Here in the US, optimism in these markets still, with the exception potentially for the Nasdaq 100 to drop today. This after AMD disappointed, even though earnings beat. It disappointed, and that's causing shares of Dell and other chip makers, Intel and so on, to be lower pre-market. That said, there's still hopes for a deal this afternoon. But just in the last few minutes, Iranian state TV came out and said that any reopening of the Strait of Hormuz in the immediate term would require a change in U.S. behavior. So let's just temper those hopes ever so slightly. Looking at yields, we are seeing a massive drop in the last 24 hours. The 10-year yield back down to 4.61. The 30-year yield still at 5.16, remains above 5%. And the 2-year yield at 4.20. Now, this is partially because of oil. Let's take a look at where oil is. It had been lower this morning, but Brent is firmly back above $80 a barrel after the Houthis issued that warning, and also on these Iranian state TV comments. That's your macro picture. Let's get across now to Chloe Melee for some pre-market movers.
Good morning, Bonnie. We are seeing SpaceX shares tumbling this morning after it reported this much higher than expected spending on AI, which overshadowed what was otherwise a pretty strong and pretty solid set of results in this debut earnings. So we're down more than 10% on the back of this morning. Moving on to another tech company that is in the red today, that is AMD, which has reported an outlook that was seen as quite disappointing. And so this is a sign that the company needs to show some more rapid growth to justify the very lofty valuation. And finally, one last mover that's also in the red, that is Pinterest, and has reported also quite disappointing numbers, and is down about 8% this morning because of this disappointing outlook, even though analysts have said that the AI-driven improvements were quite positive, but this was overshadowed by this underwhelming guidance.
All right, a lot of stocks lower today. Chloe, thank you so much. Chloe Melee will be back later in the hour. And also coming up this hour, we're going to catch up with Matt McKinnon of First Eagle Investments. And we'll look at SpaceX earnings with Tasha Keeney of ARK Invest. SpaceX reporting second quarter revenue that handily beat estimates, but higher than expected AI spending plans causing the stock to plunge. Total capex spending jumping to about $18.4 billion, almost $16 billion of that spent on AI. Bloomberg's Leen Al-Rashdan joins us now. Leen, why is this much spending a problem to the market if Elon Musk can continue to raise it?
Hi, Vani. Well, this was a big concern for investors, just how much the AI segment of the company is spending. So when the capex came in a few billion higher than what analysts expected. It came in double what it was in the first quarter. It just showed how much the company will be spending on AI, with kind of a bit of uncertainty on how much it can yield. And they said also that this will be the same spending will happen in the third and fourth quarter. So that kind of overshadowed what were otherwise really good results.
What about its plans to take on Verizon, T-Mobile and AT&T in the United States, sending those stocks lower, certainly?
Yeah, investors were excited about it. We'd been waiting for more information about how Starlink, SpaceX want to take on that market. So we had the CEO and president talk about what their plans are going to be. They fleshed out more of like this strategy on how they want to take on Verizon, T-Mobile, and these companies in the U.S. which rake in hundreds of billions in revenue every year. Now, the tone was optimistic, but we have to remember that every time, starting this kind of project takes a lot of money and it takes a lot of time. You have to build land-based infrastructure. You have to send more satellites into space. It's a different business model, and it needs more governmental approvals. So it's not an easy thing to start, and it will take years for them to be able to start, and then years more for them to take on these legacy providers.
Interestingly, I thought Musk said he's looking at starting these orbital data centers and starting that build out as soon as next year, Aline. Is that doable?
Well, he made a lot of ambitious claims kind of about annual rate revenue and about revenue in general, how much they can achieve within the next few years. It went way beyond what estimates analysts gave us before. So their ambitious plans, Musk has always had ambitious plans like this. Not all of them have panned out. We know Starship, kind of the main project for SpaceX for several years, and their venture into space kind of meet a lot of hurdles, some explosive issues. So Musk can make these claims, but we're kind of unsure on how quickly he can get into space with Starship and how much more he can do in space. There are so many issues to still tackle.
Leen, thank you so much for joining this morning. That is Bloomberg's Leen Al-Rashdan. More earnings out from Infineon and AMD, both stocks under pressure this morning amid growing investor concern around AI and valuation. Bloomberg's Neil Campling is with us now for more. What happened, Neil? I thought we were done with this narrative, and yet AMD plummeted even though results were really just fine.
Yeah, morning, Bonnie. I think part of this is a situation of the classic travel and arrive for the stock price. AMD is the sixth biggest contributor to the S&P 500 returns so far this year. So the stock had performed particularly well. And really it's a reset in terms of expectations for some investors. And the guidance is solid. The revenues in the quarter reported was up 50% year on year. But it's just that some estimates were above where they are guiding to. So it's a reset. But in terms of growth and in terms of the underlying demand for the GPUs, CPUs, they're still intact.
Now, the Infineon results were maybe just a little bit less, optimistic. Is there anything in there that we should keep an eye on in terms of the AI build-out?
Sure. So they're obviously more geared into kind of the industrial build out. So not as directly involved in AI, although they have some exposure, and it perhaps is reflected in their KPI being the segment margins, which is only guided to in line with where the street's already at. So there is, I think, there's more puts and takes with regards to Infineon's outlook and report, but really investors were hoping for more. Given, again, it had been a solid outperformer relative to the market in Europe and relative to the perceived AI winners index in Europe.
Neil, let me ask you about developments out of China. So proposing a ban on optical parts, it's probably going to hurt hyperscalers. Explain to us how and whether we really should be worried about this.
Yeah, so the potential restrictions are basically the optical components show up in the kind of these GPU clusters in the AI data centers and on the back end to allow for connectivity and the fast connections. So they won't be ripping out the existing ones, but it's talking about really the future new products could be banned. Now, we have US companies that provide these optical solutions, but it takes time to build enough to replace those. So it's a concern given the high growth that we're seeing in the data center build out, about just how disruption could come through, which we've seen historically in the past with other Chinese components on other parts of the chain in terms of Huawei and ZTE kind of technology. So it's definitely a space to watch out for going forward.
Yeah, it could be more bottlenecks for the hyperscalers. Now, in terms of the AI companies, so OpenAI and Anthropic, they're revealing now more unsanctioned actions by their models. We're getting this on the daily now, Neil, and it's almost like these companies are, you know, in some ways boasting that their models are doing this. What should we be thinking when we hear about all of these unsanctioned actions?
Yeah, so you have these are, you know, the OpenAI and the Anthropic models are proprietary rather than the open systems, but they are so powerful, but they're also sharing as much information as they possibly can with the regulators to ensure compliance with rules. But clearly in terms of the testing, as we often get in these new technologies, we are showing where there are some vulnerabilities in the systems, but it's also partly about making sure that they are as they roll out and scale to general usage.
All right, Neil, thank you so much. Across all the topics for us, as usual, Neil Campling in London. Turning to Iran, President Trump remains optimistic for a deal.
I think it'd be very smart to make a deal. We'll see what happens. They had a very good day. The negotiations were good. We're moving along very nicely. We'll find out. We'll know in 48 hours.
Joining us now from Dubai is Bloomberg's Abir Abu Omar. So Axios reporting we should have a deal this afternoon. Scott Besson telling the same to CNBC. And yet, Abir, Iranian state TV just came out and said there's going to be no immediate reopening of the strait unless the U.S. changes its behavior. What are both sides saying?
It's a good question, Vonnie. I mean, we were walking into the early hours of the morning with President Trump saying that a deal is imminent. We will see over the next 48 hours or so. And then we also reported about those negotiations that are taking place between Iran and Oman about a mechanism of some sorts to open up the Strait of Hormuz. But you just alluded to what I was taking a look at before the show about 20 minutes or so ago, Iranian state media coming out and saying, citing a source familiar with the matter, that Iran is essentially saying that the negotiations that are taking place are not between Iran and the United States. They are between Iran and Oman solely, and they're not about the reopening of the Strait of Hormuz permanently, but rather it's a mechanism of some sorts with Oman to get a trickle of movement through the Strait of Hormuz. So adding a little bit more to the confusion that we've been witnessing since the start of the week, really. This whole thing started with President Trump threatening the biggest attack since World War II and then going back and saying negotiations are set to commence or recommence, and then a couple of days of confusion, and then today, 48 hours, that comment that you were just hearing from President Trump on the tarmac in LA in the early hours of our morning, and now these comments from Iran or from Iranian state media. Our own reporting, Vonnie, suggests that there have been talks between Iran and Oman about opening up a trickle of movement, and the mechanism really is about opening up a middle passageway. And then you rightly referred to the Axios reporting from our morning hours as well, suggesting that they're both talking about a mechanism to open up the pathway over the next 60 days where no tolls or fees would be implemented, and that the announcement of that could be as soon as today. We understand as well, Bloomberg understands from our own sources, that Qatar is mediating between the two warring parties, and that Qatar has come up with a language in a draft that is pending the signing of both Iran and the United States, or the approval of the two warring parties. Nothing is finalized there, so we await and see. And then you're obviously seeing Brent crude prices reverse the losses that we saw earlier. They were dipping below $80 on the barrel, but the market now reacting to this news, and also reacting to news from, again, earlier in the day, about an hour and a half ago, about the Houthis in Yemen threatening movement in the Red Sea, yet again saying that ships flagged to Saudi Arabia that are moving in the northern part of the Red Sea are prone to getting attacked. And so you're seeing Brent crude on the screen there reversing earlier losses and now gaining above $80 on the barrel.
All right, Abir, we will continue to monitor. Abir Abu Omar in Dubai. Thank you. Now to other top stories trending on the terminal this morning. The UK is in its longest jobs slump since the global financial crisis. S&P PMI data show employers cut headcount for a 22nd straight month in July. Firms cited cost cuts, while some said AI investments reduced the need for workers. An out-of-control abandoned SpaceX rocket has collided with the moon. That's according to a report from The Independent. The 4,000-kilogram spacecraft hit the moon with the power of 3 tons of TNT, left behind a new crater on the moon's surface. Another hedge fund is seeing huge losses from last month's AI sell-off. Whale Rock's flagship hedge fund dropped 21.7%, erasing about half its gains for the year. The fund, which manages about $19 billion, is known for making concentrated technology investments. Coming up, a razor-thin race in Michigan. The latest from state primary elections next. This is Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. In Michigan, Democratic Senate primary race turned into a much closer one than expected. NBC now projecting Abdul El-Sayed as the winner over Representative Haley Stevens by a slim margin. Joining us now from Washington is Kate Ackley of Bloomberg Government. Kate, there's a message here obviously for Republicans, but not even for Republicans. What is the message for the Democratic Party?
This is one of many races where, the progressive wing of the Democratic Party has really surged. Now, you mentioned this was a close race. Haley Stevens, who's a Democratic Congresswoman from Michigan, who was looking really down in the polls. It's a much tighter race than was previously expected. NBC News has projected that El-Sayed will be the winner. But again, much closer than some of the initial polling. This was one of those races where outside money was pouring in. The American Israel Public Affairs Committee, a super PAC connected with AIPAC, spent over $30 million to boost Haley Stevens. So we just saw a ton of outside money pouring in. And that was actually part of the messaging. El-Sayed said he didn't take corporate PAC donations, and he criticized Stevens for her acceptance of that type of money. And so you saw political money not only be a factor in helping the candidates out or hurting the candidates, but actually being part of the messaging of the candidates themselves.
Is the Democratic establishment taking notice? I mean, this is another candidate from the left flank of the party that has won, and in a Rust Belt state as well. Will it change how the Democratic Party approaches the midterms?
Well, this will certainly be a test. I mean, if this looks like in the general election contest, you'll have a much more progressive candidate, Abdul El-Sayed, against Mike Rogers, the Republican. So this will not be one of those situations where you have a deep blue seat where you know that whoever wins the Democratic primary will almost be a complete shoo-in for the general election. That's what we saw in Colorado in the House race where sort of the insurgent left toppled a sitting congresswoman, and then also, of course, in New York City, those districts there. This will be a test for progressives in a battleground state. Can they win in the general election? And that's going to be a storyline that I think people are writing over the next 3 months, and that the Democrats will be assessing. What is the strength of the progressive wing of their party in a battleground state?
All right, Kate, thank you so much. We have to leave it there, but that's Kate Ackley of Bloomberg Government. Coming up, a look at what else is making headlines in your front page news. This is Bloomberg.
Anything we do in Africa is going to be more risky than the US. I think the approach we want to take is, how are we being compensated for that risk? And one of those is obviously going to be a valuation question. In our minds, valuation is a lot more attractive in Africa, even if we adjust for some of those Africa risks that a lot of Western investors see. So yes, in a lot of ways, you take some of those models that, as I said, might be more asset medium or asset heavy. There might be some more inherent risks. However, if we're saying we're adding some risk because of that kind of model, but we're now solving a core problem as opposed to maybe a nice to have solution in Africa, that might actually offset it. Where if you're solving something that people really absolutely need and can't live without, in a way that then that's a lot less risky. So again, we'd encourage investors to have a less binary view. In other words, the US isn't risky, Africa is risky. That's going to lead to a lot of complications down the road.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
This is Bloomberg Brief. I'm Vonnie Quinn in New York. Time now for your front page news. First up on the BBC, one of the deadliest strikes on Kyiv this year. A Russian attack on Ukraine using ballistic missiles and drones, killing at least 17 people. President Zelensky says interceptors could have saved lives. Next up, the Wall Street Journal is reporting Defense Secretary Pete Hegseth's pick for Army Chief of Staff, General Christopher Lennev, is in jeopardy due to objections from some Republican senators. Lennev has been a four-star general for just 6 months. Most chiefs serve at least 18 months before assuming the top position. And finally, the Financial Times reporting banks are planning to offload $15 billion of debt tied to a Google-backed data center in Texas leased to Anthropic. Wall Street lenders are growing wary of holding AI infrastructure debt on their balance sheets. The Journal says a consortium of banks led by Morgan Stanley planning to tap the bond market to refinance the debt. Let's take a look at your macro picture today. A little confusing perhaps in the oil market. We were lower earlier. Brent was firmly off its highs thanks to the president basically saying that we'll have an answer on Iran within 48 hours. An Axios report saying we could get a deal this afternoon. And Scott Besson comments to that effect as well. We're back above 80 now after the Houthis reaffirmed their threat against Saudi shipping in the Red Sea, and also after Iranian state TV said the US has to change its behavior before the Strait opens. That said, yields had come back down on oil, dropping. 461 is where we're at on the 10-year yield. Don't forget we get the quarterly refunding statement at about 8:30 Eastern. S&P futures pointed higher. We hit a record yesterday. We haven't done that in 2 months, so it was time. Nasdaq futures, though, are pointed lower after AMD results, casting a little bit of a pall on what had been a fantastic earnings season up to then. Coming up, we're going to speak with Matt McLennan of First Eagle. He's seeing an unusually favourable backdrop for corporate profits.
You're going to see disruption in certain job functions. I don't see how that's not possible. And I don't see how anybody can look people in the eye and say that's not possible.
What percentage of customer service gets displaced?
It could be a large percentage of customer service. I think that function, I forgot my password, what's my billing amount? Those are all simple and easy things for an agent to go do. Like what we're seeing in our customer service right now is the rote stuff can be done by agents. More complex is a combination of an agent and a human working hand in hand to be able to satisfy that customer much better than either of them could do alone. And so I think you'll see all of those things happen, but I'm going to lean heavy, as I think all of my colleagues will, all the Fortune 100 will lean heavy on AI. You cannot be a part of this age without understanding the technological revolution. We have a responsibility to put serious money, resource, and effort into training not just our employees, not just people that are impacted, but the communities we serve as well, because that's the age we live in.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you the latest business news wherever and whenever it happens. I'm Scarlett Fu, reporting from America's biggest military shipyard. This is Bloomberg.
It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. The S&P hits a record for the first time since June 2nd on US-Iran deal hopes, also AI bets. That optimism tempered a little this morning, though, as Houthi militants issue a fresh threat against Middle East shipping. And sky-high AI spending plans pressure SpaceX shares after its debut earnings report. So let's take a look at futures. We had that record from the S&P yesterday and 4 days of gains for the chip makers. It looks like the S&P is going to continue on its run today. Perhaps it's questionable whether the Nasdaq will. AMD did cast a little bit of a pall over this market this morning. Plenty of stocks with a halo effect, Intel lower, Dell lower, and so on after AMD shares dropped. The earnings report was fine, but it didn't blow away estimates. Russell 2000 futures higher as well. In terms of yields, they came down quite rapidly when oil moved lower, but oil is starting to creep higher, so we'll see if this holds. But for now, the 10-year yield is at 461.07, a bid into the 30-year yield as well, 516.17. Still, though, this is its longest run above 5% in quite some time. And then taking a look at oil, we're back above 80 on Brent after the Houthis issued their warning, and Iranian state TV said, hang on a second, the strait isn't going to reopen immediately. The U.S. needs to change its behavior. But we're still expecting, according to President Trump, some kind of answer, at least, in the next several hours. Let's get to some individual pre-market movers now with Chloe Melee in London.
Good morning, Vonnie. SpaceX is planning to spend a lot on AI, and that is getting investors quite worried. And we've seen those higher than expected capital spending plans overshadow what was otherwise a pretty good set of results. And so we're down more than 10% in pre-market trading this morning for SpaceX. Moving on to AMD, which is another tech company in the red this morning. It issued quite disappointing guidance. And so it seems that this was really not enough to sustain the really impressive rally that we've seen in those AMD shares since the beginning of the year. So we're down about 9% there. And finally, let's end on a positive mover. We've got Arista Networks, the cloud networking company, really jumping this morning. We're up more than 14% in pre-market trading after giving quite an upbeat revenue forecast. It seems that demand is very strong, very solid for that company, and we are seeing that reflected in those shares.
All right, Chloe Melee in London there. Thank you so much. Global stocks notching another record after some choppy months. Matt McLennan of First Eagle writing, quote, as we move toward 2027, investors may want to temper expectations. Markets have already repriced higher and profit growth is unlikely to remain at today's exceptional pace. I'm pleased to say Matt joins us now. He's head of the global value team at First Eagle Investments. Matt, first I have to ask you a broad question about these markets. I mean, you go in every day and you watch all of these narratives unfold. I mean, SpaceX yesterday, you're a value investor. What's going through your mind all day?
Well, I think even as a value investor, you have to take a close look at where value creation is happening in markets and what the narrative is that's driving markets. And I think this is one of those moments where the narrative behind markets is unusually concentrated. Everyone's talking about AI. It's affecting chip stocks, the cloud compute companies, and all of the companies that markets expect will be disrupted. But when you stand back from the moment and just look at the pricing overall, I think it's fair to say that this degree of focus on AI has led markets to a place that's arguably a little complacent. We have credit spreads that are very low relative to history. Earnings multiples are very high relative to history. If you just look at how households have their money invested, they have more in equities now than real estate. That's highly unusual since World War II. And the big companies in the S&P 500 are now net issuers of stock. They're not repurchasing stock. So we have a number of signs that would suggest that markets are fully rich in this environment of AI narrative.
Yeah, you say it is not necessarily the time to become bearish, but it is a time to become broader.
Yes.
Do you, though, find any value anywhere in the AI sphere? I mean, you must have been tempted to look, and there are patches. I mean, before a year ago, some of the chip stocks were, we're up 200% since then. You would have had to say back then, although it might have been obvious at the time, that there was value there.
That's correct. In fact, if you looked at our portfolio 18 months ago, one of the biggest capital deployments we made at the time was into Samsung. And that's an investment that has performed soundly for us since that period of time.
Understatement, yeah.
But today, you have to look more broadly. I think you can find value. If you're looking in the AI space, sometimes the value might be in companies that are perceived to be subject to disruption risk. And so one of our larger investments is actually in the software space, which is where everyone's concerned that software is going to get disintermediated by AI. And so we have an investment, for example, in Workday, which is essentially a system of record for HR, payroll, business processes. And I think the thing that's interesting when you have companies that are systems of record is that they own proprietary data. Now, an LLM is going to scrape what's publicly available to figure out a narrative for you to read, but they can't scrape private data unless it's done by the company that has that private data. And so I think for a company like Workday, AI will provide incremental business opportunities, but it's priced for disruption.
Yeah, down 23% year over year. The software space, though, has been coming back ever so slightly. I mean, we saw, Microsoft and some of these other companies really just go gangbusters over the last few sessions. Is it a general idea that software will come back, or is it very specific software companies?
I think it's very specific to companies that really control a system of record, whether you own the sort of Salesforce database or whether you own something like the payroll and employment database. System of record software is important. CAD/CAM, companies like Dassault Systems, for example, very hard to replicate those businesses. But if it's just a plain vanilla company that has an app that applies to publicly available data, that could be at risk of being disintermediated. So I think you have to be selective within software. I think the other reason that you've seen these companies come back a little bit is that the CapEx story that's fueled the semiconductors, because let's not forget the CapEx of the hyperscalers is the profits of the semiconductor companies. That's reaching natural limits at this point in time, because they went from spending a fraction of their cash flow on CapEx for data centers to spending all of their cash flow for CapEx on data centers. And so that CapEx can only grow so quickly going forward. And you're already seeing them having to tap debt markets to grow. And we see copper prices going up, DRAM prices going up. In the media, you see Kathy Hochul, you see the Texas governor talking about slowing entitlements for data centers. So we're at a window where the pace of this AI investment may be naturally moderating.
How do you think about changes at the Fed and how that's going to impact the market and your investments going forward? I mean, we have obviously a new Fed chair. We have perhaps a lot less transparency on how the individual members are thinking.
So initially when Kevin Warsh came into the market narrative and at his confirmation, I think the initial market response was a credibility trade. Perhaps his early comments were a little more hawkish than the market expected, and we saw that the dollar went up, gold went down, and two-year bond yields went up. And so the markets in the early part of Kevin Warsh assuming the role were surprised by what they perceived to be his hawkish tone. So there was a kind of credibility trade there. I think after the last release, that came into question a little bit. Some of those things reversed because there wasn't a rate hike and there wasn't a lot of guidance on what to expect going forward. And I think what market participants may be missing here is that the Fed has less degrees of freedom than usual right now because of the fiscal situation in the United States. If you're running 6% deficits at a time of full employment, it's very hard to raise rates because then the government has to roll its debt to those higher rates, and it produces a faster growth in the level of government debt outstanding.
Do you think that's actually causing them to pause, even though inflation continues to run hot?
I don't think they would say it for obvious reasons, but I think it is a gating constraint. You can't run substantial primary deficits, that is the budget deficit before interest expense, and then just keep raising interest rates. It brings forward the prospect of a fiscal crisis. And so it is a constraining factor on the Fed. And I think to have a truly independent Fed, you need a fiscal situation that's balanced.
One quick final question, Matt. International markets, how will the situation in Iran affect their valuations? I mean, we've seen some huge run-ups and some huge sell-offs thanks to the Iran war. Might it change how you invest internationally?
So we're talking before about the fact that at a time of market concentration, it makes sense to broaden your horizons. And we talked about different sectors in the United States, but that same statement can be made about international markets. By and large, if you look at the valuation of international markets, they're more modest than US valuations. And there are many incredible companies internationally that trade at reasonable multiples. International markets, in many cases, have been more adversely impacted by high energy prices. So if we get a resolution of the situation in Iran, I think international markets could be more positively elastic to that resolution. And if we get this continued pattern of to and fro, they're already discounting a worse outcome than the US markets, which are at record highs.
All right, Matt, it's all upwards from here, it seems. Matt, thank you so much for coming in this morning. That is Matt McLennan of First Eagle Investments. Now to others, top stories trending on the terminal this morning. Iranian state TV is reporting the potential agreement between Iran and Oman on the passage of vessels through the Strait of Hormuz is unrelated to the reopening of the strait. In the Red Sea, meanwhile, Yemen's Houthi militant group says it will attack Saudi tankers in the Bab el-Mandeb waterway. A spokesperson for the group said the move is a result of Saudi Arabia diverting ships from the choke point. China is tightening export controls on drones to the U.S., expanding its response to Washington's tech restrictions. The Commerce Ministry says drone exports, key components and related technologies will now face strict case-by-case review. Shein is said to be preparing to gauge investor demand for its Hong Kong IPO as soon as this week. The retailer could seek to raise between $2 and $3 billion in a listing that could happen this month. Its IPO efforts have been delayed for years, and its valuation has declined. This is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the centre of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream. And a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is, nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. You don't start on the third floor or the lobby. You actually have to start in the basement.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Taking a look at more earnings results now. Paramount Skydance profits surged in the last quarter as merger costs paid off. Joining us now is Geeta Ranganathan of Bloomberg Intelligence. So Geeta, more cost savings, but this has to be the last quarter that this is possible for Paramount, right?
Yeah, so really, I mean, you know, with Paramount, we're seeing some really good momentum when it comes to those synergies, as you just pointed out. This is from the Skydance integration. But obviously, the big question, the elephant in the room, is what happens with the Warner Brothers Discovery transaction. And as we know, the judge has now set a trial date that goes into March. So we do have a lot of uncertainty here from a legal perspective. And then you have those ticking fees, which could go up to as much as about $1.5 billion. Paramount, of course, obviously wants to close this transaction because otherwise they have to pay this massive $7 billion termination fee.
Now, in the quarter that was, streaming revenues were up 33%. That was a pretty phenomenal performance. Can that continue?
It definitely can, but at the end of the day, I mean, so one of the reasons for the streaming performance that we saw was because of the World Cup, and Paramount Plus was able to acquire a lot of subscribers internationally. So that obviously helped them. So there was good subscriber growth. But again, Vonnie, if you look at this in the context of the broader streaming landscape, the broader media ecosystem, Paramount Plus needs scale. They have about 80 million subscribers, but then you're going up against, giants like Netflix, which has 325 million, Amazon Prime, which has close to about 250 million. So in this business, scale matters for operating leverage, and this is why the Warner Brothers transaction and procuring that Max platform is a do or die situation for Paramount Skydance.
Disney reporting later as well. Talk to us about what we should expect and whether Disney might actually consider selling part of its A&E Global Media, as Rich Greenfield has been saying.
Yeah, so actually they did a report yesterday that they sold their 50% stake in A&E Media back to Hearst. That was for about $1.2 billion. And really what this helps them to do is kind of streamline their operations. I mean, the one thing that every media company really wants to do is reduce their exposure to the traditional TV ecosystem. And that's exactly what they're doing here. But I mean, broader picture, Vonnie, if you just kind of zoom out here, this is still principally a parks business. And I think that is what investors are going to be really looking for. 60% of their profits is generated by the parks. There has been some commentary earlier, just a few weeks ago from Comcast, which kind of suggested that there might be some weakness, some macroeconomic weakness in their Orlando park. So it's going to be interesting to see whether, Disney confirms the same or whether it was just Comcast and the Universal Parks giving up share to Disney. So that's obviously one of the things that everybody's going to be watching for. And then the second big piece of the equation for Disney is its streaming business. So we know that they've really made some fantastic progress when it comes to streaming profitability. This is a key metric on which they're going to be judged going forward. And it's going to be interesting to see whether they kind of raise their guidance targets for over 10% margin this year, or, it's just kind of steady as she goes.
Yeah, I mean, it's another test for Josh D'Amaro, right? I mean, he's been there a couple of quarters now. How is the market judging him? How are investors, reacting to his performance so far, Geeta?
Yeah, unfortunately, Vonnie, there hasn't been really any huge catalyst. I mean, we've seen a lot of different reports. Obviously, the sale of A&E Networks shows us that he's very focused on kind of streamlining the business, getting everything in order. We've heard some reports about him wanting to kind of completely revamp the Disney Plus app, kind of make it this central hub, if you will. And there are a lot of different moving parts here. So we know that there is this Hulu integration, which is kind of happening as we speak. But, can Disney Plus kind of become the broader hub for all things Disney? Can you be getting your park tickets there? Can you be buying movie tickets there? So that is a question that still remains to be seen. But so far, this is a second quarter as CEO. I think he's done a pretty good job in kind of communicating, the different operating, financial, and, the strategic targets for the company.
Yeah, as you say, it hasn't been in the job that long. Shares down almost 14% year to date. Geeta Ranganathan of Bloomberg Intelligence, thank you so much. Coming up, another big batch of earnings will get you set up for your trading day next. This is Bloomberg.
up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker playbook where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Bringing you the most important news and financial information whenever and wherever it happens. I'm Michael McKee on the Mexican border, and this is Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. SpaceX reporting second quarter revenue that handily beat estimates, but higher than expected AI spending plans caused the stock to plunge after hours. Bloomberg's Lean Al-Rashdan joins us now. Lean, AI revenue tripled. It's more than $2.5 billion now, but it spent $16 billion on AI. So how does SpaceX expect to continue to keep this up?
Well, they're expecting the same expenses for the next 2 quarters, and analysts are feeling a bit hesitant about that. That's why we saw the stock fall about 11% post-market trading. They've said that that they have plans for how they're going to cut down on the spending in next year. But for now, analysts are really hesitant about the amount of capital that's being spent on the AI business, which was already a concern for them going into the earnings. And there was a lot of pressure on the stock. So that explains kind of the move in the market.
Yeah. Cloud services, according to Musk, will account for the bulk of the revenue by the end of the year, as much as $10 billion. So that was something positive. And also the beats were positive, but investors aren't really looking at the metrics on a quarterly basis for SpaceX, are they?
No, I think, there were a lot of hesitations going into the earnings. This is their first ever. And while some of the numbers were positive, the revenue beat estimates. You have the loss per share was much lower than what analysts expected. But then a lot of the problems around the amount of spending that the company's doing and kind of uncertainty on where you're going to get those yields, even if they tout these ambitious plans around Starship and around the telecoms segment that they want to go into, it's still kind of uncertain how much yield those projects will have.
Yeah, I mean, it's interesting. SpaceX plans to take on AT&T, Verizon and T-Mobile in the wireless space, and those stocks are much lower in the pre-market this morning because of that. What kind of time frame did we hear?
Yeah, and I mean, what explains kind of the move in those companies is Starlink has been really good at taking over in their segment of the business, and they've had more satellites than any other a provider. But now that they want to go into the telecom segment in the U.S., they have to build so much land infrastructure. They have to get more governmental approvals. They have to have satellites. They have to take on these legacy providers. So that's going to take at least a few years to be able to build the structures, and at least a few more years to be able to kind of convince customers to transition into Starlink. But the president of the company seems very optimistic that they could rake in hundreds of billions in revenue every year from this segment.
And it would be recurring revenue. I have to ask you, beyond earnings, the staggered lockup release begins tomorrow, obviously, and it's 20% of the total shares that are going to be released over the next 6 months will be released on Thursday. Lean, will the market digest those shares?
That really is kind of uncertain. So that is what's causing also additional pressure on the stock. The shares fell below their IPO price, and whenever that happens within the first few weeks or months of a listing, it kind of bursts this narrative that the company and the banks had been pushing since the IPO. So that's also going to add pressure. The expenditure around AI and these kind of ambitious plans that don't really have structures. The companies tie up with Tesla, how much they're sharing information-wise, what and the companies that they have joint ventures in. That's all putting pressure on the stock. The 100 billion of shares dropping is only going to add uncertainty and additional pressure. So some analysts are expecting that shares are going to go down.
All right, Lean, thank you so much. That is Lean Al-Rashdan for us. Thank you. Now, a look at what's ahead today. First up, data. ADP employment data at 8:15 Eastern. That's followed by PMIs at 9:45 and 10 a.m. Eastern. Then Fed Governor Lisa Cook will be speaking at 4 p.m. And of course, we're still mid-earnings, so a host of earnings from Disney, Uber, Eli Lilly, they're all before the bell. SanDisk, eBay, Expedia among companies reporting after the close. In terms of your pre-market movers, AMD extending its decline now, down almost 9% after its AI growth outlook underwhelmed investors, though the rest of the earnings report was pretty good. Arista Networks, though, up almost 15%, an upbeat revenue forecast there for the networking equipment maker. And Booking Holdings is up almost 6.5% now, rising on strong travel demand. Don't miss our interview with the CEO of Booking Holdings on Open Interest. That's Ken Fogel at 9:30 a.m. New York time. Let's take a look at your macro picture as we head into the Wednesday trade. Brent crude well back above $80 a barrel on this fresh threat from the Houthis and also Iranian state TV, tempering hopes for some kind of a deal to be announced this afternoon. The 10-year yield unchanged. There had been a bid into treasuries as oil dropped. S&P futures pointing to gains after we hit that record yesterday. That's it for Bloomberg Brief. Surveillance is next. This is Bloomberg.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
earnings season has been pretty stunning.
This might be the peak of earnings.
Maybe 27 earnings are at their peak, and that could be the cause or maybe usher in more volatility for risk assets.
We've seen multiple companies up the CapEx spending that they have and get punished for that.
What is the market looking for? They're looking for that ROI.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Wednesday at all-time highs. A 4-day winning streak driving the S&P back to another record. Shaking off some single stock trouble brewing at SpaceX and AMD as the White House is once again talking up the prospect of a deal on the Strait of Hormuz.
Let's just be very clear. The reason that we're seeing the first record going back 2 months in the S&P 500 yesterday was not because talks about a deal in the Strait of Hormuz, right? This is not related to necessarily rumors of a rumor of a rumor. This has to do with earnings and the fact that earnings just keep on coming in at incredible highs. It's with respect to Caterpillar yesterday, talking about the forward pipeline being massive, talking about how the build out of AI is absolutely real and coming to fruition. It's likes of Anthropic coming out with a $10 billion infrastructure deal. Palantir's 30% gain in one day. And that is the reason why you're seeing this optimism, even with a couple of pit holes in a couple areas.
Is it fair to say you don't want to talk about the prospect of a deal on the Strait of Hormuz based on that reaction at the top of the program?
No one wants to talk about it. Is it real? Sure. But then you get this question about what's going on in the Red Sea and the Houthis versus Saudi Arabia. Makes sense of soup. That's what it feels like.
$80 on Brent this morning, on WTI around 76. Let's talk about tech. Let's talk about a monster rally. Microsoft up 26% in 4 sessions. Huge move. The chip stocks over the same period up by 16%. Big move off the bottom after getting beaten up in the last month or so. Software up every day for the last 8 consecutive sessions. Everything in tech with a few exceptions, but for most of tech right now, there's a massive rally.
Suddenly people are saying valuations look good, and they look good across the board because everyone's had their day of getting beaten up. Yesterday, the Philadelphia Semiconductor Index rose almost 6.5% or more than 6.5%. That is the biggest one-day gain going back to its biggest 4-day advance going back to 2020, as you were saying, the biggest gain going back for one day since March. You look at this and you start saying, is it just sort of a knee-jerk reaction to what we've seen with some of the situational awareness or questions about washout of leverage, or is this something that real and fundamental that can drive the second half?
We'll spend a lot of this morning talking about that. We'll also talk about this as well. I mentioned some single stock trouble. Let's talk about SpaceX. Down in the pre-market, but some comments from SpaceX causing this move for the telecoms. This move right here for Verizon down by 2.6%, for AT&T down by 2%, T-Mobile struggling as well. One quote, "I anticipate us being able to acquire quite a few of their customers because I think our service will be better." Starlink Mobile, the focus here.
This is what we were asking about yesterday. Is this ultimately a telecom company? Who are its biggest rivals? Is it the Amazons of the world, or is it T-Mobile and AT&T? Ultimately, this is the real question. What does SpaceX want to be at the end of the day, and where is it going to put the money that it is raising? Does it have the capacity to potentially unmoor some of the traditional standard telecom companies?
How do you value that company seems to be the challenge. Coming up this hour, we'll catch up with Noel Dixon of State Street as equities surge back to record highs. Dan Ives of Yorkville Ives as the SpaceX spending spree gives some investors pause. And Ashok Bhatia of Neuberger on why markets may be underpricing the pace of disinflation. We begin this hour with stocks at all-time highs as investors shrug off AI jitters. Noel Dixon of State Street seeing more upside potential in tech, writing with room for further increases in exposure. This move could still have near-term momentum leading to more gains. Noel joins us now for more. Noel, good morning. Good to see you.
Good morning.
Why have we all of a sudden set the stage for a massive rally in technology stocks?
So it's interesting. I think if we look at positioning, I think it's largely a function of that. Since the end of June, real money investors actually reduced their tech positioning from about the 98th percentile, if you will, down to like the 80th percentile. Now that we have this optimism, we're starting to see those same investors start to go back into the market. And then when we think about, is there anything flashing red when we look at the risk metrics, absorption ratios, we look at correlation surprise, there's nothing really stark that worries us. So I do think it has legs.
Let's talk about what's going to lead within tech. For much of this year, chips led, software struggled, and the Mag 7 hyperscalers, the big spenders, they lagged. Now everything's starting to rally altogether. That feels like initially a bit of a positioning squeeze. From there, where do you see leadership?
Yeah, I still think, hardware, I still think semiconductors will lead. I think, the SOX index still off about 16% based on yesterday's close. I think that can retrace. But I do think there's some opportunity in the software space. I think there was a lot of concern about the hyperscalers, but when we think about how much they're making from a net income perspective relative to how much total debt they've issued, it seems like it's pretty sustainable.
Staying in the chip area, I'm wondering what signal you take from AMD. Yesterday, beating expectations, coming in slightly above, but not above enough to justify an additional rally after a 140% gain. Do you get the sense that this is just a matter of how far some of these stocks have gone and then deciding where to take them from there? In other words, if they haven't performed well, buy them. If they have performed well, sell them?
Yeah, I think it's normal and natural where you get this big move, you're going to get some consolidation. We've come a long way very quickly, but I still think it doesn't change the fundamental story that there's significant demand from a chip perspective, and I think that will continue moving forward.
When does the bond market become a constraining force?
That's a good question. So I think right now the bond market, it'll be a concern if the 10-year gets to 5%. I don't think that's not our base case. I think the only way we get there is if markets interpret Kevin Warsh's move in September. I think that's the risk event, whether that could be, if he holds, if that could be perceived as a policy mistake. I think that is the risk from a yield perspective.
The biggest risk for bonds is that he doesn't hike.
I think it's possible, yeah. So it's funny, the number one question I get from clients is, are they going to hike or not? And I think they're concerned that, the markets are clearly, the front end is clearly saying they want to hike. But the data, June CPI was pretty weak. July is shaping up to be a pretty decent number as well. And just the makeup of the board, I think it's possible they continue to hold, and that could be, I think that could put some jitters in the bond market.
I just want to unpack this a little bit more because it's a change for Wall Street. Lisa asked you, when do bonds begin to constrain equities? And you said once they get to 5%. And then you said something along the lines of, and I'll paraphrase, that if they don't hike, that's a problem for the bond market. Are we now saying that if the Fed doesn't hike, that's bad for equities?
It's possible, yeah, because it's priced in. Again, the market's going to lead the Fed. Right now, the market is saying they want to hike in September. Could that change? I think it's binary. It's all dependent and contingent on how this situation plays out with the Strait of Hormuz. But certainly, if the front end is priced, this is the whole issue with the forward guidance. If the front end is expecting it and he doesn't deliver, that could be problematic.
We are getting forward guidance from the different Fed officials who are speaking throughout the week, and we're getting some hawkish rhetoric coming from the likes of Kansas City Fed President Jeff Schmidt. We heard that from Anna Paulson on the margins yesterday. How do you prepare differently to get economic data in an era where each data point could be determinative with respect to what the Fed does?
So it's very difficult. I think right now, you have to rely not just on your high frequency conventional data, but you also have to look at alternative data and try to get a sense of where things are ultimately going to head. Because to your point, every data point could shift the market. So it's just a new regime of volatility that I think we're just going to have to get accustomed to.
What's the best hedge right now against risk assets, given the concern of inflation and given the concern about potentially a Fed reaction function that does not constrain the long end?
Yeah, so I think a good hedge is to probably look to buy gold. I think, obviously you could look at, volatility is pretty cheap. So we love looking at, 1 month vol spreads, things like that. I think those are good opportunities given how cheap vol is today.
Gold up this morning, buying close to 2%, 41.52. It's good to see you, Noel.
Good to see you.
Dropping by. Noel Dixon there of State Street. It's a change on Wall Street. Look, I don't have a view, but I'm going to say, just from an observation standpoint, that is a massive change to me. To hear someone say that you could avoid a hike, but that is bad for equities, is something difficult to get your head around.
Essentially, the market is going to do the work for the Fed if there isn't a hike at the Fed. And right now, what I find interesting is that the debate between whether or not the Fed needs to hike seems to have been completely overshadowed by this question of who Kevin Warsh is. So suddenly, the main zeitgeist is that a hike is necessary. You're even seeing a sort of hawkish tilt among Fed officials who might not have otherwise had a hawkish tilt. I'm just throwing that out there, given some of the potential disinflation that people were talking about earlier. It seems like the market is voting that we need a rate hike to constrain the long end of the yield curve. And if the Fed isn't willing to do it, well, then it's off to the races for the vigilantes.
Wouldn't it have been super bullish back in the day for me to sit here and say data's OK, pretty resilient, manufacturing's bouncing back, got lots of spending in the economy from some of the biggest companies on the planet. You're seeing earnings take off in a material way, 20% plus on the S&P 500, and the Fed's not going to hike. The Fed's not going to hike, inflation's above target. Wouldn't that be an argument to buy equities, not sell equities? But I get it. The concern has shifted out along the yield curve, away from the front end, and overwhelmingly the focus is on what happens to 10s and to 30s.
People are worried about another Arthur Burns tenure at the Federal Reserve, and the 1970s were not a good time for risk assets.
We'll be talking about that a little bit later this hour. Let's get you an update on stories elsewhere this morning. With your Bloomberg brief, Vonnie Quinn has more. Hey, Vonnie.
Good morning, John. AMD giving an underwhelming sales outlook, saying its third quarter revenue will come in around $13 billion. That missed some of the most bullish estimates. CEO Lisa Su telling analysts the company expects data center revenue to more than double next year, and that growth could top 100%. SpaceX shares falling in the pre-market after its first earnings since going public. Capital spending soaring as Elon Musk pushes ahead with his AI and space ambitions. The company posting a smaller than expected loss and revenue beating estimates. AI models by OpenAI and Anthropic revealing more unsanctioned actions during security tests. The UK government's AI Security Institute saying both engaged in sustained, potentially harmful activity directed at real people and organisations during evaluations. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. Thank you for the update. Up next on the programme, moving towards a deal.
I think it'd be very smart to make a deal. They had a very good day. The negotiations were good. We're moving along very nicely. We'll find out. We'll know in 48 hours.
Up next, Lisa's going to take a little break, and we'll catch up with General Carol Gibson of Academy Securities. You're going to stick around? 5 minutes off.
I mean, look, it's important story. It's just I think everyone's sort of like, all right, what are we going to learn?
Live from New York City this morning. Good morning.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars, Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Record highs on the S&P for the first time since early June, adding some weight to the rally, up a third of 1% so far this morning. What a rally we've seen on some massive single names. We talked about Microsoft, 4 days, 26%, the biggest 4-day move we've seen since the year 2000. For chip stocks, a massive move there as well, up 16% for semis over the previous 4 sessions. And for the software names too, 8-day winning rally, up 17%. Just a week ago, we were talking about the bar being too high for earnings, or the good news is priced in, and now we're talking about position squeezes. A week later?
Yeah, I'm not sure where the narrative is. Essentially, it's if the stock has been beaten up enough and the earnings have increased enough to present an attractive kind of valuation prospect, then all of a sudden people say it's cheap and let's go into it, regardless of some of the other existential fears that were apparent before. The issue is for names that still have gotten really big gains, and I think AMD is a good example of that, up 140%, and even better than expected earnings, at least in the headline level, were not enough to keep that momentum going.
You could feel the turn in sentiment into the weekend. We noted it. Situational awareness blows up. You had Max Kettner of HSBC write about it, that would be used almost as a convenient narrative to explain away the weakness we saw in July and maybe an opening for everyone to start buying again. And in some ways, that's exactly what happened.
Yeah, essentially people got the confidence that maybe the whale in the market that had been causing a lot of volatility had been pushed out. I would argue that some of the gains that we're seeing doesn't exactly make you feel like the volatility is gone. They're just volatile in the right direction for a lot of long investors. That said, I wonder who this is coming at the expense of, and whether it's coming in part at the expense of some of the frontier models that are suddenly losing pricing power in an era of open model dominance coming from China. And I do wonder if the economics are getting better and investors can see that because of some of this competitive pressure.
Nasdaq futures this morning down almost 1/10%. Under surveillance this morning, let's talk about oil moving towards a deal.
A lot of progress has been made. And they called me and they said, please, let's talk. I think it'd be very smart to make a deal. They had a very good day. The negotiations were good. The stock market was up tremendously over the last 3-4 days. We're moving along very nicely. We'll find out. We'll know in 48 hours.
So here's the latest this morning. The president saying a deal on the Strait of Hormuz could come as early as today. Axios reporting the US, Iran and Oman are gearing up to announce a 60-day agreement to reopen the crucial waterway. Bloomberg's Abir Abu Amar joins us now from Dubai for more. Abir, welcome to the programme. We have been here before, several times. What's different about this moment?
Well, it looks like over the past 90 minutes, we are not seeing much difference because, John, Iran did come out through state media and said, actually, the negotiations that are happening don't have the U.S. included in them, that the negotiations when it comes to the Strait of Hormuz are happening only between Iran and Oman at this point. Here is a line from that Iranian state media citing a source familiar with the matter, saying that the potential agreement between Iran and Oman regarding the passage of vessels through the Strait of Hormuz has nothing to do with the United States. It is merely a mechanism that is being discussed with Oman for the time being. Now, we've reported this over the past week, John, saying that Iran and Oman are discussing some kind of mechanism to help ships or the trickle of movement through the Strait of Hormuz. Axios, in the early hours of our morning, reporting that this will be a 60-day agreement that will establish an immediate opening of the Strait of Hormuz. Iran saying that is also not true. It is not going to be opened immediately. So we're seeing the back and forth yet again. President Trump this morning saying that we'll see over the next 48 hours. He was touting that a deal with Iran could be imminent. We heard similar notions from Marco Rubio, from Scott Bessent. But one thing is for sure here, and that is any deal that is currently being discussed is really just about the flow of energy through the Strait of Hormuz, the Strait of Hormuz per se, and nothing about that nuclear component, nothing about the 14 concessions, John, that were spoken about in Switzerland in June. We are again at wait-and-see mode to see if that deal is, in fact, imminent on Wednesday, as President Trump and other U.S. officials have been saying throughout the course of the day.
Watch this space a bit. Appreciate your time. Fantastic coverage over the past few days. Bloomberg's Abir Abu Amar out of Dubai. General Karen Gibson of Academy Securities writing, there's no evidence today that America's punishing airstrikes have affected Iran's strategic calculus or diminished Iranian resolve to control the Strait. General Gibson joins us now for more. General, welcome back to the programme. We've been here before. We've talked about this kind of deal before as well. And then Iran has continued to attack ships through the Strait. Do you believe this is different this time?
Well, I do think this is different in that these appear to be largely constructive talks. That's based in part on what we're hearing from Qatari interlocutors. constructive talks between Oman and Iran on the kind of mechanism that might allow the transit of vessels through. As I understand, there will probably be a service fee as opposed to a toll, still a cost, but a service fee, perhaps a more palatable term for fees that are paid, as well as some kind of mechanism that they jointly administer that would allow vessels to go through. As we just heard, even if this is approved, it's not going to suddenly free navigation through the straits. There's demining that will need to happen. And even when we hear things positively on the diplomatic front, I think we also need to wait and see what happens in terms of the IRGC and how they respond. And then a third element that I would introduce is potentially a demand that the U.S. lift its blockade of Iranian ports before Iran allows this new deal to be implemented.
General, what are the odds of ever going back to the pre-war status quo? Do you think that we have changed that region potentially forever?
Well, I do. Yes. I think it's, while we will see at some point, I think, a return to free navigation, it won't be exactly the same. For one, we have not addressed the underlying geopolitical risks that got us here in the first place. And the U.S. is no closer to achieving the nuclear goals that it set out to achieve when it began this campaign. And then third, I think I would say that Iran has demonstrated its willingness and ability to choke off the Strait of Hormuz and is cementing that as a form of control. It will not be exactly the same going forward.
General, how do you understand the strikes by the Houthis on Saudi Arabian tankers in the Red Sea in particular over the last couple of days? Why are they getting involved now?
Yeah, so that's a great point, and I'm glad you brought it up, because even this deal between Oman and Iran does not address the issue that the Houthis have over in the Bab el-Mandeb. So the issue between the Houthis and the Saudis, two bordering nations, their disputes go back far longer than the Houthi alignment with Iran. It is personal between the Houthis and the Iranians, and I often remind folks that while the Houthis are an Iranian proxy, they are not a puppet. And of all the proxies, they tend to operate the most independently and are much harder for Iran to control. They're happy to take Iranian financing, Iranian weapons, advanced technologies, but not always instructions. And so even as this deal is struck between the Iranians and the Omanis, or a mechanism for coordinating navigation through the strait, the Bab el-Mandeb remains at this point an unresolved issue.
As a longtime member of the U.S. military, I would love your reaction to some of the reporting that we got out yesterday about munitions in the United States and how low stockpiles have gotten in light of this ongoing conflict and broadening conflict across a host of different theaters.
Yeah, so anytime that you're expending munitions faster than the industrial base can supply them, and that always happens in a conflict, you will draw down your stocks. I think in this case, as long as this has gone on far longer than originally planned, certainly we have drawn down those weapons and our inventory much less than the department is comfortable with. And I would point out that these are munitions that are used by allies like Ukraine. These are used by certainly our Middle Eastern allies. They are also used in Northeast Asia to prepare for potential contingencies that would involve North Korea. So it is really a more global problem. And I would tie this also to the acts of Iran of the last 2 weeks, where they demonstrated an ability not just to close off the Strait of Hormuz, but to affect shipping or ports and infrastructure in the Red Sea and as far as Egypt, demonstrating that they can hold anything at risk. Those Gulf allies, they rely on these munitions. I'm sure that was part of their calculus in compelling the president to hold off on yet again another threatened intense airstrike.
I think that point is quite critical. General, do you believe we are at the point where that issue around stockpiles of ammunition is beginning to influence, perhaps even dictate, the U.S. approach to this situation?
I think influence is fair. Dictate, perhaps not, but certainly is a factor that should be taken into consideration as you consider our endurance. That is probably one of the most critical shortcomings that we would have right now.
General, appreciate your time. Thank you. General Karen Gibson there of Academy Securities. Dictate probably too strong. Influence, I think that's where the consensus is right now, and that's concerning.
Well, when we talk to a lot of people who are close to the military, they talk about how this has been a factor, and it's increasingly a factor because the nature of war has changed. You can execute many more strikes much more rapidly. To the point that the general was making about the global resources, there was a report that a number of people in Ukraine were killed overnight in a Russian offensive that would have otherwise been able to have been deflected if they had had some of the defensive munitions that they previously had. And what we heard from the country was that this was a direct consequence of there not being enough munitions out there to help support their cause. This goes far beyond just an issue of the Middle East. This has to go to the global stockpile and how that realigns some of the global powers.
This plays into the uncomfortable new normal we've been talking about, just toggling between strikes and talks, with no real runway for a sustainable diplomatic solution. Brent crude 2 Fridays ago was triple digits. This morning is at 80. A month ago it was in the low 70s. We've been all over the place. Tons of volatility for crude in the last 30 days.
What you've actually seen is inflation expectations come down to some of the lowest places that they've been going back to 2024, at least at the front end of the yield curve. People seem to be shrugging off the idea of some sort of massive obstruction of flows for a long period of time. Even with this ongoing conflict, it seems like the status quo will involve some sort of transportation of oil bearers through the strait.
That move in crude helped yields retreat just a bit, which alleviated some of the concerns in equities as well on the margin. The move in oil, the move in equities, just a bit, Bramo.
Yeah,
just a bit.
You're not wrong. It sets the mood music. It's just an exhausting mood music.
Dan Ives of Yorkville joins us next to talk about SpaceX. SpaceX down in the pre-market by 11%.
How do you see AI changing gaming and game development in the future?
Look, I think the biggest thing that I'm thinking about is how do we just make sure it's solving problems. On the game development side, I've gone to a lot of our studios, with big and small, and I'm blown away with how they're using AI in the production pipelines, how they're using it for iteration and prototyping. That's not production ready, there's still work. And so, 30% of game development is software, and so there's the traditional applications that we see in enterprise. At the same time, I do not think AI will replace AAA games. I think it's entirely possible, though, that AI represents a new category of games and a new type of development and enables more people to create and participate. And we'll keep an eye on that, and we'll see how we best serve that.
weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
What a rally in 4 days. Record highs on the S&P, record highs on the equal weight. The biggest one-day gain we've seen in several months on the S&P 500. 4-day rally up by close to 6 percentage points over that period. Futures up again by a third on the S&P. On the Nasdaq, just about unchanged. Some single stock trouble out there. We'll talk about it all morning. AMD and SpaceX being two of those names. But within that, away from that, the tech story's just been on fire over the past few sessions.
This is coming from Vishal Vivek of Citigroup, saying that his conversations with a number of different clients suggest they're bullish on the fundamentals across these tech names. They've been looking for an attractive entry point, and the washout following strategic ambiguity, that's what I'm going to call it, situational awareness, strategic ambiguity.
Okay. You're just coming up with that on the spot. Was that intentional? I don't know. I like it. I don't hate it. That should be the second. That should be the second fund.
Situational awareness, strategic ambiguity. That was a good washout, and it created a good entry point for them.
Nice work, Bramo.
Thank you.
It's some of your best works on the fly. Jonathan Krinsky of BTIG, by the way, was pretty punchy in his note yesterday. I'll share some of that with you. The S&P 500 has surged 5% over the last 4 trading days into a 52-week high. In the last 30 years, his stat, this has only happened 3 other times, including March 21 in the year 2000, which was the dead highs of the dot-com bubble. The latest from Krinsky over at BTIG.
Well, he's been calling for some sort of parabolic move down, and we had seen part of it, but it wasn't necessarily the washout that he thought was necessary because of some of the parabolic moves that we've seen upward. That said, he seems to be in the minority because other people are saying earnings have caught up to where valuations are and then surpass them dramatically, as a lot of these names haven't done anything, and as a result, people are finding an attractive entry point. That said, do they have the wrong paradigm for valuation? You can ask all of these other questions as well.
Let's turn to the bond market. Yields retreating helped the rally in yesterday's session as well across 2s, 10s and 30s. A number of reasons for that. Crude is one. The other's the data. Job openings a bit softer than expected, heading into a week full of economic data. ADP coming up a little bit later this morning.
Yeah, I don't know what conclusion to draw from JOLTS because the headline number was a little bit below what people had been expecting, but the quits rate was a little bit above what people had been expecting.
Hiring was okay.
Hiring was fine. The layoff number wasn't that significant when it comes to past history. So the internals of this lead you to believe that this is a job market that still is doing just fine, which is why you see a lot of the Fed officials skewing to the more hawkish.
Should we turn to crude? I know you're desperate to talk about it.
I've been eager all day.
WTI and Brent looks like this so far this morning. I'll try and frame this for you. So, Qatar say a proposal has been drafted. We know that much. The US and Iran apparently reportedly open to a deal. Secretary Rubio's come out on the record and said progress has been made on a deal on the Strait of Hormuz exclusively. Beyond that, what have we woken up to this morning? The Houthis threatening shipping again through the Red Sea, the push and pull, the effort to try and establish leverage through this negotiating period, if it is 60 days, will continue, and it will continue to be volatile.
Yeah, and this is the reason why a lot of people are just saying, okay, we have to pay attention. It does set the mood music. We need to understand whether there's a bigger catalyst that's evolving here, but otherwise, it's not going to materially shift people's views beyond that. I would say that if you were going to have strategic ambiguity as your fund, you would have a heavy position in oil, because right now, it seems like there is a lot of unclarity. The real only certainty is whether there actually are barrels going through the strait. And right now, people are saying and evaluating that there is still a trickle going through.
Numbers from Disney just dropping. We'll turn to that in just a moment. Give us a few moments to digest that data. Before we get to that, let's get you some morning movers, some single names. Yahira has more. Hey, Yahira.
Hi, John. SpaceX getting a harsh welcome as a public company. Shares are falling 11.5% in the pre-market after the company unveiled much bigger CapEx numbers than Wall Street had expected. The quarter itself was good, but you can just feel the angst as investors digest the enormous amount of capital that will be needed to turn this from a rocket company into an AI infrastructure one. Plus, the company's IPO lockup expires today, allowing insiders to sell shares for the first time. So that is also adding pressure to the stock. And due to comments on the SpaceX call from President Glenn Shotwell. We are seeing the wireless providers AT&T, T-Mobile, Verizon falling in the pre-market after she laid out the company's clearest vision yet for taking on this industry, saying it plans to build out the terrestrial infrastructure needed to turn Starlink into a true mobile service. And reading through analyst notes on this, they are mixed. Some saying that it will take billions of dollars of investment and years to just be on the same playing field as these guys, while others say don't underestimate SpaceX's ability to innovate and take on these well-established players. And we end on AMD, also falling victim to high expectations. The stock has more than doubled this year, leaving little room for disappointment. So while it did beat on earnings and revenue, the guidance failed to clear Wall Street's highest expectations. So we are seeing pressure on the stock as well, down nearly 9%. John.
Yahira, thank you. Thanks for the update. More from Yahira in the next hour. Let's get to the Walt Disney Company, up in the pre-market nicely by, let's call it 2%. Numbers dropped just moments ago. EPS, adjusted EPS for the third quarter coming in at $2.06. The estimate, $1.86. That's a nice beat. The first thing I was looking for was the experiences business that includes parks and cruises. Profit there, rising 20% to a little north of $3 billion. They are crushing it over at Disney.
This is the story we're hearing from airlines. This is the story that we're hearing from all of the hotel companies, that ultimately people are still into experiences and traveling. And you see that in the numbers. I mean, across the board, it seems like they beat valuations. A real question here also about some of the other macro backdrops. I love Disney because it really touches both the experiences, also tariff refunds. They said that they recorded about $100 billion in tariff refunds over the quarter. And then, of course, the sports and entertainment aspect of things. The fact that they had such a big beat on their sports revenue, coming in at 4.5%, well, about the same as what was expected, 4.5%, speaks to kind of the World Cup and some of the excitement around trying to acquire sports-related rights, even if they're really expensive.
Let's just get back to basics. Airlines, cruises, parks. Right, you've seen it throughout earnings season, to your point. Great. Look at MasterCard, the numbers coming out of the credit card companies. Fantastic, pretty decent. People are still spending. You can see that in the economy. You see it in these big names.
And you see a certain degree of pricing power when you have these names, because ultimately they've been able to raise prices in tandem or surpassing even the costs that they are experiencing and incurring as a result of operation. To me, this just ultimately goes to the point that the economy is in a strong place. And this is coming from more than just artificial intelligence. Maybe these people are all feeling the wealth effect of their AI-related stocks. Nonetheless, people say that's probably not the case. And one of the hallmarks of this earnings season has been the broadening out of the earnings that we've seen, and frankly, the way that we've been seeing that in the data as well.
It's a nice story, cashing in chip stock profits in July and taking some vacations.
I think
right? Is that what you're suggesting?
Are you putting words in my mouth?
just
Sure, I would love to, but I will say this. I don't think you're going to be going on a Disney cruise.
No, I won't be. But don't use me as a barometer for this stock, right? Otherwise, you'd never buy Disney or the cruise stocks or anything.
I would agree with that. I also think that nobody's really taken enough time off. And I would argue every single person who comes into this show, we ask, oh, how was your summer? And they say, what summer?
Not as quiet as I thought it would be.
Yeah, I thought it was going to be able to take time.
I don't remember the last time we had a quiet summer. Give me a break.
OK, but this has been an especially volatile one.
It's been very busy. Oh, yeah, it started with Maduro. Do you remember that?
Nope.
Lifetime ago. Disney right now in the pre-market up by 3%. On our radar this morning, President Donald Trump saying a deal to reopen the Strait of Hormuz could come as soon as today. The US, Iran and Oman reportedly preparing to announce a 60-day agreement on shipping through the waterway. Elsewhere, AMD shares pulling back. The chip maker's sales outlook falling short of the top end of Wall Street expectations. Shareholders hoping for higher returns from the AI build-out. The CEO, Lisa Su, expecting data center revenue to more than double next year. And finally, SpaceX also taking a hit. The company reporting higher than expected AI spending, overshadowing an otherwise robust first earnings report. Elon Musk telling analysts the company's year-end run rate should hit $100 billion, nearly 3 times above estimates.
You know, my big question coming out of this earnings is Elon Musk losing his clout as the promiser of dreams and hopes? Because ultimately the performance was great. It was just a matter of the spending coming in so much bigger than what he had previously expected, and where he's spending, which is on becoming a hyperscaler or some sort of hyperscaler competitor, not the areas where he's actually bringing in revenues, which is in the telecom business and in the space business.
There's a massive test for this stock coming up, and it has nothing to do with the underlying business. It's the beginning of the end of the lockup and it's going to be a staggered end to that lockup as well. And there's just a view they need to wait and see how that plays out over the next 6 months or so, and how much buying will step in to mop it up.
Yeah, $100 million, I believe, are going to be coming up for sale in the next couple of days. And then after that, you'll have to see who is going to want to buy into a name that is leveraging its future on a less certain business at a time where there are plenty of competitors.
SpaceX down in the pre-market by 12%. Dan Ives of Yorkville Ives writing the following: the capex tug of war between SpaceX and investors is a necessary build-out that will require patience. Dan joins us now for more. Dan, whose patience and how much pain will we see for the stock in between?
Look, I think this is a barometer for what we're seeing across tech, because the reality is this is an arms race. And when you think about what SpaceX is doing, the only way to get there is CapEx. And I think that's the double-edged sword as going public, because the scrutiny is going to be there. But look, we've seen it across big tech, when it comes to the hyperscalers on a different version. That's essentially what's happening with SpaceX as they're trying to catch up to OpenAI, Anthropic, and as Lisa talked about, really building out the vision.
Do you think that this is the right move, Dan, to really lean into the hyperscaler side of things, the compute side of things, when really the money is coming from the space and the telecom sides of things?
Yeah, I think that's the quagmire that they're going through. And look, it's no different than so many other companies that we've seen. I mean, you could go back to NVIDIA, right, where it's gaming and going after AI. The reality is that the gold at the end of the rainbow is around data, AI. It's going after that opportunity. And I think that's what they're doing. Look, it speaks to XAI and ultimately what probably could be Tesla as well. That's the broader vision of Musk. But the only way to get there is CapEx. And I think when you're going through this arms race, where and you see it from all the chip players, all the memory players, costs are getting more expensive. And you're not just one of one in a room, you're one of many trying to get after those chips and the build out.
Dan, if you were trying to figure out where you were going to lend your pool of cash, why would you choose SpaceX for some of those data, AI, LLM types of promises and dreams, rather than either Anthropic and OpenAI on one side or Microsoft and Amazon on the other?
Oh, no doubt. I mean, they definitely are at the low end of the totem pole relative to those players. And I think that for them is the challenge. The hyperscalers, if you just think about this earnings season, I mean, they come out flexing muscles relative to what we're seeing. And when you look at OpenAI and Anthropic, I mean, it's really their world. Everyone else is paying rent. Everyone's trying to play catch up, and that's the challenge. Now, for Musk, he's been there many times before, but that's really the opportunity. Look, if anyone's buying into SpaceX, you're buying Musk, you're buying the vision, and you're playing catch up.
The price of capital, Dan, for these guys is going up. It's higher. In the next hour, we're going to have a conversation around this table about how rate insensitive these spending plans are. But I do believe everything's got a price, and at some point, Dan, there is a price at which these companies are no longer willing to pay. Are we close to that, Dan, where markets and the pushback, whether it's equity or whether it's debt, begins to dictate or even influence the spending plans of these companies?
Look, I think right now, I think Oracle will be a great example, relative to the OpenAI deal and just taking on debt and what's happened to that stock. Look, I think for these companies, it's a balancing act, because they know if they lighten up on CapEx, they go to the back of the line. And it goes back to this is the building of the Vegas Strip, 1955.
Well, Dan, I think that's the issue, though. Just allow me to jump in. Why do you want to buy them as they go through that difficult phase? Why do you want to be buying them now?
I think if you look at Microsoft and you look at Alphabet, those are two good examples where as they're going through it, you're basically in the build out phase. Investors now, the switch has gone on. You've actually seen the monetization. I think the question, John, is that when do you start to see the monetization switch? And investors are basically betting near-term pain for long-term gain. But there is a push-pull point. And I think as we get into the debt market, and these companies take on more debt and more equity, I think Meta is a great example. You have to show it. You can't just talk it. Alphabet, Microsoft, you look at Amazon, I think you got to prove it, because it can't be the dog ate the homework every quarter.
Dan, it's good to see you. As always, Dan Ives there for Yorkville Live, still constructive on these names. SpaceX getting slammed in the pre-market.
Because people can't see exactly the path for their preeminence in this particular field of data collection, AI-related large language models. And ultimately, they do have a great business that they could lean into, but where they're putting the capex is in trying to compete with others who also still have a great business.
Meta does too.
Right.
It's another example of having a very profitable underlying business in there somewhere.
Clarity of vision. The companies that have clarity of vision are getting rewarded for it. Those that have a muddied vision or a vision that's overly broad without a clear sense of how you get there, not so much.
It's been a theme for us over the last week at both the likes of Meta and the likes of the Federal Reserve. SpaceX down this morning by 12% of the pre-market. Let's get you an update on news worldwide with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John, thank you. Record low water levels are disrupting trade and tourist cruises on the Danube. Nuclear plants in Romania and in Hungary are under threat of being shut because there's not enough water to cool them. Disney shares up by 4% in the pre-market. The company's third quarter results beating on the top and bottom lines. Soaring income from its entertainment division and the resilience of its theme parks in California and Florida driving profits. Citadel's flagship fund surging nearly 6% in July after the firm bought that portfolio of AI stocks from troubled hedge fund Situational Awareness. Sources telling us here at Bloomberg the transaction helped boost Citadel's year-to-date gains to 12%. And that is your Bloomberg brief. John.
That's one way to get it done. Vonnie, thank you. Appreciate the update. Up next on the programme, the inflation debate.
Underlying inflation has remained well above the Fed's target.
There may be good reasons to expect inflation to cool down, but the question is whether it cools down in such a way that it satisfies the word soon.
We do think inflation will be behaving more in the second half of the year.
That's the hope. We'll get the outlook from Ashok Bhatia of Neuberger in just a moment. From New York City, you're watching Bloomberg TV.
Look at the more successful economies in the region. The key to their success is continuity. But the way our constitution is written, it actually encourages a lack of continuity. And that's a problem. The terms for local government is 3 years. When I first became a congressman, it takes you a few months to learn the business and to make your connections, to network, etc. If, for example, you are not particularly favored in the majority, passing a law in a year and a half is not that easy to do. After about a year and a half, you already hear that there's somebody in your district beginning to campaign and is going to oppose you in the next election. So you have to go back to your district to take care of that. And how much work do you get done?
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Joanna Bersecci in El Ola, Saudi Arabia, and this is Bloomberg.
Coming up a little bit later on this morning, more economic data, ADP at 8:15 Eastern Time, and then another read on services in America, ISM. Look out for the ISM at 10 a.m. Eastern Time. More data throughout this morning, building up to the big one on Friday, the payrolls report, the estimate in our survey, the median estimate is still 80k. Equities this morning doing okay on the S&P and on the Nasdaq. On the S&P 500, adding some weight to the rally, up 1/3%. In the bond market, 2s, 10s and 30s. Yields yesterday retreating somewhat. 2s still around 420, 10s around 460. Under surveillance this morning, it's the inflation debate.
Underlying inflation has remained well above the Fed's target.
Inflation's too sticky for too long.
There's not a lot to suggest that you have a lot of disinflationary pressures.
There may be good reasons to expect inflation to cool down, but the question is whether it cools down in such a way that it satisfies the word soon.
We do think inflation will be behaving more in the second half of the year.
So here's the latest this morning. The Kansas City Fed President Jeff Schmidt calling for tighter policy to rein in inflation. Ashok Bhatia of Neuberger taking a non-consensus view, writing, "We believe inflation is on track to move back towards central bank targets sooner than the market expects. By year-end, we expect the Fed to be within close reach of its inflation target." Ashok joins us now for more. Good morning, sir. It's good to see you.
Good morning.
Give us the constructive view. What's the path for disinflation?
Well, let's just start. Core inflation year over year is running about 2.6%. And our view is that over the course of the second half of this year, and particularly in the fourth quarter, we're going to start getting monthly prints of 0.1 to 0.2%. And that is sort of the core reason that, 6 months from now or so, we're going to start looking at a core inflation number that is at 2% plus or minus. So it's effectively the Fed is going to, we think, get bailed out by lower inflation data. And what's driving it? It's really a combination of shelter is coming down. We see weaker goods prices and goods disinflation or lower inflation in the goods market. And then services. I think one of the things that the bond market and maybe the home markets are missing is wage gains continue to decline. We're at 3.5, 3.6%, year over year wage gains. And that's leading to some pressure in services inflation. So you don't need a big tick down in these monthly inflation prints. We got a 0.0 print last month. And that's enough to get the Fed within spitting distance of its target and keeps the Fed on hold.
The labour market hasn't been a tremendous source of inflation for much of this year. That much is true. Some people might point to the massive spending we're seeing, the AI spend, that is going to keep prices elevated. What's the counterpoint to that?
The counterpoint is that there you are seeing the elevated prices in chips and some of these inputs, but look at what the U.S. consumer spends its basket on. About 1/3 of it is on housing, about 10%, 12% or so of it is on goods. But, we talk about chips, but we don't talk about cars and used auto prices and some of these other things that are more meaningful for the consumer basket. And we're certainly not saying that this is like smooth sailing and that this is all one way. But there are enough pockets of disinflation that get the Fed back down to its target. And I do think one of the most remarkable things about the bond market is if you look at the inflation break-even market, inflation break-evens 5-year and 10-year, they're lower on the year. I think that surprises most people, but 5-year inflation break-evens are at 220. That's down a few basis points for the year. When we think about all of the inflation discussion we have and all of the noise around it, the bond market is signaling a much different message about the inflation path, and I think it's much more in line with our view for how things develop.
Yeah, one-year inflation expectations fell, I believe, to the lowest since 2024 in the past week. How do you understand then the sell-off in the long end of the yield curve in the wake of what was perceived as potentially a dovish or just absent message from the Federal Reserve last week?
Yeah, I think this year is all about real yields. So if we look, the front end of the bond market, the 2-year point is up about 70 basis points. The long end is up about 40 basis points. That is almost 100% real yields moving. And I think it's just two stories. It is we are moving into a world where, a few years ago we were talking about excess savings and savings gluts, nothing to invest. Suddenly there's a demand for capital, as you were talking about with the AI spending, and it's government spending. Governments are spending a lot of money, and the private sector is now spending a lot of money, and bondholders are demanding, a higher real yield. And, real yields now have moved up to about 2.5%, which is certainly the most elevated levels, we've seen since the financial crisis.
We've been asking everyone, we've been trying to be bond sales people and say, do you want to buy the 30-year? Do you want to get that extra yield, or is it not enough to entice your capital away from the promise of hyperscalers and AI preeminence and more yields in other places?
Well, I don't think you want to go buy the 30-year Treasury. I think the better place to be on the Treasury curve is 10 years. The one thing I do think that's interesting now on the 30-year point is the hyperscalers. We have seen this significant widening. And actually, hyperscaler debt, we think, is now looking relatively attractive and cheap to what's going on in the securitized market and the high-yield space and the general IG market. So I think it's buy 10-year treasuries, 5-year treasuries, and then you can add a little 30-year hyperscaler at this point.
OK, I've got to ask. Even for a man who sees a path of disinflation back towards target and a Fed that doesn't have to do much, you still don't like the 30-year treasury, but you do like the long-dated hyperscaler credit. Why do you dislike the US 30-year so much?
Well, I think it's the government debt issues. We are going to be in this, I think, persistently environment until the fiscal situation changes, that the government is going to be demanding more capital. And you get into an environment where, you know, the Fed stays on hold, which is sort of our core view. We can continue to see the 30-year just sort of stay around these levels while some of these shorter and intermediate rates, you know, fall as you end up seeing the Fed, you know, we take out the Fed hikes. The 30-year hyperscaler is really a message that spreads are giving you a lot of compensation for the credit risk at this point. And so even in an environment where 30-year treasuries stay around these levels or move up, you've got enough protection and spreads with where they are that's a better use of 30-year investment capital.
I think we're going to reflect on this conversation throughout the week from here. It's good to see you.
No, it's good to see you guys.
Thanks for being here in New York. Ashok Bhatia there of Neuberger Berman. That's quite a line, isn't it? That's quite a line, that I'd prefer to buy 30-year hyperscaler credit than I would the 30-year treasury.
Essentially, because he's waiting for Washington to blink, and so are a lot of other bond investors. They're waiting for policymakers to understand that the bond market is speaking to them, and they have to listen. And do they have to exert more pain or see more pain in the bond market before there is some fiscal discipline down in Washington?
And yes,
right.
520 doesn't get it done.
Well, that's essentially what we're seeing, and people
What
are saying,
does?
well, it seems like the bond market's saying, let's see how high we can get this.
It's not 520. Yields this morning, 516.80 on 30s. Up next, Alicia Levine of BNY Wealth, Ariana Salvatore of Morgan Stanley, Brian Whalen at TCW, Colin Martin of Schwab. From New York City, the second hour of Bloomberg Surveillance. Up next.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Today, Wayfair sees immense potential in brick-and-mortar stores.
When we got into physical retail, our view was that, even if the market continued to grow for e-commerce, probably a large chunk of the market in this space would stay offline.
Kate Gulliver showed me around Wayfair's new 150,000 square foot Atlanta flagship store.
When customers who have seen us online come into the store, they're generally a bit surprised by actually the breadth of what we offer. Often if you're going online, maybe you're looking for something particular. But when you come into the store, you walk in, you see the market square, you see all these pillows, you see the decorative accents. So what we're seeing actually is that in store, we do really well in some categories that online are, less a percentage of the total.
How does technology help in kind of making it seamless online to store?
I think
and vice versa.
The biggest thing is for the customer on the front end, that she can be in the store, that she can actually shop here, go back home, complete that purchase. And if you look at these sort of price tags and everything, they're all these digital tags. That's because they're the exact same prices they are online. So you're not going to be surprised that you saw something in the store and then you decided to purchase it online, that it's somehow different and that the offering is different. It's actually very consistent, but when she's here, she can have her app open and everything that she's doing here can be very similar to what she's doing at home. And I think that consistency is quite important.
Asia is at the forefront of some of the world's biggest stories. I'm Sherry-Ann in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Fed's walking a very fine line here. And
part of this narrative here is definitely inflation expectations.
We're not crying because we need the forward guidance. We are looking for a plan, and we don't see one right now.
We are so grateful to those Fed speakers who are willing to explain their reaction function.
We are clearly dancing in the dark now.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The second hour of Bloomberg Surveillance starts right now. And your scores, the price action looks like this. 4-day rally on the S&P 500, higher by more than 5% over that period this morning, advancing 0.4%. We've talked lots about the single name trouble throughout this morning. AMD, SpaceX down in the pre-market, but the focus firmly elsewhere, beyond the 12% decline on SpaceX. It's the rally that you've seen on the likes of Microsoft, 26% advance in just 4 sessions.
And you pointed out it's not just the hyperscalers, it's also the semiconductors, it's also the software names. The Philadelphia Semiconductor Index is up the most over the past 4 days going back to 2020, akin to what we're seeing in Microsoft. And going back to this Citigroup report where they said essentially a lot of investors have been bullish on the case of all of these tech companies and have been waiting for an attractive entry point. And situational awareness or strategic ambiguity, whatever you want to call it, was perhaps the entry point for so many different people to come in and say, this is my time to buy.
Whatever you want to call it.
Well, I think that it switched from situational awareness to strategic ambiguity.
Clearly a strategy for Ken Griffin over at Citadel, given the gains we've just seen and the profit they made in the previous month.
They were up 0.5% before they bought this portfolio for a month, and then they were up 6% after that. So congratulations, Ken Griffin.
It's a nice power to have.
Exactly.
Right? Not everyone has it, unfortunately. Let's turn to the bond board. Check it out, 2s, 10s and 30s. Fantastic conversation with Newberger just moments ago. Look at the 30-year piece of the Treasury curve this morning. We're down by a basis point, 516.38. You've got tons of issuance coming into this market on the credit side. Lots of supply from the hyperscalers. What do you want to buy? What does he want to buy? He would prefer to buy a 30-year hyperscaler credit piece than buy the 30-year Treasury this morning. What does that tell you about the debt market?
This tells you, and Ashok Bhatia put this perfectly, where he said, right now, they know that Washington, D.C. has to sell a lot more T-bills, has to sell a lot more Treasury notes, has to sell a lot more debt. And frankly, they're exacting a price for it in the bond market, especially because there is competition. We have seen a sell-off in hyperscaler debt over the past couple of weeks. You have seen a widening in those spreads. And as much as people see opportunities in the equity side of things, they're seeing opportunities in the debt side of things, especially as compared to potentially a blank slate when it comes to what Washington, D.C. is prepared to do with its fiscal overhang.
The price of inaction. Eric Cantor sitting around this table just yesterday on the price of inaction. The price of inaction needs to be greater than not acting at all. And for that, you need to see the yield go higher. Is it 525? Clearly not. Is it 530? I don't know. 550? 6%? When do high yields beget high yields and they finally wake up in Washington? We've been talking about this for decades, but now there's a new entrant in the debt market. It's the biggest companies on the planet. Now they go negative free cash flow, they have to issue debt. You've got competition for capital and yields have got to go up. Yields have got to go up to get Washington's attention to do something about it. Are they going to do something about it?
Well, yeah, what's the price to get the attention of Washington, D.C.? You know, can you make a TikTok video yet about the deficit? Well, no. And right now, when I talk about the deficit, people turn it off. So that's the reason why I assume that we have to get a little bit to higher yields to get to that conversation.
You can tinker around, bring in issuance, make it really short term. We've seen a lot of that. But have we exhausted that effort?
There was some speculation that the moves in Japan were ahead of the refunding announcement. We're going to get that later today. In terms of exactly how this Treasury Department plans to refinance itself, expect a lot on the short end, but you can't fund yourself forever on the front end, and that messes with some of the functioning of the Fed as well.
You can try. The Fed stays on hold, doesn't move. Guess what gets punished? Dollar gets obliterated in that scenario.
Well, and we've
gets
already
hammered.
seen. Yeah, well, look, there are a lot of questions about exactly what the strategy is, and that's the reason why the void has been filled by other Fed officials who seem squarely focused on the front end of the yield curve and ready to act. So we'll see exactly how this shakes out.
Coming up this hour, we'll catch up with Alicia Levine of BNY Wealth as earnings continue to drive markets to new record highs. Brian Whalen of TCW joins us on Wall Street's massive push to unload billions in AI data center debt. Plus, Colin Martin at Charles Schwab seeing an increasing chance of a rate hike later this year. We begin this hour with stocks adding to the record-breaking rally. Alicia Levine of BNY Wealth recently raising her year-end target for the S&P to 8K. Earnings took over from macro in driving markets. The capex cycle continues to support the economy and industrial sectors as hyperscaler spending is powering earnings of 20% at the S&P. Alicia joins us now for more. Alicia, good morning.
Good morning.
What a massive run we've seen in just a few days on tech. It's phenomenal. What are you telling clients?
It's phenomenal. Look, we think the market ends higher at the end of the year. We're in print at 8,000. I think it's probably moving higher. The forward earnings growth rate right here of the S&P is actually 30%. So the multiples come down even now. It's the market sort of tread water around that 7,500 range since mid-May. Kind of stuck there as the market rotated, and as you talked about, we had these clearing events. There are major questions hanging over this market. The first of which is the war restarted, oil prices are higher, yields are higher. Can the market rally if the 10-year is over 4.5%, which was really the bogey in this entire cycle? The answer is yes, it can. The second thing was, is there ROI on hyperscaler spending? Are they just spending into oblivion, funding the balance sheets of every other company, but not themselves as they go free cash flow negative? Turns out, actually, there's a business case for it, and their cycle reaccelerated through the growth rate. So that was answered as well. And so you've got the two major questions out of the way. And then the third is this an earnings bubble? And the answer is no, it is not, because you've got accelerated growth rates for the spenders. And that once you've answered that question, it's pretty much clear out there.
If there is a clearing event, and you've identified several, it seems to be benefiting everybody at the moment. And we're trying to figure out, when do we start to discriminate again? Because much of this year, you saw chips do well, but software react poorly. You saw an inverse correlation between the hyperscalers and the chip players at times as well. That's what ultimately blew up the likes of situational awareness, who were very long hardware and very short software, and things flipped pretty quickly in the last month or so. Where do you see things going from here? Where does the leadership come from? Surely you don't believe that everything in tech just keeps on rallying the way it has been.
No, there's definitely going to be more selection here. I mean, this was sort of clearing charts. Like, you went through 50 and 200 days in the last 2 weeks, which you really needed to do to clear the charts of the deteriorating, software companies. So we cleared it. I think for the most part, it's likely to be from the hyperscalers and less on the chips, in part because the chips have come so far, and there is that lingering question, what you quoted here, which I said, which is they're funding the balance sheets and the P&Ls of 20% of the S&P very clearly. And we know that markets trade on the rate of change. At some point, there's going to be a question, can you grow earnings 1,000%? Are you growing earnings 20% instead, which is still excellent, but it's not growing 1,000%. And there's a reason some of these chip companies are trading in the single digits, because the street just doesn't see this going forever. And I think that's where you're going to start to see the differentiation. You still haven't cleared the parabolas. That's an issue. So I think you're probably getting it to the unloved companies. And since November 1st of last year, that whole panoply of large cap tech has been terrible. It's underperformed the S&P, it's underperformed the Russell, it's underperformed international, it's underperformed emerging markets, and I think that gets reverted to here. I think the chips, while benefiting, and the investment cycle can go for a long time, 18 months more, 3 years maybe, who knows actually. Eventually the growth rate is going to slow. on the earnings for those companies.
How much is the success on return on investment in the likes of hyperscalers and software going to come at the expense of OpenAI and Anthropic? And I say this because it could be a volatility-inducing event when they try to IPO, if they try to IPO, given some of the noise about exactly what this model looks like and how much of a moat they have over something that's increasingly open model.
Look, it's very unclear. I mean, there are many people who think the models are converging. So the latest for one LLM over another, they're starting to look very similar. And I think that is the question for those business models, right? Like, you know, if you can't differentiate, then, you know, what's the value? On the other hand, I know everybody uses all of them. And so they seem to be terrific. Also, if you just look at the revenue growth rate, I mean, the revenue is compounding for both those companies at an extraordinary rate. We're talking close to $100 billion for each, coming off of zero 3 years ago. So the revenues are astounding, compounding at an astounding rate.
So you don't?
I think they'll be successful.
Do you think that the doors are still as wide open for IPOs, for raising money in the equity and debt markets now as they were 2 months ago, at a time when there still is a huge bill coming for all of the build out here?
I think that we're going to have to see some of the lockups on some of the marquee IPOs to kind of clear the deck a little bit. You know, in the end, you want the IPOs to be successful and not break price. And if you break price within a week or two, that's an issue. And I think that's why you've seen a slowdown in the calendar, right? And then you have
because of SpaceX?
Because you have to get through the lockup. You have to get through the lockups here. I don't think there's too much capital coming to the market. The S&P is $60 trillion. I don't think the IPOs are too big. I think there's a massive wall of capital coming to this, not just in the U.S., but globally. You know, we're hearing from our iFlow team, there's massive, massive buying of U.S. equities globally, because where else are you going to go with that wall of money? Other markets are simply not big enough. So I'm not worried about the dollar amount, but there is that marketing thing, right, where you want it to be successful, and I think the markets have to calm down a little bit on the previous
Credit
IPOs.
to Alphabet for getting ahead of some of this. The additional supply, to your point, on SpaceX, Anthropic on the horizon, OpenAI. Just the reporting we've seen around OpenAI, potentially pushing things out to 27, maybe beyond, I don't know.
Yeah, and potentially because of some of the concerns around the capital raise with respect to their model, competitive pressure, et cetera. At the same time, it seems like a lot of people are pretty ambitious on their goals.
It looks like both are winning. Like, it looks like everybody's winning. You know, it doesn't look like one's, they're all winning.
You get a prize, and you get a prize.
That's what the last 4 days has felt like in the stock market, right?
I'll take it. You know, it's been a good change.
Alicia, it's good to see you.
Great to see you guys.
You're one of the best. Appreciate it. Alicia Levine there of BNY Wealth. Let's get you an update on news worldwide this morning. Back with us with your Bloomberg brief is Vonnie Quinn. Hey, Vonnie.
Hey, John. Thank you. President Donald Trump says a deal to reopen the Strait of Hormuz could be announced as early as today, with talks with Iran, quote, moving along very nicely. Axios reporting the US, Iran and Oman are preparing to announce a 60-day agreement on shipping through Hormuz. Blackstone is exploring a second mega debt package to finance Anthropic's use of Google AI chips. Sources telling us here at Bloomberg one initial proposal was for at least $36 billion worth of debt. If it were finalized, the deal would exceed the debt lined up by Apollo and Blackstone roughly 2 months ago. Uber shares down almost 3% at the pre-market, the company's gross bookings falling short of the high end of Wall Street expectations. Uber citing currency headwinds and fierce competition in international markets weighing on trip volume, which grew 18% nonetheless in the second quarter. And that is your Bloomberg brief. John.
Vonnie, thank you. More from Vonnie in 30 minutes' time. Up next on the programme, pushing the midterm agenda.
As far as the Republicans, they've got to get tougher. They've got to talk, and they've got to talk about how well we're doing. The food, the groceries, it's all coming down. We've done a great job. You know, I think we should be given an A+ on the economy.
Arianna Salvatore of Morgan Stanley joins us next, live from New York City this morning. Good morning.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
So 24 hours full of superlatives for this equity market. On the S&P 500, 4 days of gains again, very close to 6% over that period. On the Nasdaq, up by 1/10. Within the Nasdaq, some massive moves for semis and for the hyperscalers too. In the bond market, 2s, 10s and 30s shaping up as follows. Yields this morning slightly lower at the very long end. Still struggling to find many people who want to buy the 30-year. 30s are right now around 516, down a single basis point. As we've said repeatedly in the last 30 minutes or so, really interesting conversation with Ashok over at Neuberger, making the point, Ashok Bhatia, that he would prefer buying hyperscaler debt, 30-year hyperscaler debt, which, just thinking about that, where's tech going to be 30 years? Never mind a year away, I've got no idea. He'd rather buy that than the 30-year Treasury.
Yeah, and what's interesting about this is that he actually thinks that there is a case for the Federal Reserve to be on hold. He doesn't think that the Fed should be hiking rates. This isn't a question about Kevin Warsh. And
no, he's bullish disinflation.
He's bullish disinflation, and still he won't buy the 30-year Treasury, which just gives you a sense of how much reluctance there is for people to have a conviction behind Washington, D.C. and the fiscal picture going forward.
You mentioned Kevin Warsh. Let's talk about Kevin Warsh. This from Torsten Slok over at Apollo. I'll share the note, the morning note with you right now, and then we'll get into it. Warsh is right. He goes on to say, Fed Chair Kevin Warsh has been unfairly criticised. The decision to eliminate forward guidance isn't reckless, it's pragmatic. It stops policy inertia and restores real market signals. It ends false certainty. The bottom line is that Warsh's logic is sound. Cleaner data signals are better than false certainty, and the Fed gains flexibility. Torsten, you're a long-time friend. I would say this if you were here. Who's this for? Because no one really thinks that he's wrong for removing forward guidance. I've not heard that from many people at all.
I would argue people are trying to disentangle the gut aversion to the press conference and some of the commentary and the criticism immediately after that to what are the issues that are dividing us. And I think Torsten Slok puts his finger on it when he says this is a question of what is the cost for having a lack of clarity from the Federal Reserve. And in Torsten Slok's opinion, it is volatility. And ultimately, there are a couple of key questions emerging from this. Is volatility good, healthy for the economy? Does it kind of beat out some of the excess that could potentially cause easier financial conditions? Or is it a cost that is punitive? And I think that Torsten Slok's coming out on the punitive side. And the other question is, what is the better way to regulate inflation, the front end of the yield curve or the long end of the yield curve? And these are the questions that people are trying to parse out in the absence of hearing from Kevin Warsh.
What's the question you're trying to answer? I refuse to engage in this debate, and I'll tell you why. This is not the debate that the critics of Warsh are having. They're saying we're drawing a distinction between guidance and reaction function. He's not providing either right now. I'm okay moving to the post, going back to the pre-GFC world of a lack of communication. Park that. There's no argument over that. I don't hear anyone on Wall Street complaining about that.
Nobody is.
But I keep seeing piece after piece saying, stop complaining about the end of forward guidance. There is no complaint about the end of forward guidance.
I would agree with that.
It's a complaint about a refusal to articulate a reaction function at the top of the Federal Reserve when the rest of the committee are willing to do so.
How do you create an argument when you talk and try to create a distinction between forward guidance and a reaction function and people say you're a crybaby? Well, you try to come into what the ultimate debates are, which is volatility inherently good? Is it better to have the long end or the short end? And let's move away from calling people names.
It's impossible to have this debate right now because you're
Correct.
sort of complaining about one thing and they're like, you're an idiot, you're upset about this. And you're like, no, I'm not upset about that. It's about this.
I don't disagree with you.
We're going to do this all year?
Well, I don't think so because we are getting a reaction function from other Fed officials, and so at least there's that.
The president has offered his views on where the US economy is right now. He's got his own views on what it should be graded to. Under surveillance this morning, pushing the midterm agenda.
As far as the Republicans, they've got to get tougher. They've got to talk, and they've got to talk about how well we're doing. The food, the groceries, it's all coming down. We've done a great job. You know, I think we should be given an A+ on the economy, but I think that's coming. People are starting to talk about it. Our country is rocking and rolling. We've never been this successful.
Here's the latest this morning. The president touting the U.S. economy as midterm primary results roll in. In the crucial swing state of Michigan, the Senate Democratic primary between progressive Abdul Al-Sayed and Representative Haley Stevens still too close to call. Aaron Salvatore of Morgan Stanley writing, "We think Democrats hold a slight edge, but the Senate map remains a major structural headwind." Ariana joins us now for more. Aaron, good morning. It's good to see you. How is the stage set for this economy into November, and what does it mean for voters at the moment?
Yeah, a lot of things to unpack there. Obviously, the economic picture is one of an aggregate of different indicators, right? So if you look at things like inflation, we're expecting more disinflation throughout the remainder of this year. If we look at things like consumption, the overall sentiment is not great. We're a little bit higher off of the low lows, but we don't think that really translates to spending intentions. We still see relatively robust consumption this year, around 2%. We just revised that up from 1.7%. You know, the labor market's still relatively sideways. So all of that paints sort of a decent picture for the economy. We call it a benign macro backdrop. That's not the only thing that matters to voters. Obviously, affordability a top concern. But aside from that, we see prediction markets, we see polling, we see the presidential approval rating, all signaling a more favorable environment for Democrats come November.
I remember thinking that Biden would get battered in the midterms into that November a few years ago, and it didn't happen the way people thought it would. What's the lesson from then, and how might it apply to this situation?
So 2022 was actually really similar to this midterm election. If you think about it, we had an energy shock in February of that year, right? And then the structural, the map, the Senate was really what was important in that election. There were some anomalies. Remember, we had the Roe v. Wade decision leaked, which energized turnout among specifically women and college-educated voters. So I think that is what allowed the Democrats to maintain the edge. But back to the structural sort of dynamics here, the map is really important. And with this progressive win we saw in Michigan last night, that makes it really challenging as a general election seat for Democrats to flip, right? And that's going to be kind of the key point between Michigan, North Carolina, Georgia, races for November.
What are the main issues? And I'm thinking specifically of the hyperscaler build out and some of the energy plants and this concern about the cost of living that could potentially be tied to artificial intelligence. How much is that present in some of the discussions with constituents?
Extremely present. And this is probably the biggest wedge issue heading into the midterm elections, right? We know AI is unpopular. We know specifically among younger voters. So 18 to 29, something like 60% are worried about job displacement. But when we look at the data center build out specifically, the concerns are really threefold. So first is quality of life, right? So no one likes to see large scale construction in their neighborhoods. Second is around water usage, which we find to be a little bit less well-founded than some of the other concerns. And then, of course, electricity inflation and what you're paying for your utility bill. That is more a phenomenon at a regional level rather than national, but it's certainly part of the discussion and part of the reason we're seeing this real political constraint in building out these data centers.
Well, so how much of a political constraint will this be? Because so far, the White House has been behind a lot of these efforts and saying we have to maintain a dominant edge. How much will it constrain some of those policies that have enabled the build out so far?
So, look, we think there are ways to mitigate it. We think there are certain concessions that hyperscalers and other companies can offer these communities, whether that's, bonuses to local community engagement, or whether it's some sort of a large load tariff or commitments to grid modernization. We think there's enough they can sort of promise and provide to facilitate the build out, but that's importantly why we think it's conditional. We don't think this is going to be a uniform kind of one size fits all approach across the country. And what that leads to is basically a bifurcation between regions that allow data center development and regions that do not.
Is the left tripping up on the national stage? Are you seeing sort of the highly progressive members, and I've noted a few, I've seen a few in the last 24 hours, struggle to articulate their view and being sucked into major issues that have nothing to do with local ground issues? Have you noticed the same thing?
I think what you're seeing is an amalgamation of concerns among the voter base. And right now, if you look at the Democrat Party, there's no clear frontrunner for leadership, right? So we don't have a clear person that's ahead of the other candidates when it comes to even the 2028 election. So I think Democrats are right now going through a really important phase of sort of self-discovery, right? So figuring out which policy paths are the ones that are going to resonate with voters. And remember, this is an election that's the pretext to 2028. So this is the important time to sort of have those debates and those discussions. I think it's experimentation. And we'll probably see it on the Republican side as well once Trump steps back.
Arianna, it's good to see you. Thanks for being here. Arianna Salvatore there of Morgan Stanley. I've noticed the same thing. I've been seeing this play out. I understand that the issue right now is affordability. So why is the debate about the situation in the Middle East? Why is that such a key feature of the views of certain individuals running for state-level politics? Why has that become one of the key issues?
You know, this is a real question for the Democratic Party, and I do think that the Michigan primary is going to result in a general election that's going to be a tell for exactly how viable some of the Democratic Socialist candidates are going to be come the fall. I mean, this is going to be a real question. Ultimately, my one question is, who cares about the deficit? Which party is going to come out and say, we need to stop issuing so much debt, we need to curb spending so that we can fix all of those people who don't want to buy our 30-year debt?
So you're half joking, but you've touched on the issue with regards to the deficit. Only when that actually becomes an issue that buys votes,
correct,
will it be an issue that's dealt with. And it's nowhere near to becoming that issue.
I talk about it every night with my kids, and they don't seem to care. They, in fact, shut their ears. But, you know, I'm becoming my grandfather who said, oh, you know, the deficit. But this is going to be a real question going forward for a lot of different market participants.
You actually debate this at dinner time?
I try to make them interested.
Do you really?
I do.
I
try to tell them that they have to play an active role in understanding the financial backdrop.
Well,
of
the
our
oldest is
country.
into the bond market, so, you know.
Even he shows, you know, totally tunes me out.
He's more constructive. He's less sort of bearish on things.
Yeah, at this point, he's like, Mom, it's August.
Right, OK, fair enough. But you're trying.
I do. I think it's important for them to be active participants and knowledgeable.
The next generation. The next generation of fiscal hawks.
They're gonna adopt a very tough situation, and I want them to be, you know, savvy.
Up next, Brian Webb at the TCW on Wall Street's massive push to unload billions in AI data center debt and what the Bramo family has got to say about it.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe. I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie. This is your opening trade.
Only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
Equity futures this morning up nicely, up by another 0.4%. What a rally we've seen in this market. Biggest one-day gain going back a number of months on the S&P 500. A four-day rally of close to 6% on the S&P, and a major move for some of the biggest companies on the planet. On the Nasdaq this morning, up by 0.14. Record high on the S&P, record high on the equal weight. In the bond market, 2s, 10s and 30s. Data yesterday on the headline, job openings a bit softer. Beneath the headline, to Lisa's point, things were a bit firmer. Hiring was okay, quits weren't too bad. All of that points to a labour market that's still doing all right going into the jobs report on Friday. Yields this morning around 460 on 10s, 420 on 2s, north of 5% on 30s, and a big conversation on this programme all week and in the last month or so about what it would take for the buying to come back in.
Is this really just a matter of the Federal Reserve and questions about their commitment to potentially raise rates in the face of inflation that's above target? Or is this an issue of the fiscal overhang, of a question of competition for capital, and a question of a global story where we're seeing yields in the long end creep higher? And if that's the story, it's going to be more than the Federal Reserve. It's going to take the attention of people in Washington, D.C. to maybe make a real difference when it comes to the real yields on some of that longer-term fixed income instruments.
You've got a massive competition for capital, persistent 6% budget deficits in this country, and a Fed chair that's open to the idea of letting yields run. And on top of that, more recently, the prospect of spillover risk out of Japan. It's a long list of things to worry about if you're the Treasury Secretary right now, which speaks to why he's been so active in the past few days.
Yeah, and possibly why he's gotten an opening to be active in this way, particularly with the dollar potentially taking a hit in the face of some of these concerns. I do wonder, though, if you do get people coming back in, if you have a Fed that hikes rates, or if this is something more existential that requires the attention of someone down there.
Lisa, everybody, raising the next generation of fiscal hawks down in Washington, D.C.
Actually in New York City, but maybe they'll have
Thank you, Bramo.
Anytime.
Thank you for your service.
I don't know if it's actually sticking, but I'm trying.
I'm not sure if that's because they're going to fix the issue or just be aggressive bond bears when they're older. Whatever it's going to be great to watch.
Yeah, well, thank you. I appreciate that, hopefully.
2 hours away from the cash open. Let's get you some single names, some stock moves this morning. Yahara has more. Hey, Yahara.
Hi, John. We have a flurry of earnings to get through, and all reinforcing this idea that we have a very strong earnings season underway. And we start with Eli Lilly, shares up nearly 5% in the pre-market after the drug maker gave investors exactly what they were looking for, and then some. It beat on earnings and revenue, raised its full-year sales outlook, and the launch of its new obesity pill is off to a very strong start. That is especially notable because Novo also came out with one, launched one last week, and it didn't go as well. So Lilly remains the one to beat in this obesity drug race. Turning to Disney, those shares up nearly 4% in the pre-market after its biggest businesses, entertainment and experiences, delivered. Streaming keeps getting more profitable, and in a testament to consumer strength, the parks business saw strong attendance and spending, all of that contributing to a solid earnings per share beat by Disney. And we are seeing Shopify shares surging 25% in the pre-market after delivering the kind of quarter investors had been looking for, especially amid the sour sentiment around software, which had led the company to fall 20% year to date heading into its earnings. The e-commerce company beat estimates across the board, though, with revenue growing 34%. It expects growth like that in the coming quarters as well. Merchant sales also topping expectations. John?
Yahara, thank you. More from Yahara in the next hour. On our radar this morning, the president claiming a deal to reopen the Strait of Hormuz could be announced as soon as today. Axios reporting the US, Iran and Oman are preparing a 60-day agreement on shipping through the waterway. Elsewhere, shares of SpaceX sinking in the pre-market, higher than expected spending on AI outweighing a strong earnings report. The CEO, Elon Musk, doubling down on the company's plans, expecting the, quote, cadence of AI development to accelerate dramatically. Stock is down 12%. And finally, Ken Griffin's flagship Citadel fund surging nearly 6% in July, thanks in large part to its purchase of a discounted AI stock portfolio from the hedge fund Situational Awareness. The transaction helping to boost Citadel's year-to-date gains to 12%.
How about this for a statistic? That fund had only been up 0.45% as of July 24th for the month. And then it ended up about 6%. So it gives you a sense of how much they gained on the other side of this. I keep going back to Ken Griffin's reputation as sort of the grim reaper of people who are failing in the face of high leverage. And it just shows how this shakeout has really caused some winners, even if you have seen situational awareness become strategic ambiguity.
And nice work if you can get it.
Exactly.
There was a quote that I saw from Kenny G more recently, which is good things come to those who wait, but only the things left behind by those who hustle. And that kind of speaks to Citadel and Ken Griffin pretty well, I think.
It also speaks to their balance sheet, that they have the capacity to do this at a time when other people might not. Again, it goes to the underlying question, is situational awareness an anomaly or a representation of more pockets of leverage and excess that need to be worked out in the next couple of months?
This market moved pretty quickly in the last month. Lots of debt coming to market too. It's a big theme for this programme. Wall Street pushing back on AI's massive borrowing boom. The Financial Times reporting a group of banks are planning to offload $15 billion of debt tied to a Google-backed Anthropic leased data centre. Brian Whedon of TCW writing, cost of capital is rising and hyperscaler spreads are significantly underperforming. It's still hard to see winners and losers in this arms race. Brian joins us now for more. Brian, good morning. It's good to see you.
Good morning. Thanks for having me.
I want to give you some time just to sort of paint a picture for our audience. How much this market has changed in 12 months with the increasing involvement of these massive tech companies?
It's like, close to 30 years in the business, like nothing I've ever seen. Basically, these financing arrangements for these data centers have gone from 0% of issuance in the debt market to about 20% in the corporate bond market today. And the point we're trying to make is that, traditionally just supply demand in anything, but in the bond market, supply demand. An issuer or a group of issuers in an industry come to market and they borrow a lot of money, and eventually it's too much. And the bond market says, whoa, that's too much. Instead of charging you 5%, we're going to charge you 6%. And then the borrowing goes down. Instead of 6, we're going to charge you 7. And eventually you just choke off that borrowing, and the laws of supply and demand just kind of settle in. In this case, you're talking about the largest companies in the world, these hyperscalers, and their balance sheets going into this were pristine. You're talking about the U.S. government and what happens to the long end of the curve because of fiscal responsibility. Like, these balance sheets are rock solid, and they can absorb this debt. And when you say to them, when the market effectively says, whoa, you've borrowed $250 billion year to date, that's too much. We're going to charge you not 5, we're going to charge you 6. Oh, wait, we're going to charge you 7. You know what they say? We don't care. Because the extra cost to borrow that money, it's not the cost of the capital that's important to us. It's just getting that capital. And we've never seen that in the bond market. And so what I would say is, initially 18 months ago when these deals started to come to market, they'd come with a little extra spread and investors would get excited. And now as spreads have gone wider and or yields have gone higher, the bond market is getting very soft. And I'll give you this stat here, and we can talk maybe about not just these unsecured deals, but the secured, these structured deals. But with regards to the issuance, these are the most pristine balance sheets in the world. Year to date, the average spread on the corporate bond is unchanged. 72 basis points over treasuries. We're pretty much unchanged. This hyperscaler group, your Microsoft, your Googles, your Metas, your Amazons, 50 basis points wider. 50. They used to go trading from tighter than the average corporate bond to much, much wider. And we've never seen that. But again, as you're going to see, they keep coming to market.
Do you think we're close to the point where that additional supply, other people have to pay the price for it too? To your point about how things have been priced, hyperscaler debt relative to what IG spreads have done, are we at the point where this starts to blow out spreads at the index level?
Not yet. And what I would just say is the metrics I would give you, it's a higher cost of capital, these hyperscalers, but because the index is unchanged, If you're doing something else, if you're running a waste management company, or you're doing something in cable, you're still operating at about, or borrowing at about the same levels you had, when you started the year. However, it has set the market up to be vulnerable to something else happening that we're not seeing. And so I would say, if it's a slowdown in the economy, or a recession, or maybe something fundamental in this AI trade kind of takes a turn that no one's expecting, because there's so much supply and the market feels vulnerable, it's probably more susceptible to much higher borrowing costs across the economy.
If I'm selling a bottle of water and we're on a desert island and that person's going to give me everything that they possibly have because they need that bottle of water, well, I would charge everything.
Yeah.
Why not just charge 10%? Why not just say we're going to boost the spreads to such a degree because you're still going to keep coming? What's the obstacle from spreads going that much wider on hyperscaler debt? Because it seems like a price-insensitive buyer. That is time to say ka-ching.
Yeah, I would say this. First of all, that's a great point. I'd say, in the last few years, there's been an influx and a much bigger presence of like insurance money, in the market. And so I would say the good news for the hyperscalers year to date is that there's much more interested money that can not just look at spreads, but they look at all-in yields. And so while we've had this increase in issuance, which has widened spreads, because of other factors, primarily what's going on with energy costs, yields are higher. And so some buyers out there, a lot of these insurance monies, they're not really necessarily looking at spreads. They're just like, what is my all-in yield? And so it's been attractive to them, and they've stepped in to absorb it.
We were talking with Ashok Bhatia earlier. We keep referencing this conversation. He said he'd rather buy this hyperscaler debt, 30-year hyperscaler debt, than 30-year government debt in the United States. How common is that?
I agree with the statement. I would say, the issue first of all, you were talking earlier, there's two issues in the bond market. On the long end, it's the fiscal issue, and that's going to have what happens with the 30-year. In the short end, the 2-year and the 5-year, that happens. The concern there is what's the Fed going to do with inflation, et cetera. I would say, kind of word of caution is that these 30-year hyperscaler debt, first of all, you've got the debt that they just issue off their balance sheet. Traditional bond debt, that looks attractive. It's wider year to date. Then you've got close to $400 billion in the last couple of years of this structured debt that comes with a lot of different bells and whistles. It comes with a lot of risk. You're selling liquidity. There's a lot of complexity to it. And yes, you're getting extra yield premium. But if we hit this squishy point in the marketplace, you could see that start to unravel, and there could be quite a bit of selling and dislocation.
We've talked lots about companies. You mentioned spreads.
Yeah.
You mentioned all-in yields too. We've talked about this a number of times on this programme. All-in yield is pretty attractive for a lot of investors right now. And within that all-in yield, there is this very small corporate credit spread. The bigger and bigger proportion of that all-in yield is the Treasury.
Yeah.
And from what I just heard from you and heard from another guest earlier this morning, is you believe the risk might be there and not here. Can you just walk us through that, why people would be willing to pick up this credit at minimal additional spread and step away from the Treasury? Because we're struggling to find people who like the long end of the Treasury curve. What is it about Treasuries right now that is so unappealing?
Well, the thing with Treasuries, particularly in the long end, it's regarding the fiscal question, right? And, this week we heard that there's not going to be any real change in coupon issuance, but the market's concerned that that's going to go higher, and inevitably it will be. I mean, I'll just give you a stat here. We just crossed, this fiscal year, the U.S. government's going to pay over $1 trillion of interest costs. That's 3.3% of GDP. That's up 3 times from where we were in 2020. So there's a real concern, and the term we're looking for in the bond world is a steepening. That maybe the front end of the yield curve is going to stay anchored close to where the funds rate is, which will be determined by kind of near-term economic and inflation prospects. But the long end, that could become unanchored based upon fiscal situations. And so that's really the concern. Like, the 30-year is going to be driven in large part upon where the deficit goes. What I would say, though, with regards to spreads, I would say that is kind of a short-sighted approach from investors, accepting very minimal extra yield over Treasuries. And the reason I say that is as typical late cycle behavior. You kind of get into a cycle, there's a lot of euphoria, and people are willing to be paid very little to take that extra risk. And not only paid for the extra credit risk, but also for selling the liquidity.
You described this as late cycle, and I want to pick up on that and tie it back to what you were saying with some of the structured products that are making you feel like a lot of bells and whistles, very creative.
Yes.
Do you think people are getting to the overly creative stage? This is something John was asking about yesterday.
Yeah, I appreciate it. Let me just going to break this down to two. This is how typically hyperscaler debt. It's Google, it's Meta. Okay, let's look at their balance sheet. Let's underwrite it. Very little leverage. I'm willing to take very little compensation over Treasury. That's probably the right way to look at it. This structured debt, okay, it is very unique and it is very creative. And our friends on Wall Street, they can create very interesting products. So two primary risks in this situation. So unlike a traditional hyperscaler debt corporate bond, you have two risks. First, you have construction risk. So you lend this money, and these big deals we've seen come out, Beignet and other things like that. And there's a construction period. And here's the thing. Construction, whether you're building a home, an office building, or a data center, it could take too long or longer than you expect, or it could cost more. And so while you may lend money thinking, oh, I've got Meta on the hook for the lease payments once they come in, there could be 1 to 2 years until Meta comes in. And so who is going to cover the extra cost if it occurs? If it's Meta, great. And those bonds have come out and usually get investment grade ratings. However, usually who covers that cost are the owner of the property that you've never heard of, or the construction company, which may be investment grade, maybe below investment grade. So that's the first period you have to get to. Once that's done and construction's completed, you're like, as a bond lender, you're like, okay, I'm ready to move on. Now I got Meta in. What the market's really starting to focus on now is Meta at the corporate level guaranteeing those lease payments? Or, and this is the nuance, in some of these deals, these large hyperscalers are not the direct lessee. There's someone in between the property and them, okay? And so the question is, first of all, even if Meta is guaranteeing that or other hyperscalers, how are they accounting for that in their balance sheet? These kind of once-removed situations are typically not recorded as operating leases, which your first-level CFA analyst can understand and account for. A lot of times they're buried down in the footnotes and maybe not called what you would expect them to be called, and they're not the number is not exactly what you would expect. They're kind of discounted, and so there's a risk there. So late cycle behavior. Sometimes you got investors who can underwrite this entire kind of life cycle of this investment and understand the risk and price it appropriately. But to your point on late cycle behavior, often because these bonds are offering extra yield, you get a lot of tourists in here, and we don't think that a lot of these participants understand these full complexity of risks. And I'll end with this. If this AI journey takes an unexpected turn, these bonds, $400 billion of it, if they are held by some tourists and we hit a bump in the road, you will most likely see massive selling in this area, which could make cheap bonds even cheaper. And so from our perspective, there is some interesting bonds to buy. We've been dipping our toes in the water, but for the reasons I've articulated, we're going to wait here a little bit because we think they're more likely going to get cheaper before they get more expensive.
The downside of live TV is ending conversations like this one because of time, Brian. Appreciate it. Thank you.
Thank you.
A lot to go over there. Brian White in there of TCW with an update on news worldwide. With your Bloomberg Brief, here's Vonnie Quinn. Hey, Vonnie.
Hey, John. Thanks. Oil rising as Yemen's Houthi rebels renew threats against Middle East shipping. The Iran-backed militant group saying they'll escalate attacks on Saudi vessels in the northern part of the Red Sea, an important alternate route to the Strait of Hormuz. Shares of Prudential and HSBC are tumbling in London trading after China expanded its tax rules. Mainland authorities are now hitting Hong Kong policy returns with a hefty 20% tax rate. An out-of-control SpaceX rocket colliding with the moon, hitting it with the power of 3 tons of TNT. The crash leaving a crater behind on the surface. Scientists will study the crash to understand safety risks they might pose for any astronauts living there in the future. That is your Bloomberg Brief. John.
Hey, Vonnie, thank you. Up next on the programme, restoring inflation credibility.
The Fed's walking a very fine line here. The chair will look increasingly isolated from the rest of the committee.
We're banking on the rest of the Fed trying to reestablish some of the inflation credibility.
Up next, Colin Martin of Charles Schwab.
anything we do in Africa is going to be more risky than the U.S. I think the approach we want to take is how are we being compensated for that risk? And one of those is obviously going to be a valuation question. In our minds, valuation was a lot more attractive in Africa, even if we adjust for some of those Africa risks that a lot of Western investors see. So yes, in a lot of ways, you take some of those models that, as I said, might be more asset medium or asset heavy. There might be some more inherent risks. However, if we're saying we're adding some risk because of that kind of model, but we're now solving a core problem as opposed to maybe a nice to have solution in Africa, that might actually offset it. Where if you're solving something that people really absolutely need and can't live without, in a way that then that's a lot less risky. So again, we'd encourage investors to have a less binary view. In other words, the US isn't risky, Africa is risky. That's going to lead to a lot of complications down the road.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Equities this morning up another 0.4 on the S&P. The Nasdaq just about positive by 0.25%. Under surveillance this morning, restoring inflation credibility.
The Fed's walking a very fine line here. The chair will look increasingly isolated from the rest of the committee.
I can't imagine a situation where the chairman allows himself to be outvoted by the committee.
We are so grateful for those Fed speakers who are willing to explain their reaction function.
We're banking on the rest of the Fed trying to reestablish some of the inflation credibility.
So here's the latest this morning. The Kansas City Fed President Jeff Schmidt calling for tighter monetary policy to tame inflation. Investors looking for clues from Fed speak this week on the central bank's next move. Colin Martin of the Charles Schwab Center raising his expectations for the 10-year yield to 4.75, writing, with any potential rate hike likely to offset last year's so-called insurance cuts, long-term yields should remain elevated. We see more upside risk than downside risk with long-term yields. Colin joins us now for more. Colin, you are not alone. Good morning.
Morning.
The aversion, the visceral reaction we have from people when we ask them, do you want to buy 30s, even if they see a path for disinflation, the pushback we've been getting, it's quite remarkable. When does it become a screaming buy?
Yeah. Well, actually, if we're talking long duration, I'm more interested in tips. But we're not there just yet. You have to acknowledge that when you buy a long-term investment, specifically something with 30 years, it's very risky, just over the short run. So that's something that we're always considering. But at some point, we think these yields will look a little bit more attractive. We're just not there yet. So we've upped our outlook for long-term yields, but we acknowledge there's more upside risks than downside risks. So we're thinking about the potential experience from our clients at Schwab if they were to go buy a 10-year or even a 30-year, and then we say that we see the 10-year test 5% or the 30-year test 5.5%. It's a bad experience. We'd have to explain, obviously, there's a difference between short-term price fluctuations if you're a buy and hold investor, but we're just not there yet. Also, we just don't think anyone's going to miss the opportunity. You know, we think we're in this higher for longer era right now, and we think yields are going to fluctuate for a while. If you look at the 10-year over the past 3 years, a team at Schwab, we were talking about this yesterday, it's held in this tight range for about 3 years now, and we just think that might continue. So rather than having to do it now, we think there could be opportunities if they continue to increase, or once we get a little bit more clarity about what that path of Fed policy is. And that's a double-edged sword, clarity on Fed policy.
Well, hold on one second. Is this an issue of Fed credibility and Fed action or inaction, or is this an issue of the deficit?
The deficit hawk right here.
I'm trying.
No, I think it's a little bit of everything.
Because there's no one else.
I don't think it's a credibility issue. It's all we hear about these days. I think it's too early to say that. You know, after last week's press conference and the lack of anything you can say from Kevin Warsh, We saw yields rise about the credibility issue if the Fed isn't prepared to act. We don't know what his reaction function is, but we know what everyone else's reaction function is, or at least a number of the members. We just saw the quote from Schmidt this morning. We heard from the 3 dissenters. I really liked the way John Williams laid out his path of what we need to see. So credibility, I think it's too early to say there's no credibility. If we were to go on a few months or quarters and we see this still sticky inflation or maybe higher inflation and the Fed doesn't do anything, then we can talk about that. For now, I don't think it's credibility. I think it's inflation. I do think it's deficit to a degree on the long end. Historically, we haven't found much of a relationship there. Add that all together, though, higher rates at the long end.
What would you rather buy right now, hyperscaler 30-year debt or U.S. 30-year debt?
I'd still buy the 30-year. I heard the conversation before. At the end of the day, if we're thinking about long-term debt, are we worried about inflation over that period? Are we worried about the value of the dollar? If you're in hyperscaler debt, you're still holding dollars right there. In terms of a credit quality of the government, obviously we have these fiscal concerns. I think I'm still comfortable lending to the government right now. So over that long time frame, I'd probably focus on that.
Do you remember the rapid fire round of the real yield show?
I was literally thinking exactly of that.
That is the perfect.
It was such a good question for that.
That's the perfect question.
I was thinking of you.
With.
I was thinking of the real yield.
That's fantastic.
Would you rather?
Would you rather 30-year hyperscaler debt or 30-year treasuries?
I like that.
And when you ask them about 30-year treasuries, they're like 30 years is a long time.
Yeah.
For treasuries, the US government, probably going to be around in 30 years. 30-year hyperscaler debt? Got no idea if these companies exist in 30 years.
There we go, same page.
Right? It's kind of crazy.
Well, and also, you have to imagine you're still incurring the risk of the U.S. government, as you were pointing out, in addition to the risk of hyperscalers. At the same time, yield, it looks pretty good. I mean, the idea of 7% yield to get on investment-grade credit or 6.5% yield is enticing. So you have to balance the number of people who find that enticing with the number of people who are saying, I just want to scrutinize this document one more time. Exactly. How are we going to get there?
Yeah, for good reason. Colin, it's good to see you. Thank you, buddy. Appreciate it. Colin Martin there at the Schwab Center for Financial Research. Up next, Monica DeCento of JP Morgan, Andrew Honhorst of Citi, Nisha Patel of Parametric, Noah Weisberger of BCA Research. The third hour of Bloomberg Surveillance just around the corner.
At any point in your tennis career, did you say, I've had enough and I'm just going to retire at the top? You ever worry about that problem, staying too long?
It's a great question, and it's one that I think every athlete finds a different answer to. Mine came a little bit later than when I would have liked. I think stubbornness was a great quality that shaped a lot of my victories, but in the end of my career, I think it became a flaw because I was so stubborn to get healthy, for my shoulder to recover. I was also at an age where just my body didn't recover as quickly. And so for a year or two, that stubbornness got in the way of other great things in my life.
What would you say is the thing you're most proud of having done as a tennis player? Was it winning Wimbledon? What was the highlight of your tennis career?
I'd say consistency. I think consistency is, you can have results and they could, come at various times in your career, but I was consistent for many years, and you have to show up. You don't just show up to play first round of the finals, but you have to show up for press conferences before every match, before every tournament, and just the consistency and the mental wear and tear of showing up week in, week out. So I felt like I consistently showed up for my team, for my sponsors. As I look back, I'm proud of that.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream. And a lot of dreams are, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start on the third floor or the lobby. You actually have to start in the basement.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Bringing you the latest business news wherever and whenever it happens. I'm Scarlett Fu, reporting from America's biggest military shipyard. This is Bloomberg.
Earnings season has been pretty stunning.
This might be the peak of earnings.
Maybe 27 earnings are at their peak, and that could be the cause or maybe usher in more volatility for risk assets.
We've seen multiple companies up the CapEx spending that they have and get punished for that.
What is the market looking for? They're looking for that ROI.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the third hour of Bloomberg Surveillance starts right now. And your scores, the price action looks like this. Up again, adding some weight to the rally. 4-day winning run, higher by close to 6% over that period. This morning, higher by 0.4% on the Nasdaq, up by 0.2. Two names lagging this morning. One is SpaceX, the other is AMD. SpaceX is down by more than 10%. AMD down by 8%. Earnings underwhelming at AMD, spending concerning over at SpaceX, but we're shaking that off. And the conversation moves from earnings now to the economic data. Check out bonds, 2s, 10s and 30s. Yields this morning, just a little bit lower at the long end, unchanged on 10s, 461.27 on 10s, 30s of 516 and 2s, pinned around 420, heading into this, about 14 minutes away. ADP data, then it's on to the ISM later this morning, then it's on to payrolls later this week.
At a time when potentially there's greater volatility around some of this economic data, simply because there isn't a clear sense of exactly how the Fed is going to assess the incoming data in order to decide whether or not to hike rates. The labor market seems stable, although Citigroup's Andrew Hollenhorst put out a note earlier this morning talking about the JOLTS data, highlighting that churn, that low hire, that low fire type of dynamic that leaves us with a big question mark about how much inflation can potentially come out of the system tied to the labor market.
Andrew joining us later, suggesting that maybe some labor market weakness is on the horizon, together with the disinflation they're anticipating. They still believe this Fed can cut this year. It's a big call when a lot of the street right now, the overwhelming consensus is at some point between now and December, they're hiking rates.
I'm channeling Mark Cabana. You can't fool the bond, and you take a look at what's going on in the 30-year, and it seems to be saying that there are still concerns about just how disinflationary this market really is, or how rather inflationary it could be. Hard to parse, though, what we're actually seeing with the long end of the yield curve, as we've seen repeatedly throughout the morning. Nonetheless, this is going to be the debate. Is the Fed potentially going to have the room to remain on hold, not even to cut, but to just remain on hold based on some of the message that the market's saying, and frankly, other Fed officials?
There's a lot of runway between now and the September meeting. A few more payrolls reports, a few more CPI reports, a Jackson Hole meeting. We've talked about that. You'll be there at the end of August. This story can change a lot in a few months' time.
Yeah, a few months of data is going to make a big difference, and exactly how much markets regain steam after the washout of situational awareness. I keep wanting to call it the other name just because it
Where
does...
did that come from? Strategic ambiguity.
Every time I say situational awareness, I have
you
to
just think of strategic ambiguity.
Yeah, it just automatically. I don't know, free association. I mean, it kind of was strategically.
You could start a fund called Strategic Ambiguity.
I think I'd raise
aggressively short bonds. That's what you want to do.
I think it would raise a lot of money.
Bramo, I have no doubt you'd raise a lot of capital.
$10.
All right. I'll throw $10 in.
Thanks.
All right, we'll make it happen. Coming up this hour, we'll catch up with Monica DeSenza of JP Morgan Private Bank, with tech driving stocks to new record highs. Andrew Hollenhorst of Citi reacting to the ADP jobs number in just about 12 minutes' time. Plus, we'll speak to Nisha Patel of Parametric, saying it's a good time to buy bonds. We begin this hour with stocks extending gains past all-time highs following their best day since April. Monica DeCenso of JP Morgan Private Bank seeing more room to run, writing strong earnings growth means valuations are lower today than where they were at the start of the year. The market isn't just cheaper than where we started the year, it's cheaper than 5 years ago. Monica joins us now for more. Monica, good morning. It's good to see you. How explosive, positive has that earnings story been?
It's been really interesting because a year ago, everyone was saying to me, oh, it's just the Mag 7, right? It's just tech. And now we're seeing broad earnings strength, but you're also seeing broadening below the surface, where you're seeing most sectors now posting double-digit earnings growth. Really interesting this quarter, I think it was 7 out of 11, posting 9% plus revenue growth. So it's like, it's top line, it's bottom line, margins are expanding. Like, it is actually a very broad story, in spite of the fact that it still feels like a hated rally. And I get that question constantly, how can we be here, given all the noise? It's because of earnings, and that is the single best indicator when you think about when to buy equities. Earnings momentum, swinging higher still. You still want to be.
Is there a sentiment indicator in there as well for you? The fact that it's still such a hated all-time high?
Absolutely. I mean, it's the sentiment when I talk to people, so I feel that, the vibes, if you will. But then I still look at portfolios. Cash balance is still more elevated than I would argue they should be, and where clients tell me they want to be. So that's why every time you see these dips, I know what my clients are doing. They're adding and trying to get a little more exposure because they don't want to miss out on maybe not the next 40%, because I don't think we rallied the way we have, last couple of years, but still 5, 7, 10% over the next 12 months. So that's still a pretty interesting return.
Cash on the sidelines. That is a triggering comment for a lot of people. They say that's not actually true. It's not on the sidelines. It's invested maybe in short-term bonds, and that you're getting paid for it. So it's not necessarily on the sidelines. What is spurring people to want to move out of cash-like funds that are giving them income into, say, stocks? Right? What's still pushing people in that direction?
It's a couple things. I mean, one, there still is a bit of that FOMO, right? People see these returns of 13% year to date, and they say, okay, yeah, 5% feels good, but gosh, I could have just bought the S&P and made a lot more. But it's also about what are your goals? And if your goals are you're trying to compound wealth at like a high single-digit return, which is what most people need to do, you're not going to get there with cash. And so I have this continued conversation with our clients of where are we trying to get, reminding them, especially if you're worried about inflation, that cash is not going to work for you in an inflationary environment. I keep hearing the biggest concern my clients have, what if rates are higher? What if inflation is stickier? What if it stays here longer? That's not what you want to own if that's what you're worried about.
So is the stock purchase that a lot of people are making actually an inflation hedge? Is that increasingly where people's minds are?
To a degree. And then that goes to the next conversation of, well, okay, but you also get very nervous when the market gets bumpy. So are there better things that we could own, maybe have lower volatility but perform well in an inflationary environment? Then you have a conversation on real estate, infrastructure, hedge funds. Like, there are a lot of tools that have been left behind, if you will, the last few years because it haven't made sense. Yeah, there you go. That could be.
Done quite nicely in the last month or so.
Yeah, it's nice to be the Grim Reaper.
A notable blow-up in the last month. Some people have come on the programme, we're talking about situational awareness here, and indicated that was some kind of clearing event to set the stage for the rest of tech to start running again. How do you see that moment?
I think it's tough to say whether that was a clearing event or not. I do think, again, it's healthy to see the market digest, the market to rotate a little bit. We've seen some of these tech names bounce significantly, others still lagging. So I like to see that dispersion because that tells me the market's behaving more rationally. But I also just remind people, like, most of my clients probably own too much tech. They own a lot of it in the public side, they own a lot of it in the private side. So then you say, okay, if you still want to own risk assets, where is their earnings momentum? And we talked a bit about financials, saw an inflection point this quarter. Healthcare, we think, is going to inflect into 27, go from negative earnings to positive next year. Like, those are interesting areas to think about, especially with healthcare. It's a good diversifier to tech. So if you maybe own too much tech, it's
rotate away from tech right now, which piece of tech would you rotate away from?
I just look at where my clients have too much exposure. We still like the hyperscalers, but I probably have a little too much on there. So we've been taking some off there and then looking again, what has underperformed in tech? You look at semis, you look at parts of software. Cyber stands out. Like, AI is changing everything. It's making it a lot easier to have data breaches and for the bad guys to do what they like to do. And so I think when you think about software, what's sold off, that seems like an obvious area to think about.
You work with some of the wealthiest families out there, with family offices and other types of single individual and group investors. How worried are they about the political backdrop and some of the tax overlay that could potentially be coming to the fore as they decide where in the world to invest?
It absolutely is a concern because when you're talking individuals, most of mine U.S. taxpayers. So they think about it, they worry about it. I then have to remind them, do not panic ahead of the election. Midterms, we're probably going to see actually a balance of power, which is a good thing because that means probably nothing gets done. So that's our view right now, and that's usually a green light for markets. We looked back at prior midterms. You generally see markets rally after midterms. It's actually like high single, low double-digit returns over the last 40 years. Now, I don't know, again, we're coming in from a period of exceptional strength. Maybe it's not that much this time. But I do think, if anything, this is probably a midterm where you see less get done over the next couple of years. Going into the next administration, that's going to come up again. Big questions I always get, laws about munis, prefers, things like that. I just don't see any of that changing now if you see the power kind of moderate in November.
Does it change the balance of where they're interested in investing?
There's been definitely a shift with concerns about U.S. debt levels rising for my U.S. clients to look more overseas.
Wait, they care about the deficit. Sorry, carry on.
They say they do. Yes, I certainly get the question a lot, and they have been more open, I would say, the last few years to investing overseas. Coming out of COVID, I remember saying to people, "Do you want to look at Europe? Do you want to look at Asia?" Nope. We think the U.S. is best positioned coming out of this pandemic. They put all their money back in the U.S. Ended up being a good trade. Now they're more open to having a dialogue around European equities, Asia. And what's really interesting, they're willing to sometimes hold those in local currencies, so diversify a bit away from the dollar. And I think that's the same story of this long-term concern about deficits.
Monica, welcome back anytime for an extended segment.
Of course.
I'm sure Lisa will be very happy to talk about the deficit.
I think we could dig in. We could talk about
The
specifically
dollar bear
where.
market.
Yeah, well, look, I'm not calling for that. I just think that at a certain point it's going to matter. And the reason why I talk about it to my kids at night is because they're going to be talking about it to their kids at night when they have little infants. They're going to care about it. And at a certain point, when you have interest payments that cost the same amount as the Defense Department, you're going to start to wake up and notice. And when that suddenly also consumes all these other potential entitlements, then all of a sudden people are going to care.
They will have to care about it because they'll be paying for it. That's the problem.
Kind of my point.
And they'll be getting less back.
I know.
Less and less back.
I'm kind of cringing listening to myself because I really do sound like my grandfather.
For good reason. For good reason.
Maybe.
Monica, it's good to see you. Thank you.
you.
Appreciate it. Monica DeSenso there of JP Morgan Private Bank with an update on news worldwide this morning with your Bloomberg brief. Vonnie has more. Hey, Vonnie.
Hey, John. Thank you. President Donald Trump says a deal to reopen the Strait of Hormuz could be announced as early as today, with talks with Iran moving along very nicely. Axios reporting the US, Iran and Oman are preparing to announce a 60-day agreement on shipping through Hormuz. Citadel's flagship fund surging nearly 6% in July after the firm bought a portfolio of AI stocks from troubled hedge fund Situational Awareness. Sources telling us here at Bloomberg the transaction helped boost Citadel's year-to-date gains to 12%. AI models by OpenAI and Anthropic revealing more unsanctioned actions during security tests, including hacking a website and attempting to inject harmful code into software. The UK government's AI Security Institute saying both engaged in sustained, potentially harmful activity directed at real people and organisations during evaluations. And that is your Bloomberg brief. John.
Bonnie, thank you. Thank you very much. Up next, some ADP data for you, plus Andrew Honhorst of Citi here to react why this Fed can still cut interest rates this year, according to Citi, in just a moment. From New York City this morning, good morning.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anim, only on Bloomberg.
When do you start to see the monetization switch? And investors are basically betting near-term pain for long-term gain. But there is a push-pull point. You have to show it. You can't just talk it. You got to prove it, because it can't be the dog ate the homework every quarter.
Did we find out if he's in a yurt or not?
I don't think so.
I thought it was a hotel because of the fire exit sign of the corner.
Yeah, but it looked like a hotel in like one of those natural habitats.
Can you see Dan at one of those hotels?
He's probably in Southeast Asia.
Like the middle of nowhere?
Yeah, probably. No, with like an elephant
with, like,
outside.
Bears jumping through the water and stuff. That's where you'd like to go, right?
I've been there.
Have you done that kind of trip?
I have.
That's very cool.
It is very cool. I like bears. I know you hate them.
No, I don't hate them. I'm respectful of them,
okay.
Which makes me very scared of them, which is different than hating
All
them.
right, okay, I'm rewiring myself.
You're kind of like drawn to them.
Well, little bears are very cute.
Which is not safe, Bramo.
Okay,
when you see the little ones...
I know, there usually is a large one right behind.
Very nervous about that and not gravitate towards them.
ADP is about to come out,
I know,
so we can talk about that.
I'll take your direction. Equity futures right now in the S&P, positive by 0.4. That's the price action. Let's get you some morning calls. One stock in focus, SpaceX. First up, Piper Sandler cutting its price target, saying its AI cloud contracts are lucrative but could be cancelled. His second call from JP Morgan hiking its price target, expecting higher compute capacity and better monetization to boost AI revenue. And finally, Wells Fargo trimming its price target, saying it expects delays on hitting its ambitious targets. That name is down this morning by 11%. That's a single name for you. Let's get that economic data. The ADP number just crossed in moments ago. Mike McKee has more. Good morning, Mike.
Morning, John. It's a miss to the extent that you could forecast ADP. It's 44,000 jobs created during the month of July in the private sector. That is less than the 65 that was forecast. Last month's 98 revised down slightly to 95. What's really kind of interesting is you look under the hood here at where the jobs were created and or lost. Natural resources and mining lost 6,000 jobs. Could that be a cutback in oil drilling? Don't know at this point. Construction only adding 1,000 and manufacturing adding 2,000. The service providing jobs, as always, interesting. Education and health services, the leader, 36,000 jobs. That one has ratcheted down in both this survey and the non-farm payrolls survey over the recent months. But leisure and hospitality loses 11,000 jobs. Now, that's very unusual during the summer. Normally, you would see gains, especially for June and July, as they ramp up summer camps and amusement parks and people go out to eat and sit outside. So that's kind of one to watch when we get to Friday and see what's going on. The pay numbers from ADP, job stayers 4.4%, job changers 7%. So I guess the story is go find a job somewhere else. The question is, do people think they can? And that's what we've seen in those consumer confidence numbers worsening.
The green light to get a new job, Mike McKee. Thank you, sir. Not sure what Mike's trying to suggest this morning, but...
Guess, we may be here tomorrow, we may not.
Take it and run with it. Andrea Honholz, The City, writing this morning. We do not see risks that the labour market is retightening and becoming a source of upward pressure on wages and prices. Andrew joins us now for more. Andrew, good morning.
Good morning.
Certainly that ADP number would validate that view.
Yeah, a little bit weaker on the ADP. It's a pretty volatile number, but I would say in the context of labor market data, that's just in general been very volatile. So we had much stronger payrolls readings at the beginning of the year, had a weaker report in the month of June. We think we're in store for some weaker reports upcoming.
Goods, services, energy and labour, the sources of inflation. Labour's not really been a source of inflation over the last 12 months, not a major one. Anyway, the inflation is coming from other places. Where do you get confidence that that disinflationary path will continue, and where does it come from?
I'm a lot more confident now than I was even a few weeks ago after we had the June inflation report. You look at these various underlying measures of inflation, and there's always an issue when we say, which measure are you looking at, right? This is part of what came up in the press conference with Chair Warsh last week. But when you look at the various measures that we have of underlying inflation, most of them are telling us that inflation is slowing and it's not that far off of target. I know that's very different than a lot of people's perceptions of what's going on, but if you look at the actual data, you can look at a trimmed mean, you can look at a median, you can look at core CPI. Core CPI inflation is not an esoteric measure of inflation. This is one of the typical measures that anybody would look at to try to assess what's going on with inflationary pressure. 2.6% core CPI year on year. That's not far off of what would historically normally be 2.3%. And we think we're going to see that 2.3% number in the next couple months.
Why do you think it's going to continue going down, right? And this goes to the question of sufficiently restrictive and the faith of the path of some of the inflation reads. Why isn't it just a one-off tied to energy prices and a couple of other just comparative reasons for the disinflation?
Yeah, what's happened with headline inflation, that is a function of energy prices. They came up, that boosted headline, they've come back down, that's going to drag on headline. If you look at the core measure, though, we got a very weak reading for core CPI and core PCE in the month of June. That extreme weakness might not repeat, but what we saw in those readings, if you looked at the underlying data, was broad-based lack of inflationary pressure. You see it across all categories of inflation, a significant slowing in the month of June, in particular shelter prices. And I think go out and look at house prices, look at rents. These enter official measures of inflation with a lag of about a year, maybe a year and a half, and they've been very slow. So those shelter prices should stay slow. That's a key reason that we're going to have slower inflation going forward.
How do you then understand the move that we've seen down at the front end in terms of yields, or essentially pinned, and the rise in long end of the yields? It seems like the market is saying something very different to what you're saying. How do you interpret that?
So if you look at the market, and this is another thing that, again, maybe very different than how some people are talking about this, the market is not worried about inflation in the U.S. If I look at the market that assesses that most carefully, which is the market for inflation-linked securities. So if you look at inflation break-evens, if you look at inflation swaps, we are pricing inflation to be around 2% for the next 2 years. We're pricing inflation to be around 2% for the next 10 years. So this idea that higher, longer-term yields have something to do with a lack of Fed credibility and an expectation that inflation is going to run persistently higher, it's just not the case when you look at markets. The movement that we've had higher in long-term yields is in real yields. It's not in the inflation component, it's in the real yield component. And why are they higher? It's what you've been talking about all morning, and apparently with your children at bedtime, which is the debt and the deficit in this country.
Are inflation expectations anchored because people still believe this Fed will hike? If they believed your story, I wonder where they'd be.
We have a probability of a hike that's priced in, right? The Fed came into July. There was a 30% probability that they were going to hike coming into July. At some point, there was a 50% probability that they were going to hike in July. The Fed declined to hike in July. We got a very small movement higher in inflation break-evens, but staying really at low levels. So what I saw there was an indication that the market doesn't need the Fed to hike one time or two times, which is essentially what's priced in, right? 1 or 2 hikes from the Fed. That's not going to be determinative for inflation. The trend in inflation is not going to be significantly affected by the Fed being 50 basis points higher or 50 basis points lower. If we have a big inflation problem in this country, if we're accelerating in inflation, you would need rates 100 basis points higher, 150 basis points higher.
Yeah, I don't think any of us are suggesting we have a big inflation problem with regards to where the index, the target, is right now. But it's a problem. It's been 5 years above target, and is that not evidence that they are not sufficiently restrictive?
You don't restore, two things on that. Number one, you don't restore credibility. And I agree, credibility has been damaged, right? This is a Fed that said inflation is transitory, and 5 years later, we still have above target inflation. So clearly there's been a hit to credibility. You don't reestablish that by hiking just for the point of hiking and showing that you can be tough in the face of even many underlying inflation measures that are slowing. You establish credibility by watching the data and effecting the appropriate policy to bring inflation down. Now, the question is, do we have the appropriate policy to bring inflation down? If you step back and don't just look at the last 6 months, look at the last year of data, look at the last 2 years of data, inflation has slowed, the unemployment rate has come up. If you look at the housing sector, we clearly have restrictive rates for the housing sector. So I do think that we still have rates that are modestly restrictive here. And I think a lot of Fed officials actually think that also. Their voices are not as loud right now. That has not been the market narrative. But hiking 25, 50 basis points, I don't think will do anything to restore Fed credibility.
Modest is different to sufficient. You'll acknowledge that. Modestly restrictive is different to being sufficiently restrictive to get inflation back to target? Do you think we're sufficiently restrictive?
Definitely sufficiently restrictive. Most measures of underlying inflation are basis points away from target, and in a couple months, it's going to look even better than that.
What's the argument for cutting rates? If you don't think that there's going to be much accomplished by hiking rates, what's going to be accomplished by cutting them?
Yeah, so on the inflation side, that would really be the argument for not raising rates. If we're slowing down towards target inflation, then that's a reason not to raise rates. Cutting rates, you have to have some concern about the labor market or about activity, and there are no concerns right now, right? So we're kind of looking at a Fed and a market that's treating this in kind of a single mandate context, because we just don't have a concern on the labor market or on activity. We think we're going to see in the data, because of a residual seasonal pattern that we have in the labor market data, softer labor market data over the next several months. We obviously had a softer reading for the month of June. If the unemployment rate starts moving up again, then it will no longer just be a question of what's the right rate to set for inflation. Then you'll be concerned about the labor market.
What would it take in the data for you to just say that the Fed's going to be on hold with no more cuts?
Unemployment rate that just stays where it is.
Until when?
It bounces around, 4.3, 4.4. Then they could be cutting eventually, but this is probably, sometime next year, maybe deep next year. Because then, back to John's point, for credibility, you might as well just stand pat and say, look, I want to be indicating that I'm super credible here. I'm fighting inflation. We have no issue in the labor market. So I'm just going to hold things modestly restrictive until I see that we're at 2% inflation, and we're not there yet.
What's your guess for Friday?
115,000 on the payroll, so I think it's a decent reading on the payrolls number. We had a much softer number in the month of June, which came through. The thing to watch for here is actually there are two things. One is, do we get a revision down to the June number, a further revision down? That's what we've seen in previous Julys. And the unemployment rate we have just ticking up to 4.3%. Last month, that participation rate fell by 0.3 of a percentage point. If that moves back up, unemployment can pop up much higher.
Interesting. Andrew, good to see you.
Thank you.
Andrew Honhorst of Citi. Looking for those cuts later this year, but still looking for 115 this Friday.
Yeah, how a good number can still be bad, or in other words, not necessarily erase some of the concerns under the hood.
If we get 115, I think we'll be talking about hikes, but they're still talking about cuts.
Yeah, because ultimately he sees that as not lasting. Although I always love talking to Andrew because I like to hear the contrarian view.
Interesting how it's contrarian, isn't it?
Isn't it?
And how quickly it's contrarian. Start of the year, it was not.
Yeah.
It is now. Up next, Nisha Patel of Parametric, bullish on treasuries despite uncertainty over at the Federal Reserve.
Welcome to Bloomberg This Weekend. I'm David Gurr.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
.60 minutes, 1 hour away from the opening bow following the biggest one-day gain on the S&P 500 since April. Equity futures this morning on the S&P 500 firmer by 0.5, on the Nasdaq up by 0.2. In the bond market, we'll talk lots about it in just a moment. Treasuries this morning, yields a little bit higher by a single basis point, 420 on 2s, 10s unchanged at 461, 30s around 516, and a lot of discussion about supply, not just stateside, but worldwide. Mike McKee has more. Good morning, Mike.
Good morning, John. We're just getting the quarterly refunding data from the U.S. Treasury Department. $25 billion in 30-year notes, $58 billion in 3s, and $42 billion in 10s. It looks like they're basically unchanged from the past. Now, what everybody's been waiting for, and I'm just looking for the data, the information right here, is whether Treasury would drop their forward guidance. They have been guiding that they would not change the auction sizes for some quarters to come, and that is been as the deficit rises and as the need for borrowing rises. That's been a question on Wall Street as to whether they are going to do that in the future. And I'm looking at this point to see if we have any additions to that. The balance of Treasury financing, they say, still meeting them with regular weekly bill auctions, and they are leaving the size and composition of the SOMA portfolio the same. So based on projected borrowing needs, Treasury anticipates maintaining nominal coupon and floating rate auction sizes for at least the next several quarters. So they're keeping their forward guidance in place, even though Fed's getting rid of theirs. The question is, do they have to change that at some point soon, because they're having to borrow a lot more? They raised their net borrowing requirements to $739 billion, up by $68 billion for the current quarter.
So, Mike, stay tuned, stay close. I'll just go through those numbers again for everybody. So, quarterly refunding comes in at 125, in line with estimates. For the tenors and the dates, 3-year note auction at $58 billion, August 11th. 30-year bond auction, $25 billion, August 13th. That's one to watch for sure. 10-year note auction, $42 billion on August 12th. We've talked lots about this, Lisa. The Treasury Secretary, Scott Bessent, before coming into the job, critical of the previous Treasury Secretary for not terming out the debt, extending the average maturity of the Treasury. The issue is now that you're kind of boxed in. You've brought in the average maturity already. It's difficult to term it out, particularly given the pressure at the long end and the additional supply you're seeing from elsewhere.
And a lot of people are expecting the Treasury Department to ultimately depend more on T-bills to finance the U.S.'s needs rather than, say, coupon issuances, just simply because of exactly the dynamic that you're talking about. What could cause a change in that? At what point will the coupon market start to provide an opening? At what point will the bill market start to push back? And ultimately, these are all questions that haven't been tested because we haven't seen the increased sizes to the degree that really
Mike,
the market was expecting.
Just to jump in to build on Lisa's point, to what extent is the current Fed communication effort complicating the Treasury Secretary's ability to extend the average maturity coming out of the Treasury?
Well, it does create uncertainty at Treasury about what the rates, especially at the longer end, are going to be. And as Lisa points out, we've seen them rise. balance sheet. So the two of them have something to work out there. We don't. It may not be
income component. Your starting yields here are starting to look very attractive.
Which income component, I guess, is the key question? Is it the government income component, or is it the corporate spread, right? Which actually poses a greater opportunity in your mind?
Yeah, so look, in the IG corporate space, we've seen spread, yields kind of increase about 50, 60 basis points. And so I think, again, your stronger balance sheet companies with strong fundamentals, I think there's still an opportunity there. You're not buying it for spread compression, but again, you're buying it for yield. You're buying it for income. Your weaker balance sheet companies have less margin for error. So this is where I think you really want to be diligent about credit. And you want to be thoughtful about how you're taking on duration. Even in the Treasury, right? I'm not saying, and I know this is a question and maybe I'm answering this too early, I'm not saying you go out and buy the 30-year.
Thank you.
But I think the 10-year is a good spot to, again, if you're sitting in cash, true cash products, right? And you have a risk there of, let's just say the Fed is on hold. There's still a significant amount of reinvestment risk. You're now getting paid to take on some duration. Another market, a lot of our client base at Parametric are high net worth individuals, higher tax rates, municipals. Believe it or not, right, rate volatility, supply dynamics there have shifted the profile of munis to where on a tax equivalent basis, you're looking at 5.5% to 6% tax equivalent yields in just the 10-year part of the curve. Think about that, right? High quality states, geos, issuers. So again, the credit profile has to be healthy, but I think you're getting compensated for that.
What makes you feel more confident that even though yields are elevated, they're not going to go up significantly more, given the borrowing needs that have not yet been announced, not just by the government, but also by hyperscalers?
Yeah. I think that's a good point. And I think it's very difficult to obviously call it and get it right. But I think what makes this more opportunistic at this point is that your income profile is helping hedge against potential upside in yields, if that makes sense, right? So a lot of our clients, you're burned by what happened post-pandemic. When you were buying bonds at 1.5%, 2% yields, you don't have a lot of cushion when yields move up even 25, 50 basis points. At this profile, right, 4 or 5% yields, you can have rates move up and still be able to absorb it and still be in the green. Now, I would say the hedge on the other side. Now, I think my view is the Fed stays on hold. I'm not, kind of in this camp that we get a cut. I know Andrew made a very compelling argument earlier. But the hedge here is if you do see softer labor market data, if the Fed does stay on hold. Now, softer labor markets, right, I think the consumer is a big part of this. So what I'm watching on the consumer side, softer labor markets, does that lead to ultimate a softer consumer? The ADP number that we just saw in services, in certain markets, are you seeing less leisure travel, right? Are you seeing some of that being pulled back? If we start to see that in the second half, you can make a strong argument that if inflation does naturally come down, does the Fed then have a better platform to start cutting next year? And you just see a trend of yields coming down, in which case I think bonds provide a good hedge. So again, I think bonds today at the income profile that we're seeing, it's attractive in all the, I guess, both outcomes that we could have.
Do you see any of that slowdown on the horizon currently?
Labor market?
Yeah, in the consumer, in the labor market.
It seems like, look, with the economy, look, earnings has been incredibly strong. We have seen generally I think, good labor market. I wouldn't say it's exceptionally strong. I'm not sure the slowdown is occurring just yet, right? But energy prices has been a big component of this. We have seen energy prices come down. I still think you're seeing a relatively healthy consumer. But again, this all permeates into a few different things. If you do see a slowdown in the labor markets, you do start to see an uptick in layoffs. You don't have wage growth happening at a time where inflation is still fairly stubborn in some areas. Real income and discretionary spending for consumers can be very difficult to keep up or to stay positive. So I'm not sure we see that in the next quarter, but it's quite possible we start to see some of this in the last half and beginning of next year.
How about that 30-year? How did you know we're going to ask? Was that predictable? Nisha, thank you.
Thank you so much.
Appreciate it.
Just like Lisa's trying to explain to her kids about debts and deficits, I'm just getting my kids to understand bonds. So
I'm sure you're doing a great job.
That's the start. They're a little older.
That's step one.
Step one.
Step two is you bring Lisa around. Nisha Patel, Parametric. Nisha, thank you. Appreciate it. With an update on news worldwide this morning. With your Bloomberg brief, Vonnie Quinn has more. Hey, Vonnie.
Hey, John, thank you. The U.S. quarterly Treasury funding coming in at $125 billion, in line with estimates. The Treasury will issue the refunds via $58 billion of 3-year notes, $42 billion of 10-year notes, and $25 billion of 30-year bonds. The agency projects steady nominal auction sizes for August through October. ADP payrolls coming in weaker than expected for July. Private sector employment increasing by 44,000 versus estimates for 65,000. Service providing jobs falling by 3,000 for the month. Uber shares are lower by about 3% in the pre-market. The company's gross bookings falling short of the high end of Wall Street expectations. Uber citing currency headwinds and fierce competition in international markets for weighing on trip volume. Tune in to Bloomberg Tech at 11 a.m. Eastern for an interview with Uber CEO Dara Khosrowshahi. And that is your Bloomberg Brief. John.
Vonnie, thank you. Thanks for this morning. Up next, we'll set you up for the day and the week ahead. Plus, we'll catch up with Noah Weisberger of BCA Research with stocks back at all-time highs heading into the market open.
How do you see AI changing gaming and game development in the future?
Look, I think the biggest thing that I'm thinking about is how do we just make sure it's solving problems. On the game development side, I've gone to a lot of our studios, with big and small, and I'm blown away with how they're using AI in the production pipelines, how they're using it for iteration and prototyping. That's not production ready, there's still work. And 30% of game development is software, and so there's the traditional applications that we see in enterprise. At the same time, I do not think AI will replace AAA games. I think it's entirely possible, though, that AI represents a new category of games and a new type of development and enables more people to create and participate. And we'll keep an eye on that, and we'll see how we best serve that.
The world's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you the most important news and financial information whenever and wherever it happens. I'm Michael McKee on the Mexican border, and this is Bloomberg.
I don't think there's too much capital coming to the market. I don't think the IPOs are too big. I think there's a massive wall of capital coming to this, not just in the U.S., but globally, because where else are you going to go with that wall of money? Other markets are simply not big enough.
Alicia Levine of BNY Wow still bullish and constructive on this equity market for good reason, given the run we've just seen. 4 days of gains almost 6 percentage points higher. This morning, futures positive too on the S&P 500, up by 0.5, up a quarter on the Nasdaq. Into the bond market, let's just sit on this just for a moment. 2s, 10s and 30s. More supply is coming in line with expectations. You will get a 3-year note auction in the next week or so, $58 billion worth. 10-year note auction, $42 billion. 30-year bond auction, $25. 30 years going to get tons of attention at 516.59 as things stand. The guidance from the Treasury, they'll maintain auction sizes for at least several quarters. And we've been wondering whether they'd be increasing, Bramo, and getting bigger and bigger, because we were looking for them to term out that debt at the start of this administration. And it ain't happening anytime soon.
Right now, the idea of terming out debt at more than 5% yields does not seem particularly attractive to at least this Treasury Secretary right now. Question is, how will the market receive all of the T-bill issuance, and how will the Fed receive it, given the fact, as Mike was mentioning, there is a speculation about a Fed Treasury Accord to coordinate some of the purchases of the Fed's balance sheet, which are front-loaded to the T-bill side with the Treasury Department's issuance.
So we're just going to make it super short-term debt, and then the Fed's going to buy super short-dated debt as well? Is that how this is going to work?
I mean, it potentially could, and potentially it could work in the short term, but then it also creates greater political risk for the Federal Reserve, because it'll be setting rate that much more directly for the U.S. government, so it becomes that much more of a complicated tool to use to potentially combat inflation.
Makes it even harder to hike.
Correct.
Right? And then if you're looking at the Treasury and the Fed working like that together, look, we're not there yet. I'm just sort of thinking out loud about this. It's a massive sell on the US dollar, surely.
Which is the reason why a lot of people are saying there is that extra premium, and you're seeing it in the real yield, not necessarily in inflation expectations, following the Fed's meeting and some of the speculation around this that has come in tandem with the dollar weakening.
That's the bond market fear right now at the longer end of the curve. 30-year yield still slightly untethered.
You just need to have a little bit more compensation to offset that risk.
Some counselling at dinner time. Our next guest walked into the studio and said, is this a family... What was it? A parenting show now. A parenting program.
All right, I'll stop talking about it. It's just, okay. It's 3 hours.
I want you to talk about it. Don't
all right.
About it.
Well,
everybody wants you to talk about it.
My kids definitely do not.
What we do.
Thanks.
As we count you down to the cash open, some 43 minutes away. Let's get you some single names for morning movers. Yahara has more. Hey, Yahara.
Hi, John. One suggestion, don't let your kids buy at the IPO, as we're seeing with SpaceX. This is the most actively traded stock in the pre-market. Shares are falling 11.5% after it gave Wall Street a bigger CapEx number than it was expecting. The quarter itself beat estimates, but you can feel the angst as investors digest the enormous amount of capital it will take to transform this company from a rocket company to an infrastructure one. Plus, I will note that its IPO lockup expires today, allowing insiders to sell shares for the first time. So that is also weighing on shares. Let's get to the earnings we've gotten this morning. We start with Uber, down 2.75% after it gave a bookings outlook that just met expectations. And in this market, that is not enough. Investors seem to also be zeroing in on its trips growth. That had a slight miss, and that is due to tougher competition by Chinese rivals in Brazil, which is Uber's largest market by trip volume. So that really caused a dent there. And we end on Disney shares. Those are moving to the upside, up 3% after its biggest businesses, entertainment and experiences, delivered. Streaming keeps getting more profitable, and in a testament to consumer strength, its park business saw strong attendance and strong growth. So all that contributing to a healthy EPS beat by Disney. John?
The park business just absolutely crushed it. Yahara, thank you. Appreciate it. I love Bramo. It's a 3-hour show. Of course I'm going to talk about what I had for dinner last night. Right? Obviously. I've got so much time to fill this.
Well, yeah. I mean, look, things come up, I mean, it's
working through the show plan 7C, which I'll mention what we talked about over dinner last night. There you go. Let's talk about stocks. Looking to add to record highs. ING a 5th straight day of gains. Noah Weisberger of BCA Research looking for an 8,100 year-end target on the S&P. He writes, consistent with our outlook for the second half of the year. Risks stem mostly from the bond market and a wave of IPO activity, both within the potential to impact valuations more so than earnings growth itself. Noah has more. Noah, good morning. It's good to see you.
Good morning. Thank you for having
Any
me.
parenting advice have you got for anybody?
Talk about bonds at dinner. I mean, that works like a charm.
Do you like that?
It's how we've raised ours.
What's the reaction?
Four liberal arts majors. That's the reaction.
That's what's happening.
Yeah, artists.
Okay. Do you want to start with this bond market?
Absolutely. I mean, I would just like, piggyback on kind of some of the comments that you were making. This is the biggest risk. We're watching the break-evens also, and that's been a little bit scary to me. What's driving the bond market isn't all, risk. To be fair, right? We have a bit of a pickup in the cycle, which should help, which supports yields, which is in a good way for stocks. But the other two factors less positive for stocks. One is this risk premium that comes from, when you talk about a Fed Treasury accord, that really makes me nervous. I think that's behind the shift in correlation that we've seen in the last couple of years. The risk of that Fed independence going away or waning a little bit. And then the last thing I'll say, which isn't a Fed issue, it's just kind of the broader context, which is capital is scarce. We have this huge amount of demand and against constrained supplies. And that's both from the federal side and also what we're seeing in the private markets in terms of the CapEx spend. So
let's unpack some of that. So what is scary about break-evens?
I think losing the inflation anchor, I think, is a direct impact to a long-duration asset like stocks. And so I think that's, we've said the earnings side is great. The valuation side looks better because of a bit of a sell-off against the backdrop of strong earnings growth. But that all changes if you inject risk premium into the bond market or if you inject inflation risk premium. And then you have to sort of change your valuation calculus.
You are an equity bull, and I've got to jump in. You've got an 8100 target on the S&P. This is what's strange about this moment for us at the moment. And you would prefer the Fed to hike?
It feels strange. And I actually thought until the press conference that Warsh had done the exact right thing, which is to tell everybody how much he wants to see a 2% target and hold off on hikes and convince everybody that he's well in control, he's got everything balanced perfectly, and he'll do the right thing at the right time. If I were on the FOMC, I'm not sure I would be hiking just yet. I think I'd wait a little bit to see headline inflation wash through. And to be honest, it feels a little bit like a tempest in a teapot, meaning I don't think that Warsh has completely capitulated on all that hawkish credibility, and we may be a little bit overreacting to how poor his communication will be and how much we don't know. It feels a little bit like a hair on fire moment, but I prefer that the bond market hadn't reacted the way it did.
That said, we just had an all-time high on the S&P 500. Where exactly is it hurting stocks?
Well, I mean, imagine where we'd be at a lower yield and lower inflation. It's not. It's not because the earnings picture is so strong. And I think I was here a couple weeks ago, and at one point, you asked me earnings, and that's still the case. What worries me on the earnings side, one, there is some fluff in those numbers. Like, was earnings growth 40% in Q2? Well, not if you take out the impact of IPO valuations. That's another risk to this market. We have a lot of supply coming, but that still gives you a pretty good cushion. The other thing that worries me is there's not a lot new to my own bullish story, right? We saw Q1 was amazing. Q2, it's kind of a rinse and repeat, which is great, but at some point, that should be in the expectation set. So those are the other things that make me a little bit more balanced. And we've tried to lean in that direction, focusing on the bond market risk, focusing on what's new. We've tried to take a little bit more of a quality approach. So a little bit moving away from small caps. We've added gold to our set of recommendations as a uncorrelated, gold miners, I should say, as an uncorrelated piece of the portfolio. So that's a shift in our body language, but still constructive.
Nothing about any of this says bull. I mean, this is what's so funny to me is that, this is, you don't...
Talk to my kids. No.
I'm just curious, nothing sounds bullish that you're talking about. You're talking about concerns that you've already seen everything that you need to see. Nothing's new. You're not getting surprised. There's a potential overhang of duration. There's a potential of weakening under the hood that's not getting priced in.
8,100 sounds like a massive number, but I think it's only 5% away now.
Yeah.
Yeah, but still, it's a gain, and although
4 more days, that's all it'll be. No,
it's true. Actually, you're not wrong.
Look, what's good about this market is that the CapEx spend is real. And we also seen a broadening out, right? So it's not just the hyperscalers. Like, median EPS growth is quite strong. We've seen financials start to participate. Some of that is off of trading revenues. It's not kind of the long-term good stuff that you want to see, but that hasn't been so bad either. Energy's boosted earnings for the market overall. And you still have this CapEx theme, and you have, I would look, again, I think you want to be careful with leverage here. So I like software. You've got existential risk further out, but I think right now you're hearing good commentary about them able to monetize their AI exposures.
Can you like chips and software?
Probably not. And I think chips have had a great run, and I would lean away from them. And I like the hyperscalers. I think hyperscalers may face some political risks down the road when they have these great, but what you like about them is these great vertical integration, where I don't need to pick my spot exactly. I think that becomes a political risk. You've got me talking about risks all the time. That's a political risk down the road.
Sure, blame me. But I'm just saying, these are the concerns.
Yeah, and again, but they're able to, and they're turning those investments into earnings. And that's the most important thing to keep tabs of going forward.
No, I always love catching up with you. It's good to see you again.
Great, thanks for having me.
Thanks for being here. Noah Weisberger there of BCA Research. We were talking about vacations with him in the commercial break. I'm not going to give anything away. But just listening to a strategist talk about how strategic they are about where they stay, what date they go, and how long they stay there for. Extracting value everywhere they look.
Yeah, looking for times when potentially there's a mismatch in some of the calendars versus the vacation period. Well, I mean, you think about it, how many people have gone to a place like Japan because of the yen?
Oh, without a doubt.
I mean, because it's
From
the
States?
100%.
Once in a lifetime.
You look at it, you do your balance sheet, you get a sense of exactly where you're going to go, how you're going to do, how much sushi you're going to eat, and it's exciting.
I was going to do that once. TK and I pitched a program.
I remember this.
Do you remember? Years ago, the dollar was like sky high, and we were just going to select like 5 different countries and go on tour with the US dollar at sky high levels.
What was the response from some of the
They didn't buy into it. It was previous leadership have since gone on to do other great things
so maybe
in the media industry.
Maybe you should go try to pitch it again.
It didn't work. It was like the currency tour.
I think that's fantastic.
We were going to Argentina. We were going to some beaten up places in Southeast Asia.
If you want that show, write in.
We were going to have like a dinner, a meal with economists and stuff. It was going to be great.
With economists.
Sponsored by an airline.
Over there, yeah, exactly.
This was all going to work.
We can reprise it.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
You're going to see disruption in certain job functions. I don't see how that's not possible. And I don't see how anybody can look people in the eye and say that's not possible.
What percentage of customer service gets displaced?
It could be a large percentage of customer service. I think that function, I forgot my password, what's my billing amount? Those are all simple and easy things for an agent to go do. Like what we're seeing in our customer service right now is the rote stuff can be done by agents. More complex is a combination of an agent and a human working hand in hand to be able to satisfy that customer much better than either of them could do alone. And so I think you'll see all of those things happen, but I'm going to lean heavy, as I think all of my colleagues will, all the Fortune 100 will lean heavy on AI. You cannot be a part of this age without understanding the technological revolution. We have a responsibility to put serious money, resource, and effort into training not just our employees, not just people that are impacted, but the communities we serve as well, because that's the age we live in.
Look at the more successful economies in the region. The key to their success is continuity. But the way our constitution is written, it actually encourages a lack of continuity. And that's a problem. The term for local government is 3 years. When I first became a congressman, it takes you a few months to learn the business and to make your connections, the network, etc. If, for example, you are not particularly favored in the majority, passing a law in a year and a half is not that easy to do. After about a year and a half, you already hear that there's somebody in your district beginning to campaign and is going to oppose you in the next election. So you have to go back to your district to take care of that. And how much work do you get done?
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Back to all-time highs. It is 30 minutes to go until the start of trading. I'm Danny Berger.
And I'm Michael McKee. Bloomberg Open Interest starts right now.
Coming up on the show, the S&P extends its winning streak even as sky-high AI spending sinks SpaceX. Ken Griffin's Citadel is already cashing in on its bargain bet on situational awareness. And Wall Street banker bonuses are set to climb yet again as volatile markets boost profits. Speaking of those volatile markets, let's look at SpaceX. Now it is down 11.3% in the pre-market. Its first earnings report it had after the bell yesterday. AI spending doubled from the first quarter and is expected to climb faster than Wall Street estimates. CEO Elon Musk did tell analysts that SpaceX will reach a $100 billion annual run rate of revenue by the end of the year. So beats across the board, but there was this big spend meatball just hanging out there for the market to sell shares. Let's discuss with Bloomberg Tech host Ed Ludlow. Ed, just break down what your takeaways were. You were live on Bloomberg TV as these earnings were coming through. Clearly, the market disappointed about some of those spending numbers.
Yeah, I mean, spending in the quarter gone was $18 billion, but 86% of that is just AI infrastructure. And so, like, a lot of people are posing the question, like, what is SpaceX? Like, literally, is it a rocket company? Is it a space company? Is it an AI company? And, you know, the interesting thing is that in aggregate across the spending numbers, but also the $100 billion ARR, it is the business of cloud services that is growing and the biggest contributor to that growth. You know, literally renting compute capacity to third parties. They contracted $6.7 billion incrementally in this current period. And so, like, for all the future, the progress with Starship. A year from now, Musk says they'll be launching Starship once a day at least. The idea that they'll hit $1 trillion of revenue in 2030, not ARR, real revenue. You know, the here and now is that this is a company that rents compute capacity.
I got to wonder, Ed, there's a little bit of Wizard of Oz to this. So pay no attention to the numbers behind the screen. Look to the future. And I'm wondering how analysts are taking that, given the massive spend that they did and the reaction to that. And then Elon saying, well, yeah, but it's all going to be great down the road.
Yeah, I think that we're still tracking in the interim the progress of the Starship launch system. What Elon Musk said was that the next test of Starship will come within the month. You know, the reaction broadly is that there's a gap, right? You know, Mike McKee, with the greatest respect, I'm old school like you. So I hit FA Go on the Bloomberg terminal, and the street sees SpaceX doing $300 billion of sales in 2030. And last night, Musk said they'll do $1 trillion. And so, like, the reaction of the street is that, you know, at least in the 12 hours overnight, they've not remodeled for the guide that Musk gave on the call.
Who'd thought? Fundamentals.
They matter, apparently. What about the guide for Starlink and the success they're having there? It seemed to be a management that was talking about them to really challenge the current mobile providers that exist in the world.
Yeah, this was a big moment in the call, you know, not just because the main US carriers fell sharply in the after-hours session, but the way that Gwynne Shotwell, the president of SpaceX, explained it is that they are building out a satellite-based constellation, Starlink direct to cell and the broadband service, but they're going to invest heavily on terrestrial infrastructure as well, and basically offer a better mobile service than the carriers currently offer. And, you know, the thing that moved the needle to the downside for the shares of those carriers was Gwynne Shotwell saying that their expectation is they will acquire customers from T-Mobile, AT&T, and Verizon because what SpaceX plans to offer to their mind is better than what's available currently here on Earth.
All right, Ed, thank you so much for joining us. Looking forward to Bloomberg Tech, 11 a.m. Eastern. Ed will have more coverage on SpaceX earnings as well as the Uber earnings with CEO Dara Khosrowshahi. Elsewhere in the world of earnings, Disney is gaining after the company beat estimates thanks to stronger streaming profits and solid demand at theme parks. Let's get more with Bloomberg Intelligence media analyst Geetha Raghunath. And Geetha, what were your takeaways?
Yeah, as you pointed out, Danny, the two
parts that matter most for Disney, which are, the parks and streaming, and both those delivered really strong results. I think coming into this quarter, investors were definitely very, very concerned about the health of the parks, just kind of given the general consumer softness that we've seen, and also some commentary from Universal Parks, from Comcast, suggesting that there was a slowdown in their domestic parks. But, what we saw from Disney was exactly the opposite. Their parks profit rose by 20% versus consensus expectations of 10.5%. And really what they pointed to was very, very strong attendance trends, both at the domestic parks, and very strong per capita spending. And so I think that really allays a lot of fears. And then on streaming, we saw them kind of more than, outperform expectations, again, getting to a 13% operating margin. Now, remember, operating margin is really what matters in this business. And everybody's trying to get to that North Star of about 20, 25, 30% where Netflix is. But looks like Disney's making really, really good progress on that front.
Now, they announced a tie-up with TikTok, and I'm wondering if that's offense or defense for them.
I think it's a little bit of both. So, Mike, as you know, Netflix is the first one to really kind of get into this vertical video or the short form video content. And really what this is, the streaming wars are not really just competing with, your streaming, rival streaming services. It's really competing against YouTube, against TikTok, against, everything out there, Instagram.
I think we might have lost Geetha there. Maybe we need a little bit of TikTok in our lives. Geetha Raghunathan of Bloomberg Intelligence. I think the point's a good one, though, right, Mike? This idea that everyone's being more distracted by TikTok. So if you can't beat them, why not join them?
Well, that's why I asked if it's a defense, if you got to meet the customer where they are.
Yeah, although, I mean, now my TikTok will just be flooded with like Mickey Mouse or whatever it is, which will be fun for us all. Other earnings news that Mike and I are looking at this morning, Eli Lilly and Novo Nordisk in the green. They raised profit forecast. Novo CEO joined Bloomberg this morning speaking on their future plans.
On one hand, Novo Nordisk has a phenomenal pipeline and a lot of R&D knowledge. But we also have concluded that we don't have a monopoly on the best ideas. So we are right now looking at bolt-on acquisitions to try and complement our own assets and see basically how we can serve the world in a better way.
Joining us now is Bloomberg Intelligence senior pharmaceutical analyst Sam Fazeli. And Sam, maybe it's instructive for our purposes to also note that Eli Lilly had earnings, and there they raised expectations. And it feels like a disappointment coming from Novo. Is this just how it goes, that both of them can't succeed, that one needs to be taking market share from the other in the obesity medication race?
Yeah, I mean, Danny, I don't know why you're disappointed with Lilly, or maybe I haven't looked at the latest pre-market trading. But, I mean, they've raised EPS guidance for the year by 8%. The 2Q beat was solid and real across the board from their products mostly. And the $2.4 billion or 11 or so % beat in 2Q pretty much all flowed down to the net earnings, about $2.1 billion beat there. So, I mean, I don't know what this company needs to do to keep people excited and happy.
Well,
I mean, of course, they're sitting on a hefty valuation.
Jump in, because I'm worried I might have misspoken. If I meant to say that we were disappointed on Lilly, it seems like we're not. Shares are up in the pre-market. It's more Novo Nordisk. It seems like there's disappointment around.
Yeah. Sorry, Danny. So I'm just looking at the share price chart here. Novo Nordisk, I think the issue they have there is that the numbers, although they didn't particularly beat on a high quality end of the spectrum, whereas Lilly did. And, I mean, the CEO has a good, positive view of their pipeline. The market tends to disagree a little bit here. That is happening with several pharma companies right now. Investors and analysts are not exactly seeing the same excitement in pipeline of some companies like Pfizer, like Novo Nordisk, as the company's management are. But they also both have acknowledged, at least Novo Nordisk did, I think Pfizer's done its M&A, that they're going to go and acquire some pipeline. So the issue that Novo has is that it needs to show how it's going to grow, especially that CagriSema, their big white hope, didn't quite get to the points that they had hoped to in terms of performance.
In differentiating these two companies, I was listening to David Ricks this morning, the CEO of Lilly. He spent a lot of time talking about what they're doing on the marketing side as opposed to the drug development side. And I'm wondering if there's a difference between Lilly and Novo Nordisk, especially when it comes to the weight loss drugs and the pricing deals that Lilly's making and the Lilly Direct and that sort of thing.
Yeah, so Novo has very similar methods in play to try and maximize its access to patients, so maximize patient access to its drugs, to Lilly. The thing is that particularly for Lilly, the big excitement in the second half is their oral drug, which is Foundayo. It does have some, it has been not as exciting as the Wegovy launch, the Wegovy pill launch from Novo Nordisk. So everyone's now looking to the second half to see whether their methods, particularly Medicare access and direct-to-consumer advertising, is going to drive that growth. There are some big numbers in analyst models, if you look at the MODL function on Bloomberg, that talk about something going from a 92 million or 98 million this quarter to 17 billion in a few years' time. So there's a lot of wood to chip for Lilly there.
Am I right in that Novo was first to the market with this pill, or was it Eli Lilly? I just wonder if, like, if the first, okay, so is first mover advantage not a thing anymore, Sam? Is that less important in this case?
Well, it has been until now. So Wegovy pill launch has been much more interesting and exciting than the Foundayo pill, but Foundayo has a limited marketing at the minute. As I said, their DTC only just started in direct-to-consumer advertising, only just started in the early July. So that probably will help. And also, don't forget, Wegovy pill is Wegovy. People are familiar with that. Foundayo is a new drug. So if you were Mounjaro pill or Zepbound pill, it might have been easier to tell that story. But Lilly has got it, so as I said, it's got a lot of wood to chop on this particular one.
Hey, Sam, thank you so much for joining us. Always appreciate your insight. Bloomberg Intelligence's Sam Fazeli. Let's get a check on your markets. 20 minutes to play for until your trading day begins. We are adding to the rebound, up 0.5%. S&P outperforms. NASDAQ underperforming, maybe because of SpaceX and AMD earnings dragging things down. Still up 0.25%, though. The U.S. 10-year yield, that moves higher by a basis point as Brent crude climbs 1%. We are awaiting a possible announcement on a deal with Iran and Oman over allowing the Strait of Hormuz to be reopened. We will bring you that if and when it happens. Let's get a look at some of the other movers on our radar this morning. With that is Nora Melinda. Good morning, Nora.
Hey, Danny, a bit of a mixed bag this morning, so let's get right to it. Kicking things off with CVS, giving investors a little bit more confidence this morning after raising its full-year profit outlook after a better-than-expected quarter from its Aetna insurance business. The turnaround story may be finally picking up some steam, but we are seeing shares lower sharply by more than 9%. Maybe some potential weakness next year when it comes to its Caremark membership. Now from healthcare over to rideshare, we're seeing Uber also under pressure, down about 2.7%. The company gave a bookings forecast that basically met expectations. Now, normally that's fine, but on Wall Street, fine isn't always good enough. The company also says that competition in Brazil is heating up, which is adding to questions about how Uber keeps growing as robo-taxis become more of a reality. And finally, one thing people don't seem to be cutting back on is travel. We're seeing shares of Booking up about 7%. This is after the company topped expectations on Wall Street. International travel demand is still holding up, even with all of that economic uncertainty. CEO Glenn Fogel joins Open Interest later this hour after the closing bell. Those are your movers. Danny?
Nora, thank you very much, and we're very much so looking forward to that interview. Coming up, Wall Street bankers reaping the rewards of a volatile market. Bonuses are set to climb yet again. That's up next. This is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins.
We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Oh, hello there. Just wanted to say, Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake. While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
Bringing you the latest business news wherever and whenever it happens. I'm Scarlett Fu, reporting from America's biggest military shipyard. This is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Let's get you some high-interest stories, a look at what's making headlines around the world. President Trump says a deal to reopen the Strait of Hormuz could come within 48 hours. He says the U.S. and Iran talks are moving along very nicely. Reports say that U.S., Iran, and Oman are negotiating a 60-day shipping agreement, though Tehran says any reopening still depends on changes in U.S. policy. Abdul al-Sayed is projected to win Michigan's Democratic Senate primary, defeating establishment-backed Haley Stevens in a race seen as a test of the party's progressive wing. He will face Republican Mike Rogers in November in a race Democrats must win in order to have a chance of taking back the Senate. Wall Street bankers are in line for the biggest bonuses this year as deal-making and trading stays hot. A new Johnson Associates report forecasts investment banking bonuses rising 10 to 15%. Equity traders and underwriters could see payouts jump 30% or more. AI also helping banks cut jobs, boosting pay for top performers. And we're going to talk to the author of that report in the next hour, Chris Connors. But first, joining us to break down the study is Bloomberg finance reporter Catherine Doherty. Cato, I mean, these guys work hard. They probably deserve that 10 to 15% pay bump, just given how crazy things have been on Wall Street.
Yeah, it's been super active, and we haven't seen it pull back in any way. So, as you pointed out, the traders are projected to see the biggest payouts, some more than 30%. Investment bankers, though, I think that's the story to highlight. This year, we've seen a resurgence of M&A. Deals have come back in a way that we haven't seen, and we've been expecting for a few years now, but now we're actually starting to see the IPO pipeline and some of the other M&A activity come through. So you're expected to see that reflected in end-of-year bonuses. There are a lot of caveats to this report. We still have the remainder of 2026 to get through, so we could see a big pullback and the markets could change. But right now, all things are indicating that the end of this year is looking pretty good across the board.
Got to wonder what oil traders are feeling like in terms of their bonuses this year. I'm wondering the part about AI eliminating jobs, and that it makes sense that the higher paid are going to get more for it. But what about the lower paid levels who are still around? Are you going to get people cheaper because there aren't that many jobs?
I think that there's been a lot of discussion amongst the leaders of the big banks that have talked about the moving around of their employees. So when you're talking about maybe those lower paid or back office workers, you can shift some of those folks that you don't need anymore into jobs that still do need a human interaction and can't be taken just over by technology and AI. So I think that is the shift that we're going to start to see. We haven't yet seen a big change in the numbers at the banks. They have not really been adding headcount, but at a lot of them, their headcount has stayed very steady. So there hasn't been a lot of concern, again, yet, that we have seen about massive layoffs. But at the end of the year, this pay is likely to filter into the top performers, and that often is the banks, traders, and investment bankers that we've been highlighting and talking about.
What about the rest of the financial world? Mike and I later in the next hour are going to be speaking to Carlyle CFO, and I know they're talking about how they've had so many realizations they've been exiting. But the rest of this industry, it feels like it's been at a stalemate. How is that reflected into pay, specifically in private equity and maybe other parts of the private capital world?
So private equity, private credit, that is an industry that hasn't seen as much of a boon as we have highlighted in other parts of the market. So I think that that is probably the more muted part of finance to look at. Asset management, though, still up as much as 11%, so in the double digits. Wealth management, 5 to 10%. So it's really, if you zone in on some of those markets that haven't seen as much of the activity that we have seen in, let's say, trading or M&A, more of the public market activity, yes, I do think that that's something to highlight as a differentiator across the board.
And I think we're going to have to ask Carlyle if his people are getting bonuses, big bonuses. I think it's inevitable now. Catherine, thank you so much for joining us. Bloomberg's Catherine Doty. And again, we'll have the author of this report on shortly, as well as that not Citadel interview, the Carlyle interview. We are going to talk about Citadel, though. That's going to be coming up after this break. Their flagship fund soaring in July after buying a discounted portfolio from the hedge fund Situational Awareness. This is Bloomberg Open Interest.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment. 3 revolutions in 1.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Citadel's flagship fund surged nearly 6% in July after the firm bought a discounted portfolio of AI stocks from troubled hedge fund Situational Awareness. Bloomberg's Hema Parmar has been reporting on this and joins us now, who's been publishing hit after hit of such fantastic pieces about the strange moment for hedge funds that we're living in. I mean, your reporting is remarkable. They were basically flat year to date before this deal, and now they're up 12% year to date for their flagship fund.
So they were flat for the month.
For the month, yes. Thank you for that.
But up now, nearly 6% on the month. So it really shows what kind of a return a deal of this size and scope can make for a multi-strat hedge fund. They basically made more in 1 month than they had the whole year. They were up about mid 5% through the year up until this deal. Now up 12%. Pretty impressive.
What about the folks left over at Situational Awareness? That's still around, right?
It's still around. They still have more than $10 billion in assets. A lot of that is in their private stocks, in the private companies. So a big stake in Anthropic, among a few other companies. So they also still have the remaining shares that were not purchased by Citadel. So those too have likely risen in value in the rally that we saw after the deal was announced. So they are still around. They are still sizable.
So Ken Griffin clearly makes a killing from this transaction.
Yes.
What about the rest of the hedge funds of the universe that you've been reporting on, whose returns were troubled because of their AI exposure?
Yes, so we are seeing the pain really flow through the space. Whale Rock down a significant amount for the year, down 22%. A really painful experience for that fund. This is a fund that's concentrated and makes AI bets, down 22% for the month, I should say. Still up on the year, but it really does show these firms that are highly concentrated and have a really strong point of view. We've seen losses at Co2. They were down 8% for the month, which is their worst month in over a year.
Yeah, I think about this thing Joe Weisenthal pointed out, that with LTCM, people thought they were diversified, but the thing they had in common was LTCM held all of the stocks, so maybe a repeat past his prologue. Hema, thank you so much for joining us. Great to have you, and excellent reporting again. Bloomberg's Hema Parmar. Let's get a check on your markets. Just 5 minutes to go until your opening bell. The rebound continues after notching an all-time high for the first time in 2 months. Tech lags, though, thanks to disappointing earnings from SpaceX and AMD. To be clear, both those companies beat expectations, but the expectation was somewhere else, especially when it came to spending. Your 10-year yield, that's at 462.48. That's higher by about a basis point this morning as Brent crude climbs back above $80 a barrel, but we were closer to 90 to start the week and last week, so this is at least some relief. Less than 4 minutes until your opening bell. We're going to begin the U.S. trading day with JP Morgan's Mira Pandit. You're watching Bloomberg Open Interest.
Very famous dogs. You have they look like balloon kind of figures to some extent. How do you make
going to be 650,000. But eventually, then they raised the price again. And they finally brought it up to 1.6 million. And I told Eli that this is the reality of it. I showed him everything, and he ended up paying for the production costs.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend. This is Bloomberg Television.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Just seconds away to the start of your trading day. This is Bloomberg Open Interest. I'm Danny Berger alongside Matt McKee. Matt Miller is still off. S&P futures looking at another record close after the first yesterday in 2 months. Outperformance, though, the overall market is tech only up about 1/3% after both SpaceX and AMD earnings. We have AB InBev ringing the opening bell down at the New York Stock Exchange. They're, of course, cross-listed on the NYSE. They are a Dutch company, I believe. They're up year to date. I guess beer is recession-proof, or not that we're in a recession, but any consumer weakness, people will still buy their beer. Atovia ringing the opening bell at the NASDAQ. They are a Goldman-backed company, biotech company, and they are IPOing. You're the IPO, as John Gray says. Some of the stocks that we're watching, SpaceX, that's down 11% in the early moments of the opening market. It reported its first earnings report since they IPO'd. AI spending doubled from the first quarter. That was the problem. And it's also expected to climb faster than what Wall Street thinks it will. CEO Elon Musk also told analysts that SpaceX will reach $100 billion in annual run rate revenue by the end of the year. That's not enough for them, now down 12%. It's this concern about AI spending and an increasing universe of investments that is centered around that. And earlier, I asked Brookfield Asset Management CEO Connor Teskey, off the back of their earnings, how he is looking at AI volatility.
The demand we are seeing so far exceeds the pace that these projects can actually get pulled out of the ground, that even if demand was to slow or plateau, that supply-demand imbalance would be there. Danny, perhaps the way I would say it is, when we look at the AI infrastructure opportunity, because the demand and the opportunity set is so large, we feel we can be incredibly selective.
Joining us now is JP Morgan Global Market Strategist Mira Pandit. Mira, great to see you this morning. And look, I think a lot of people are looking at the numbers these hyperscalers are putting up, whether it is SpaceX or Alphabet or otherwise, and saying the spending is going to continue. I'm putting aside any nerves. I'm going to take opportunities and buy. Do you think you can do that in public markets too, given the sell-off, or things more cheaply on a trend that seems to have some staying power?
The hyperscalers at this point are essentially at the same valuations as the S&P 500 overall. And we're seeing this AI rotation strike again, where the former losers in the first half of the year, like the Mag 7, the hyperscalers, software, are having great gains so far this quarter. So you have the Mag 7 and the hyperscalers up about 8-9% year to date. You have software just in this quarter so far up about 20%, whereas semis are down 10%. So you do see this sentiment shift going on, and it makes it very tricky underneath the surface for asset allocators, because you look at something like value, for example, versus growth, outperforming by about 7.5%. 54% of the return to value just this quarter is coming from the three stocks that increased in weight, those big Mag 7 companies, in that Russell rebalance recently. And that's taken away from growth. And so it's reinforced. I mean, boy, value got a good deal from rotating from some of the winners to now the new winners here, whereas growth is lagging behind basically 40% of that from just the one semi stock that they inherited. So all of this rotation underneath the surface has really reinforced to us, you want to be diversified within the AI trade. It's not semis or hyperscalers, Mag 7 software. It's a mix of all of them, because the sentiment is driving flows in one direction or the other, while the fundamentals are still there.
Well, you're talking about hyperscalers, one word to refer to a lot of people, and you're talking about sectors here and being diversified. At this point, does it matter which companies are investors differentiating at this point, or do you just want to get a hyperscaler because you know they're all going to go up?
It absolutely does mean we have to think about company selection in particular. Because again, even to your point, within those hyperscalers, what's driving that value return so far this quarter is the ones that came up big last week when it comes to earnings. So it's really the three stocks that were out of favor for the first half of the year are in favor. So increasingly, the AI trade is creating definitive winners and losers as opposed to anything with some AI tag to its name is doing well. Now there's so much more differentiation, and it's harder to find diversification by just looking across different sectors or styles, because really at the company level, they are differentiating themselves.
There has been some real volatility, not just in the equity market, but in debt markets too, especially given just how much they are issuing. We saw CDS spreads for a lot of these big tech companies climb up quite dramatically. They have backed off as the market overall is rallying, but some people have looked at this and said the cost of capital is going to start to get more expensive, and there will be real market pushback just at the amount of borrowing these companies are doing. In your mind, does that raise red flags for the sector as a whole if borrowing is starting to get more expensive or their debt starts to trade below par more dramatically?
Just as the trade is rotating, so are the risks. So it's no longer we need to be spending more and more and more on the CapEx. It's how much revenue upside surprise is beating the CapEx upside surprise. You still want CapEx to signal that there's demand, but that ROI needs to come through in a bigger way, especially because it's not just these companies financing based on cash anymore. It's going out to the markets in the debt side, on the equity side. So certainly that ups the ante in terms of what results need to be. And you see it that in the early days of this trade, you did well and you got rewarded handsomely. Now it's less so. I mean, semis, you look at semis making up about 60% of earnings growth in the S&P 500, upside surprise of about 20% on average, but down about 8% since the first semi reported. So markets are being very discerning in this regard.
What's happening in the rest of the market besides AI and tech?
Because there's anything else?
We tend not to talk about it, but there are 500 companies in the S&P 500.
Absolutely. It's just become so concentrated. I mentioned the earnings growth being concentrated around semiconductors, the markets itself, whether it's value or growth around the same cohort of companies. Even with areas like small cap, you're seeing that AI was a big driver in the second quarter itself. Now, again, given some of the rebalances to the indices, that AI load has been lightened up a little bit. But I think that the challenge is you look at areas like small cap that have done well so far this year. It's a mix of catch-up trade, bit of a low-quality rally in the first half, and then that AI piece, a lot of that which is blending with the low quality. And ultimately, when it comes back to earnings, maybe some of these S&P 500 companies are not being rewarded as much for earnings, but the results are still stellar when you look at the year starting at 15% earnings growth expectations coming up to 30. You look at small cap, you've actually seen a 20-point downward revision. So the reason there's so much focus is because not only the concentration, but the results that we see. Now, there's glimmers of other things going on. You see just this quarter so far, financials is one of the stronger performing sectors. But again, that has almost a picks and shovels aspect to it when you point out the enormous financing needs that are coming to the market.
Why are international stocks still outperforming? I think that gap has started to shrink when big tech has come up. It's something like 3 percentage points. FTSE Russell ex-US world index is outperforming. Why, when it seems like so much of the AI world is concentrated in the US, maybe save for Korea and Taiwan? What's giving international stocks their lasting power right now?
It is the Korea-Taiwan story in a major way. It's not the China-India story of the past when you think about emerging markets. It's really about those supply chain bottlenecks around AI and who some of these beneficiaries are, and the enormous earnings growth that's coming from that. Korea and Taiwan are one piece of that. Even when you think about Japan, about 60% of their earnings growth is coming from AI-related companies. So AI has certainly gone global, and it has its tentacles in other places. I would say that some parts of Japan, some parts of Europe are still leaning into the defense, the industrials, the banks, where you get a little bit more diversified exposure there. But it is thematically very difficult to find genuine diversification in the markets, which gets back to the point about single stock selection and where you can pick out some of the stories that have other elements folded in.
Hey, Mira, thank you so much for joining this morning. Really fantastic to see you. That's JP Morgan Global Market Strategist Mira Pandit. Nearly 10 minutes into your trading day, let's see how markets are faring. And we are on track for another record high, up 0.6 of 1%, trading at 77.84 this morning. Breath is pretty even between gainers and losers. You have some earnings that seems to be fueling us. Eli Lilly, the second best performer in terms of points added, seeing its biggest one-day rally. At one point, it was up 9%. That would have been its biggest intraday rally since April 30th. Broadcom, Alphabet, Meta, so it's a who's who of some of the hyperscalers. NVIDIA adding the most points at 24 points added. On the downside, I know this is a little bit hard to read. This one right here that says Avan, that's advanced. AMD, that's up there in terms of losers, down 5%. With an earnings that beat, just let that sink in. AMD beat earnings and they are down 5%. It's a pattern that we see that the expectation is much higher for these companies. Tesla is down following the results of SpaceX, down 1%. Maybe it means that there's less likely of a deal. I don't know if SpaceX didn't perform as well. CVS also reporting earnings. That's down in the loser category too. Uber also reporting earnings, down in the loser category. So if we look at how these sectors are shaping up this morning, some push and pull between how different tech is performing. But healthcare, that's at the top. That's going to be thanks to Eli Lilly and those earnings. Materials, consumer communications up there, and infotech, utilities, energy, real estate round out the bottom of the performance. Coming up, another earnings story for you. Strong travel demand drives results at Bookings Holdings. We're going to speak to the company's CEO, Glenn Fogel. That's up next. This is Bloomberg.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is, nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. You don't start on the third floor or the lobby. You actually have to start in the basement.
Up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Time now for your top calls. Here is Nora Malindo with some of the analyst action that she's looking at this morning. Good morning, Nora.
Hey, Danny, 3 on the docket for you this morning. First up, Jefferies saying that they're getting cautious on Best Buy and downgrading the stock to hold. Jefferies is saying that higher laptop prices tied to memory chip shortage can make it harder for the company to keep growing earnings. And with back-to-school shopping already underway, it'll be interesting to see whether or not shoppers are actually willing to pay up. You're seeing shares of Best Buy down just below 3% right now as we speak. Now over to the beauty industry. Bernstein says don't sleep on e.l.f. Beauty. The firm upgraded the stock to outperform and says its new hair care business could be a meaningful driver for growth over the next few years. It also says that e.l.f. has cracked the code on social media, not only rolling out products quickly, but turning them into viral hits. You're seeing shares of e.l.f. to the upside, higher by about 0.4%. And finally, Wall Street is giving Booking another thumbs up after its earnings report. Despite everything that's been happening around the world, people are still finding a way to travel. And CFRA says the company's outlook may be a little bit too conservative, which could leave room for a positive surprise if conditions in the Middle East improve. Those are your top calls. Danny?
Nora, thank you so much. And a perfect setup because now we are joined by the Bookings Holdings CEO, Glenn Fogel. Glenn, we got to start there. I mean, this is a world awash in disruptions. There's the hot weather across Europe. There's Middle East angst, which is also leading to higher fuel prices. Why is there still so much resiliency and demand for travel?
No, and you pointed out exactly what is happening. And thank you so much for having me. The issues that we face time and time again are, one would imagine you're not going to see travel, yet it is a very resilient industry. People want to travel. And if they can't do what they want to do at first, they'll come up with another thing to do. So, for example, a lot of the lift that would be between Europe and Asia goes through the Middle East. Well, a lot of airlines had to pull back that lift. People can't afford the more expensive nonstops that were still available. So instead of going, say, from Paris to Bangkok, maybe they went Paris to the south of France. Now, of course, you do have the hot weather. Of course, that's been an issue. So maybe instead they decide to go to Norway. But the fact is, people want to travel. They're going to continue to travel. And yes, these type of instances do end up hitting our bottom line. There's no doubt we would do better if there wasn't a war in the Middle East. But I'm still very pleased with how we performed for the quarter.
Now, there is always a difference between the front of the plane and the back of the plane. But in overall travel, you own a number of different platforms. Are you seeing any kind of economic differences between people in terms of what they're choosing and where they're going?
Well, we announced last night how we were very pleased that we continue to do well in the U.S. And the U.S. is an area where we're smaller than other parts of the world. A lot of people don't know that, how global we really are. We're numbers about a low double-digit percentage of our customers are in the U.S. So that's rather small compared to the total amount of business that we do. But we did very well, high single-digit growth. That's good. Now, other parts of the world, obviously, a lot less well. I mean, obviously, the Middle East, that was hurt a great deal by the start of the war, but it did start to normalize in June, people in the Middle East who are traveling. However, people are still a little bit concerned about traveling to the Middle East, so that's still a little bit of a damper on that business. But the good thing about us is we are so global, where one area is having a problem, another area can do well.
I guess just to further emphasize Mike's question, Glenn, is the behavior changing more than just rerouting where their travel is to get around these headwinds? For example, are you seeing people book shorter stays? Are they maybe opting for the 2-star hotel instead of the 3-star hotel or the alternative booking? Is there anything in the behavior that essentially suggests a shift that might reflect some economic concerns?
Well, look, we did see a decrease in the length of stay. That's an indication. But again, the way I look at it is I try not to go into those type of metrics that you mentioned because they can be very specific to a different region. So you look at the US, say, versus Europe or Asia versus our rest of the world, we call it. Those things will have different metrics, et cetera. From my point of view and for our investors, it's always look at the global, look at our bottom line, look at the overall growth rates. Don't try and figure out a slight metric in one area, what that's going to indicate for the long-term future. The long-term future is travel is going to continue to increase better than GDP. Our job, get an increase in the share of this growing industry.
You also have Open Table as one of your businesses, and we used to look at that all the time during the pandemic to find out how people were doing with their spending. You go on vacation maybe once or twice a year at most, but a lot of people go out to dinner all the time. And so I'm wondering how that area is holding up as people get more concerned, as we see the consumer confidence fall. How much of an indicator is that of where the economy is?
Yeah, no, it is a nice indicator. I'm very proud of the team over at Open Table. They've been doing just fantastic over the last couple of years, adding more restaurants and being able to provide more services both to we have two kinds of customers, both the person who's the diner, but also for the partner who's the restaurant owner, providing more services both sides. It's been great. Now, your question is, can we use that as some sort of proxy for how the consumer is doing or not? Not sure you really can or not. I know we're doing very well in that area, but again, two things to think about is majority of people do not eat out most of the time in the U.S. And again, we're just talking most of the U.S. Open Table is international, but the overwhelming part of the business is the U.S. And as I point out, we are extremely global.
Glenn, just to wrap things up, I know you and the team on your call yesterday were talking about the idea that AI-driven traffic is still well under 1% of your room nights. When do you expect that to change? Do you expect at some point that AI will make up a meaningful proportion of it?
Well, there are a couple of ways to think about that. The first thing is, the most important thing in my mind is making sure we are continuing to develop our own services using AI. So people, when they start thinking about travel, they come to us so they can do their discovery, do all the things they want to explore, where they want to go, what they want to do. And then from there, transfer into actually doing the bookings. That's part of our connected trip. So they do it all in one place, holistically, seamlessly, frictionlessly. And then, God forbid anything goes wrong, it's one point of contact that we can solve it all. And as you know, when something goes wrong in travel, it's like dominoes, one thing after another. So we can solve all the problems at once. And we're using Gen AI to make it so much better to do that. That's game number one. Now, game number two is people are going to continue to start in other places they've always had in the past. Before there was digital commerce, people were looking at magazines, brochures, or guidebooks. Then they start going online. They start looking at other ways. And of course, most recently before Gen AI, Google was a nice way people would start their discovery. Now, the question people bring up to us is, well, are people going to use Gen AI, whether it be Gemini or ChatGPT, pick your favorite model. They're going to start there. And then are you, booking, going to have to pay for the people to come to you to do the booking or not? That's the question. Now, look, we've paid in the past a lot, always. Google, and we're great partners with them. We paid a lot of money to them to be able to put our advertisements in Google. We've gotten a nice return on that. But a lot of people don't realize, approximately almost 2/3 of our customers are coming to us direct. A mid 60% of our B2C business to consumer business comes to us direct. They're not going to Google first. Now, the fact that right now it's less than 1% coming from these LLMs, will it grow? Probably. When? I don't know. And will we have to pay? Probably. We're doing advertisements right now with ChatGPT. I do believe, though, in the long run, it's good for us. We get to diversify new channels of demand. This is all good for us.
Glenn, we're going to have to end it there. Thank you so much for joining off the back of your earnings report. Glenn Fogel, Booking Holdings, with shares up 5% this morning. Coming up, the AI trade roars back this month. The NASDAQ 100 gains more than $3 trillion in value in just 4 days. We'll catch up with Mandeep Singh. That's coming up next.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas.
The sector is really propelling this yield forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Bringing you the most important news and financial information whenever and wherever it happens. I'm Michael McKee on the Mexican border, and this is Bloomberg.
A check on some of the big movers this morning. Nvidia is up higher. Micron is as well, but AMD and SpaceX fall after they report earnings. Let's dig into the AI trade with Bloomberg Intelligence head of global tech research, Mandeep Singh. AMD and SpaceX falling for different reasons, but the theme is the same. Report earnings, beat on most of the metrics, but investors still find something to be disappointed in.
I mean, in the case of SpaceX, it was really a big outlook. They threw away a $100 billion ARR number. When you think about, what's behind that, huge CapEx ramp. They're talking about 10 gigawatt capacity by next year. You know what that would entail? Probably in excess of $200 billion in CapEx. So right now, we are just in that mode where everyone is topping each other in terms of their CapEx plans.
NVIDIA just going to be like, hey, here's some money to buy our chips to fund that, billions of dollars that you're going to need for all those gigawatts?
That probably is the case, given SpaceX is a company that doesn't have the operating cash flow like the other hyperscalers who are making those $200 billion CapEx investments. So from that perspective, given SpaceX said they are going to rely on NVIDIA for all their chips, I'm guessing there will be some backstop from NVIDIA because obviously they'll have to raise a ton of debt. In this case, we're talking about $200 billion plus in CapEx when a company doesn't even generate $5 billion in operating cash flow. So there will be a lot of debt financing. I hope they don't end up doing equity raise here, but clearly, they've laid out big plans, big numbers. The market obviously doesn't believe it, which is why you see that stock reaction.
Yeah, erasing well over $100 billion in market cap this morning. Mandeep, thank you very much. Coming up in the next hour, Mike and I will speak with Sarah Ketterer from Causeway Capital on bargains in healthcare and consumer stocks, plus Chris Connors from Johnson Associates on Wall Street bonuses. Then we'll hear from the CEO of Brookfield Asset Management and the CFO of Carlyle after the two's earnings. This is Open Interest.
Do you mind being called an ideological lunatic or a bunch of left-wing nut jobs?
I've been called worse things than that.
Oh! You'd think she owned the place.
23andMe, I think, is so incredibly valuable. We're coming back.
It had that kind of detective story feel to it. When you're hot on the trail of something, you know that it's very exciting. What magazines were you reading as a kid? I don't think I was reading magazines until I was in them.
You are on the cover of all of these.
Oh, and there's many, many more, but we just don't have time.
Why should people trust you?
I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands.
The shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it paradise ahead or Gattaca?
Maybe somewhere in the middle.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Joanna Bersetchi in El Ola, Saudi Arabia, and this is Bloomberg.
Sherry Preston. In the high-stakes Democratic primary in Michigan, the Associated Press has just projected that progressive Dr. Abdul El-Sayed has defeated moderate Congresswoman Haley Stevens. ABC's Jay O'Brien is in Detroit.
Both addressing exhausted supporters in the wee hours of the morning.
We knew that this was going to be a close race, and that's exactly what we've got.
A former state health official and self-defined capitalist, El-Sayed was backed by top Democratic socialists, focusing his campaign around tackling the cost of living and rejecting Israel's war in Gaza.
Shouldn't be this hard to pay your taxes and know that that money is going to be spent on you rather than to drop bombs on somebody else and their kids.
A message that energized young voters.
Stevens said she thought she had a better chance of winning against Republican Mike Rogers in November. President Trump saying overnight he thinks talks are going well between Iran and the U.S. and that a deal to reopen the Strait of Hormuz could come later today or tomorrow. Still no word yet from Iranian leadership. A potential security threat to President Trump. Los Angeles authorities arresting an armed man, John Taylor, several days ago at Trump's California Golf Club.
According to authorities, he then returned 2 days later, approaching federal agents saying he worked for the State Department as part of the security detail. Federal agents contacted the local sheriff's office, who took Taylor into custody.
ABC's Kana Whitworth in Los Angeles. In London, a woman is under arrest after a stabbing spree in London's popular Covent Garden. It happened a short time ago when the venue was crowded with those eating lunch. At least 4 people were stabbed. With one person in custody on suspicion of arson, fire crews in Spokane, Washington are beginning to breathe a sigh of relief. Weather conditions are improving, and they've had a lot of progress over the past few days. You're listening to ABC News. Good news and bad news in the latest report on drug use.
The Substance Abuse and Mental Health Services Administration asked 60,000 Americans about their experience with substances, finding significant declines last year in binge drinking, smoking, and marijuana use among 12 to 17-year-olds. Still, the survey found more than half of all Americans, 163 million altogether, used tobacco, vaped nicotine, drank, or used an illicit drug in the previous month. The substance of choice, alcohol. Jim Ryan, ABC News.
Ohio Congressman Max Miller defiant that he is staying in his reelection race in spite of domestic abuse allegations.
There's no chance that I'm removing myself from this race.
The family scandal erupting into full view on Capitol Hill when Miller's former father-in-law, Republican Senator Bernie Moreno, spoke out.
This has been a horrific experience for my entire family.
The senator's daughter, Emily, claims Miller, her ex-husband, abused her. In a February report obtained by ABC News, she claims he threw her against the wall, once held a gun to her head, and another time threw hot water on her. He denies all the allegations. But Moreno says Miller is a madman, and his 2-year-old granddaughter is caught in the middle.
ABC senior political correspondent Rachel Scott, Miller's ex-girlfriend, former press secretary Stephanie Grisham, has filed a restraining order against him. Dr. Anthony Fauci invoking the fifth more than 100 times during his Capitol Hill testimony last week. Now, the Republican-led committee is preparing to vote to hold him in contempt. This is ABC News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, originals and the Bloomberg Business app.
Good Wednesday morning from the Bloomberg Interactive Broker Studio in New York City. We are streaming live on YouTube, streaming live at Bloomberg.com as well. It's Scarlett Fu and Paul Sweeney. This is the Bloomberg Intelligence program. Coming up, we're going to check in with Michelle Jamrisko, Bloomberg White House and National Security Editor, to get the latest on the Mideast. President Trump says Iran talks are going well. Brian Jacobson, Chief Economist at Annex Wealth Management. He's going to join us to discuss his outlook for the markets. We got Jobs Day on Friday. Let's keep that in mind. Geetha Ranganathan, Bloomberg Intelligence media analyst, break down those Disney earnings. Paramount also reported earnings as a standalone company. That deal is on hold for their M&A deal. George Ferguson, Bloomberg Intelligence senior aerospace and defense analyst, talked to us about SpaceX. They reported their numbers last night. First report as a public company, stock trading down about 10% today. And Mandeep Singh, head of global tech research for Bloomberg, will talk to us about AMD and all the chip space and all things technology. So a lot coming up over the next couple of hours. Right now, let's start it all off with a Bloomberg Business Flash with Alexis Christophers.
All right, thanks a lot, Paul. And this Bloomberg Business Flash is brought to you by IBKR. Trade election, climate, and economic outcomes with IBKR prediction markets right alongside your stocks and options. Earn interest on your position and receive $1 per contract if you're right. Learn more at ibkr.com/predictions. A slew of strong corporate profits lifting stocks to fresh all-time highs this morning, with the market also rising as President Trump said a deal on the Strait of Hormuz is possible as early as today. The S&P 500 up 48 points, now in record territory. Dow Jones Industrial Average up 612 points, or more than 1%, to an intraday record high of 54,695. We have got NASDAQ 100 up 120 points, or about 0.4%. Brent crude now moving lower, down 0.5% at $78.96 a barrel. WTI crude down more than 1% at just under $75 a barrel. And the Bloomberg Dollar Spot Index down 0.25% at 1202.83. As for stocks on the move, SpaceX down nearly 8%. It came up with a solid profit report card for its first report card as a publicly traded company, but its AI spending is what has rattled investors today. We've got shares of Disney up 2.25%. Profit beat the street in the company's fiscal third quarter, driven by soaring income from its entertainment division and the resilience of its theme parks. And shares of AMD sliding 5% after the company gave an underwhelming sales outlook, a sign that shareholders expected more of a return from the global expansion of AI data centers. Spot gold at $42.20 the ounce. That's your Bloomberg Business Flash. Paul and Scarlett.
All right, Alexis Christophers, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Now, Bloomberg.com subscribers can now shape the conversation on Bloomberg Radio. Submit questions for the experts and guests on our show. Visit Bloomberg.com/AskRadio. It's an exclusive feature for our Bloomberg.com subscribers and terminal clients. Visit Bloomberg.com/AskRadio to join the conversation. As Alexis was just reporting, we got green on the screen here in a big way again today. Let's take a look at some of the stocks on the move today. We can do that with Bloomberg's Christine Aquino, managing editor for Markets Live. Christine, what do you got for us today?
All right, Paul, let's start with AMD. So ticker AMD, those shares not doing so well this morning. They're down now 6%. So extending some of those opening declines, and that is because of their underwhelming results that we got yesterday, particularly the third quarter sales outlook. So they're now looking at $13 billion in revenue versus street estimates that were well north of that. So Bloomberg Intelligence analyst Kunjan Sobhani weighing on this underwhelming result and pointing out that it was particularly negative considering that demand for its central processing unit rose, as well as share gains across its server and client segments. Now, we did hear from CEO Lisa Su on the analyst call saying that the company expects its data center revenue to more than double in 2027. Big question for analysts is how it will get there, and that seems to be left unanswered. Therefore, the share declines today.
All right. So, of course, keeping an eye on that semiconductor space. The big earnings report that everyone was waiting for yesterday was SpaceX. What did we learn?
Well, Scarlett, I mean, based on the share declines this morning, definitely a negative reception from investors. So SpaceX shares, SPCX, now down more than 9%. So holding on to some of those opening declines. But yeah, I mean, the big takeaway from there is how much they spent in terms of CapEx, particularly for its AI unit, $28.5 billion in the first half of the year, and that's resulted in some negative cash flows. And, you know, we're seeing losses for the AI segment as well, $1.3 billion, slightly narrower from $1.5 billion a year ago, but still a loss, and therefore being reflected in the shares. And then remember, there's going to be $101 billion worth of SpaceX stocks that's going to be available for trading on Thursday after the post-IPO lockup that was in effect. And currently, we're seeing data that about 35% of shares are available for trading being sold short. So, you know, based on the declines today, disappointment from earnings, there seems to be a bit of a front running that's happening right here.
All right. Stock's down about 8% right now. How about Eli Lilly?
Eli Lilly, so that's a bright spot in today's earnings slew. So ticker LLY, those shares are extending their gains, now up more than 6% at the moment. They did boost their revenue guidance on the back of stronger than expected demand for weight loss drugs and diabetes medicine. It really is still all about those GLP-1s and the overwhelming demand for that. Earnings per share in the second quarter is also 40% higher than consensus, and that comes off of the back of a 12% beat in revenue. You know, those gains in Eli Lilly definitely lifting the entire pharmaceutical, biotech, and life sciences sector to one of the best performers on the S&P 500 today.
All right, Christine, thank you so much. Christine Aquino is managing editor for Markets Live. And of course, for more conversations like this, be sure to subscribe to our Stock Movers Reports, 5-minute audio reports on the biggest winners and losers in the stock market, available on Apple Podcasts, Spotify, or anywhere you listen. Paul, I'm thoroughly confused as to whether there is going to be any kind of movement towards some kind of, I don't even want to say peace deal anymore, a renewed ceasefire between the U.S. and Iran. It's day in and day out, it changes constantly.
Yeah, I just looked to the oil markets to kind of give me a clue here. Yeah, yesterday oil was really pricing in some type of deal, and today a little bit lower as well, so we'll see.
Okay, let's bring in Michelle Jamrisko. She's our Bloomberg White House and National Security Editor on the latest out of the Middle East. Right now, our oil prices are our best indication of any kind of progress on these potential talks for a potential agreement?
Well, I don't want to denigrate investors, but it's been hard to use markets as an indicator of what might happen next. I mean, we're on this roller coaster ride, and it's been tough to kind of predict what might happen that will take us in the next turn of events. But to your point, I mean, this deal, this agreement, whatever it might be, is very hard to characterize at the moment. And the focus really is not so much on a sort of ceasefire, but on the arrangements in the Strait Strait of Hormuz, which remain quite fuzzy. So last night we did get an indication from the president that things seem to be moving along, at least in his view, in terms of after talking with the Qatari emir, saying that there are progress in talks with Iran. Still unclear exactly who is conducting those talks and how those are going along, aside from what Iran is indicating that they're arranging with Oman in talking about further and perhaps more permanent arrangements in the Strait. But right now, laser focused on reports that potentially there will be a tentative pact around how ships might be able to move through there. But I would just caution, we have a number of caveats at this point. I mean, beyond the obvious one being that we seem to be back at square one at every point in time that we think that there might be more progress on talks. There's still a lot of questions about what routes in the Strait might be deemed safe and how to ensure they are safe, including the routes that have potentially a lot of mines that Iran has laid there, as well as how to conduct those demining efforts, which our colleagues in Europe broke some news on yesterday in terms of perhaps some movement of European nations helping out in that effort. But all the while, shippers remain wary about the situation there. We've got the Houthis that are battling the Saudis and threatening more violence in the Strait. So there's a lot still that remains unanswered, but we're watching with laser focus today to see if there's any movement on those sorts of talks and what agreement might come of it.
So certainly the Strait of Hormuz is first and foremost for a variety of reasons. But for President Trump, if you would ask him, he would probably say, we got to make sure that Iran never has a nuclear weapon.
That's right.
I'm not sure how you do that. Are there talks ongoing regarding that larger issue?
Well, I think on Monday we revisited that again, and you're right to point out that this has been kind of a dual theme throughout this months-long process where Trump consistently says this is all about taking away their nuclear capabilities, but we need the Strait of Hormuz opened urgently. So what Trump conceded on Monday is that any arrangement to seal the deal on Hormuz would just predate nuclear talks, which will, he says, take a while. So that is still some time off to sort of formalize that sort of agreement, whether they return to something that they, hatched in the MOU some months ago now, or some weeks ago now, and then build on that, or whether or not they just come to a new stage of negotiations around nuclear talks. But that is still second order at this point to the Hormuz happenings today.
Michelle, do we know who within Iran is doing the lead negotiating? Because there had been some concerns over how there's internal fighting in Iran as well. So one group might agree to something and then get undermined by another part of the ruling regime.
Yeah, well, there have been, a couple or a few more moderate seen as, representatives from Iran to the U.S. talks, some stages ago. There's also, of course, you're right to point out the internal divisions. This has been a problem throughout the campaign and one that, Trump and other U.S. officials have conceded is tough to be up against is, just that there are so many voices within Iran and the regime is set up as such to allow for the IRGC to have military control. Obviously, the supreme leader has decision-making power, but then there's a lot of officials in between that might, leak things to press or try to be a part of the talks. And it's very hard to understand what the consistent message might be, if there is one, and what the decision will come out to be, even amid all the rhetoric that's seeming to act against what the U.S. and others have seen to be true.
Michelle, thanks so much for your reporting. Really appreciate it. Michelle Jamrisco, she is the White House and National Security Editor for Bloomberg News. She's down there in our Washington, D.C. bureau. And again, it's just, if these negotiations or discussions seem so fluid. And again, it's always seemed to me that Iran and the U.S. were talking past each other, not really at each other. We've got some intermediaries and not really sitting down at the table that often. So you just wonder how this will get done and how.
There's also posturing on both sides as well, to kind of cover whatever progress or lack of progress might be being made in the actual talks. And of course, everything hinges on the Strait of Hormuz. The previous ceasefire lasted less than 1 month before collapsing over disagreements over control over the strait. So you wonder how much the current talks will finally resolve control of the Strait of Hormuz.
And let's not forget, the Strait of Hormuz was wide open before this war for decades and decades.
No fees, no tolls.
It wasn't even a concern for shippers. And now here we are. S&P up 48 points. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
Coming up on 10:22 on Wall Street, I'm Alexis Christoforous from the Bloomberg Interactive Broker Studio. The S&P 500 is rallying to a new all-time intraday record as traders pour through the latest batch of strong corporate earnings reports. Investors also growing hopeful that the Strait of Hormuz could be reopened as early as today. We've got Brent crude now at $78.80 a barrel, down 0.7%. WTI crude down more than 1% at just under $75 a barrel. As for equities, the S&P 500 500 up about 42 points. The Dow Jones Industrial Average climbing 589 points, or more than 1%, again in record territory there. And the NASDAQ 100 up 90 points, or about 0.3%. We've got shares of Shopify jumping 16% after reporting sharp growth in the second quarter and a more aggressive than expected forecast for the third quarter. Meantime, shares of Pinterest, the image sharing platform, taking a hit here today, down 4.5%. It delivered 18% revenue growth and had record users last quarter, but shares of Pinterest are coming under pressure after lukewarm sales guidance. And finally, FanDuel parent company Flutter down 11% after cutting its full-year outlook for the second time this year. It also named President Dan Taylor its new CEO to help navigate challenges from the prediction market players. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous, and that's a Bloomberg Business Flash. Paul and Scarlett.
All right, Alexis, thank you so much. Appreciate that very much. Scarlett Fu, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. I was speaking to economists earlier today, and they were saying Kevin Warsh talks a big game and consisting about getting inflation down to 2%, but he didn't provide a framework for the marketplace, and that's the frustrating part. Brian Jacobson joins us here, Chief Economist at Annex Wealth Management. Brian, what's your takeaway from this new communication efforts, if you will, or policy by this Federal Reserve? It seems to be markets are kind of working on their own, pricing it on their own, and not really waiting for guidance.
Yeah, and that can make things a little bit more treacherous, I think. People maybe were coming in thinking that the market is going to have a little bit of a honeymoon period with the new chair, but clearly that's not the case in terms of the market reaction. And I think that one of the issues is, as you had pointed out, the lack of the framework that he's clearly articulating. And maybe he's waiting until he has a bit more of the floor, a little bit longer period of time at that Jackson Hole symposium where he can lay that out. The way that I read sort of his intellectual trajectory getting here is that he doesn't really think that rates, setting the target for the federal funds rate, is going to do a lot of good when you have a bloated balance sheet. And so my take on the situation is that he would actually rather trim the size of the balance sheet and keep rates where they are. And perhaps that's what he's really angling for during the meetings, and maybe is going to reveal more about at the Jackson Hole Symposium. But until we get there, the market needs to fill in the blanks, and we don't always fill it in with things that are all that positive.
Yeah, that's a really good point. I want to get your take as an economist on the latest ISM services numbers, which just came out. Slightly better in terms of the actual main index, 54.1 for the month of July. 54 was the prior month's reading. And everything kind of went up, including prices paid, new orders, but employment went down. This is the biggest part of the U.S. economy. As much as we look at the manufacturing data from ISM, services is what drives the economy, isn't it?
It really is. If you look at the data, I think manufacturing is only about 8% of total employment. And so the rest is going to be services or non-manufacturing related, right? I mean, do we include wholesale trade, electricity production? Is that manufacturing or is that services? So sometimes that distinction between services and manufacturing isn't really all that clean. That's why they used to always call it the non-manufacturing survey. And I think that's actually a little bit helpful to remember that in there you have things like construction, right? And so in terms of when I'm looking at the details of the report that just came out, it's notable that the employment index fell below 50. Now, it had been above 50 for a little bit. It was below 50. It's not plummeting, but it's interesting, this situation where manufacturing is above 50, right? It had been below that for about 33 months in a row, and services is dipping lower. So you're getting this strength in manufacturing, but some of the weaknesses in services. And really, ultimately for the economy, that tug of war is going to resolve more towards services than manufacturing. But in terms of when we're looking at the markets, you look at the S&P 500, it's a little bit more manufacturing heavy than what the overall economy is. And so as an investor, I'm really keening in a little bit more on the strength in manufacturing as opposed to the slight weakness that I'm seeing in the employment with services.
So Brian, on Friday, for those folks who actually work summer Fridays, there will be a labor report coming out here, and I guess non-farm payrolls market's looking for about 80,000. What's your view here of kind of the labor market in terms wages, unemployment, all that kind of stuff?
Yeah, so the unemployment initial jobless claims, right, very low levels. So it's this no hire, no fire. It's not really a no hire situation, though. There is hiring going on. It's just that the labor force isn't growing as much as it used to. Demographics, and especially with immigration policies, have affected that. So it doesn't really take a lot to keep the unemployment rate from moving higher. But then when we look at wages, those have been on the, as far as the growth rate of wages has been going down. Now, it's still positive, right? It's still positive growth in wages. It's just that it's not as torrid of a pace as we saw a couple of years ago. So I don't think that we're going to get any type of wage price inflation spiral here. I think that really, as we go through the summer, when we're looking ahead to the September FOMC meeting, we're probably going to see evidence of inflation being choppy, but migrating towards the Fed's target, still, light years away from it. But I don't think they're going to have to worry about a labor market that's overheating. So I don't think they're going to feel pushed to try to hike rates.
All right. Thank you so much. Really appreciate it, Brian. Brian Jacobson is chief economist at Annex Wealth Management, joining us with his take on the economy and the market. And of course, as Paul mentioned, it's really earnings power that is driving the stock market. Certainly today with the S&P 500 making yet another record high. If we close at these levels, it'll be the second straight record close. And earnings is behind all of that. So let's talk to Geeta Ranganathan, our analyst on U.S. media in Princeton, about the latest earnings from Walt Disney Company, the entertainment giant. And Geeta, there's a lot to like in this earnings report. The stock is up about 2.5% right now. Is it the entertainment division, which saw a 64% rise in profit, that kind of drove everything? Or is it, once again, the parks and cruises, the experiences arm, which saw a smaller increase in profit, but really has become the crown jewel of Disney's empire?
Yeah, absolutely, Scarlett. And it's actually a bit of both. So, the experiences division, or the theme parks division, as you just pointed out, makes up less than 40% of total company revenue, but almost 60% of profit. So really, it is the crown jewel, as you rightly alluded to it. And, again, the profit there was really strong. And I think coming in, investor expectations were really, really low. Profits were up 20%. Remember, consensus was at about 10.5% increase. So again, really strong numbers. And what it really did was allayed fears, because Comcast, which just reported a few weeks ago, talked about weakness and a demand slowdown in their Universal theme parks, especially in Orlando. And now seeing Disney come out with such strong numbers really shows that, they're executing really well, and demand continues to be strong as they head into the fiscal fourth quarter as well. But then, as you again said, streaming, which is part of that entertainment division, is really the growth catalyst for this company. And it's all about streaming profitability and how far ahead they can get on operating margin for the streaming business. And they proved that they did a really good job this quarter. And there's obviously a lot more growth levers going forward.
Geeta, this is the second straight quarter of better than expected profitability for the CEO, Josh D'Amaro, who succeeded Bob Iger in that role in March. Talk about big shoes to fill. What's the early read from investors on Mr. D'Amaro?
I think they're really liking all what they see. Josh obviously has a very clear strategy. He's made some pretty big changes. So just today, for instance, they announced that they got rid of their 50% stake in A&E Global Media. They got about $1.2 billion in cash, and they're going to deploy that towards share repurchases. Then again, you have this a new deal. They had to get out of their Sora deal after obviously Sora shut down. But now they announced this new deal with TikTok. So again, Josh is, I think, really kind of taking a hard look at all of the different businesses. He obviously knows that they need to reduce their exposure to, linear TV. But, they're doing all that they can in terms of streaming. And of course, he's a parks veteran, so he knows exactly, how that business works. But it also looks like he's positioning Disney Plus to become this major hub for the entire Disney ecosystem, something almost akin to Amazon Prime for all things Disney, starting in spring of 2027. And so I think that's going to be pretty exciting for the company.
Yeah, that sounds very strategic. How do you think about how that's going to change the entertainment industry and how other media companies respond to that kind of positioning?
Yeah, so I mean, Disney has a really unique hand to play here, Scarlett. I mean, they have theme parks, which really, other than Comcast, nobody else has. Obviously, they have this great movie and studio business, and of course, that their streaming business too. And the one thing that they have, or they do better than everybody else, is ESPN and sports. They have huge exposure there to all of the marquee sports rights. So, you know, again, it's all come down to one thing in the streaming world, which is engagement. And if they can build on that engagement and keep you within that Disney ecosystem for everything. I mean, whether you're buying a theme park ticket or wanting to watch a movie or wanting to watch a show on Disney Plus or Hulu, I mean, right there, that's a major differentiator versus their peers.
So, Geetha, Paramount also reported numbers here. I'd love to get a sense of kind of what the company's saying these days about their, I guess, stalled merger with Warner Brothers Discovery and how they plan to operate as a single entity over the next 12 months.
So their numbers yesterday, Paul, were actually pretty decent, and a lot of that was just the cost savings from the Skydance, acquisition. So it's pretty clear that once they are able to get their hands on Warner Brothers and they're able to close on that transaction, they're obviously going to do all that they can to, deliver on those $6 billion in synergies. But it's really been a very long and arduous road, and it's not looking, easy at all. So one of the things that I think people still are extremely concerned about is leverage. We know it's going to be about 6.5 times at closing whenever that happens. And then the other thing that you have now is kind of this ticking fee, right? And so that's because this deal is going to get delayed by at least 2 full quarters. It was supposed to close on September 30th. It's going to be maybe closer to end of March timeframe. We're going to see close to almost about $1.3 billion in ticking fees. And guess how that's going to be funded? More share issuance. So we're looking at massive dilution here. I mean, Paramount Skydance share, a number of shares outstanding right now is 1 billion. It's going to go to close to about 5 billion when all of this is said and done. So this is just, it just is not a very, very encouraging outlook at all from an investment perspective.
I guess he can't go back to Dad and ask for another bill.
Dad's already put up quite a bit of his own money for the Warner Brothers deal.
Yes, exactly. All right, Geetha, thank you so much. Geetha Ranganathan, she is the media analyst for Bloomberg Intelligence to get the latest on Disney. Good story. Paramount, boy, a lot of uncertainty around that company and its future. And I think a lot of investors are just taking a wait and see.
Yeah.
S&P up 33 points, 0.4%. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
I'm Alexis Christoforous from the Bloomberg Interactive Brokers studio. The S&P 500 is being lifted to a fresh all-time high as President Trump said a deal on the Strait of Hormuz is possible as early as today. Also, strong corporate profits helping to lift equities this morning. The S&P 500 up 27 points now, or 1/3%. The Dow Jones Industrial Average up more than 1%, or nearly 600 points. And the NASDAQ 100 has actually turned negative here in recent trading, now down about 24 points. We have got Brent crude at $78.93 a barrel, down 0.5%. West Texas Intermediate crude down about 1% at $75.08 a barrel. The U.S. service sector expanded at a steady pace in July, but companies added fewer jobs than expected. It suggests some cooling in hiring momentum. We'll get the government's unemployment report on Friday. Eli Lilly is rallying more than 4% after boosting its 2026 sales guidance after its weight loss drug franchise performed far better than expected last quarter. Meantime, shares of CVS Health down more than 6% after the company gave preliminary 2027 profit guidance that disappointed investors. And shares of SpaceX tumbling 8.5% after Elon Musk's plans for blockbuster spending to position his AI and rocket company as a data center developer spooked investors. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Alexis Christoforous, and that's a Bloomberg Business Flash. Paul and Scarlett.
All right. Thank you so much, Alexis Christoforous. This is Bloomberg Intelligence with Paul Sweeney and Scarlett Fu and Alexis Christoforous. And we want to pick up right where you left off, Alexis, which is SpaceX. The stock down about 8.5% right now, but at its low, it was down about 12.5%. And that raises a lot of questions about the results and what we learned. Alexis mentioned a lot of AI spending. Let's bring in George Ferguson. He's our senior aerospace, defense, and airlines analyst, joining us from Princeton. And George, it's tempting to chalk this up to investors were not in the mood to hear of plans for more spending when they're not seeing how the spending is paying off just yet. But is this kind of decline that we're seeing an overreaction given the set of results that SpaceX published?
Well, we put out a report right around the IPO time talking about valuations for SpaceX, right? And we don't tell people to buy or sell, but what we said was, look, you had to get out to like 2029 and projections for a lot of growth in revenue and then turning profitable in 2028 just to start to be able to compare to the other hyperscalers like Microsoft. So look, I think that the challenge here is valuations are living in the stratosphere compared to some of their peers, and so you're challenged to kind of see what's the advantage to SpaceX over some of those other companies, right? And so I think there was selling going on in the stock prior to earnings call yesterday. For days and weeks before that. Yesterday was a bit of a turnaround where there was a bit of a rally. But I think you're back to a sale. It's still, I think, the same story. They resold us the story that we heard at the IPO.
So in terms of the actual revenues and cash flows and so on from the quarter that just reported, they came in better than expected here. So, they are delivering on kind of what they're talking about. It's just a question of so much of the valuation hinges on, I guess, Elon's vision longer term.
Yeah, again, it's on this AI vision. But, when I looked at the numbers yesterday, they were a bit better than consensus. Frankly, they were on top of BI's numbers, to be honest with you, so I'll blow our horn here for this. Maybe we're better seers, I don't know. But, again, what we're talking about is, really strong revenue growth. And I think Elon Musk laid out all the revenue opportunities in the call. But look, I'm an old, industrial aerospace defense analyst. At some point, you got to give me profit, right? You got to, and you're spending $60 billion on these companies. You've got $93 billion of cash in your balance sheet. The spend is large. They doubled CapEx inside the AI business, and that's still very loss-making. Mm-hmm. At some point, you got to turn this into a profitable enterprise. And right now, the vision looks like a lot of AI for, and CapEx for as far as the eye can see. And I think that's it's hard for people to put their arms around. Plus, there was no guidance, right? So, So I don't even, no one even gave us a handle to try to hold on to right now when we would start to see profits or, at least losses starting to improve.
So this is something that you say you, as a kind of an old school analyst, would be looking for. And I suspect many investors in industrial companies are looking for something similar. But Elon Musk is trying to turn SpaceX into this next gen tech AI behemoth. And, he casts his own spell over his shareholders. I just wonder how much overlap is there between SpaceX's investor base and Tesla's investor base, where he usually goes through this playbook and does very well because they want to hear about the hopes and dreams. And they're less concerned perhaps with the immediate payoff, the way that old school analysts and industrial investors might be.
Yeah, look, again, old school payoff, I get it. This is not an old school payoff kind of company, right? But give us again some guardrails, I think, or some, give us a middle line to the road and let us know kind of where we are in the trajectory, where those profits come. And I think you saw it on the call, right? Elon Musk showed up in the beginning to discuss his version of the world and the company. The tech is amazing. It's outstanding, right? And the vision is grand, right? I love all of that. The question always comes down to me, and I think clearly to people in the markets, at what price? How do we put a price on this opportunity? And there's going to be a fight in the marketplace, like you said, between the people that just love the vision and love the tech, and others that say, when can you bring some cash because you got heavy investments coming on here, right?
We also have a big lockup expiring tomorrow. How do you think that's kind of weighing on the shares? That's a lot of stock out there potentially coming on the market tomorrow.
Yeah. I mean, I think about this sort of maybe, through my own sort of thought processes. I guess if I was internal, I don't know. It depends how much of your comp is wrapped in this. Would you start to sell out? Do you feel bad because it's well below the IPO price? Do you wait out things? But the trend definitely has been down. So that's, I think, a really hard calculus for people that have been locked up in this.
So how important do you think it is for Elon Musk and his management team to get the stock back above that 135 IPO price? Do you think that's something that they're concerned with?
Look, so I think if I'm Elon Musk, I want to be able to attract more investors to my shares, and losing money isn't a great way to attract investors. So I think they absolutely want to. I don't know that they have a window here to influence that, for another quarter until they have another sort of earnings call. So I don't know necessarily what they do. I know there's rumors in the marketplace about merging with Tesla. I can't say that I totally understand all the logic there. I think they want to get it up. I think they want to be able to come back to the markets, the equity markets, and issue again. I'm not sure in the near term, though, what you do to change some of the trajectory here.
George, you mentioned they've got $100 billion of cash on the balance sheet. How long does that last, do you think, before they do have to hit the capital markets?
Yeah, look, I think it was like 93 billion when I looked yesterday. They got this buy of 60 billion out there. I got to figure out how they're going to fund that. There was, I think it was 15 billion in capex during the quarter, out to the AI businesses. I think this is not a technical answer. Doesn't seem like it's going to last long.
Yeah, and it's just, it's a lot of cash, but they have a lot of needs.
They have a lot of needs. Are they going to go dip back into the bond market again, do you think, George?
Well, look, I think that's really going to get predicated on whether or not they can maintain their investment grade rating, right? Because I think you don't want to let that slip too much. And everyone I talk to about the investment grade rating tells me it's a function of the cash on the balance sheet, right? Because you don't have a company here that's sort of a heavy cash generator. And maybe the ability to tap markets again.
Yeah,
I think they'd rather go to the debt market. But again, I don't know how long that remains open as you're spending cash.
I think the big thing is going to be that if I'm a creditor, it's actual equity value that's underneath me, supporting me. That's the only thing. And that's the same thing it was with Tesla. So.
Yeah, and now you're looking at the stock again, well below that 135 IPO price.
Yep. George, thanks so much for joining us. George Ferguson, Senior Aerospace, Defense, and Airlines Analyst at Bloomberg Intelligence, giving us the latest on Tesla. First quarter in the books as a publicly traded company. Stock trading off about 7-8% here this morning. This is Bloomberg.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, folks, it is Scarlett Fu, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on that YouTube thing, the intraweb, also at Bloomberg.com. We're doing
the intraweb, love it.
Yeah, it's new. It's going to catch on, I'm telling you. Mandeep Singh joins us here, Global Tech Research Head for Bloomberg Intelligence. Advanced Micro Devices, AMD. I thought the sales outlook was good, but people are calling it an underwhelming sales outlook. How can a chip maker have an underwhelming sales outlook today?
Well, I guess partly that has to do with the valuation and where I think the stock has run up. But, you're being compared against NVIDIA. And that's where NVIDIA's data center sales is probably at this point, 12, 13 times bigger than AMD's. Even though AMD grew, over 100% and they guided to triple-digit growth going forward, but the fact that NVIDIA is still growing, 75% at their rate, which is 12 times bigger, it just goes to show that right now AMD is just holding share. It's not, in any ways gaining share. And this market is lifting all boats, so AMD does have a role. And the other thing that I noted last night is, so they have this new architecture coming up in the second half. Everyone seems to be holding off for that. Like, why would they buy something that's going to be older generation 3 months from now? So that's the other thing. When you announce a new architecture, that doesn't happen with NVIDIA, by the way, because everyone feels they're supply constrained with NVIDIA gear. But for someone like AMD, you've said, you've got a much better chip coming 3 months down the line. So I feel there is some hold up in that aspect. Like, no one wants to commit big when they know there's another something better coming.
So that strategy only works if you're the market leader, not if you're the number two. And it feels like it feels like AMD has been number two for a long time. It was the number two to Intel. It's now bigger than Intel. It's now the number two to NVIDIA. But as we've said, there's not enough supply to meet all this demand. So AMD should be in a good position. Is it because all the other companies have come out and decided to make their own chips, to go proprietary, that AMD's kind of left on the outside?
I think that's also a long-term factor when it comes to AMD's prospects, 3 years, 5 years from now. I mean, every hyperscaler has ambitions to make their own chip. Google has done that successfully. Others want to do the same. So from that perspective, I mean, yes, AMD has a deal with OpenAI, Anthropic. They have committed to Meta as well. In fact, they ended up giving some equity to Meta for that 6 gigawatt commitment. That just goes to show they're not playing from a position of strength like NVIDIA is. So they really have to course these hyperscalers, especially the new ones like OpenAI and Anthropic, and make sure they end up using AMD chips and not just, other chip makers. So overall, I think the print was great. The valuation is rich, so they sort of met expectations. They didn't wow, and that's why you see that sort of reaction.
All right, we were just chatting with George Ferguson about SpaceX, and he was giving us the angle from the satellite side, which is good. I know you just published something regarding the AI part of the story here, because the stock's down another 8% today. Can't find a bid here. If you're buying this thing, you're buying it for the AI play, I would think.
You are, and it's amazing how much they have pivoted to AI. In fact, they gave a $100 billion revenue run rate number by the end of this year. So this company is going from about $18 billion at the time of IPO to a $100 billion run rate in a span of 6 months.
And that's for their AI business?
All AI driven. And that's where 70% of that, like they could be the biggest neocloud out there by the end of the year, simply because they have that ramp up in CapEx. And that's where, the investors may find holes in how are they going to raise money. If you are a hyperscaler, you have the balance sheet to do $200 billion in CapEx. I mean, what SpaceX literally implied last night is they will do $200 billion in CapEx 2027. But investors are not buying it because they don't have the balance sheet, unlike the hyperscalers. So are you doing a debt raise? Are you doing an equity raise? How are you raising the funding? Or maybe NVIDIA is doing the backstop because they said, we will rely solely on NVIDIA chips for this build out. And in fact, that's why AMD is down, because they could have said, we'll give AMD a 10% share. That didn't happen. with SpaceX plans last night.
Is that feasible, that they're going to rely solely on NVIDIA for the build-out?
If NVIDIA is doing the backstop and saying they need the funding. In this case of SpaceX, the biggest apprehension is, how is this company going to find the funding for $200 billion in capex, which Elon Musk said will have 10 gigawatt capacity by end of 2027. That definitely amounts to $200 billion plus just in purchases of NVIDIA chips and other components. How are you going to raise that funding? So that's where NVIDIA comes in with its balance sheet and saying, we're supporting all the neoclouds. We will support SpaceX.
What is a neocloud again?
I mean, it's just renting your data centers with GPUs, with power. So it's not a commodity business. Don't think right now all these. Eventually, it may become one, but right now, sourcing the power, getting these servers online, and getting it ready. There's
a ton of demand.
There's a ton of demand, and it's not commoditized in any way.
Okay. Paul's casting a skeptical eye here.
The little thing in my brain's rolling around trying to make sense of all this.
I mean, $100 billion company. How many technology companies have $100 billion in revenue? This company overnight became a $100 billion company.
Wow. All right. So, I mean, yet the stock trades down. So that's just showing, A, I guess I have funding concerns, and B,
How are you going to get there?
I'm still trying to process it. Mandeep Singh, better or worse, you're now the face of BI SpaceX research. There you go. We tried to lift it off of you, but you're taking it. Mandeep Singh, global tech research head, Bloomberg Intelligence, SpaceX stock trading down, but boy, the numbers are just huge potentially. This is Bloomberg.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, originals and the Bloomberg Business app.
Good Wednesday morning from the team here at Bloomberg Intelligence. Paul Sweeney, Scarlett Fu, and Charlie Pellet. We are streaming live on YouTube, and we are broadcasting live from our Bloomberg Interactive Brokers studio in Midtown Manhattan. Coming up in the second hour of BI, we're going to talk to Steve Miller, chair of the ISM Services PMI, on numbers that just came out when it comes to the services economy that is the biggest part of the U.S. economy, and it drives growth here. Our Ed Ludlow, he's the BTech anchor, will be speaking with the CEO of Uber Technologies, Dara Khosrowshahi. That's coming up later this hour. And we're also going to check in with Amanda Albright. She is our Muni Finance reporter. A lot of private colleges, think those that are not the top 25, top 100 schools, are admitting more students directly, including those that didn't even apply to the college.
Really?
Yeah, there's a demographic cliff, and they want to make sure that they have the enrollment to back it up, and they need tuition-paying students. Okay. Lee Klaskow is our Bloomberg Intelligence Senior Transport, Logistics, and Shipping Analyst. He'll be talking to us about all sorts of companies in his universe, all the transport companies and the corporate news happening there. Just a reminder that Bloomberg.com subscribers can help shape our conversations on Bloomberg Radio. How? By submitting questions for the experts and guests on our show. And you can do that by visiting Bloomberg.com/Ask Radio. This is an exclusive feature for Bloomberg Terminal clients as well as our .com subscribers. Again, visit Bloomberg.com/Ask Radio to join the conversation. All right, let's bring the conversation over to Charlie Pellet for our Bloomberg Business Flash.
Hi, thank you very much. Indeed, Steve Miller coming up on the ISM, and right now I got stocks flying like an eagle. We got the S&P up 24 right now, 77. They got that 77.61. That is a gain of 0.3%. Dow Industrials up 611, up 1.1%, surging. Nasdaq meanwhile up 39, higher by just about 0.1%. In the red though, the Russell 2000 index of small cap shares down 2%. 0.2%. Familiar themes today. We do have a slew of strong corporate profit reports lifting stocks to yet another record, and that was after yesterday's incredible surge. Market also rising as President Trump says a deal on the Strait of Hormuz is possible as early as today. Got to keep it locked into Bloomberg for any and all developments coming out of the Middle East. Right now, we have got the 2-year currently yielding 4.20%, the 10-year 4.61%, with a 30-year 5.16%. Gold up 178 the ounce, 42.57. That is a gain of 4.4%. Crude lower today. Familiar theme again. Crude lower, stocks higher. WTI below 75 now, down 1.4%. Barrel of Brent 78.50. That is a drop of just about 1.1%. Our Avalon Purnell will have a whole lot more on the equity market for you coming up in just a moment. Companies added fewer jobs in July than expected. Private payrolls rose by 44,000. Friday, of course, the unemployment report from the Labor Department. Now, Brian Jacobson is chief economist at Annex Wealth Management. Right here on Bloomberg Intelligence this morning, he told us he'll be watching wages and how that plays into the Fed's inflation outlook.
As we go through this summer, when we're looking ahead to the September FOMC meeting, we're probably going to see evidence of inflation being choppy but migrating towards the Fed's target, still light years away from it. But I don't think they're going to have to worry about a labor market that's overheating. So I don't think they're going to feel pushed to try to hike rates.
Brian Jacobson of Annex Wealth interviewed on Bloomberg Intelligence. SpaceX after earnings now down by 8%. Our coverage on SpaceX continues throughout the day. Of course, the lockup expiring tomorrow for a lot of people. Right now, AMD after earnings down now by 7.3%. I'm Charlie Pellet, Scarlett and Paul. That is a Bloomberg Business Flash.
Hey, Charlie Pellet, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. As Charlie was just reporting, we've got green on the screen. All the stocks are off their highs, but still holding on some gains. Let's take a look at some of the stocks on the move today. We can do that with Avalon Purnell, equities reporter for Bloomberg News, joining us live here in studio. Avalon, what are you looking at?
We have to start off with SpaceX. That's ticker SPCX. It's currently falling about 8.2%, most since July 1st. And that's after the company's first earnings release left investors wanting a little bit more. At issue was higher than expected spending in the company's AI unit, which really weighed on cash flow. CapEx soared to nearly $29 billion in the first half of this year, which is more than 4 times its spending just a year earlier. Oppenheimer highlighting that the CapEx levels are a major concern for investors, especially considering that SpaceX will need more than $400 billion in funding to hit break even. Piper Sandler also adding that the lockup expiration is also contributing to stock weakness today. So we'll definitely be keeping an eye on it tomorrow as those $101 billion worth of shares become available for trading tomorrow.
Yeah, definitely another headwind for this stock that remains well below the 135 IPO price. All right, let's stick with the earnings season theme.
Yes, Eli Lilly, that's ticker LLY. It was up nearly 9% earlier, but now only up about 2.2%. That's after the firm's better than expected second quarter results led to a boost in 2026 sales guidance. BMO highlighting that Lilly again raised the bar with another beat and raise quarter. Also noting that the relatively inline quarter for Lilly's weight loss pill Foundeo is also likely sufficient given declining expectations for the drug. Worth noting that these results are definitely going to assuage some fears from investors that the obesity drug boom is starting to slow down, especially after their rival Novo Nordisk reported a little bit softer Wegovy pill sales.
Last one here, I don't know. DaVita?
Yes, DaVita is definitely something that we will also be talking about. That's ticker DVA. It fell nearly 19% today, and that's partially because their U.S. dialysis revenue missed estimates. Part of that is definitely because of their treatment center growth. Barclays actually pointing out that while they have made a lot of progress on treatment growth, the U.S. dialysis EBIT continues to fall short, and that's definitely a headwind that people will be watching. Also worth noting that the firm reaffirmed its full year guidance, with the midpoint of that guidance now falling below Wall Street's expectations as well.
All right, Avalon, thank you so much for that wrap up of stocks on the move. And for more conversations like this, subscribe to our Stock Movers Reports, 5-minute audio reports on the biggest winners and losers in the stock market. You can subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. We got some data today on the biggest part of the U.S. economy, Paul, and that is services.
Yep.
And what's notable here is that the other part of the economy, manufacturing, the numbers came in really positive.
Yep.
And in services, yeah, for the most part, they kind of beat. But there's one kind of fly in the ointment, and that would be the employment part of U.S. ISM services. That was shrinking for the month of July. Let's bring in Steve Miller, chair of the ISM Services PMI, on the latest print. Steve, let's start there with the employment numbers, because the services economy, it's the biggest part of the U.S. economy, and it employs a lot of Americans.
Yeah, it was a surprise to me that we saw such a drop month over month. What I did, looking at the data across all of the indexes, you'll see that backlog of orders index. And that also had a significant drop. It looks like services industries are able to keep up with demand with current or lower employment. What we're seeing in the commentary is that not companies are making significant reductions, but they're delaying hiring to backfill positions that are traded out of the company. Now, some of that may be related to AI, where people are saying, will this AI thing work? And are our initial progress points going to be sustainable? So we want to hold back on hiring a bit by not backfilling employees, but we're not seeing a significant reduction. On the other side, if you're able to keep up with the new order volume without growing backlog, you're probably pretty good overall. And I think that's what we're seeing in the employment number.
So, Steve, in terms of the hiring and just the labor force, a lot of folks were saying, boy, this crackdown on immigration is going to impact the labor market pretty significantly, particularly in areas that rely upon illegal immigrants or just undocumented immigrants, such as housing construction, agricultural, things like that. Have we seen that actually in the data?
That's not come through in the commentary other than very early on. Very early on in accommodation and food services, we saw some commentary around difficulty hiring, and in construction, we saw some commentary on difficulty hiring. And the construction side, it's mortgage rates. The mortgage rates are so high that it's impeding demand, and we're seeing that in the commentary across the board from residential construction companies, is that mortgage rates are so high. They've been doing discounting to drive incentives for buying. However, that's getting old. It's getting threadbare at this point in terms of trying to drive inventory sales, and so we're seeing an increase in housing inventory for new houses in some areas.
All right, Steve, thank you so much. Steve Miller, good to get some time with you. Steve Miller, of course, is with ISM Services PMI. He is the chair of the organization on this latest print on ISM Services data. Paul, we have some headlines here from Iran, and it's not totally moving oil markets. I mean, oil is kind of modestly lower, and it had been beforehand.
Yep.
But we're hearing from Iran. The foreign ministry says they've agreed on a shipping route with Oman, and that there is no current plan for visits to Pakistan and Qatar. Again, I'm just reading the headlines as they come out. Talks with Oman professional. They are professional, and they're moving forward. And there's a joint statement in the final drafting stage.
Sounds positive.
Still more work to be done, and we know that we've kind of been here for a few days now on the cusp of something.
But what we did not see is anything about a toll,
correct,
or a fee, or I'm not sure how they potentially could be phrased, but we have not seen any information on that, which is positive. We don't see also that necessarily the U.S. is involved in these particular talks, which also might be positive.
That's true. The other thing about the tolls and fees, and just looking at some of the reporting that's out there, what's been indicated is that whatever deal is made, right now, there will not be any kind of tolls and fees. Probably won't be any tolls and fees charged during this next 60 days.
Okay.
What happens after that is anyone's guess, and presumably they'll be negotiating during the period to figure out what follows after that 60-day interim period.
Another 60 days, I mean, maybe it's kicking the can down the road, but it's perhaps better than everything breaking down, which was being priced into markets just a week or so ago. So maybe a little bit on the margin positive here, but it doesn't obviously go to the bigger points here. And there was actually some reporting, I think yesterday, that perhaps a European task force would be involved in clearing whatever mines there were in the Strait.
Yep.
And again, to the extent you can bring in other parties into this, I think that's good, just to bring more people have skin in the game to kind of work towards lasting peace in that part of the region.
Yeah, President Trump has said that an announcement could come today or tomorrow, although there's always a chance that these negotiations, especially given that they involve a lot more parties, could take longer or even outright collapse. So it's very much wait and see right now. In the meantime, we do have the S&P 500 now at a record high for a second day. Earnings is really the big reason why there.
Yeah, so the earnings this quarter have just been extraordinary, and I know there are some one-time items for some of these technology companies, and if you pull those back, less so, but still, even on that adjusted basis, you know, solid earnings results for the second quarter. We already, in the first quarter, was excellent as well. Guidance generally pretty positive here. There are a lot of crosswinds out there that could cause a lot of companies to pull back on guidance. Generally not seeing that, so management teams continue to remain pretty optimistic about the economy and their business prospects. And another place we see that is M&A. So, you know, we come in these Monday mornings and we see lots of M&A trades. That's another sign, and for me at least as a former banker, that of optimism about the economy, because that reflects a good look on the marketplace. Right now, good conversation coming up. Uber Technologies CEO Derek Khosrowshahi speaks with Bloomberg technology anchor Ed Ludlow, talking about Uber and their results. Let's listen in.
As well as driver and merchant earnings. Uber said it faces some international headwinds, particularly in Brazil, and the next focus, robotaxi. CEO Derek Khosrowshahi is back with us here on Bloomberg Tech. You know, the gross bookings outlook, like there's a number of stories within it. I'd also note, like at the same time, rider activity seems to be increasing. You know, help us understand those two data points.
Yeah, the gross bookings results that we had up 22% in the quarter were actually very healthy and represented quarter-on-quarter acceleration. Mobility business was stable at 20%. The delivery business actually accelerated quarter-on-quarter as well. So the business continues to grow at pretty extraordinary rates at the scale. We're doing over 300 million trips per week. It drove really strong profitability as well. The pressure that we talked about was really in Brazil, which caused a trip slowdown for the quarter. And that was actually about competition in the food delivery space. In Brazil, actually, we have a lot of mobility ridership that are two-wheelers. We actually don't engage in the food delivery space, but there's a big war going on in food delivery, and that took away some of our two-wheeler drivers from mobility to delivery because they're getting paid a lot to engage in that war. It really has no effect on us whatsoever. So the guidance that we gave for forward gross bookings growth is very consistent with the guidance that we gave last quarter. And hopefully we will meet and hopefully beat those kinds of expectations.
Dara, is there anything to discuss on both like the health and behavior of the consumer that you're seeing going into the second half of this year?
All signs point to a healthy consumer. We look at both our mobility and delivery business in terms of the growth of those businesses. They continue to be healthy. We look at like other indications. Are consumers trading down and eating at more affordable restaurants, or are eaters leaving less tips, eaters or riders leaving less tips? We don't see any signs whatsoever of a consumer slowdown, so the consumer remains strong. And then on the labor front, actually, our driver earnings, we've got over 10 million now earners around the world. That continues to be very healthy.